in Ireland.
Let's get the lawyer's opinion. Let's go out to David Rosenblum. David, thank you very much indeed for joining us, and give us the sense of Apple claiming they were selectively targeted by the EU here. Do you think they have a case?
Well, yes, they have something of a case. I think that it's true that the state aid investigations have focused to some extent, not entirely, but to some extent on U.S. companies. On the other hand, it's probably also true that U.S. companies have led the world in aggressive tax planning, so I don't find it particularly surprising that the Commission would begin by focusing on U.S. companies.
David Kirkpatrick, weigh in here and give us a sense of your reading of the tea leaves. Are they a view that potentially this is tax warfare going on between the US and Europe?
I don't think it's quite to that point, but I think it's a very confusing situation where, you know, I think Apple has been extremely aggressive, as David just said, and how they structure themselves when they face these tax jurisdictions is an interesting question, and whether it's really appropriate that they should be so fine-tuning of their own structure when they're simply trying to do business around the world. You know, it's legal in the United States, at least. It's turning out maybe it's not legal in Europe. And, you know, in a world where these companies have to have a positive kind of carrying of the flag around the world, we may, even as a country, question whether it's to our benefit that they're being so aggressive in other jurisdictions.
But Corey, give us the shareholders' opinion here, because surely for many the shareholder would say, look, it's in the chief executive, it's the company's obligation to prioritise profits here.
I think what's interesting here is in the context of a Donald Trump presidency, when we might have a big tax repatriation holiday, you have companies like Intel, like Apple and others who have set up a tax infrastructure to benefit from keeping the money overseas, or at least to make the best of that situation. And one wonders if they are so entrenched in these battles and so entrenched in the new organization of their corporate structure such to minimize global taxes, that the repatriation holiday might not be such a big deal for them, and they might not be so willing to bring cash back because they've found another way to get around these laws.
That's a key question for the next administration. I want to take it back out to David Rosenblum for a second. There is much already under discussion from a global perspective. The OECD had been lining up trying to see how they can tackle perhaps some of the different rules and regulations worldwide and start to get all countries singing from the same hymn sheet. Is that the only way that we can progress forward, is if there is some sort of agreement worldwide between the tax practices?
I think what's missing in the debate, in the Apple debate, and it's partly an answer to your question, a large answer to your question, is the facts. The OECD necessarily reaches consensus at a pretty high level of generality. And the issues come up at a very factual level, so that applying these general concepts to the particular facts at hand is a real challenge. So I don't think it's possible to reach international agreement on the kinds of issues we're talking about. And I might add that one of the, notwithstanding the Commission's decision, which was released today on Apple, it was at least I saw it today, 130 pages. It's pretty slim on the actual facts of what happened. It's got a great deal of history about the dispute, about the OECD, about state aid. It's got a lot of legalese and a lot of background. It makes for pretty tedious reading for most people. But I was looking at it to find out what actually happened here, and boy, you look in vain to find out how it was that one of these companies, ASI, booked pretty much just about half of Apple's profits in the year 2015. Commission says Apple had about $54 billion in profits in 2015, and ASI, if I read it correctly, booked somewhere just south of $25 billion.
Yeah, I thought it was fascinating reading for that same reason. I agree they didn't lay it out a chapter and verse, but there was so much great detail in that, and it was interesting to see that they could assign so much profit to that particular region when obviously they had a global business. It wasn't all happening out of Ireland.
What, therefore, is the broader expectation, David Rosenblum, just sticking with you? Who wins out of this particular argument, and what does it mean for Amazon, for Starbucks, for IKEA, for other companies that are currently perhaps being analysed by the European Commission?
Well, in a rational world, and unfortunately we don't live in a rational world, but in a rational world, Apple wins at in the dispute with the Commission, because the Commission is advocating assigning all of this excess profit to the branches that Apple had in Ireland. And frankly, the branches that Apple had in Ireland had absolutely nothing to do with earning most of this money. The Commission is looking at the Commission in the United States are looking at the world from two very different perspectives. The Commission sees these individual companies. It sees ASI booking $25 billion, and it says, well, we see a branch in Ireland, and there's no real head office here. And so, therefore, all the profits should go to Ireland. That's sort of what the Commission is saying. The United States sees it completely differently. We see ASI as itself a branch and not a separate corporation. It's part of a bigger company called AOI, which is the top-tier company, which has branches literally all over the world. And so from a U.S. tax analysis of this, it's a much, much, much more complicated situation than the Commission sees. And that's because of profound differences in the way we look at the tax laws. I think you're going to find similar, but not identical, structures of other high-tech companies in other countries, and maybe some in Ireland as well. They're all going to be a little bit different from each other, but they're all going to pose similar questions.
David Kirkpatrick, quickly from you, do you think this is high up on the agenda of concerns for chief executives, for leaders of tech businesses you speak to in the U.S.?
I think increasingly they're starting to ask themselves, have we been behaving appropriately at the scale we operate at? And I think what you're really seeing here is a fundamental clash between a group of companies, of which Apple is one, but also Facebook, Google, and others, that are being really, they think themselves as sort of God's gift to the world of business. And I think the European Union thinks of them as a bunch of really aggressive American companies that, frankly, they wish they had European competition, and they're demanding a much more rigorous set of sort of parameters of behavior. And I think we are seeing a recalibration of the relationship between these giant global internet and tech companies and the regulatory authorities of the world generally. And this is just one piece of evidence of that.
And see how the customers respond as we get lost in translation. Great conversation between all of you. David Rosenblum, Director of the International Tax Program at NYU Law. Thank you for your time today. Of course, we have Bloomberg Editor-at-Large Corey Johnson with me in the studio, and Techonomy Chief Executive David Kirkpatrick going to be staying with us. Coming up, SoFi Chief Executive Mike Cagney. What's in store for the fintech industry in his IPO timeline? That's next. This is Bloomberg. SoftBank Chief Executive Masayoshi Son is making good on his $50 billion promise to the United States. SoftBank will invest $1 billion in OneWeb. It's a broadband access company as part of a pledge to President-elect Donald Trump. The investment is expected to create almost 3,000 new engineering, manufacturing and support jobs in the US over the next 4 years. The satellite startup said it raised $1.2 billion from SoftBank and existing investors. Now, marketplace lender Social Finance, better known as SoFi, is on the hunt for new funds. San Francisco-based company has been aiming to raise about $500 million in equity to further bolster its place in the online lending industry. Founded in 2011, the company is one of the fastest-growing online lenders. It offers low rates for students refinancing that's if they're higher-earning graduates for top universities, and has spread into new products like mortgages, personal loans. Joining us now, I'm very pleased to say, is SoFi co-founder and chief executive Mike Cagney. You're a man who knows an investment coming from SoftBank. You, of course, raised $1 billion in 2015. How are you putting that money to work at the moment, coming from the SoftBank entrepreneur?
Sure. So it was wonderful to get SoftBank support and some of our existing investors like Third Point and so forth. And essentially what we're doing with the money is using it for the balance sheet. I think one of the things we learned in market-based lending in 2016 was the need to have a balance sheet, need to be able to originate during periods of market dislocation. And we certainly benefited from having that capital on balance sheet in 16 and continue to expand that as we're profitable and accreting the balance sheet today.
And is that why you're raising more money?
Well, we're raising more money in part because we're looking for additional partners that can help from a loan buying standpoint. So one of the biggest challenges we have is the balance sheet challenge in terms of where we place production. So in 2017, we'll originate somewhere between $16 and $20 billion of loans. That's a lot of paper we have to place. And so having deep-pocketed relationships with investors that are in the business of buying loans is helpful, and that's really a catalyst for the round.
We were just talking about how you started off in student loans but have then moved into new products. It's mortgages, there's life insurance. What other products will you bring online when you get to this new financing?
Sure. So today we're very heavy on the credit side. So mortgages, personal loans, student loan refinancing. We've started to do wealth management and are looking at how to build out our asset management business. Insurance is an important component to that. But I think in 2017, one of the biggest solutions that we'll bring to market is a deposit account and a credit card. And that effectively allows us to deliver a full service of solutions into our member base so that they really don't need to go anywhere else for what they need from a financial standpoint.
I mean, interestingly, I come from Europe, where I was banking with N26 in Germany. We've seen Monzo in the United Kingdom. We've seen plenty of other startups. Is this where the competition is, or actually is it the competition coming from the banks as they start to work out that fintech is where they need to get ahead?
So we see much more competition from the banks. I think we're going after a very rich target in terms of that 25 to 45-year-old customer demographic. It's very important to the banks in terms of building those relationships. And so whether it's student loan refinancing or personal loans or mortgages, we're seeing much more bank competition today than we saw a year ago. And it's very important for us to differentiate through our value proposition.
Therefore, your value proposition, say you differentiate it, you've got all these different products. How long until you take the competition to the fintechs in Germany, to the fintechs in the UK? Talk to us about international expansion.
So we're going to do Australia first in 2017, but we've got a path to go to the UK and to go to broader Asia as well. And so it's very important for us to deliver that market, or deliver into that market. And it's the same value proposition. It's being able to deliver speed and convenience and alignment and transparency, something that's missing in a lot of these markets for this millennial type customer.
I mean, what you've done in terms of setting yourself apart is help foster the careers of some of these students. You've got the entrepreneur meet and greets. People come around to your house and get to understand you and be given advice. How do you scale that? And indeed, how much is it hurt by when you've got things like Lending Club not doing quite so well in the press? Does that hurt you from an investor and a consumer point of view?
So we have 200,000 members, and if they all came to my house, I'd have a lot of trouble. So we don't do that. But what we do is we do a lot of offline events. We've had about 10% of our member base go to offline events, whether that's career services, where we help people navigate salary negotiations or get reemployed, or the entrepreneur program, where we help people start companies, or our dating events, which are massively oversubscribed for our members, and hopefully they can create more household units that can sell mortgages to out of that. It's an important component of what we do. It's really a part of our differentiation. And what we're finding is the community is beginning to support itself. So people set up these events with our support, but it's not a situation where everyone's coming to my house.
Those are back in the day. But
back in the day.
Talk to me about the regulatory perspective here, though. I'm looking at the United Kingdom suddenly listening to what's happening in peer-to-peer, looking at what's happening in crowdfunding and getting a little bit worried. And we're talking about the UK, which is actually a very forward-thinking, open regulatory environment. Where do you see regulation changing here and for your business?
So we're optimistic about the regulatory environment over the next couple of years. I think the OCC's initiative to do a fintech lending charter is a step in the right direction. It's one where we can move away from the disparate state regulation that we have today and do a unified national regulator. And we hope more of that comes as the regulators get more and more comfortable with the industry and comfortable with the people involved.
IPO 2017?
Well, I always get in trouble when I say when the IPO is coming. So I think we definitely want to go public. It's important for the business. I think that today we have the luxury, being profitable and growing at the clip that we're growing at, we have the luxury to determine when we do that. And we'll do that when it makes the most sense.
We'll look forward to it. Do come on again, Mike, when that does indeed happen. That, of course, was SoFi co-founder and chief executive Mike Cagney. Thank you for joining us. And there are a few headlines in the auto sector catching our attention today. We've got to get you up to speed, all highlighting how this industry is seeing massive changes, all thanks to new technology. First, Fiat Chrysler announced the production of 100 Pacifica hybrid minivans. That will join Alphabet's Waymo self-driving vehicle fleet. The minivans will be outfitted with fully self-driving technology, including purpose-built computers and sensors. Meantime, though, a new study reveals a large amount of motorists actually shut down self-driving technologies in their car. According to Hyundai, about half of drivers turn off their automatic emergency brakes and lane departure warnings, a sign drivers, well, don't fully trust the technology. Nevertheless, BlackBerry is opening a research centre for self-driving cars. The move raises the possibility of government backing for the former smartphone maker's automotive software unit. And we'll be talking to none other than the CEO, John Chen, about this on Bloomberg TV, of course, tomorrow. It's 11:15 a.m. Eastern Time. You've got to stay tuned for that. Now, still ahead, coming to a pub near you, the world's first beer brewed with the help of artificial intelligence. Can machines really brew a better beer? Why is this happening in the UK the minute I leave it? This is Bloomberg. The world's first beer brewed with the help of artificial intelligence is on sale in the UK. 4 beers have been created, with each recipe altered based on the customer feedback through a mobile app. Bloomberg's Adam Satariano went to find out, well, if machines can really brew a really great beer.
How do you like your beer? Hoppy? Bitter? Dark? Brewers for hundreds of years have been trying to find the perfect recipe. But could it be computers can do it better?
We were just talking over beer about how can we use data more constructively when we were looking at our beers, and we just thought, hang on a minute, it's staring right in front of us.
That's Hugh. His epiphany led him and his friend to develop an algorithm that turns customer feedback into better beer. The process goes something like this. A website printed on the back of the bottles directs drinkers to a survey that asks them a bunch of questions about their taste preferences. The AI bit comes next.
That data, it just goes into our reinforcement learning algorithm, which is called ABBY, which stands for Automated Brewing Intelligence. And then the algorithm essentially takes all this information and then comes up with a recipe and gives the brewer a recipe.
Enter the very human brewer, who acts as a last line of defense if the AI goes rogue.
And most of the time, it is bang on. Most of the time, it can be something that actually is brewed. It will every once in a while throw us a completely random thing at us. Some of it is just not possible, and that's where there is that still have that kind of human aspect to it.
Humans brew the beer and drink it too.
Salty, kind of like seawater with cranberries.
Yeah. I don't think it's very nice.
If you use an algorithm, I think the point is, won't it come out tasting in the middle of the road? It was obviously not going for the average. I'm liking it more and more that I drink it. Yeah, I'm
Customer feedback. It can be fickle. But the technology points to a future of tailoring products to the people who use them.
There you go, I've done it. I'm part of something.
In the future, this same technique could be used for other highly emotive products. So think coffee, chocolate. The one I really like is perfume.
So get ready. In the not-too-distant future, you could be able to give your feedback on just about anything, for what that's worth.
Adam getting pretty carried away. Do we think maybe he cracked his phone before or after the beer he was sampling? Bloomberg's Adam Satariano reporting there. A great piece. Now, coming up, it's Apple, and it's fighting back over the record-breaking tax bill the European Commission sent over the summer. But the case is far from over and could potentially drag on for years. A reminder, all episodes on Bloomberg Technology live streaming.
It's 1:30 p.m. here in Hong Kong. I'm Angie Lau with an update of the top stories. The Russian ambassador to Turkey has been shot dead at an art exhibition in Ankara. Andrei Karlov's killer said he acted in revenge for the bombing of Aleppo, and 12 people have now died after a truck plowed into crowds of shoppers at a Christmas market in Berlin. The driver fled and a suspect was arrested shortly afterwards. The campaign to block Donald Trump has failed, with the Electoral College formally naming him president. Some Democrats and Trump critics wanted the unnamed college members to refuse to endorse the November 8th election result. However, Trump easily cruised past the 270-vote finish line, and he will be sworn in next month. Google has been given till the end of the year to settle a long-running tax dispute in Indonesia. It's been told to pay a fine of about $220 million for 2015 and has been warned it may face a wider investigation if the case is not closed by December 31st. The finance ministry says, quote, they have two options, pay or don't. If they don't, it's jail. And Apple has hit back at European Union competition watchdogs who ordered Ireland to claw back a record $14 billion in unpaid taxes. It's formally appealed the demand to the bloc's general court in Luxembourg, as Dublin said Apple had paid everything required. Apple says the EU retroactively changed the rules on Irish and U.S. tax law. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. This is Bloomberg. All right, let's get you a check on how the markets have been trading in the Asia Pacific today. Here's Juliet Solly.
Angie, mostly negative across Asia today. We are seeing the regional index in the red. There is a little bit of year-end positioning at play, but also, of course, that turmoil from Europe, a lot of geopolitical concerns weighing into sentiment as well. We had a strong finish, though, on the ASX 200 in Australia, closing higher by 0.5%. New Zealand coming off its earlier gains and closing pretty flat there. And, of course, the fact that you are continuing to see the yen weaken against the dollar following the BOJ's decision, which was widely expected, no major change to any action there from the BOJ, but we are seeing that weaker yen really lift Japanese equities. The Nikkei is higher by 0.5% after starting the day's trade fairly flat. The Kospi also in positive territory. This is after we saw South Korea producer price index turn positive for the first time in 2014, but you are seeing a lot of weakness coming through from not only emerging markets, but once again in China and Hong Kong. On the Hang Seng in Hong Kong, down by 0.5%. Still seeing these developer stocks and also the insurance players coming under quite significant pressure. And just quickly checking in on the yen, it is holding at 117.64 at the moment, so down about 0.5% against the dollar. We're going to be live from London at the top of the hour. This is Bloomberg.
This is Bloomberg Technology. I'm Caroline Hyde. Let's get back to our top story for you. Apple, of course, setting the stage for a giant legal battle spreading over several countries around the globe and perhaps lasting several years until anything is really settled. Analyst Matt Lawson is covering this case for Bloomberg Intelligence. Pleased to say joins us now from Washington, along with our guest host, Uber-connected host for the hour, David Kirkpatrick, Bloomberg contributing editor and Techonomy CEO. Let's first of all, though, stick with Matt and give us your sense. Tech companies move at a pace of lightning speed, but it seems that legal disputes never do, Matt. How quickly could this be resolved? What's the next step?
Yeah, so the next step is an appeal from the European Commission's decision that goes through the General Court in Luxembourg, and appeals will take about 2 years, maybe a little bit more for something as complex as the current case. And then after that, there's another opportunity to appeal, and that kind of supreme appeal could take another 2 years. So, 5 years if people keep fighting and there's no ultimate resolution, which looks like the way things are going at this juncture.
David, you're talking to technology chief executives, leaders of business. Is this something that therefore puts perhaps decisions on where to place oneself in the next 5 years at risk? Or is it all now focus on Donald Trump, of course, the next president, potentially helping companies repatriate some of this money, maybe have less of these problems?
Well, certainly, there's a very strong, enthusiastic view in business generally, which you guys have reported on a lot on TV in the last few days and weeks. But I think there is another trend happening, which is that there's a kind of a global shift in the attitude towards really large commercial entities and really large global businesses, and it's more critical, it's more skeptical And I think what we're seeing with the EU's kind of barrage of assaults on the excuse me, barrage on these big internet companies, of which this Apple tax case is just one instance. We also see a lot of big investigations and fines against Google, Facebook, Amazon, etc. I think it's a shift that's really tied even to the whole inequality discussion, that the big companies are going to have a higher standard of behavior they're going to have to follow. So companies need to be thinking about it in those terms.
Matt, while we let David grab some water, do you agree? What does this have an effect on the other companies? We know that Starbucks, IKEA, other companies are being analysed by the European Commission.
Yeah, certainly. As we're looking for decisions coming out in the Amazon.com investigation, there's one going on for McDonald's. A lot of the multinational conglomerates and companies that set up subsidiaries or operating companies in Ireland are able to take advantage of some disparate tax laws and advantages that maybe smaller corporations can't, or it doesn't make sense for them to operate in that manner. We talked about this being a little bit of a tech phenomenon. Tech has the advantage of being able to license intellectual property across subsidiaries and move revenue into low tax jurisdictions that way, or take advantage of some of the perceived loopholes like at issue in the Apple case. And so I think you get a little bit of a sense of, when you're looking at the regulators, maybe there's somewhat of an injustice here because of the way that intellectual property is taxed, because of the way that these large multinationals can move their pieces around the chessboard. And it is a question as to, there's all this revenue sitting overseas. It should be taxed somewhere. The question is, how is it taxed and where should it be taxed?
And Matt, will it be remaining overseas? What does this mean for tax reform, for changes coming from then President-elect Donald Trump?
I think that's a great question. Trump has made comments about having a one-time repatriation, trying to encourage tech companies to bring those dollars back to the U.S. The Senate has previously considered a patent tax box, which would allow companies to tax revenues on intellectual property differently than they do corporate revenues. And that would provide some incentive to essentially establish IP licensing subsidiaries or IP licensing units in the U.S., which may be beneficial. There are always R&D offsets and tax credits that can be given. So I think it advances the discussion, especially when you see the huge numbers, in the tens of billions of dollars that are potentially going untaxed by, what we think of as U.S.-based companies. I think that really moves the ball forward on the policy side.
Matt Lawson, always great to get your viewpoint. Bloomberg Intelligence, thank you very much indeed. And David Kirkpatrick, sticking with us for now. We're going to be tackling a new subject. It's another stock we've been watching. Shares of Nintendo tumbling more than 7% in Tokyo. That's after lukewarm reviews for Super Mario Run. The game was supposed to be a watershed moment for Nintendo, marking its first foray into the world of mobile gaming. But the title, which is currently only on Apple devices, has an average rating of, get this, 2.5 stars out of 5. Users are complaining that the $10 price tag to unlock the game is too steep. Still with us, it's David Kirkpatrick, CEO of Techonomy. 2.5 stars. What do you think's behind it?
Well, I'm not shocked that this game isn't getting a really welcoming reception, because if you think about the world we're in, you really have to do something fundamentally different on this new platform of the smartphone. And the reason that Pokemon Go, of course, which Nintendo was closely associated with, did so well is that it was really a fundamentally new use of the smartphone, putting, augmented reality functions into a game and getting people out in the streets, and really a whole new kind of human behavior as a result of the game. This is just taking a good old Nintendo game and sticking it on the smartphone. It doesn't strike me as hugely innovative.
So does the star rating matter? What does Nintendo do? Do they drop the $10?
Well, I think they're going to get pressure to either drop the price or do something better with the product, but that's something they can't do overnight. So probably it wouldn't at all surprise me if the price went down. A 2.5-star rating is very negative. It's more that it reflects that the word on the street is really negative, and that's what's really going to hurt them. They're just not going to sell a lot at $10 a piece.
My guest host for the day, David Kirkpatrick, CEO of Techonomy, sticking with us. Great points of view when it comes to Nintendo. Coming up, though, we'll be bringing you one of our best interviews of the year, our in-depth chat with Brian Chesky, CEO of Airbnb. This is Bloomberg. Airbnb, well, it's developing a service for booking air travel. That's according to people familiar with the matter, who say development of the feature is in its early stages. Various routes to break into the businesses are under consideration. A move into the space would put the home rental startup in greater competition with the likes of Priceline and Expedia. This is in addition to last month's update of Airbnb Trips, which helps travelers make restaurant reservations and other travel services. Well, staying with Airbnb, the company has made a focus on diversity a huge priority, recently hiring its first diversity head. And numbers are somewhat better than many big tech companies. 46% of its employees in the US, for example, are women. In one of our best of 2016 interviews, Emily Chang sat down with CEO Brian Chesky back in March and asked him, well, why he's making diversity a priority and how his workplace has benefited.
I think it's never too early to start focusing on diversity. I mean, the more diverse the company, the more successful it's going to be. I truly believe that. But I think Airbnb, more than anybody else, it's in our DNA. I mean, on New Year's Eve, 1.1 million people were living together. It was a peak night. These people came from 190 countries on the world. Our core business, our competency, is bringing people together that are not like each other. And our mission is to feel like you can go anywhere you feel like you're included, you belong. Diversity is totally hand-in-hand with that. We have to make people at Airbnb feel like they're welcomed, feel like they're included, and they can't all look and feel the same way. And diversity of ideas will make you a lot more successful.
So I want to talk a little bit about how that applies to women specifically. Your workforce is 46% female in the United States, which is far better than most other tech companies where we see 30% women, 20% women in technical roles. What's the benefit of having closer to 50-50 when it comes to men and women for Airbnb?
Well, I mean, just first of all, we have a basic principle, and that is that if you have an office or if you have a workforce, it should really map to your community and also the country you're in. So I think many people in Silicon Valley, many companies, none of us truly represent proportional demographics of the countries that we're in, but we're all trying to move towards that. There's no question that creativity comes from breadth of ideas converge together. And so if you only have very narrow views and perspectives, I think that's going to be, you will be so limited in what will be possible for you.
That was Airbnb CEO Brian Chesky speaking with Bloomberg's Emily Chang back in March. Now, banking giant Wells Fargo is charging into the biggest asset management battleground, exchange-traded funds. The San Francisco-based bank is considering launching its first ETF sometime next year. But is it too little? Is it too late? As its competitors already have major leg up in the $4.1 trillion ETF market. Joining us now is Bloomberg News' reporter Danny Berger, and still with me is Bloomberg contributing editor and Techonomy CEO David Kirkpatrick from New York. Danny, why now?
Well, I mean, listen, this is a struggling time for active managers. They're seeing an immense amount of outflows, and inflows are going into passive investing, going into ETFs. And specifically, it's this new breed of ETFs that Wells Fargo is looking at that's really taking off. I mean, this is the hot new product. So if Wells Fargo wants to be part of the next generation of investing, this is something that they're going to have to be in. And frankly, a lot of people are surprised that it's taken until this year, well, actually next year, in the next 3 to 6 months, that Wells Fargo is going to launch one of these products.
And they are trying to differentiate themselves through quant strategy. Talk to us about the way in which they're trying to have a bit of a USP here.
Right. Okay. So we got to break it down onto about these types of ETFs. So these are quantitative-based ETFs built around computer algorithms. So first you have what's called a smart beta that takes the idea of ETFs but doesn't use market cap weighting. Instead, it says, I'm going to pick the stocks with the most momentum. I'm going to pick the cheapest stocks. From there, you go to multi-factor, which takes those things and just lumps them together. Says, I'm not going to just use one of these factors. I'm going to use a couple of them. So this is really an idea whose time has come, and this is where Wells Fargo is entering in. So if you look at this chart here, I mean, you can see that still assets are growing, but not as much as smart beta market as a whole. Goldman Sachs really has the lead here. So that's going to be their biggest competition. But they're hoping by getting into this front, which definitely is the newest of ETFs, they can differentiate themselves from what's already out there.
So maybe a bit of a me too coming from Wells Fargo, but David, you like the fact that ETFs are catching on, right?
Well, what I like is that to apply algorithmic approaches to tools that ordinary investors can get access to, because these are the kinds of techniques that have really been confined historically to the highest net worth individuals, the biggest institutions. And this is a great way for ordinary people to invest in a much more sophisticated fashion, basically allowing the software to assemble packages of stocks that really wouldn't historically be assemblable, because when the software is selecting for all these different variables, it can do things in real time that are much more sophisticated. So it's not just an ETF that's, you know, grocery store companies. It's an ETF that is companies that have gone up in certain conditions and gone down in other conditions and that are in relation to something else. And I think that's a great thing.
You know, and to David's point, I think that's really compelling for these companies. AQR, the quant fund, had a really great report taking some of the best investors over the years, taking Warren Buffett's, and they found that you could actually break it down using algorithms. So people before who would have never dreamed of being able to have an investor working for them like Warren Buffett, they can now buy these products and essentially get the same returns.
So active versus passive continues, the war continues to wage. Does it surprise you, David, San Francisco-based bank being the last one in terms of the tech foray into ETFs? What do you think made Wells Fargo miss a trick, and where do you stand on the whole fintech
I don't know.
process?
Talking about Wells Fargo is sensitive because they seem to have made a bunch of mistakes in recent years in their larger business. So it is interesting that they would not have been in the sort of advance of this kind of whole movement, given that they're in the thick of the tech community out there. But you know, there's a lot of startups that certainly are pressuring companies like Wells Fargo, and I'm glad they're finally responding. I think we're going to see a ton of innovation coming from tech when it comes to investing. We already have companies like Betterment, but then Schwab has taken on, you know, robo-investing and robo-managers itself, and had quite a bit of success with it. So the big companies, too, again, a San Francisco-based one, getting into this. But yeah, investors are getting more and more choices, and I also love to see automation serving individuals just at the time when society is worrying more and more about how automation is going to be replacing jobs. At least there's some positive side that's starting to be visible to ordinary people.
Great point from my guest host for the hour. That was David Kirkpatrick, and of course Bloomberg's Danny Berger. Thank you very much indeed for joining us today. Now, still ahead, we will continue to see unicorn valuations, or will we, into 2017? We'll hear from one investor who is not so sure. This is Bloomberg. As 2016 winds down, views on tech's massive valuations are diverging. Some believe Uber and Snapchat's value is fair, and while others warn of a bubble. My colleague Emily Chang spoke with Accolade partner Atul Ruski about just that.
I do believe, and I agree, that we're at the highest level of fund formation and company formation, but at the same level, I think we believe we're at the highest level of innovation and disruption, and I think that's going to continue going forward. A lot of these companies will not be able to be funded going forward, but the few that do, there'll be a subsection of them that I think are going to create interesting things that really change the way we work and operate.
Now, a lot of companies have delayed going public. Valuations have soared. There's been a rise of unicorns, so-called unicorns out there. How do you feel about that?
Yeah, our belief is there should be fewer instances of unicorns out there, primarily because majority of the M&A happens under $1 billion and very few companies are going public. So if a company expects or plans to be a unicorn, there better be a high probability that they can go public given their business model and unit economics. Otherwise, if their growth moderates, which happens to every company eventually, and they're not profitable, they won't be able to go public, their valuations will get crushed. And as we look at the past few years, it feels like there's been more of a focus on optimizing valuation versus exits. So we hope that changes going forward.
That said, you guys are investors in a number of venture capital funds, including Andreessen Horowitz and Accel, yes. And they've got a lot of unicorns in their portfolio. Does that concern you?
So if you look at the top 10 VC firms, they've had a unique ability to invest in these iconic elite companies, whether it be a Facebook, a Pinterest, Airbnb, WhatsApp, Uber, and Lyft. So for those managers and for those companies, there is a market for those companies to go public. But for the broader venture community, unless you are in those iconic elite companies, I believe, or we believe, that M&A is the most likely outcome for those portfolio companies.
Andreessen Horowitz is one fund in particular that's made a big splash, though there's some controversy about how good their returns have been so far. Do you have any concerns there about the performance of Andreessen Horowitz?
So we don't have any significant concerns. I mean, we see the numbers. They've delivered very good returns over the course of the firm's life, partly because they've been able to invest in some of the elite companies I just mentioned. So we're very bullish on them. When they entered the venture capital game, they really changed the dynamic by offering services such as recruiting, PR, and even sales pipeline by introducing strategics to companies. And so almost on a daily basis, they'll bring strategics, Fortune 50, Fortune 500 companies to meet their portfolio companies. And for a number of them, those introductions have become a significant portion of their sales pipeline. So as you talk to entrepreneurs, that's a game changer. And we hear that over and over again. So overall, we've been very pleased. They've had great returns. They've invested in some of the iconic companies, and they are really changing the way venture capitalists operate. And you're seeing other firms mimic these types of services that they're offering.
I'm curious how you decide which venture funds to invest in and how venture compares to the other sectors that you're focused on.
Yeah, so we invest in a mix of venture capital and growth equity, and within that some buyout, primarily technology and some healthcare. When we look at venture capital firms, we are modeling 5x plus funds, and that's because on the growth equity and buyout side, a number of our managers have delivered 3x net funds to us with shorter timeline to liquidity, lower risk. So for venture capital, we are looking for 5x plus funds due to the longer timeline to liquidity and the increased risk. As I mentioned, the top 10 firms, they've been able to get into some of these elite companies, and so they've been able to deliver those returns by being in those iconic companies. Outside of the top 10 firms, we are looking for firms that can deliver multiples of their funds on just $500 to $1 billion exits. And in order to do that, you have to have a maniacal focus on fund size and ownership, which is very hard to do.
Going into 2017, what's your view on consumer tech versus everything else?
So we invest across the spectrum of consumer and enterprise. I feel we're still bullish across the board. I think just with consumer in general, we like to see companies that are a bit more durable. On the enterprise side, if a company's doing well, it continues to do well year over year, whereas on the consumer side, there's a bit more volatility. So with that lens in mind, I mean, we're still constructive both on consumer tech and enterprise.
That was Emily Chang speaking with Atul Rustgi, partner at Accolade. Now that does it for the edition of Bloomberg Technology. Be sure to tune in tomorrow. We'll bring you the highlights from my interview with BlackBerry CEO John Chen, plus Alexios Matsalis, director of Poynter Institute's International Fact-Checking Network, will be joining us to explain how they are fighting against fake news on social media. This is Bloomberg.
A truck kills 12 at a Berlin Christmas market in what the German government says is probably a deliberate attack. Asian stocks slipped to a 2-week low.
That after the Russian ambassador to Turkey is shot dead in Ankara by a gunman invoking Syria's civil war. We're live with the latest.
The Bank of Japan upgrades its outlook for the country's economy in its first decision since Donald Trump's election win.
And the IMF Executive Board backs Christine Lagarde's leadership despite her conviction for negligence by a French court.
Very warm welcome to Bloomberg Daybreak Europe, our flagship morning show here in London. I'm Anna Edwards.
And I'm Manus Granny. The world wakens up again to reconsider geopolitics really at play in Germany, in Turkey and in Zurich. Those are the reverberations. But it's interesting when you see how the market lurched in the very first instance when we got the news flow coming through about the crash in the German Christmas market yesterday evening. But we have subsequently changed our opinion. We've got the Bank of Japan, we've got Yellen upgrading the employment market, you've got the Bank of Japan upgrading its view on the economy.
There's a lot for the markets to factor in this morning, but that's certainly the intensification of geopolitical concerns, as you say, based around the Turkish incident, those in Germany and in Switzerland, coming so soon after we saw China seizing and then returning that US naval drone. It feels as if geopolitics is very much at the centre of things as we head towards the end of the year, doesn't it, Manus? We've got the MSCI Asia Pacific down by 0.3%, but the Japanese market is actually higher, so it's not a simple story across these markets today. No. But the MSCI Asia Pacific is at a 2-week low.
Checking in on dollar yen, and this is typically perhaps one of the most aggressive plays when it comes to considering geopolitics. And what you are seeing is the yen is actually lower. Of course, the Bank of Japan has stayed committed to controlling the yield curve, and that, in essence, is still going to put a fire under dollar yen. That's the view from the market. You've seen leveraged funds. They bought dollar yen after the Bank of Japan decision, and dollar yen likely to rise to 118. That's according to one or two of the estimates out there. So yen is still lower. That classic market reaction just isn't invoked this morning.
Yeah, we've got interesting moves coming through on the US Treasury market as well. In the immediate aftermath of the attack in Turkey yesterday, we did see increased appetite for assets such as US Treasuries on those geopolitical concerns, but that's changed a little bit in this morning's session. We're now at 2.56%. That's the yield on the US 10-year, and we have Yellen talking about the jobs picture. Lots to talk about with regards to Donald Trump as well as we head towards the end of the year.
Absolutely. Ken Rogoff, I think, talking about those days of irrational exuberance was the Greenspan era. We're shifting. Check in on dollar lira because, of course, you had the additional geopolitic incident, tragic incident, where the Russian ambassador was shot in Turkey yesterday evening. Now, this has put more pressure on the lira. You are seeing it slide. That was the very first reaction. We have a central bank decision today as well, which compounds, I suppose, the positioning on the Turkish lira as well this morning.
Let's put up the US futures, a very early stage, of course, of the US trading day, but just a quick glimpse of where we are perhaps going to be. Pretty flat, really, is the estimate at the moment, is the assessment at the moment in the futures markets of where we'll be at the start of the US trading day. Remember, the S&P is up by 0.6% since Trump was elected. Manus, the Dow is up by 8% since Trump was elected. So since we saw those record highs of last week, it seems struggling to add to those positions aggressively. Let's get the Bloomberg First Word News, shall we, Manus, with Angie Lau.
Thanks, Anna. Thanks, Manus. 12 people have now died after a truck plowed into shoppers at a Christmas market in Berlin. 48 other people were injured in the incident, which the German government says was probably a deliberate attack. Police say a suspect believed to be the driver was arrested after fleeing the scene and that a passenger in the truck was among the dead. German media, including Die Welt newspaper, have reported that the driver was a refugee from Pakistan. And President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allahu Akbar and "Don't forget Aleppo" after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. And a manhunt is now underway in Zurich after a suspect shot people praying at an Islamic center. 3 men were hospitalized after the attack, which took place close to the main train station. The dead body of another person was found just a few minutes' walk from the scene, although it's unclear if the 2 episodes are linked. And the Bank of Japan has upgraded its assessment of the world's 3rd largest economy. We're talking about Japan here. At the same time, monetary policy was kept unchanged in the central bank's first decision since Donald Trump's election victory. The BOJ forecasts a moderate recovery trend to continue following a pickup in exports and an improvement in business sentiment and resilience in private consumption. And the Pentagon says that China has returned a U.S. Navy underwater drone. The unmanned vehicle was handed back close to where it was seized last Thursday. The incident triggered a diplomatic spat between Beijing and Washington after President-elect Donald Trump took to social media to criticize China's actions. And the International Monetary Fund's executive board has reiterated its backing for Christine Lagarde. That's after its managing director was convicted for negligence during her time as French finance minister. The Paris court said she should have done more to block and overturn a multi-million euro payout to businessman Bernard Tapie over his 1993 sale of Adidas. Lagarde won't face any fine or jail term. And Scotland's First Minister will this morning detail her government's red lines on Brexit. Nicola Sturgeon has already made clear that remaining in the single market is key to her country's economy. Today's policy paper is expected to lay out how Scotland wants the UK to cede control of policies on issues including immigration. Over the weekend, she reiterated her stance on calling for a new independence vote if her demands are not met. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. And of course, you can find more stories on the Bloomberg at Top Go. I'm Angie Lau, and this is Bloomberg. Anna, Manus?
Angie, thank you very much. These are Merkel's dead. Those are what a prominent member of Alternative for Germany party tweeted after the truck careered into Berlin Christmas market, killing 12 people in what the government says was probably a terror attack.
Matt Miller is in the German capital for us this morning. Matt, give us the latest then.
Well, first of all, we know that 12 have been killed. We know that almost 50 have been injured. And we also know that the police have apprehended the suspected driver. They are very cautious, the German police are, in accusing the driver of a terrorist attack yet, or giving us even the driver's nationality. However, they have tweeted that it is a probable terrorist attack, and we've had prominent politicians from both the CDU and the SPD, the 2 ruling parties, calling this a terrorist attack and denouncing it as a horrific and cowardly act. I should point out that although the Alternative for Deutschland, the AfD, right-wing populist party, has said that the blood is on Angela Merkel's hands, the Chancellor's hands, this is not such a prominent party in Germany. They don't have the kind of populist power that you've seen, for example, sweeping across England and the UK, although they have had a more surprisingly strong voice than maybe onlookers would have expected a couple of years ago.
Matt, this is one of those defining moments, isn't it, in terms of how this plays out with Merkel's rivals in a big election year for her. This is just going to add fuel to the backlash against her open-door policy, potentially.
Well, absolutely, Manus. I mean, when we were reporting on whether or not Angela Merkel would run for a 4th term, one of the biggest concerns, even from within her own party, is that you would have some kind of terrorist attack or some kind of incident from these refugees for whom she is responsible being in Germany. This now may have happened. We're not obviously sure, although Die Welt has said this, the driver was a Pakistani refugee. That has not been confirmed. Manus, Nana?
Matt, thank you very much. Matt Miller with the details there from Berlin. So Asian equity markets then we see at 2-week lows. The MSCI Asia Pacific down by 0.3%. Let's get the details on the trading day. Juliet Starley has those for us. Juliet.
Yes, Anna, well, certainly all the geopolitical turmoil happening, including what Matt was just talking about, really weighing on sentiment here in Asia. We do have stocks at a 2-week low, as you said, but there's also a little bit of year-end positioning happening as well. If you look at the actual fundamentals, it does look like we are seeing more weakening coming in as we round out 2016, although you did see a good session in Australia today, New Zealand closing flat, and of course the BOJ coming through with its decision, no change, but of course it saw that very big weakness, I should say, coming into the yen holding at those 10-month lows, and that has pushed the Nikkei higher. So it was pretty flat ahead of the BOJ announcement, which happened at lunchtime Tokyo time. When markets resumed after that lunch break, you saw quite a big spike coming through, and the Nikkei has closed higher by 0.5%. Very different, though, here in Hong Kong and also in China. You've got Chinese equities actually trading at 6-week lows, so still a lot of concerns about capital outflows. You're seeing a lot of this pressure as well coming through on the construction firms and development players in Hong Kong and also in Shanghai. Most of Southeast Asian markets also underwater today as well. And just having a quick look at the yen, of course, at this 10-month low, 117.75, but just worth noting these big dips that it had against the dollar. That was at the BOJ's decision, and this is at the close of trade in Tokyo today. Manus and Anna.
Juliet, thank you very much. Great market roundup there from Juliet Sully in Hong Kong. Joining us now on set in London is Neil Williams, Group Chief Economist at Hermes Investment Management. That has £28.6 billion in assets under management. Neil, welcome to the show this morning. We greet the show, we greet the day, again, with more geopolitics to consider. When you look at the tweet that was sent out by Markus Pretzel last night, the chairman of Alternative for Germany, these are Merkel's dead. Terror is something that we deal with on a constant basis now in Europe. But this is the last thing, really, that Merkel needs going into 2017, isn't it? This adds fuel to the populism fire.
Yes, more bad news, and it seems invidious to talk about the political impact of these tragic events. But as you say, looking into next year, we have a very highly charged political calendar. And two of the big themes that we've been talking about on the show in previous months, of course, Manus, have been one, opening the fiscal box, and that's linked to that because electorates are unhappy. And the second thing is beggar thy neighbour policies, not just after the Brexit vote, but Mr. Trump landed, and that's added to the risk for next year. And as you say, these tragic events in Europe are only going to add to the fragile position that current governments are in. And as a result, next year, we may get, rather more than financial contagion, we may get a bit more of political contagion.
We see the reaction and the conversation switches, no doubt, very quickly to immigration and what policy changes there would be around that, if any, for the Eurozone. But what about on the economic side? What kind of response do we get to this, these attacks that take place? Is protectionism going to be something that we don't really know what that's going to look like from the United States yet, do we? Is it going to be something that the Europeans are going to talk about more?
Well, they are. I'm sure we're going to get far more rhetoric than we are rather than action, because, of course, one of the laws of being in the EU and the single market is to have free movement, if not of work, then of labour. So it's very difficult to divorce these concerns from the sort of escalating pressure to review EU positions. And as you know, my concern has been that Brexit is no small backyard parochial issue. That's going to ripple out next year. And we in the UK, there was never a good time to have a Brexit leave vote, but we chose possibly the worst time ever, with elections, of course, due in France, Germany, Holland, potentially Italy and Spain. So we're opening the trap door. Who else might want to follow down it? That's a big risk in terms of macro for the euro.
Is that a very real risk that you put on the slate for 2017, or the ultimate implosion of the Eurozone? How real is that risk for you guys at Hermes?
It's a risk, but I'm in my more optimistic moments, I believe that risk is going to be diluted by governments giving a bit more on the fiscal side, a bit more fiscal largesse, which, let's face it, they haven't so far. And the reflation trade in financial markets looks right at the moment, because Mr. Trump is promising tax cuts. We may get something from Europe as well, but can it be sustained?
OK, Neil, thank you very much. More from Neil Williams as we go through the programme. He stays with us from Hermes Investment Management, of course. Coming up on the programme.
No curveball from the BOJ. The central bank's monetary policy stays unchanged, but Governor Kuroda will face questions over the sustainability of trying to control the 10-year yield. We discussed that ahead of his news conference.
The killing of the Russian ambassador to Turkey in Ankara threatens to become another flashpoint in the relationship between the nations. We're live from Istanbul with the latest.
Plus, red lines in Edinburgh, threats of a second referendum on Scottish independence could grow stronger as First Minister Nicola Sturgeon presents plans for a bespoke Brexit deal on her nation. All that ahead. This is Bloomberg.
Welcome back, everybody. This is Bloomberg Daybreak Europe, a live shot of Hong Kong for you. 21,715 is where we are on the Hang Seng, down by 0.5%. The Asian equity session is under pressure, down 0.3%, but the Japanese equity market's actually trading a little higher. Let's get the Bloomberg Business Flash. Here's Juliet Sali.
Anna, thank you. 12 people have now died after a truck ploughed into shoppers at a Christmas market in Berlin. 48 other people were injured in the incident, which the German government says was probably a deliberate attack. Police say a suspect believed to be the driver was arrested after fleeing the scene and that a passenger in the truck was among the dead. German media, including Die Welt newspaper, have reported that the driver was a refugee from Pakistan. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allahu Akbar and "Don't forget Aleppo" after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. The Italian government has cleared the way for the potential rescue of lenders. That's as it seeks permission from Parliament to increase the nation's public debt by as much as 20 billion euros. Troubled lender Monte dei Paschi is attempting to find investors to back a private €5 billion capital increase. Should these efforts fail, Prime Minister Paolo Gentiloni has laid the groundwork for a state-sponsored cash injection with the possible sale of bonds. The boardroom battle at India's biggest conglomerate has taken a dramatic turn, with Group Chairman Cyrus Mistry stepping down as director of Tata Companies. He acted ahead of more shareholder meetings, saying he's taking his fight with patriarch Ratan Tata to what he called a larger platform. Mistry quit the boards of Tata Steel, Tata Chemicals, Tata Global Beverages and Indian Hotels, and as chairman of Tata Motors. And that is your Bloomberg Business Flash. Anna Manis.
Julia, thank you very much. Now, the Bank of Japan has upgraded its assessment of the world's third largest economy. At the same time, monetary policy was kept unchanged at the central bank's first decision since Donald Trump's election victory. I'll get there.
Yeah, live now to Bloomberg's Sherry-Ann. She's outside the BOJ in Tokyo. Sherry, very good morning to you. So no change at all, not to any of the metrics we were watching for. Not quite unexpected, though. Pretty unanimous was the view of the economist community. Give us the latest then from the BOJ.
Exactly, Anna. So 39 economists that Bloomberg surveyed were expecting no change. That's exactly what we got. The core elements of the new policy framework set by the BOJ in September remain unchanged. We're talking about the 10-year yield target at around 0%. Also, it maintained its policy rate at minus 0.1%, while keeping the target of increasing the annual JGB holdings by 80 trillion yen. Already, although it's worth mentioning that already the BOJ has started to slow down the purchase of these JGBs or its holdings towards 70 trillion yen a year. Of course, we've been facing a lot of speculation on whether or not these unprecedented JGB purchases had reached its limit. So back in September, the BOJ shifted its focus towards controlling the yield curve. But once again, the BOJ faces challenges on this front as we see global bond yields spiking and applying upward pressure on the 10-year yield, which just last week surged to the highest since January, hitting 0.1%, which some say could be the upper limit of tolerance for the BOJ. So all eyes right now are on the press conference and what Governor Haruhiko Kuroda will have to say on the yield curve and how he plans to manage it. Manis, Anna?
Sherry-Ann, let's talk about their view on the economy. The Bank of Japan has shifted their view.
Yeah, so they're a bit rosier when it comes to the outlook. I mean, they're saying that the recovery continues for the Japanese economy. Now, they're looking at a pickup in exports, also an improvement in business sentiment, not to mention resilience in private consumption. But they still think that there are risks to this assessment that could come from the Chinese, also the U.S. economies, also geopolitical uncertainties. Now, for this meeting, we don't get numerical forecasts. We get them in the next meeting. But earlier Tuesday, we did get word from the Cabinet Office upgrading their forecast for next year, saying the real gross domestic product is expected to grow 1.5% in the next fiscal year of 2017. We're also expecting a boost from the fiscal side from the Japanese economy. Remember, we have the third supplementary budget this week, as well as a 0.8% increase in the fiscal 2017 budget. That also expected this week. Anna, Manis?
Sherry, thank you very much. Sherry-Ann joining us there from outside the Bank of Japan in Tokyo. We're now joined also from Tokyo by WisdomTree Japan CEO Jesper Koll. Great to have you on the programme, Jesper. So the Bank of Japan doing what many had expected them to do today. They've said in the past that they can control the yield curve. How long before they're really tested on that front, do you think?
I think we've got way to go here. The key word from the Bank of Japan is stability. They will exercise their tools to anchor the yield curve for the time being. And I think that the real stress point is only going to emerge if we see the yen weakening past 120, 125 against the dollar.
Well, how soon could that happen? I mean, there are various opinions this morning saying that focusing on yield curve and yield control ignites that weaker yen trade. Would you agree with that? And if so, how soon could we see 120, 125, Jesper?
No, absolutely. The Bank of Japan has turned passive-aggressive in the sense that they are capping Japanese yields. They're closing the interest rate channel of adjustment, while meanwhile the rest of the world, particularly the United States, is obviously undergoing some sort of adjustment with interest rates there, continuing to increase. But it will be dollar strength rather than yen weakness that's really the determining factor here. From Japan's perspective, they want just one thing right now, which is stability, and yes, they do want a weaker yen.
So they want a weaker yen, they want stability. People are talking about a corridor of tolerance that the Bank of Japan may accept, which is 0.1% on the upside and negative 0.1% on the downside. Do you think that that corridor exists for the Bank of Japan? And do you think that this will reduce in any way the amount of quantitative easing they've got to do, because they're only going to attack the bond market when that cap is pressured?
You make the important point here. We've switched the regime. We're back to price targeting, not the quantity. So looking at the quantity ultimately, has become de facto irrelevant. The key question is, what's going to pull the trigger for the Bank of Japan? And I think it's one word. It is the wage outlook in the Japanese system here. If you do get the currency adjusting past 120, 125, and at the same time you do get visibility that Japanese wages are beginning to accelerate, that's when, a higher yield target is likely to be introduced. But that's probably at least a way until next summer.
So we're currently at 117 on dollar yen. Just briefly then, Jesper, you've mentioned about how positive Donald Trump's victory would be for Japan. How positive will it be? Because on the one hand, you could think that Japan stands to lose if we see protectionism and a turn against globalization.
But look, I mean, you talk about this, but the reality is that we're seeing exactly the opposite. We've seen, Japanese foreign direct investment into the United States accelerating with SoftBank Corporation and today Sumitomo Bank, one of the monster banks here in Japan, actually committing, multi-billion-dollar projects into the United States of America. So, you can talk about the risk of protectionism, and I understand that, but the reality is that Japanese machinery companies that make infrastructure machinery here in Japan
from WisdomTree, the CEO there. Thank you so much for joining us this morning. This is Bloomberg.
Welcome back. You're watching Bloomberg Daybreak Europe. This is Tokyo for you. The dollar against the yen, 117.74. So we see the dollar a little bit stronger against the Japanese currency this morning. We've got a lot in the mix over in Japan. The BOJ meeting, of course, not the least of it. 3:30 in the afternoon in Japan, 6:30 if you're here in London. A new edition of Daybreak is now available on your Bloomberg and on your mobile. The function that you need is DAYB Go, and let's take a look at some of the top stories making it into today's edition. And no surprise, we start with the dreadful events in Germany.
Yeah, it is the cover story. We've had a spate of incidences in Europe yesterday. 12 people are now dead after a truck plied into shoppers. This was at a Christmas market in West Berlin. Now, the German government says that it was probably a deliberate attack. The Interior Minister says that there's early indications to point to an attack. There's a variety of responses online and on Twitter from a whole host of voices. These are Merkel's dad. That's what Markus Pretzel, the chairman of Alternative for Germany party, said in North Rhine-Westphalia, posted in a Twitter message.
Earlier, Russia's ambassador to Turkey was shot dead in Ankara, and a manhunt is underway in Zurich after a suspect shot people praying in an Islamic centre close to the main train station.
Now, the next story is news that the Italian government has cleared the way for the potential rescue of lenders. That's as it seeks permission from Parliament to increase the nation's public debt by as much as 20 billion euros.
And finally, Daybreak focuses on Christine Lagarde. The International Monetary Fund's executive board has reiterated its backing for her. That's after she was convicted for negligence during her time as French finance minister.
Let's check into the markets now. It's been a very, very interesting reaction, both in terms of yen and the bonds. The classic reactions to geopolitics haven't exactly played out. Neera Chayich takes a look. Neera, good morning.
Good morning, Manus. Yes, you're right that the classic reaction hasn't played out in terms of the yen acting as the safe haven today, but we are seeing a little bit of a pullback in the MSCI Asia Pacific Index, a little bit of defensiveness creeping into the Asian stock markets after a month-long risk-on rally. Now, Japanese shares are a little higher now after initially falling after the BOJ kept its policy unchanged. This is the Hang Seng here testing, or in fact, it has crossed two technical indicators, dipped below its 200-day moving average, and it has now dipped below 30 on the relative strength index, showing that it is oversold. Now, if you look at Chinese stocks dropping to a 7-week low, this is about what's happening in the bond market. So the Shanghai Composite among the world's biggest losers this month as the rout in the debt markets and rising money market rates, as you can see on this chart, cause investors concern. Now, the debt rout really has exposed the vulnerabilities of a market that had built a leverage chain entirely dependent on loose funding, and the sell-off has sparked a chain reaction among banks, funds and brokerages as those losses spread. Something to definitely keep an eye on. Now, I mentioned the yen. Here's the Kuroda effect. Sometimes you don't actually need a surprise to have an impact on the market. The yen is the worst performing currency among major FX against the dollar today. Anna, Manus?
Nara, thank you very much. We're getting live pictures from Tokyo, where Bank of Japan Governor Kuroda is speaking following the latest policy decisions from the BOJ. And a few lines coming out of that, Manus.
Yeah, he sees the economy starting a gradual expansion. This goes back to the top line where they've talked about a better or an improving economy. He said the Bank of Japan has raised its assessment by its quantum here by one step. They've upgraded their assessment on the Japanese economy, and as Jesper Kroll just said to us, they've turned passive-aggressive in terms of targeting the yield curve. They expect a virtuous economic cycle to continue. But, of course, if you cap your yield at 0.1% and the Fed and everybody else is raising rates, that has got ramifications for dollar-yen.
Yeah, we'll see how much the market tests that commitment as well, won't we? There's Governor Kuroda speaking there live in Tokyo. We'll continue to monitor that press conference, of course. But let's turn for the moment to the geopolitics again. Russia's ambassador to Turkey has been shot dead in Ankara in an assassination apparently linked to the war in Syria. President Vladimir Putin denounced the attack, saying it was an attempt to undermine ties between his country and Turkey.
The committed crime is undoubtedly a provocation aimed at derailing the ties between Russia and Turkey, as well as the peace process in Syria, which is actively promoted by Russia, Turkey, Iran, and other countries interested in the regulation of inter-Syrian conflict. There's only one possible response to this: the strengthening of the fight against terror.
For more, let's get to Sivan Demirkan in Istanbul. Sivan, thank you for joining us. What do we know so far? We've just heard from Putin. What is the latest?
That's right. So Russian ambassador to Turkey, Andrei Karlov, shot dead at an art exhibition in Ankara late last night. The shooter, a Turkish police officer. Now, apparently during the attack, he was shouting about the Syrian city Aleppo. Of course, Russia has been backing the Syrian government in the fight against rebels there. Now, Russia and Turkey say that they will not let this assassination dent relations. Of course, Turkey and Russia has been on the path to reconciliation after Turkey shot down a Russian jet late 2015 and a diplomatic row erupted. There were trade and tourism sanctions, but now they're back on the path to reconciliation. Now, after the assassination of the Russian ambassador, hours after that, a gunman fired shots outside the US embassy in Ankara. The US embassy now says that its embassies in Turkey will be closed today.
And Sivan, as Turkey deals with political unrest, it's also seeing economic implications, of course. The central bank has a rate decision today. What are we expecting there on the economic front?
That's right. According to a Bloomberg survey, the median estimate of economists expect that the central bank will raise the overnight lending rate by 25 basis points, bringing it to 8.75%. Now, they raised rates last month for the first time since January 2014, but investors say monetary policy is still too loose. President Erdogan, though, wouldn't agree. He says rates are way too high. So we'll see what the central bank does later today.
Sivan, thank you very much. Sivan Demirkan joining us in Istanbul. For more on this story, Darren McDowell is the principal analyst at Verisk Maplecroft, and he's on set with us alongside Neil Williams from Hermes. Darren, thank you for coming in. The language and the posturing by Putin at the moment suggests, or certainly suggests, that both sides are trying to do everything to avoid another standoff. Is that a fair estimate?
Yeah, very much so. It's important to note at this point that the reconciliation between Ankara and Moscow is a very conscious choice that the two sides have made after the incident in Syria in 2015. Certainly as Turkey becomes more authoritarian and more divorced from the West, that's a relationship that Putin is very keen to cultivate. And it's interesting to see that he very clearly used the term provocation to say the aim of this terrorist attack was to drive Russia and Turkey apart. And ironically, it may end up pushing them closer together as a result instead.
How close together are they, given the fact that they're on different sides in the Syrian conflict? Or
it's a little bit difficult to tell at this point. I mean, they have very strong economic ties, and while Turkey is integrated into Western security structures such as NATO and is on the other side, or was on the other side of Russia in the Syrian civil war, but on the other hand, you see they have increasingly similar political systems, increasingly similar political outlooks, and increasingly are both becoming the victims of terrorism as a result of their intervention and their involvement in the Syrian civil war. So the coincidence of interest between Turkey and Russia is getting stronger and stronger, and the coincidence of interest between Turkey and the West is comparatively getting that bit weaker.
Neil, can we bring you into the conversation? It's always a difficult bridge to travel, isn't it, between the politics of rapprochement between Turkey and Russia and the economic consequences. Yeah. But they are quite substantial, and they have quite significant reverberations for Russia as well as Turkey. And those are positive for Russia. That's why Putin needs to keep this relationship, this corridor, open and stronger again.
Yes, they are important, and I guess you could say that the two countries are heading in opposite directions right now, because Turkey looks like it's dipping into recession, whereas Russia is now finally looking out the other side from what I think has been a 4-year downturn in growth. There's no coincidence that that's happening at the same time as the oil price has doubled since New Year, and also they've got a bit of a fiscal cushion going forward. So you might say that there's a bit more room for that to happen. But, you know, sort of opening that out, if oil does pick up and if we get a bit of protectionism from whichever countries, we do get inflation next year. That's the good news. Remember inflation? The less good news is that it's the wrong sort. It's cost inflation. We don't get paid for it. We don't skip to the shops and buy stuff. But that cost inflation, as we know from the past, tends to peter out after a while. So central banks will just simply turn a blind eye to that.
You mentioned the resurgence in the oil price and the resurgence in the Russian ruble, and this is WCRS, isn't it? You've got here,
this is year to date,
showing the year-to-date performance of the Russian ruble. Amazing what that uptick in oil prices will do. But Dara, going back to the Russia story then specifically, I mean, how much is the economics informing what Putin is doing at the moment? The devastation we saw to the Russian economy by the weaker oil price was clear, but now we see oil prices heading higher. We see the Russian ruble on this road to recovery. How much does that influence what he does geopolitically?
I think it's pretty fundamental, or we think it's pretty fundamental to a lot of what Russia does. Now, Putin doesn't always understand how his actions will affect the economy, but it's very clear coming into presidential elections in 2018, with the Russian budget already quite tight, with the potential for fiscal austerity in 2017, that they are very keen to keep the Russian economy on an even keel. The Rosneft deal that we saw a couple of weeks ago will help shrink their fiscal deficit and ease up on some of the austerity that they've been planning for 2017 a little bit. But for maintaining social stability, for maintaining Putin's popularity, this is all very critical stuff.
Dara, thank you very much for your input this morning. Dara McDowell, Principal Analyst at Verisk Maplethorpe. Neil Williams stays with us for a little bit more. We're going to shift gears, aren't we?
Yeah, we're going to shift gears and talk about the Fed now. Speaking yesterday to a graduating class at the University of Baltimore, Fed Chair Janet Yellen said that economic gains are finally raising living standards for most Americans and that the job market has improved.
After years of a slow economic recovery, you are entering the strongest job market in nearly a decade. The unemployment rate at 4.6% is near what it was before the recession. This is a level that has been associated with good job opportunities.
So with us is Neil Williams from Hermes Investment Management. I'm almost going to channel a line which is, you've never had it so good from a British Prime Minister. But certainly this is Yellen's, I suppose, nirvana, isn't it, which is creating a better society and better opportunity for the youth. And she is saying that college graduates are entering the strongest job market in nearly a decade. So I've got protectionism, I've got Trump, I've got the Fed on the move, on the upside. How much can they do next year? And is it going to be the best and strongest market in a decade?
Well, I can't remember the last time I heard optimistic tones like that, Manus. I hope that's just not end-of-year optimism. But I mean, admittedly, looking into next year for the US, clearly Yellen monetary policy is going to play second fiddle to what's going to happen in the White House. And it seems to me that even on the potential market volatility that we may get should Mr. Trump change everything that we've become used to, it still does not point to an aggressive Fed. Partly because in the short term he promises tax cuts. Now, I don't want to dampen down the reflation trade and the optimism, because that's justified in the short term. But what I'm concerned about is that through next year he plays, if you like, his trump card. We're in the UK worried about Article 50. In the US they've got Super 301, which allows the president, completely independently of Congress, to impose trade sanctions. He's been talking, of course, about 45% tariffs on China, 35% on Mexico. I'm not so worried about the direct hit on the US, which is a relatively closed economy, but rather more the barroom brawl that could occur as a result of that across the world if there is retaliation.
OK, and you don't think then that that despite all of the policies he's going to introduce, you don't think the Fed will be able to be very aggressive? So if you think 2 or 3, is that too aggressive, or is that what you expect the Fed to be able to get through?
Well, I'm looking for sort of one more and done from the Fed, March or June, the next forecast round. The FOMC's dot plot is now looking for 3 next year. It seems to me that you can almost cut off that dot plot beyond the middle of next year and forget about further increases. So the Fed's ultimate aim of peaking out at 3% seems to me still to be unrealistic.
We've got to chart off here, investors shaking off the blues, and this is moving from, as I said at the start of the show, irrational despondency is now passé. This is a wonderful line coming from Ken Rogoff. Would you join that? You obviously don't, because you're saying that the Fed is one and done. So what's holding them back? What's going to stop them?
Well, I think there are 2 main things, or 3 main things, in fact. The first one we mentioned about potentially there being, if not protectionism, then the fear of protectionism. And I'm talking about not just the US here, but Europe. The discussion we had earlier. The second thing is that there will be that inflation, but if it's the wrong sort, if it's cost inflation, central banks know that that's going to peter out. And so they'll have to turn a blind eye. You don't raise interest rates if you know the economy is going to slow down a few months later. And the third thing is, on a technical note, the Fed and the Bank of England are queuing up to tell us that the Goldilocks rate, the so-called neutral rate, is far, far lower than we're used to. And if you take them literally, on that basis, the Fed is looking at perhaps two, maximum 3 more, and that's not even expecting any protectionism. So it seems to me that even if I'm completely wrong, the Fed, after next year, may as well hang up its boots in terms of raising interest rates.
Neil, thank you very much. Neil Williams from Hermes stays with us on the programme. Up next, bespoke Brexit. Scotland's First Minister Nicola Sturgeon wants Britain's plans on leaving the EU to fit her nation's needs. We'll discuss that. This is Bloomberg.
You're looking at a live shot there of, well, where the incident occurred yesterday evening in West Berlin, where a truck crashed into a Christmas market, killing 12, even 48 injured. It's understood, and this is speculation at this stage, that it's a Pakistani refugee who's responsible for it, shouting Allah Akbar and don't forget Aleppo. The suspected driver has been arrested near the scene. The passenger there was shot dead. Spokesperson for the Berlin police, Thomas Nordhoff, told reporters, "We don't have firm evidence in one direction or another at this stage." So as we get more news from Germany, of course, we will bring that to you.
7:49 in Berlin, 6:49 here in the UK. And Scotland's First Minister will this morning detail her government's red lines on Brexit. Nicola Sturgeon has already made clear that remaining in the single market is key to her country's economy.
Today's policy paper is expected to lay out how Scotland wants the UK to cede control of its policies, issues including immigration. At the weekend, she reiterated her stance on calling for a new independence vote if her demands aren't met. We've got Bloomberg's Rodney Jefferson joining us from Edinburgh. Rodney, good to see you. Look, what are we expecting Sturgeon to outline today?
Well, for the last 6 months, really, ever since she said that the result, the Brexit vote for Scotland, was democratically unacceptable because, as you know, all regions of Scotland voted to remain in the EU. Since then, she's been building the narrative that this will not work for Scotland. The compromise, if you like, now is that she's pushing for a soft Brexit, i.e. that Scotland will remain in the single market, full access to for all the trading, the labour market, freedom of movement of people. And it's really just, she will throw down those red lines and say, right, well, if this can't be done, then she will fulfil her pledge to pursue another independence referendum.
So at the moment she seems to be talking about devolving more powers then to Edinburgh, Rodney. But how seriously then should these threats about another Scottish independence referendum be taken?
I think very seriously. I mean, this is a risky strategy, if you like, as well. I mean, there's been a lot of sabre rattling on both sides. I mean, Sturgeon knows that she would have the full support of her party and the activists on the ground in the Scottish National Party to pursue that dream, if you like, of independence. The thing is that very few polls show that anything has really changed over the last 2 years since the last one, and that actually a majority of Scottish voters would still probably vote to remain in the UK. So she knows that this compromise would allow Scotland to retain what it wants from the EU, right, if you're allowed to get it, without having then to roll the dice again on independence. But if she doesn't get that, I think she'd have no choice.
Rodney, thank you very much. Rodney Jefferson there in Edinburgh. Neil Williams is Group Chief Economist at Hermes Investment Management. High risk, high roller, high dice rolling. This lady, Ms. Sturgeon, is up for taking a bit of risk to get what she wants. What's the impact, potentially, of another election from an economic perspective? Disruptive?
Well, of course it is, and it simply adds to the notion that this Brexit thing is just one big can of worms. Because let's face it, if Parliament in the UK now is to have a say as to which path we go down, which looks likely, then it seems that we're going to have to ask permission from the devolved governments within the UK, Scotland and Northern Ireland, who of course voted to stay, as to the path we seek. And of course, in terms of Scotland, if they are going full pelt for EU membership, does that mean ultimately they'll want to be part of the euro, in which case, as a training ground, they join the ERM with Denmark? At least there's company for Denmark, which is the only currency in it right now. But on a broader note, within Brexit, you know, how quickly are we going to get there? I'm slightly worried that it's going to take way longer than the 2 to 3 years that we're all hoping for. The only precedent we have is Greenland in the mid-80s that voted in 1982 to leave the EU, and it took 3 years. And they really had only one big issue to vote on, which was fishing rights. I would argue after 43 years, we've got a few more yet to come. So it seems to me, don't forget, this is our second European divorce after leaving the exchange rate mechanism. Any future tie-ups, there are going to be with conditions. Sounds a bit like EU membership, then.
Do you think, I mean, yesterday we heard from Theresa May in Parliament, and she was asked specifically about, well, to rule out paying the EU for anything in the future, and she would refuse to do that, said the important thing about the Brexit vote was just to make the decision about what to pay for in the UK. Does this suggest that perhaps a transitional deal, and given what you just said about the time horizon, suggest that perhaps a transitional deal is very much being talked about behind those closed doors on those cards that are very close to chests that we can't see?
Well, transitional is a good word, but it's not going to please many voters who voted to leave. And there will be local elections coming up next year, so we could see quite a big protest vote if that is the case. But the irony about the payment to stay in the club is that per head, our payment in the UK every year is roughly no bigger than Norway's to stay in the club, but not have the bad bits in terms of the bits that we didn't like and voted to come out of. So even if we're going to shadow the EU ultimately and be an associate member, we'll still have to contribute.
We still have to contribute. You have to pay the piper at some stage, don't you? And the markets will demand retribution as well. There's never been, in 10 years, this is the median estimate for euro sterling. So in other words, we look at the slate of politic for Europe next year, what that might do to the euro. And we have our own can of worms, as you say, in the pound. But it's been a decade since there's been such divergence in terms of where euro sterling goes to. Just how much more pressure do you think will be exerted upon the currency if Sturgeon goes for a referenda?
Well, with or without Sturgeon, we haven't seen the worst of the Brexit impact yet, market-wise. It is made slightly more disruptive if there is a second referendum, because the union then itself is being questioned. But to compare sterling against the euro is a little difficult, given that, in effect, if I'm right about Brexit rippling out, they're tarred with pretty much the same brush. Brexit, for me, is net dollar positive. Add that to the fact that there are other things across the pond going on to support the dollars, like potential dollar repatriation and tax incentives to do so. And ironically, Mr. Trump could prove to be the best central bank for getting the euro down.
Neil, thank you very much for joining us today. Neil Williams, Group Chief Economist at Hermes Investment Management, joining us on a busy morning. Great to get your thoughts on various parts of the globe. Shall we, let's finish with
a couple of lines from Kuroda. He's talking about dollar yen. I mean, this is the volatility that you've seen in dollar yen. Negative rates, yield curve control. Dollar yen's been 99 through to 121. Yen is back to a level that we saw around February on the far left of the chart. And indeed, monetary policy is not targeting an FX level, and he doesn't see an excessively weak yen right now. It's similar to that level that we saw in February. Those are the lines coming from Governor Kuroda.
Yeah, absolutely, those lines coming through. Monetary policy not targeting FX level, paying close attention to spring wage negotiations. It's appropriate the yield curve. They don't see the yen as excessively weak now. Up next, we're going to be talking more about Germany. Germany reels after 12 people are killed by a truck in what the government says was probably a deliberate assault. We're live in Berlin. We'll have the latest for you there. This is Bloomberg.
A truck kills 12 at a Berlin Christmas market in what the German government says is probably a deliberate attack. Asian stocks slipped to a 2-week low.
That after Russia's ambassador to Turkey is shot dead in Ankara by a gunman invoking Syria's civil war. We're live with the latest.
The Bank of Japan upgrades its outlook for the country's economy in its first decision since Donald Trump's election win. Governor Kuroda says the FX market moves are about the strong dollar, not about the weak yen.
And the IMF Executive Board backs Christine Lagarde's leadership despite her conviction for negligence by a French court.
Welcome to Bloomberg Daybreak Europe. It's our flagship morning show from the City of London. I'm Manus Cranny.
And I'm Anna Edwards. Very warm welcome to the programme, everybody. We should have a quick look at the futures and see where we are expected to open up. The Asian equity session has been fairly weak. Geopolitical concerns right at the heart of things once again, Manus, whether it's the assassination of the Russian ambassador to Turkey, the dreadful violent incidents in Germany and in Switzerland coming so quick after we saw last week the Chinese seizing and then returning a US naval drone. Events of incredibly different nature, but still putting geopolitics at the heart of things as we head towards the end of the year.
They have indeed, and I think the counterbalance to that, Anna, is when you look at the commentary coming from Janet Yellen talking about the strongest job market in a decade for graduates, talking about the Bank of Japan upgrading their view of the economy by one step, it has got to be said. How does that translate in terms of the politics versus economics? It looks as if politics is there, and there was a very initial reaction in yen and in the bond market. That's what we've got on our risk radar this morning. Just one thing for our viewers who tuned in a little bit earlier. Obviously, I was talking specifically about the attack in Turkey, where the Russian ambassador was assassinated last night, and I was referring to the commentary that we understood came from that Allah Akbar, etc. And don't forget Aleppo. Those were the comments in regards to Turkey, not in regards to the German incident. But let's just look at that risk radar again, because of course yen is actually continuing to move a little bit weaker. This after the Bank of Japan still targeting the yield curve. They've upgraded their view on the economy, and you've got Kuroda saying, look, these market moves, these dollar-yen moves are not that excessive at the moment.
Yeah, so there's a BOJ in the mix there. Plenty of comments coming through from Governor Kuroda as we speak. Not productive to predict FX based only on rate gap. FX moves are due to various factors. They'll continue to conduct bond operations appropriately. So we'll monitor that. There's the dollar-yen for you. US 10-year yield then 2.56% right now, Manus. Yesterday we saw buying of treasuries on these geopolitical concerns. Now a slightly different story. At least we've paused in that story a little bit less demand for those fixed income products. We see the yields going a little bit higher overnight.
Let's just check in. You've got dollar lira at the bottom. We have got a central bank decision coming from the Turks as well today. However, this is lira obviously on the move. We saw the currency fall as the Russian ambassador was fatally shot last night. Emerging market stocks as well posting their longest losing streak in 5 weeks. Let's flick it across and have a look at the US equity futures. European equity futures on that little bit lower. US equity futures were flat just over an hour ago, and they're still just holding that flat level. I mean, we've rallied, what, 6% since the election on the S&P. We're up 8% on the Dow. That's the fifth quarter of advances.
Yeah, struggling to add to last week's record levels, it seems. Fairly flat is the expectation for the start of the US trading day when we finally get there. Still only 2 o'clock in the morning, of course, or 3 minutes past 2 if you are in New York, 3 minutes past 7 if you're here in London. Let's get the Bloomberg First Word news for you now. 12 people have now died after a truck ploughed into shoppers at a Christmas market in Berlin. 48 other people were injured in the incident, which the German government says was probably a deliberate attack. Police say a suspect believed to be the driver was arrested after fleeing the scene, and that a passenger in the truck was among the dead. German media, including Der Welt newspaper, have reported that the driver was a refugee from Pakistan.
President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allah Akbar and don't forget Aleppo after the shooting. The Kremlin said that the attack was an attempt to undermine Russia-Turkey relations.
A manhunt is underway in Zurich after a suspect shot people praying in an Islamic centre. 3 men were hospitalised after the attack, which took place close to the main train station. The dead body of another person was found just a few minutes' walk from the scene, although it is unclear if the 2 episodes are linked.
The Bank of Japan has upgraded its assessment of the world's 3rd largest economy. At the same time, the monetary policy was kept unchanged in the central bank's first decision since Donald Trump's election victory. The Bank of Japan forecasts a moderate recovery trend to continue following a pickup in exports and an improvement in business sentiment and resilience in private consumption.
The Pentagon says that China has returned a U.S. Navy underwater drone. The unmanned vehicle was handed back close to where it was seized last Thursday. The incident triggered a diplomatic spat between Beijing and Washington after President-elect Donald Trump took to social media to criticize China's actions.
The International Monetary Fund's Executive Board has reiterated its backing for Christine Lagarde. That's after its managing director was convicted of negligence during her time as the French finance minister. The Paris court said she should have done more to block and overturn the multi-million-euro payout to the businessman Bernard Tapie over his 1993 sale of Adidas. Lagarde won't face any fine or jail term.
Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. You can find more stories on the Bloomberg at Top Go. We've got some breaking news, Manus.
Yeah, a little bit of breaking news. This is from Lloyds. They're going to acquire MB&A credit card business. They're going to pay £1.9 billion. The reason why, they're going to add value to the net interest margin at their bottom line. So they're paying £1.9 billion. This is for the credit card business from Bank of America. They're going to add around 10 basis points as a result of this. The MB&A business, I suppose the assets, what are you buying? Well, they're buying approximately £7 billion worth of assets. The deal will add significant value to shareholders, and the deal will add around £650 million in terms of revenue.
And it will be funded through organic capital generation. That's how they're paying for it. Let's get the latest, though, on the geopolitics. And we go first to Berlin, where a truck careered into a Christmas market, killing 12 people in what the government says was probably a terror attack. Matt Miller is in the German capital for us this morning. Matt, give us the latest.
Well, the latest is the question as to who did this and why. So the police, who originally had been incredibly cautious, saying that there were no signs that pointed either way to a terrorist attack or an accident, have now tweeted out that this was likely a deliberate attack, a terrorist attack. And, of course, we've had members from both of the big ruling parties, the CDU and the SPD, that say they believe this was also an horrific terrorist attack. So now the question is, who did it? The police have apprehended one suspect that they believe was driving this truck within a few hundred meters of the Christmas market. Another person in the truck, passenger in the truck, apparently was killed at the scene. So there have been a number of newspaper reports in both the Bild Zeitung, the widely read paper, most widely read paper in Germany, and Die Welt, which is also owned by the same publisher, Axel Springer, that say the driver, the suspect who was caught, was a Pakistani refugee. However, those reports have not been confirmed by government sources, so people are waiting to find out whether or not that's true.
Matt, thank you very much. I'm sure as we get more detail on that tragic incident, we will bring that to our viewers. Matt Miller there in Berlin. Let's get into the markets now. MSCI Asia was on a 2-week low in the very initial reaction to some of these geopolitical incidences overnight. Juliet, how are we looking now?
Well, still in the red for the overall regional index, Manus. You've seen Shanghai just close out lower by 0.5%, and in late trade, the Hang Seng also down 0.5%. Chinese equities actually tracking at a 6-week low, and as you mentioned, of course, the overall regional index at a 2-week low. But if we have a look at some of the upsides, obviously Australia, New Zealand and Korea doing well today, and really the weakness in the yen pushing the Nikkei higher, up by 0.5%. It was pretty flat heading into the lunch break before the BOJ decision, but even though that came as no surprise, no major action from the BOJ. You did see a lot of weakness coming through in the yen, so that has helped push the Nikkei higher on the close. Elsewhere, though, pretty weak coming through across the Southeast Asian markets. And if we just have a quick look at the Japanese yen in late trade, still weakening even further against the greenback. It is down by around 1/6%, 117.78. A lot of this weakness, though, we have been seeing in equity markets, a little bit of year-end positioning as well. Manus and Anna.
Juliet, thank you very much. Juliet Sonic there with the very latest on the markets.
Yeah, joining us now in the studio, Julian Howard, head of multi-asset solutions at GAM, where he helps manage 119 billion Swiss francs in assets. Great to have you on the programme, Julian. A dreadful news flow that we're covering all this morning, of course. The question really, I suppose, for European investors or for investors in the European story, when we witness dreadful attacks like the one that seems to have taken place in Berlin last night and others, this strengthens the hands of populist parties, and this is something that features very much on investors' radars at the moment, the rise of populism in Europe. How much does that intensify into 2017?
I don't think it's quite the problem that everyone makes out. I think that the lesson of this year is that, you know, political risks seem to be high, and a lot of investors are very cautious around that. But actually, what drives the market is actually global growth and earnings growth. And political risk is really just a temporary sort of setback in all of this. So if you look at all the events we've had so far this year, you know, whether it's the China slowdown in Q1 or Brexit or the Trump victory or the Italian referendum or the terrorist attacks now, you know, none of these are permanent setbacks to the trajectory of equities. And I think investors need to keep in mind exactly what the fundamentals are doing.
Julian, I'm just going to interrupt you here. We're going to spend a little bit of more time on Japan later in the show. But for our viewers here, with these breaking headlines coming from Governor Kuroda at the Bank of Japan, that it's too soon to discuss raising long-term yield target. Of course, they currently are targeting yield targeting on 10-year government bonds at around plus 0.1%. This Bank of Japan is still far from its price target, but it is too soon to talk about a long-term yield target. So again, they're committed to this. They're committed to the policy, but we'll return to that conversation in just a few minutes. Julian, let's circle back to where we are with the global perspective. It's interesting how Yellen talks about one of the strongest job markets for graduates in a decade. The Bank of Japan raises its view on the economy. The Bank of England is in neutral stance as it stands at the moment. Is your cup half full, more than half full for the global economy going into 2017 than it was at the beginning of 2016?
Yes, absolutely. And it's not just a Trump trade. I think from the summer we started to see evidence of global reflation, whether it's in the PMIs or some of the high-frequency indicators like copper and steel. You know, things were just generally improving. Manufacturing was also getting through its inventory overhang, and just generally, you know, around the world we've been seeing more consumption and more confidence, both on the business side and the private sector side. So we are generally more confident, and I think what's especially encouraging is that earnings growth is now positive in the US, and it's been proven that, you know, political risk is not going to kind of dissuade this market.
Julian, thank you very much. Julian Howard stays with us here on Daybreak Europe. We'll talk about Japan next.
Absolutely. Now, the Bank of Japan, as I was saying, we've got Kuroda on the tape. It's upgraded its assessment of the world's third largest economy. At the same time, the monetary policy has been kept unchanged in the central bank's first decision since Donald Trump's election victory. Let's get to Sherry Ann. She's outside the Bank of Japan in Tokyo. Sherry Ann, good to see you. Unchanged policy. What surprised you on the tape? He's still speaking, we should say, and the big red headline at the moment is that it's too soon to discuss raising long-term yield target.
Manus, exactly. That's what we were watching, what was going to happen to the 10-year yield target, which has been kept at 0%. Now, the BOJ has reiterated that it wants to keep a policy right now as it is, that it's the most appropriate for now. Of course, they maintain their policy rate at minus 0.1% and the 10-year yield target at around 0%. But of course, with global bond yields now starting to spike, we are seeing pressure upward put pressure on the 10-year yield. Already last week, the yield just spiked to the highest level since January. Now, BOJ Governor Kuroda thinks that the appropriate yield curve has been achieved and that it's too soon to discuss raising the long-term yield target. But of course, Kuroda gave himself a bit of wiggle room for the future, saying that the BOJ will adjust policy if needed. Another interesting comment was on the yen, because the weakness in the yen that we've seen in the last couple of weeks, already now trading near its February low. The governor says that he doesn't see the yen as excessively weak right now, that everybody's talking about a weaker yen, but that this is just back at February levels and that the market is not being driven by a weaker yen, but by a stronger U.S. dollar. And some analysts that I had talked to earlier today were speculating that if we see more weakness in the yen, are we going to see criticism from the Trump administration? Well, BOJ Governor Kuroda saying that he can't comment on policies of the new administration in the U.S. Manus, Anna?
Sherry, thank you very much. Sherry Ann joining us there from outside the Bank of Japan in Tokyo. Julian Howard, Head of Multi-Asset Solutions at GAM. Let's come back to you on this BOJ conversation. So no change in terms of the actual policy decisions that were made, and no change in terms of the long-term targeting of the yield curve at this point. They're saying it's too soon to discuss raising the long-term yield target. They've pivoted then from this policy of spending a certain amount on quantitative easing to a policy of trying to control the yield curve. Are they being tested, do you think, by the markets? Are the markets going to increasingly test the BOJ's resolve around that control in 2017?
Well, I think there's two things going on. One is that what the BOJ is formally saying about targeting the 10-year yield, and then what they're informally allowing to happen. And we've actually seen the purchases of the 10-year have actually been kind of drifting downwards recently. So the original idea was they were going to modulate the yield in order to keep it pinned at zero, but it's actually drifted up above zero. So I think this is a kind of informal way to start the tapering process. The fact that he said, you know, this isn't, you know, the beginning of tapering, but it's almost entering it into the narrative is the start of the process
But to allow
itself.
it to drift in an environment where yields generally globally are drifting higher, is that okay?
Yeah, I think it's appropriate, and I think the positive reassessment of the Japanese economy, we saw machinery orders have been better, consumption has been better. We've had 3 consecutive quarters of quite good GDP growth as well. So I think this is the start of the process of just allowing those yields to drift up. I think the problem is, though, for the yen, well, it's not the problem because it's actually a great thing for the Japanese economy. The yen, you know, continues to fall, but we're not going to see a reversal in the yen in line with rates because it's the US that's dominating the story here, and it's that Treasury yield where the upward pressure is on the yield.
And that's essentially what Kuroda said this morning, is that this is a dollar story, this is a dollar story, not our story. A lovely chart for you, BTV 5416. I love the title on it, Japan's Annus Volatilitis.
That's hard to say.
That is hard to say without making a mistake, and I think we got away with that one, almost. What I got for you there, I mean, we've got dollar yen. I mean, what a bandwidth, 99 to 121. The topics from bear to bull, that kind of volatility. Do you think we're going to see a replica of that next year if this is sort of a masquerade of tapering that could come from the Bank of Japan? Nobody wants to use the word taper. It's such a dirty word, isn't it?
I think there's a mixture of, with the Japanese, with the dollar yen, it's tapering, but it's also risk off as well, which feeds into yen. So this is a currency that is being buffeted by, you know, several different forces. So when we have terrorist attacks, obviously people pile into the yen. Tapering should also support the yen, but on the other hand, this very strong Treasury yield, this very high Treasury yield, is pushing the yen downwards. Will
you take more Japanese risk on board? Will you take more equity risk on board?
We are neutrally exposed to the Nikkei. The Nikkei is quite cyclically geared to global reflation trade, but I think there are probably better places to do that. One of those would be US financials or, for example, US value. I think the Nikkei is operationally geared, but there are probably better places.
OK, Julian, thank you very much. Julian Howard stays with us here on Daybreak Europe. Up next.
Up next, hedge funds, the winners, the losers. Find out who outperformed and who flopped in 2016. If you've got your CV ready, at least this will help you work out which one you maybe want to pop it through the letterbox to. This is Bloomberg.
Welcome back. It is 8:21 if you're watching in Berlin. These are live pictures of the scene in Berlin where 12 people have now died after a truck ploughed into shoppers at a Christmas market. The German government says it was probably a deliberate attack. It is 8:21 in Berlin, 7:21 if you're here in London.
Now, it was a year to ridicule hedge funds. Many spent the better part of 2016 complaining about mediocre performances, high fees and market saturation.
But as the year draws to an end, the industry has seen an unexpected pick-up in the form of the surprise US election victory of Donald Trump. Joining us now on set here in London, Nishant Kumar, Bloomberg EMEA hedge fund correspondent. Great to have you on the programme then, Nishant. So firstly, can this pick-up last?
Well, look, who knows? But if we look at the factors that troubled a lot of these hedge funds, so, for example, low interest rate, lack of divergence, lack of volatility, all those factors have weakened or is changing pretty fast. And, of course, Donald Trump's election has played a significant role in this. That's why we saw this huge recovery by hedge funds in November. So if you believe that Donald Trump's election is going to lead to higher interest rate, volatility is going to come back, and divergence is going to fall apart, then yes, I mean, this could last a bit longer.
It's interesting when you look at vols. I mean, they're so repressed that they're dropping to sort of near-term lows. Let's talk about the geography in terms of the winners and the losers. Who were the biggest winners and losers? Are there any sort of banner names out there that we should keep an eye on?
Sure. So closer to home in London, CQS, for example, run by billionaire Michael Hinges, his fund is up 30% so far this year. That's first 11 months of the year. So he's one of the world's biggest winners. But if you look at Crispin Odey's fund, which is a long-short, equity fund, that fund is down like 48% this year, literally wiping out all the gains in the last 9 years. So, and if you look at geography-wise, U.S. hedge funds were the best performers this year, less so in Europe, and Asian funds are kind of overall, flat this year.
OK, Nishant, thank you very much for bringing us the story. Nishant Kumar, Bloomberg EMEA hedge fund correspondent. Julian Howard, head of multi-asset solutions at GAM, is still with us in the studio. So characterise 2016 into 2017 for us. What excites you about 2017, Julian?
Well, I think it's the global reflation trade, and the fact that actually we've after many years we've got a sort of pro-growth supply-side reformer back into the White House. It doesn't necessarily mean we're going to go back to the sort of 80s and 90s levels of growth, but I think we could definitely get an improvement on the 2% growth that we've had recently in the US. The US is not a 2% economy. It's more like a 3% economy. Donald Trump could take that to a 3.5%, 4% economy, and that's going to have a huge impact around the world.
Well, that's predicated on the view, A, that he gets his fiscal programme through, and B, that he actually manages to get corporate rates down to 15 to 20%. So there's a little thing called Congress to get through in the meantime. I've got my favourite thing, which is the yield curve in the US. I'm fascinated to know, where is the most volatile bond market for you? The Japanese are capping theirs at 0.1. Don't fight the Bank of Japan. Where are you going to see the most dynamic bond market movements in 2017? Is it going to be in the US curve? Is it going to ratchet higher? Are we going to see a more protracted steepening of the curve?
I think in the US we will. Whether or not growth comes through in significant quantity, I think we will see some inflation, because the US economy is running pretty tight at the moment, both in the labour market and the sales to inventory as well. But you can also see the term premium starting to rise in the US and the US Treasury curve as well. So people are starting to price in a little bit of political uncertainty, but also they're demanding a bit more to lend to the US government over time, because they're kind of worried about fiscal expansion. How is this going to be funded? So I suspect the US Treasury curve will steepen this year.
So if you buy the positive growth story around Donald Trump, do you also worry about what he might do to global trade, or you don't? Or not from a US perspective?
Well, I have perhaps the slightly naive perspective that he's going to not do go to the max in terms of the bad things, but actually try and take the good things as far as he can. So on, for example, on immigration and Mexico, he's not going to build a wall, he's not going to scrap NAFTA entirely, and he's not going to deport every single Mexican in the US. I think he's going to fall way short of that. But I think he's going to try very hard on the tax cuts, because he's promised 15%, but even 20% would be great.
Julian, thank you very much for your thoughts this morning. Julian Howard, Head of Multi-Asset Solutions at GAM.
OK, equities have managed to turn it around, and we're flat in London, up 0.8 in the rest of Europe. The red line from the Bank of Japan is it's too soon to discuss raising long-term yield target. This is Bloomberg.
Good morning. You're watching Bloomberg Markets. This is the European Open. Your first trade of the day is coming up very shortly in the equity market. I'm Guy Johnson. I'm alongside Matt Miller. He's in Berlin, and this is what we're watching this morning. A truck kills 12 at a Berlin Christmas market. The German government says it was probably a deliberate attack. How will Angela Merkel respond? Russia's ambassador to Turkey is shot dead in Ankara. The shooter, who was a Turkish police officer, shouted, "Don't forget Aleppo." Again, how might this incident affect the fragile Russia-Turkey relationship? And it's a strong dollar, not a weak yen. The BOJ upgrades Japan's economic outlook, but after a year of monetary acrobatics, is it really the Fed that's in the driving seat? Matt.
All right, so a violent attack last night in the Kudamm, very populated and famous spot for shoppers, both Germans and tourists alike. Definitely a lot of emotion flowing throughout Berlin last night, flowing throughout Germany. But of course, we have to remember there were also terrorist attacks or some sort of attacks in Zurich. People shot there in a mosque, as well as the shooting in Turkey. So a lot at once for us to deal with geopolitically and for the markets to digest as well, Guy.
Yeah, certainly a lot to think about, and it leads us into thinking about what is going to happen next year. These are live pictures coming to you from Berlin. We will be crossing back throughout the program to update you as events continue to unfold in Berlin, in Germany, and the wider picture, as Matt says, a whole sort of range of issues for us to deal with, for the markets to price in. Let's talk about how the markets are reacting to what we're seeing at the moment and show you the futures right now. The fair value in Europe, muted, I would say. We've turned a little bit more positive over the last few minutes. So the European markets, once again, and we see this time and time again now, increasingly with terrorism incidents, the markets simply are just getting used to these. They're becoming part of the narrative. They look through them. Let's look around the world. Let's show you what is happening on the GMM. This is the picture, as you can see more broadly. The Japanese yen down by 0.7% as we watch what's coming out of the Kuroda press conference. We are also looking at some fairly big moves associated with what the Chinese authorities are doing with the clampdown on leverage. It's rippling through the Chinese bond market and then flowing into some of these commodity markets, which have become speculative places really over the last 6 to 9 months. Zinc, one of those areas you need to pay attention to, down by nearly 5%. Again, a lot going on in Asia this morning, but the focus firmly, Matt, on the terrorism incidents that have been taking place here in Europe.
Yeah, absolutely. And I want to talk with Chad Thomas here. He's the manager for Bloomberg News in Germany. Chad, you were here late into the night, very early this morning. Do you think the main question right now is who did this and why?
Well, that is the main question. They have one suspect in custody. There was another individual in this vehicle that rammed into the crowd. That person is dead. We don't know much about this person they have in custody. Obviously, they'll be questioning that individual today. Authorities have said they will hold a press conference at 1 p.m. local time, so we'll probably learn quite a bit more at that time. But right now, we just don't know very much. Some German media have been reporting on the identity of this individual, but we do not know anything officially yet from authorities.
So that's the primary concern, the immediate concern. The secondary concern is then how does this affect Angela Merkel? Do we hear from her? Do her opponents try and use this against her?
That is the million-dollar question. We don't know yet if she's going to speak today. She has no scheduled public appearances. It would seem likely that she will. Probably likely she would speak after authorities sort of give an update on their investigation this afternoon. This populist party that has been very strongly anti-immigrant or anti-immigration, they were very quick to come out on Twitter last night and on Facebook, basically accusing her of being responsible for these deaths. That got some strong feedback from other mainstream political parties saying it was grotesque that they would do that, but obviously they have this AfD, this populist party, has jumped on that.
We're hearing even comments from other politicians, the Polish head of finance for the ruling party, saying that this is why they didn't pursue that kind of open-door policy. Merkel's already started to kind of backpedal on this, right? At the CDU Parteitag a couple weeks ago, she was saying the CDU will now outlaw or attempt to outlaw the wearing of full-faced veils.
Certainly, the open-door policy is not something that she's talking about in the same way that she did a year ago. She recognizes that that people in the public have been very concerned. As you remember, there were these 4 incidents, unrelated incidents, but nonetheless 4 incidents over the summer that really unsettled people, and her party has taken a hit in the polls. It's actually bounced back a bit in recent weeks, but she's very aware of the concern that is there in the German public.
Chad, can I ask a more basic question, which is, it was flagged by the security authorities that Christmas markets were a likely target. How much blame will there be pointed at the security services in Germany for not doing enough to protect the people at this market?
Well, that is definitely a very good question. They had flagged that, and there have been quite a few arrests in Germany in recent weeks of people that they said were suspected terrorists or people that they suspected were planning something. So the question will be unfolding today, or the questions will be asked today: how did they miss this, given that they knew that there was something sort of in the works? That's not to suggest that they knew in any way about what was going to happen at this market last night, but they certainly had been monitoring a number of individuals across the country and had made some arrests as well.
Jack Thomas, thank you very much indeed for your ongoing coverage. The rest of the team in Berlin really putting in the hours to make sure that our customers are fully up to speed with what is going on in Germany right now. Yogi Diwan is the CEO of Hassiem Asset Management and joins me on set here in London. Yogi, the market's once again taking this incident in their stride. European futures positive at this point in time. Is that the right response, though?
Probably. This is very sad news in the run-up to Christmas, obviously. But from a market perspective, it's unlikely to have a big impact. Germany as an economy is actually doing quite well. Valuations are quite reasonable. The euro has weakened quite significantly. German confidence is increasing. The market is doing okay. Unemployment's only at 6%. It's unlikely to have a big impact on sentiment, but it can, obviously, as news develops, start to change things.
Well, let me kind of just counter that a little bit. Politics has been the defining factor of 2016. We've seen it with what happened in the United States. We saw it what happened with Brexit. This is why I really asked the question. Is the market sort of overly downplaying this incident? And I'm sure people are connecting the dots between what is happening in Berlin right now and what happened last night and extrapolating forward into the European elections next year. But these are the kinds of events that shape those elections. Immigration, once again, standing out as a theme potentially in this story. We don't know yet, but the market's already maybe drawing some conclusions, and certainly the papers in Germany are drawing conclusions. Join the dots between Brexit, Donald Trump, immigration, and look forward into 2017 from 2016. Should the market be so calm about what is happening here?
The market kind of ignores all of this news. It seems to be very much a big media story, but from a market perspective, the impact has primarily been on currencies, and currencies then translate into corporate profits. And remember, it's corporate profits that drive share price appreciation, not geopolitical events. And as we've seen markets play out, currencies adjust, corporate profits seem to have done well, fiscal policy comes to the mainframe, monetary policy comes to the mainframe. These all spill over into confidence and corporate profits, not the news flow that we're seeing around protectionism, geopolitical events and election results. And that's what is driving markets to all-time highs. You know, maybe the Trump rally is a bit overstated. Maybe events from Brexit are overstated. But actually, when it translates into corporate profits, that's what investors seem to be focused on.
Yogi, we typically see a Santa Claus rally into Christmas, the last week here or the last week before New Year's Eve. Do you think that this year people are going to be more in the mode of taking money off the table because we've already had such a big rally?
Yeah, look, this is going to be very thin volumes in the run-up to market end. There's a lot of window dressing as well to be expected in the run-up to year-end as well. We can't help but think this last week you'll more likely see a cautious market and investors taking money off the table ready for repositioning in Q1 2017. And that's what we're doing for the portfolios that we manage.
Yogi, great to see you this morning. Thank you very much indeed for sharing some of your time with us. He's going to be with us throughout the programme, or at least for the first large chunk of it. Yogi Diwan, Hassiem Asset Management, staying with us. Coming up on the show, negative curve control and the strongest yen since 2013. A year of extraordinary policy from the BOJ closes with, finally, a positive economic outlook. We'll have the latest from the central bank, Kuroda speaking. As European markets open, how will they digest the latest developments from Berlin to Turkey? And Merkel's response, how will the Chancellor assess the killing of a dozen in the German capital as the election approaches next year? Politics front and centre once again. This is Bloomberg.
Questa mattina si parla di 12 vittime,
Welcome back to the European Market Open. Matt Miller here, live from Berlin. You're looking at shots of the Brandenburg Gate, but just down the road there, through the Tiergarten on the other side of Berlin's main park, is the Gedächtniskirche. That is the famous church that was war-torn at the end of the Second World War and left that way. Here you see a live shot of it. Near this church, or surrounding this church, last night at a Christmas market, there was an alleged attack where a truck drove through the highly populated Weihnachtsmarkt Christmas market and killed at least 12 people, injuring almost 50. The police have now opened a criminal investigation into this and have at least one suspect in custody, the alleged driver of that truck. No more details have been officially confirmed. A couple of newspapers here, Die Welt and the Bild Zeitung, are reporting that the suspect is a Pakistani refugee. Obviously, if this were true, it would be even worse for Angela Merkel than this horrific situation must already be for the Chancellor of Germany. Guy, it's obviously a massive human tragedy and could turn into a real political tragedy as well. We're going to continue covering this and the events that happened in Zurich. People were shot there last night, and in Turkey, the Russian ambassador was shot dead in Turkey yesterday as well. Right now, let's go to Juliet Zarley. She's got your Bloomberg First Word News. Juliet?
Matt, yes, President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allah Akbar and don't forget Aleppo after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. A manhunt is underway in Zurich after a suspect shot people praying in an Islamic centre. 3 men were hospitalised after the attack, which took place close to the main train station. The dead body of another person was found just a few minutes' walk from the scene, although it's unclear if the 2 episodes are linked.
The Pentagon says that China has returned a US Navy underwater drone. The unmanned vehicle was handed back close to where it was seized last Thursday. The incident triggered a diplomatic spat between Beijing and Washington after President-elect Donald Trump took to social media to criticise China's actions. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. This is Bloomberg. Guy.
Thank you very much indeed, Juliet. It's been an extraordinary year in so many ways, but certainly the monetary policy arena has been front and centre for the markets as they try and understand where we go from here and whether or not we are making a big shift towards a fiscal policy dominance outlook in 2017. In January, the central bank, the BOJ, took interest rates negative, remember, which did little to stop the yen's march ever higher. People watched in amazement. The currency peaked this summer, breaking below 100 to the buck. Then the BOJ introduced the elusive concept of curve control in September. And since then, basically, well, since the start of November, we've seen the yen in freefall, with the dollar gaining more than 13% against the yen. The rate of change has been eye-watering. Today, the BOJ closed this tumultuous year with an upgrade to its economic outlook while keeping its yield curve and asset purchase programs unchanged. It's been quite a year, Yogi Diwan. Let's talk a little bit about the yen, first of all. This chart, I think, really just encapsulates what we've seen this year. This weakening of the dollar, strengthening of the yen as we worked our way through the back end of last year into the sort of the bulk of this year. Then this amazing move to the upside. The rate of change there, as I say, quite eye-watering. Too far, too fast?
Absolutely, too far, too fast. Fiscal spending of 7.5 trillion, unlimited bond buying. You've seen the markets rally 8% on the back of this, and the yen has just depreciated and depreciated. We're now some 15% undervalued on a PPP basis. This is too much too quickly, and we'd expect to see some yen strength in the run-up to year-end and into Q1 2017.
What's the right level?
It's hard to say, but we wouldn't be surprised to see a level approaching 110 and even back down towards levels we've seen earlier on in the year. The thing to remember about Japan is very dependent on China. China sneezes, Japan gets a cold. And obviously China's very dependent on the US dollar and obviously Trump issues as well. So really what's been happening in Japan, as well as the domestic story around monetary policy and fiscal policy, it's also been impacted by the strong dollar and what's been going on in the US indirectly impacting China.
Yogi, isn't this kind of yen weakness great for the BOJ, though? I mean, doesn't it lead to inflation, which is exactly what they've been chasing all these years?
Absolutely. This is great news for Japan. This was reflected in the commentary that we've seen overnight as well. Look, we've got a market that is now growing. We've actually got signs of inflation in Japan as well. Everything seems to be working. We're quite positive what's going on in Japan and would like to go long Japan into 2017. I think it's one of the great areas to be investing right now with the yen weakness that we've seen.
I only ask because our survey of economists expects Kuroda to leave everything unchanged even through to 2018 when he steps down. Is there any chance of a turnaround or a path to normalization for Japanese monetary policy?
Whilst they have a tremendous fiscal plan in place, while they do unlimited bond buying, this to leave in place makes a lot of sense, and it's starting to have an impact on GDP growth, and we're starting to see inflation come through as well. If I were in their shoes, I would do exactly the same, which is nothing, and just let this now play out. It has momentum, but remember, a lot is dependent on what happens in China, and a lot is dependent on what also happens to the US dollar. But you will start to see the yen strengthen because it is so oversold in this environment.
How much of the private markets can the Japanese authorities buy? We're nationalising the private markets in Japan right now.
I think that will continue. I mean, the pension fund is hugely underweight equities and needs to continue buying, and as the market...
So we pretty much own the JGB market, and now we'll take over the equity market. That's got to be bad for innovation, bad for corporate governance. But what is the second derivative negative on this?
I wouldn't look at it like that. I would go back to earnings. Just look to see the impact of yen on earnings, the export orientation that the economy actually has, the domestic growth that we're actually seeing. And remember, it is earnings that drive share price appreciation. All the factors you've mentioned will have an impact and add to volatility, but you have to go right back to earnings, price to earnings ratios that drive share price appreciation in this environment.
Yogi, thanks very much for that. Yogi Duan of Hassiem Asset Management is going to stay with us throughout this morning. Could see some volatility as markets open in just about 9 minutes. Up next, we're going to get to that open. We're going to figure out exactly what this geopolitical unrest means for asset classes around the world. This is Bloomberg. Welcome back to the European Market Open. Just 6 minutes to go until the start of trading. Here you see the Brandenburg Gate in Berlin. The city, the capital of Germany, was the site of a suspected terrorist attack last night as a truck, a lorry as they are called here in Europe, drove through a Christmas market at the Gedächtniskirche. That's the famous church that was scarred by World War II, right at the head of the Kudamm, which is the most famous shopping center in Germany, normally packed with not only locals but also tourists as well. 12 were killed, 50 were injured in this suspected attack, and the police have one man, at least one man, in custody. So that is the setup this morning as we go into the market open. Right now we see buying in treasuries, buying in bunds, a little bit of selling in 29 to 1134.92 a troy ounce, and stocks pointing up, but really not a lot of movement here, Guy. It doesn't seem like there's a lot of pre-market activity.
Yeah, once again, the market's looking through a story in Europe. Once again, we see that happening. The other thing I just want to flag as well to everybody is what we saw over the last 24 hours in the Turkish lira. The killing of the Russian ambassador in Ankara having a clear effect. This, as you can see, is the market's reaction here. We have unwound a little bit of that, but again, fragile relationships exist in this part of the world, and this is going to be a factor in that thinking. We'll discuss that as we work our way through the open and into the rest of the programme. London also in shock this morning as we watch events on the continent. This is Bloomberg. Good morning. Welcome. You're watching Bloomberg Markets, the European Open. I'm Guy Johnson at Bloomberg's European headquarters. I'm here in London, Matt Miller in Berlin. We're moments away now from the start of morning trading, and Matt has your morning brief.
All right, Guy, a truck kills 12 people at a Christmas market in Berlin. The German government says it was probably a deliberate attack. How will Angela Merkel, the chancellor, respond? And Russia's ambassador to Turkey is shot in the back, dead in Ankara. The shooter, who was a Turkish police officer, shouted, "Don't forget Aleppo." How might that incident affect the fragile Russia-Turkey relationship? Plus, it's a strong dollar, not a weak yen. The BOJ upgrades Japan's economic outlook, but after a year of monetary acrobatics, is it really the Fed that's in the driver's seat? Guy?
Matt, let's take a look at how European markets are opening up this Tuesday morning. We aren't expecting a great deal of a sense of direction really to emanate from equity markets today. So we're open now, the FTSE 100 north of 7,000, but likely to remain close to the unchanged mark. As you can see, we're down less than 0.1%. We'll let the market makers do their business. We'll see it soften maybe a little bit more than this. But nevertheless, we're not looking for a clear sense of direction. A lot of liquidity is going to start drying up now. We are going to see these markets begin to become a little bit more opaque, I would argue, in terms of price discovery. But there's the CAC 40. It's opening a little bit softer as well this morning. Let's deal with the details. Let's find out what's happening in these markets in more detail. Here's Manus Cranny.
Hey, Guy. A very good day to you. I think what markets are trying to deal with at the moment is the juxtaposition between the geopolitic and the economic. If you think of what Governor Yellen had to say, and indeed Governor Kuroda. Checking in on your GMM function, you've got yen. Yen continuing to drop, 117.87, column 2, dollar yen at the top of that pylon. You've got the dollar index, the Bloomberg dollar index is still bid by 1/8 of 1%. So you can see that it is the non-traditional, the non-classic response by the market to the political event, the geopolitical events in Germany, in Zurich and in Turkey. So the markets at the moment remaining reasonably steadfast in their belief that economics will drive or usurp politics at the moment. This is the complexion in terms of the areas that we're seeing. Bank of Montepaschi de Siena is going to be focused again in financials, as it looks as if Italy's prepared to take on a little bit more debt to sort out some of their financial issues. Materials down by 0.2%, but I want to draw your eye line to the yield curve in Japan. And where do we go next in terms of Governor Kuroda's GC3D is the ticker on your Bloomberg if you want to understand the movement in that yield curve. As Kuroda tells the markets it's still too soon to reconsider moving the target on the longer term yield on the bond. There's a corridor of tolerance. That's what our guest on Daybreak told us this morning, Jesper Kroll, making the point that probably a weaker yen is the result of the current moves by the Bank of Japan. So stocks just a little bit unsure. Dollar yen is the trade du jour. Let's talk about the stocks to watch. Neera Chayich is with us. Neera, good morning.
Good morning, Manus. You're off to radio. I've just come from radio. And one of the stories we broke in the last hour, and which is why I'm watching it now, is Lloyds buying Bank of America's UK credit card unit for $2.4 billion or 1.9 billion pounds. This is in cash as Lloyds looks to expand in consumer finance. The deal is to add £650 million to Lloyds' yearly revenue. We're seeing the stock a little bit unchanged here at the moment. But the other banking stock that I'm focusing on as well is Credit Suisse. According to reports, it may reach an agreement as soon as this week to settle a US investigation into its handling of mortgage-linked securities before the 2008 financial crisis. The stock looks like it's a little weaker at the open there. Then I'm also watching these luxury watch companies. They were called higher actually at the open, but Richemont not quite reacting in the way some analysts expected. And this is after Swiss watch exports declined 5.6% in November. But some people seeing this positively because the decline is not as great as it was in October. Guy?
Neera, thank you very much indeed. Russia's ambassador to Turkey has been shot dead in Ankara in an assassination apparently linked to the war in Syria. President Vladimir Putin denounced the attack, saying it is an attempt to undermine ties between Turkey and Russia.
The committed crime is undoubtedly a provocation aimed at derailing the ties between Russia and Turkey, as well as the peace process in Syria, which is actively promoted by Russia, Turkey, Iran, and other countries interested in the regulation of inter-Syrian conflict. There's only one possible response to this: the strengthening of the fight against terror.
Vladimir Putin speaking after the event. For more, let's get out to Simin Demikin in Istanbul. Simin, how are the authorities responding in Turkey to what happened in Ankara?
Shocking events here in Turkey. Guy, late last night, Russian ambassador to Turkey, Andrei Karlov, being shot dead at an art exhibition. Now, the shooter, a Turkish police officer. Right after the events, President Erdogan called President Putin, and they both spoke and agreed that they won't let this assassination ruin ties. Now, of course, Turkey and Russia fell out in a big way late 2015 when Turkey shot down a Russian jet on the Syrian border. Of course, that was followed by trade and travel sanctions. Now, today, the Turkish Foreign Minister, Mevlut Çavuşoğlu, will be meeting with the Russians and Iranians. Let me add that this was a pre-scheduled meeting in order to discuss the situation in war-torn Syria. So we'll be following developments from that meeting.
Simon, what do we know about, or what do we see about as far as market reaction goes?
Yeah, after this incident took place late last night, the lira slid against the dollar. It depreciated around 0.7%. Today, though, it's among the best performers in emerging market currencies. Overall, though, the lira has been hitting record lows over the past month. Of course, external factors in play there, like the US elections, but we're also seeing political unrest in Turkey over the past few months, especially after the failed coup attempt in July. And Turkey has been in a state of emergency ever since. The lira has been hitting record lows, as I said, and the dollar has strengthened 15% over the past 3 months.
Simin, thank you very much indeed. Simin Demirkan joining us in Istanbul. Thank you very much. Yogi Diwan still with us. Is Turkey part of your portfolio?
No, it's not. You've got to look at the GDP of Turkey. It's around 700 billion. It's just marginally bigger than Apple computers, so you have to keep it in perspective. It is a worthy news story because of geopolitical events. Obviously, the currency's had a massive depreciation. We're expecting 3 interest rate hikes over the next year, but this is a consequence of its problems domestically and a stronger dollar.
Very similar conversation to the one we had at the top. Very similar conversation, because you're basically saying, I'm looking through this.
You have to look through this. You have to look through this. It is not a big enough economy from an investment perspective for big institutional investors and pension funds in Europe and the US to focus on. You need to focus on the broader emerging market economies from an investment perspective.
Sorry, Yogi. I wonder what you think about the possibility of, or the market reaction of selling bonds and selling gold here. Shouldn't people be buying protection this morning?
You know what? The news flow that we have seen around Germany, around Switzerland, and also around Turkey is really disappointing and very hard to hear, especially in the run-up to Christmas. But again, it's not a driver of financial markets, especially on such light volumes. Investors will look at fundamentals. They won't look at geopolitical events in this environment, as sad as the stories are. And if you look at what's driving markets at the moment, it's currencies. Currencies seem to be driving things forward, and then earnings as a consequence. And that's what investors remain focused on.
You mentioned fundamentals. The fundamentals as far as Germany are not bad right now, but we do have some weak fundamentals as far as the peripheral European countries. I'm thinking obviously of the Italian banks as well. How would you weigh the fundamentals of Europe?
Europe is fascinating at the moment, and this is what we consider to be one of the best areas to invest in 2017. Germany seems to be in good shape, as you've said. We've got good GDP growth numbers. We've got comfortable unemployment figures as well. Germany is trading and benefiting from a weak euro, and the Italian banks having problems and a wobble in the run-up to the French elections in April may cause currency volatility, but the big beneficiary of all of this will be Germany, and consequently we like Germany.
So it's just Germany you're buying?
As far as we're concerned, all of Europe looks okay. Volatility around Italian banks is definitely a concern. Volatility up until the French elections come in April is a concern, but the weaker euro benefits Germany more than any other country.
How weak do you expect the euro to become?
The euro is already 22% undervalued on a PPP basis versus the dollar, so we can't see it weakening much further. Although
so parity calls, you don't believe the parity calls?
If it happens, it's momentum-driven and sentiment-driven, not fundamental-driven. I'm not going to say it can't happen and won't happen. Yeah. You look at traders. We've got light volumes.
Pendulum swing too far sometimes.
Exactly. But from a fundamental perspective, we shouldn't be down at these sorts of weak levels. And the big beneficiary of this, Germany. And remember, valuations in Germany are quite attractive relative to the rest of the world. Forward PEs are around 14.1 this morning. That's a good place to park your money for equity exposure in the run-up to 2017 and beyond.
Yogi, stay with us. Thank you very much indeed for your time thus far. Yogi Diwan, the CEO of Hassiem Asset Management. He's going to stay with us. A manhunt is underway in Switzerland after an attack on an Islamic centre. We're going to take you live to Zurich for the latest on this story. Then the BOJ says things are looking up after what's been a tumultuous year. We're going to dig into Japanese policy announcements and ask, what do markets see next, and do they agree with the BOJ? Plus, we're going to break down the implications of events in Berlin for Angela Merkel and the political landscape in Germany. Stay with us. All of these stories coming up. This is Bloomberg.
Welcome back to the European Market Open. Just a quick check on how markets are trading after a terror attack in an alleged terror attack, I should say, in Berlin last night. The police are saying it is likely a deliberate attack after a truck drove through a Christmas market and killed 12 people. Here you see equity markets, at least, trading up. Here in Germany, the DAX is gaining 0.1%. Over in Paris, the CAC is up 0.2%, and in London, the FTSE is actually down by about 0.1%. Guy?
Yeah, some of the miners are actually a little softer this morning, Matt, which probably accounts for why London is underperforming a little bit. I need to check in on the pound, look at that as well. But Rand Gold is trading a little softer this morning. Fresnillo is also a little bit softer this morning. So you are seeing some weakness creeping into some of those mining stocks, gold-related, and as a result of which, maybe that's starting to have an impact in on the FTSE. In terms of the gainers this morning, we continue to watch what happens with Mediaset and the ongoing story of control and politics in the mix there as well, in a kind of in a slightly tangential way. UniCredit's actually trading positive this morning as well. So are some of the other Italian banks. So UniCredit, the largest of them, up 2.04%. So that's having an impact in on what's happening in Italy this morning as well. Let's turn our attention back to what has been really the big story since November. President-elect Donald Trump weighing in again on Twitter. Events in Berlin, Zurich and Turkey, this time the subject of his attention. He took to Twitter saying, today there were terror attacks in Turkey, Switzerland and Germany, and it's only getting worse. The civilized world must change thinking. Yogi Diwan is still with us. Do we all need to change our thinking in terms of the way that the United States is going to interact with the rest of the planet?
Almost certainly protectionism is here to stay. It's reflected in the Brexit result. I suspect it'll be reflected throughout Europe, but it's very firmly implanted in the US. Coupled with that, increased fiscal spending. Coupled with that, a stronger US dollar. The dynamics have changed. Dollar strength seems to be driving the market, not just in the US, but also in Europe and also in places like China as well.
Again, to come back to, so you've got the trade channel and you've got the diplomatic channel. One is becoming more congested. The trade channel looks like it's going to become more difficult to work through because of the protectionism story that you're talking about. The diplomatic channel looks like it's getting more difficult as well. Again, to come back to this issue of how I price in that risk, again, you've said to me throughout the morning, yeah, it's a tragic event, but the markets aren't going to take it and price it in. We talked about what's happened in Turkey overnight. Again, you said that to me. When I think about the big geopolitical set pieces, what's happening in the South China Sea, how do I price that in? Is that something I need to think about? China's relationship with Moscow, China's relationship with the US, how does that bigger picture geopolitical narrative work?
You have to take it into consideration, but these issues around trade agreements, around geopolitical events and tensions, they've been existing for decades, even hundreds of years.
But in some ways, for the last 2 or 3 decades, they've been we haven't had to deal with them in the same way that we did in the Cold War era, the post-war era, when we got up to the fall of the Berlin Wall. There was a significant change. We went into a multipolar world. It started to become more manageable from a market point of view, or understandable from a market point of view. Or maybe I'm wrong about that.
No, absolutely. Look, stay focused on the domestic stories for the economies that you are looking to invest in. So in the US, look at the domestic story. Good GDP growth numbers, up over 2%. Good unemployment data. Productivity is high. Corporate profits are good. Valuations are a bit stretched in the US at 19.1 now, so you need to take a breather and perhaps take a step back. But in the rest of the world, these trade issues have been going on for decades. Stay focused on the domestic story. In emerging markets in particular, you're starting to see a good, positive domestic story. You're seeing structural reforms. You're seeing commodity stability. And obviously the flip side to that is dollar strength, which hasn't helped these economies, and obviously the Trump effect when you look at the angst between Trump, particularly with China as well. The domestic story will be the thing that drives markets forward, not trade agreements, not Brexit trade talks. That, to me, is just noise.
Yogi, what do you think about investments in Russia? As Russian relationships with Turkey seem to be strengthened by this assassination. The U.S.'s relationship with Russia seems like it can only get more positive under a Trump presidency. Russia's foothold in the Middle East seems stronger than almost any other nation there now, at least in the war-torn regions. And then Russia's inflation is being kept under control. Russia's central bank seems to be on top of things. I mean, does it look good for Russia?
Russia's sentiment is definitely improving, and agree with all the comments that you have made. Russia seems to be a levered play on the oil markets, and if you think oil price stability is here to stay, or oil prices are going to increase, and the OPEC and non-OPEC country cuts are seen as a positive, then that is good news. Russia also seems to be a levered play on the European markets as well, and if you think that Europe is going to do okay in 2017, then Russia will be a beneficiary of that too. I think Russia, with all the structural reforms that are taking place, the geopolitical events that we are talking about, probably looks more attractive than it has done. But look, Russia this last year has been the best performing emerging market out there, so you need to take that with a pinch of salt.
Yogi, stay with us. We need to carry on the conversation surrounding what's happening in the emerging markets. The focus shifting to China. We're going to be talking about the bond routes and the clampdown on leverage. It's impacting into a series of markets, including some of the metals markets. We'll talk about that story next. This is Bloomberg.
Welcome back to the European Market Open. Here you see a live shot of the Christmas market, now destroyed by an 18-wheeler large truck running straight through it last night, killing at least 12 people, injuring almost 50. A refugee out of Pakistan was involved. I should stress that those reports have not been confirmed by the German government or by the German police, but the Bild Zeitung and Die Welt are both saying that a Pakistani refugee was at the wheel of this truck and is now in custody. Guy?
Matt, a story that will continue to dominate the news cycle. We'll continue to update on what is happening and how the political story unfolds in Berlin and elsewhere around the world. I want to take you back to a conversation that we were having just a moment ago surrounding what is happening in China. You've seen this leverage clampdown in China rippling through markets. We've certainly seen it in the zinc market this morning. But let me take you and show you what has been going on in the Chinese 10-year. Because as we've paid our attention to what has been going on in the United States and Europe and what has been going on in those bond markets, the Chinese market really has been selling off aggressively. As you can see, this is from October up to where we are now. We've gone from a kind of 2.6 handle to a 3.4 handle on the Chinese 10-year. Yogi, the Chinese authorities clearly feel that they have to clamp down on leverage, and that is having an impact into a series of markets. Is this a place that you can invest, given the volatility?
Of course it's a place you can invest. China's an $11 trillion economy. It's the second biggest economy after the US at $18 trillion. The thing to remember here is the MSCI World Emerging Markets is down 10% is up 10% year to date, and China is down 10% year to date. And it's being driven down by some domestic problems at the beginning of the year, but also by a strong US dollar because of the peg. But the reality of the situation is China's actually in good shape. You know, it has tried to depreciate its currency to the tune of around 6%. The domestic story is a good story. Valuations look reasonable, and commodity prices seem to be stable and on the increase. And of course we have global GDP growth, which China is a big beneficiary of. You must have exposure to China in some form or another. We do, directly and indirectly. We've done it directly through ETFs, but we've kept it very minimal at the moment. But indirectly you have exposure when you go out and buy the global equity markets, because every large corporation has some form of exposure to one of the biggest markets in the world. Massive consumer market.
Yep. I just want to give you some breaking news here. We do now have confirmation that German Chancellor Angela Merkel will make a statement today on the tragedy at the Christmas market just off of the Kudamm here in Berlin. So Angela Merkel is going to make a statement today as the police open criminal investigations, make at least have suspects in custody, and start to gather more and more intelligence on this. We will hear from the Chancellor. Yogi, I want to get back to China because I think it's very interesting that the yuan share of global payments actually rose last month to 2% from 1 2/3%. But a lot of onlookers are saying that's because businesses are trying to do as many payments in yuan as they can to get rid of this currency. Doesn't that tell you something about the state of the Chinese economy when people don't want to hold on to the currency?
You have seen masses of outflows driven by those sorts of issues, and also by the stronger dollar with interest rates actually going up. I think the reserves diminishing and outflows from China is the concern, which is why the market is down 10% when emerging markets are up 10%. But again, go back to fundamentals, look at the reforms that are taking place, look at what's actually going on with trading around the Chinese region, with Japan and Europe and the rest of the world. And the domestic story is a good one when you look at domestic growth as well. You must have exposure to China in this environment in some form or another into 2017.
All right, Yogi, thanks so much for joining us this morning. Yogi Dewan, CEO of Hassiem Asset Management, coming to us on what is a very difficult morning after a tragic possible attack yesterday in Berlin killed 12 people. The Chancellor of Germany, Angela Merkel, will make a statement later today. This is Bloomberg. We are 30 minutes into the trading day. I just want to point out, you're looking at a live shot there of the Brandenburg Gate. Angela Merkel, the Chancellor of Germany, will speak today on the Christmas market deaths. Yesterday, of course, a truck driving through a Christmas market, killing at least 12 people, injuring 48. The German police have started investigations here and have at least one suspect in custody. Angela Merkel expected to address all of those issues and give us an update later on today. Let's take a look at how things are shaping up in the markets. Guy, not a lot of movement on this alleged terror attack. We see gains in the continent. And the FTSE actually down. You mentioned the miners are weak. That is what's dragging down the FTSE, although it's really little changed at 7,012. The DAX and the CAC actually gaining this morning. Let's get now the Bloomberg First Word News with Juliet Sally. Juliet?
Matt, thank you. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allah Akbar and don't forget Aleppo after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. A manhunt is underway in Zurich after a suspect shot people praying in an Islamic centre. 3 men were hospitalised after the attack, which took place close to the main train station. The dead body of another person was found just a few minutes' walk from the scene, although it's unclear if the 2 episodes are linked. The International Monetary Fund's Executive Board has reiterated its backing for Christine Lagarde. That's after its managing director was convicted for negligence during her time as French finance minister. The Paris court said she should have done more to block and overturn a multi-million euro payout to businessman Bernard Tapie over his 1993 sale of Adidas. Lagarde won't face any fine or jail term. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. This is Bloomberg. Guy.
Thank you very much indeed, Juliet. The Bank of Japan has upgraded its assessment of the world's third largest economy. At the same time, monetary policy was kept unchanged in the central bank's first decision since Donald Trump's election victory. Let's go live now to Bloomberg's Sherry Ann in Tokyo. Sherry, Kuroda sounded very upbeat. Give us the details of what was delivered today.
Guy, yes, when it comes to the Japanese economy, the Bank of Japan did portray a more rosy outlook for the future. Of course, we have a weak yen now trading at around the weakest level since February. But when it comes to the monetary policy, they kept it unchanged. It was as expected. 39 economists surveyed by Bloomberg had expected no change, so they maintained the policy rate at -0.1%. Also, they kept the 10-year yield target at around 0%. Remember, this is what investors were looking at because as we see global bond yields spiking, Japan's 10-year yield has also felt the upward pressure, rising to the highest level since January. So we're now seeing that after hitting that 0.1% last week, some analysts had been speculating whether this was the upper limit of the bank's tolerance. Still, Governor Kuroda saying that the appropriate yield curve has been achieved and that it's too soon to discuss raising the long-term yield target. But of course, the BOJ says that it will adjust policy as needed. When it comes to the weakening yen, the governor doesn't see the yen as excessively low. Remember, it's just trading near the February lows, and Kuroda emphasizing that everyone talks about a weak yen, but it's just at levels back in February. Guy.
Sherry, actually, I'm going to take it because we have some breaking news here on the situation in Zurich. Angela Merkel is going to speak later today because of what happened at the Christmas market in Berlin last night. Now, the Zurich police are going to hold a press conference later today as well to talk about the shooting at the mosque. So that'll be, Guy, at 1400 CET. That is 1 o'clock p.m. GMT.
Let's get more on that story. Sherry Ann, thank you very much indeed. We will continue to monitor the story in Tokyo with our bureau, but also now with Nicholas Smith, equity strategist at CLSA Japan. Good morning. Do you think that the Japanese authorities really can do any more at this stage? I have to say, I listened to what Kuroda had to say, or at least the translation. He sounded reasonably upbeat. This is probably as good a place as the Japanese authorities could have expected to be at the end of 2016.
Absolutely it is. So I think the economy really is in a Goldilocks zone, anywhere between 110 and 120 yen to the dollar. And so that's a great rate for them. We've now got pick-up in the global economy. That's actually a lot more important than yen is for Japanese companies. So I think as far as corporate profits are concerned, we ought to see a very good year indeed in 2017.
So how does policy develop from here then? Is it just sit on your hands and do nothing and wait for the Fed and Donald Trump to deliver?
Well, I think that there are some people out there thinking there's going to be upward pressure on the 10-year bond. I think there's absolutely no danger whatsoever from that. And I think we're basically into the lame duck session now, that between now and April 2018, when Governor Kuroda steps down, he hasn't actually really got to do anything. He probably ought to get rid of the minus 10 basis points on policy rates, but won't, and he'll leave the 10-year at zero. And there's really nothing else that he needs to do. As long as people believe that the 10-year can be defended, then it won't cost him a cent to do it. It's basically a Draghi assertion.
So, Nicholas, how long are we until there's an actual turnaround towards normalization in the Bank of Japan, or is that far past Governor Kuroda's tenure?
Sure, that's way past that. So the next thing is at the end of 2017, we'll be talking about who the next governor is. I think Ito Takatoshi is probably considered by most as the leading contender there, as a very safe pair of hands. But this is not a decision for Kuroda at all. If you ask staffers, they'll say it's way too early to be discussing normalizing rates. And that's probably true. I mean, I would have thought that inflation will be picking up probably faster than the market expects over the next year to two, but we're sitting at 0.1% at the moment for the headline rate. The ex-energy, which is the one we should have been watching all along, that the BOJ creates, that's is sitting at about 0.4%. So nothing to really bite our nails about, but until it gets to a couple of percent, then there's no real need to normalise things.
Nicholas, are you concerned about the death of the TPP or the death of sort of global trade, even as we hear that Japan is now negotiating new agreements with Europe and Abe is meeting with Putin? Does Japan face problems because of that protectionist feeling around the world, or can they access new markets even through this protectionist feeling?
Well, when you say protectionism around the world, obviously you're talking about protectionism in the US. I don't think that Trump will be signing any more trade treaties, but then again, I don't think there'll be a bonfire of existing treaties. So if you look at TPP, remember, the most important sector for Japan is autos and auto parts. Japan's had 0% tariffs on both of those areas since 1978 because of US pressure. The US has 2.5% on cars, 25% on trucks, and under TPP the fade rates to zero would have been 25 years for cars and 30 years for trucks. So basically a not in my lifetime agreement. So TPP really wasn't going to do much for Japan. The main importance of it was actually domestic, in putting Abe in a position where he can liberalise the agriculture in Japan, and it certainly served its purpose for that. But there are a lot of other deals to be signed outside in the rest of Asia. People are desperate to get trade treaties done, and Japan, ex-agriculture, its weighted average 1.2%, so it's got one of the lowest tariff rates in the world, and can sign a treaty with anybody and come out better out of it.
Nicholas, we'll leave it there. Thank you very much indeed. Nicholas Smith joining us from CLSA Japan on what has been coming out of the BOJ this morning. I just want to recap some of the news that we've been seeing on the tape over the last few minutes. We do have a meeting between Sergei Lavrov and Mevlut Cavusoglu, who is the Ministry of Foreign Affairs for Turkey. And we're now hearing from the Turkish side of the table saying that the Russian embassy streets will be now named after Ambassador Karlov, this following his shooting yesterday. And the two countries appear to be trying to make very clear at this point that this incident will not affect the relationship, which have been strained, Matt, over the last few years, will not affect those relationships. Turkey condemning the assassination of the Russian envoy, Matt.
Right, had been strained, but they've become fast friends again, and this looks like it's solidifying, at least from everything we're hearing from both countries, solidifying that newly found friendship or newly healed relationship. I want to talk quickly about Angela Merkel's response to the tragedy at the Christmas market last night here in Berlin. She is going to speak. The Chancellor will talk about this truck driving through a Christmas market and killing at least 12 people at 11 a.m. local time. So 10 a.m. London time, just about an hour and 19 minutes from now. We're going to hear from Angela Merkel on that. And then 3 hours later, we're going to hear from the Zurich police about a shooting that happened at a mosque there last night as well. So we're going to get more information on all of these tragedies and geopolitical turmoil around the world after the break. This is Bloomberg. All right, just about an hour and 15 minutes now until we hear from German Chancellor Angela Merkel on the probable attack that killed 12 people at a Christmas market yesterday and injured almost 50. The German police have apprehended a suspect in that attack, actually just behind me, behind the Brandenburg Gate, as he fled from the scene. Apparently, a witness from that attack watched him allegedly jump out of the truck, and then followed him down to the Victory column that's in the middle of the Tiergarten and brought police to him. There are reports in German papers, including Die Welt and the Bild Zeitung, that the German police force has also raided a refugee camp at Tempelhof. None of these reports have been confirmed beyond newspaper reports, so we've got to be careful about this right now, but we can expect, I think, Angela Merkel to at least address some of these questions when she makes her statements at 11 a.m. German time, Guy. That's 10 a.m. UK time.
The other incident which really has dominated the headlines over the last 24 hours, the shooting of the Russian ambassador in Ankara last night. We now have a meeting between the foreign ministers of Russia and Turkey taking place. We're getting some comments coming through the Turkish side of the table talking about the fact that we must uncover who is behind this heinous attack. And it does seem as if the two sides are trying to make clear that this will not disturb the relationship, which, as we've been discussing, Matt, has already become very fragile over the last couple of years. The downing of the jet, obviously front and centre in the destruction of that relationship. The subsequent rebuilding of it has left it fragile. But nevertheless, it doesn't seem as if this incident at this stage is going to change the situation between Moscow and Ankara. But that wasn't the only incident. We also had the incident in Zurich as well. And we're going to get statements later on that one as well, aren't we, Matt?
Yeah, well, and we've already gotten some information from the Zurich police. So there was a shooting at a mosque last night in Zurich. Apparently, another body was found shot dead outside of the mosque. It's unclear whether those two things are connected, but the Zurich police have said now that they're not searching any longer for a suspect in that shooting, that the shooter at the mosque has been identified. They will hold a press conference at 2 o'clock Central European time to talk about the incident in Zurich. So that's 1 o'clock in the afternoon UK time. We're getting so much so quickly, and we'll just try and keep you up to date. You can, of course, follow Bloomberg on Twitter as well as all of these local sources. I want to bring in right now Sony Kapoor, Managing Director at Redefine, joins us now to consider the geopolitical implications of the incidents in Turkey, in Germany, and Switzerland ahead of a big election year in Europe in 2017. I've got to, because I'm here in Berlin, let me start with Angela Merkel, the Chancellor. Is she under any threat, Sonny, because of what we're seeing here, or does this ultra-right-wing populist party, the Alternative für Deutschland, do they gain a stronger foothold, maybe even a spot in the federal government as a result of this?
Well, I've been living in Berlin the past 8 years, and one remarkable thing has been how measured and, in a way, incrementalist Mrs. Merkel's support has been to every single new crisis situation she has faced. And I don't expect things to be different this time. She will be measured. She will call for national unity. She will call for beefing up security measures. But I think, given her position in the German political landscape, where there is simply not one single other politician who is in any position to challenge her to be chancellor, I think she can afford not to be drastic and to actually have a thoughtful, measured, sensible response rather than a knee-jerk reaction. Because no matter that this will strengthen the AfD, absolutely, but the vast majority of German votes will be cast for the mainstream parties, for the CDU, for the SPD, for the Greens, amongst others. And in a worst-case scenario, you will have a three-way coalition, maybe even a four-way one, to keep AfD out. I mean, we are never going to come to that. It'll almost surely be a grand coalition again.
Sonny, you talk about drastic reactions. I was at the CDU gathering in Essen just a couple of weeks ago when Angela Merkel called for a ban of the full-faced veil. So no longer allowing Muslim women to wear this full-faced veil. It almost seemed like it was
an attempt to almost outflank the AfD, the right-wing party here. I mean, when you've got liberal democracy telling people what they can and can't wear, don't you think that that's a bit severe?
Well, in any other country, and given the examples we have seen in France in particular, what's been going on in Austria and in Switzerland, this would not be considered drastic. But yes, you are very correct that for a country with Germany's history, for a country which has been very, very careful not to tread into the territory of personal liberty and values, this was a drastic measure, and she was roundly and rightly criticized by liberal forces for that measure. But I think that probably that and maybe a little bit further tightening of the already not so willkommen Kultur is the most we are going to see, together with a real much needed perhaps sprucing up of German security services and intelligence, which hasn't quite got the same resourcing as the ones in France and the UK do.
Just getting a line out of the Zurich police within the last couple of minutes saying that they now suspect the shooter in yesterday's incident is now suspected to be dead. We'll have more details as we work our way towards the press conference, which is coming up later. The Zurich police will be furnishing us with more details at that stage. How does this play in France? Because France is feeling much more fragile about what is happening with the terrorism story. It has suffered severely over 2016, and it's now looking across the border into Germany, looking at what has now happened in Germany. How does this play into the French election, which is more near-term? Security, a much higher profile story there.
Well, again, in terms of the actual outcome, I think that that is still likely to be a President Fillon. But the relative share of Marine Le Pen's vote could increase. The relative importance of security issues, the Berlin attack. Every single attack that happens on European soil over the next few months will feed into the elections, will stoke up support for the far right, but more dangerously will almost surely lead to, as perhaps the Zurich attack might have been, reprisals against the Muslim community. And this way lies trouble and conflict, and we will need to find a way of managing this. So we will definitely have more attacks, but I think together Europe will manage to keep the far right out of political power.
Let's kind of walk back along the line. Syria remains in some ways the epicenter of this story. And we've seen this incident in Ankara overnight in which the Russian ambassador was shot dead. As we look at how regional powers are playing the Syria story and trying to make their voices heard and impose their will on the ground, what does 2017 bring? Because if Angela Merkel is watching the story, if François Hollande is watching the story, they can track back to Syria. If Syria stabilizes, does the situation in Europe stabilize, or are we now past that point? How do the two stories fit together?
Well, so for perspective, the situation in Europe is not that bad. We are more than 500 million people within the European Union.
Sure.
And if you just look at it on a per capita basis, we remain the most peaceful part of the globe. And I think that is not going to change. We will see more headlines, we will see more attacks, and there are already, presumably with the millions of people who came and also the large sects of Muslim community, there already are potentially terrorist cells. Many attacks have been thwarted already, but some will necessarily and probabilistically go through. So there will be a time lag. There's not a direct one-to-one correlation between the situation on the ground in Syria and what happens in terms of potential terrorist attacks within the European Union's boundaries. Situation in Syria, sadly, it's hard to see stabilizing in any possible way anytime soon, at least in a manner that stems the flow of refugees. Because President Assad manages to re-establish his hold in power, given his track record, that is going to push a lot of people out who would be targeted by the regime as they have been. So consolidation of power is not the same as stabilization of situation in Syria, is not the same as a stemming of refugee flow, is not the same as a reduction or, let's say, an elimination of terrorist attacks in the EU.
All right, Sonny, thanks so much for joining us today. Sonny Kapoor, their managing director at Redefine. Appreciate you coming in on such a difficult morning. Now, these are Merkel's dead. That's what a prominent member of the Alternative for Germany party tweeted after a truck rammed into the Christmas market, killing 12 people in what the government now says was probably a terror attack. Our German government editor, Tony Chuchka, joins us now to discuss the political implications of the incident heading into an election year. And, Tony, let me first ask you, what do you expect Angela Merkel, Chancellor Merkel, to tell us when she talks in just about an hour and 5 minutes?
Well, I think what you're going to see is, I mean, our best educated guess would be that she will obviously express horror and say that we need to stand up to terrorism and that the authorities will investigate this and will possibly also, you know, take additional measures, which is quite possible and might make sense. On the other hand, given her and her government's previous approach to this entire issue, you will probably hear something like that, but we can't let this ruin our way of life, and also we can't let it create this blanket suspicion about all refugees / asylum seekers / foreigners in Germany.
Much has been made of the AfD, this right-wing populist party that's won spots in local state government elections, doesn't have any seats, I believe, in the German Bundestag. But look, they're not the only ones saying that blood is on Merkel's hands. The Polish ruling government party also has some members who are saying, look, this is why we didn't go this route. This proves Merkel wrong. She's going to get a lot of backlash for this refugee thing now.
Yes, I mean, of course, there's
more, I should say.
Yeah, that's very likely. You know, I think the way you have to look at it is that Merkel, she has been in power for 11 years. She's just asked Germans a couple of weeks ago to re-elect her for a 4th term. Now, that's going to be probably going to be a taller order now. And one of the reasons is that her whole stock in trade has been, I will keep Germany stable and sort of insulated from the world storms. We saw this in the euro crisis, the debt crisis, and she's done it in the terrorism on the terrorism issue as well.
All right, Tony, thanks so much. I know you're going to be working hard today. Tony Chuchka, our German government editor, from Guy Johnson in London, and me here in Berlin. Stay with us. This is Bloomberg.
suspected terror attack in Germany. At least 12 people are dead, 48 injured after a truck rams a Christmas market in Berlin. Assassination in Turkey. Russia's ambassador to Turkey is shot dead in Ankara. The gunman shouted, "Don't forget Aleppo." And the BOJ ups its outlook in its first decision since Trump's election victory. The central bank keeps its policy on hold while forecasting a pickup in exports. This is Bloomberg Surveillance. I'm Mark Barton in for Francine Lacroix today. Have a look at what's happening in markets today despite those three separate incidents in Ankara, in Zurich and in Berlin. We're seeing some resilience, as has been proven again and again following these related types of incident in recent years in Europe. The Stock 600 in Europe is gaining. It's up by 1/3 of 1%. We've got the German 10-year yield creeping up marginally by 3 basis points. The dollar's rising against the yen today after the BOJ decision. It upgraded its assessment of the economy, kept its policy stance unchanged. And that's what's happening to gold. It was up earlier for the third day, but less of an allure for the precious metal. Let's get right to Bloomberg First Word News. Here's Naira Chage.
Mark, Angela Merkel is to make a statement today about a deadly incident at a Berlin Christmas market. The German Chancellor's address, scheduled for 10 a.m. UK time, comes as authorities sift for clues into the probable terror attack that killed 12 people and injured 48 others. Police are questioning a suspect arrested near the scene whom they believe to be the driver of a truck that rammed into crowds yesterday evening. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted "Allahu Akbar" and "Don't forget Aleppo" after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. Zurich police say they have identified the person who shot people praying in a mosque yesterday. They are due to hold a news conference at 1 p.m. UK time today. 3 men were hospitalised after the attack, which took place close to the city's main train station. The dead body of another person was found just a few minutes' walk from the scene, although it is unclear if the 2 episodes are linked. The Bank of Japan has upgraded its assessment of the world's 3rd largest economy. At the same time, monetary policy was kept unchanged in the central bank's first decision since Donald Trump's election victory. The BOJ forecasts a moderate recovery trend to continue following a pickup in exports, an improvement in business sentiment and resilience in private consumption. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Naira Chahich. This is Bloomberg. Mark?
Naira, thank you very much. Our top story today, a suspected terror attack in Germany and an assassination in Turkey. For the latest, we're joined by Simin Demirkan in Istanbul. Simin, what do we know then about this attacker?
That's right. So the attack happened late last night, where the Russian ambassador to Turkey was shot at an art exhibition in Ankara. Now, the shooter is a police officer. He's been involved in the riot police force for the past 2.5 years. However, what we do know is that he was shouting about Aleppo and Russia's involvement in the Syrian war. Now, President Erdogan phoned Russian President Putin straight after these events, and they both sent a message loud and clear, saying they won't allow this assassination to ruin relations. Turkey's Foreign Minister Mevlut Çavuşoğlu is currently in Moscow. Now, this was a pre-scheduled trip. He's there to talk to the Russians and the Iranians about the situation in war-torn Syria. They sent a message loud and clear as well during a press conference about half an hour ago. They said that they will not let this incident ruin relations. Turkey says that it grieves with Russia and they will continue to work together. Now, you may remember that back in 2015, a diplomatic row erupted between Ankara and Moscow when Turkey shot down a Russian jet on the Syrian border. What followed was trade and travel sanctions, but since then, Turkey and Russia have been on the road to reconciliation.
And this is important, isn't it? The last thing Turkey needs is another economic flashpoint with Russia, because the economy shrank in the third quarter, didn't it, Simin? And that's linked to instability, which, of course, damages business confidence and damages consumer confidence.
Yes, that's right. In the third quarter, we saw that the third quarter GDP shrank 1.8%. Now, this was the first time we saw a contraction in 7 years. Later today, we have the central bank decision. Now, according to a Bloomberg survey, median estimate of economists expect the central bank to raise rates by 25 basis points, bringing it to 8.75%. Last month, they also raised for the first time since January 2014. But investors feel that monetary policy is still too loose. However, President Erdogan doesn't agree. He says rates are way too high. Now, if we look at the lira, it's been hitting record lows against the dollar over the past month. And overall, in the past 3 months, it's actually depreciated 15% against the dollar. That's due to external influences such as the US elections, but also Turkey's political instability.
Simin, thank you. Simin Demirkan in Istanbul. Let's get over to Matt Miller in Berlin. Matt, Angela Merkel, the Chancellor, speaks in just under an hour. How much does this incident undermine her standing going into next year's election?
Well, you do have, obviously, her most prominent right-wing populist opponents coming out and saying that blood is on the Chancellor's hands here. The Alternative for Deutschland, the AfD party, although that is a party that doesn't have any seats in the federal government, in the German Bundestag, I should say. They surprised people by winning 20% in Merkel's own home state of Mecklenburg-Vorpommern, but otherwise not as imposing a threat as you might think from all the coverage of the AfD. She has been taking attack back to the right lately, as has the rest of the CDU, after allowing 1 million refugees into Germany and trying to kind of outflank or get towards the right-hand flank of the party. It's questionable whether or not she continues that strategy today at her press conference. It's very likely that she says Germans need to stick together. They need to make sure that this kind of incident doesn't allow extremists to try and change Germans' way of life, their free, liberal, tolerant way of thinking, and put up a continued strong pro-European front.
Matt, this has been called a probable terrorist attack. What do we know about the driver of this truck that rammed into crowds in this West Berlin market?
Well, German police are very careful not to allow details like nationality or full names out into the public until all of these things are absolutely confirmed. They want these people to remain confidential, their identities, until they can confirm that they're definitely suspects in a case. So they haven't said that this is a Pakistani refugee that they're holding right now, although newspapers like Die Welt and the Bild Zeitung have said that that is the case. We do know that the German police have raided a refugee camp in Tempelhof, which is the old German Berlin airport that's been converted into refugee barracks here, refugee holding center. We don't know what they found in that. We know also that the federal police have opened up a criminal investigation here and that they're saying it's an alleged terrorist attack, but they're just very conservative with these kind of details. Mark?
Thanks. We'll see you later. Matt Miller there in Berlin. Joining us now, Rupert Harrison. He's the chief macro strategist at BlackRock Multi-Asset Strategies. Rupert, thanks for joining us today. The market's proving amazingly resilient to yet another terrorist incident, as they've proven in the last year or two, looking back at Nice, Brussels, Paris, to name but 2 or 3. Gold is down now, bond yields are up, stocks are rising, euro's down. Yen is falling. I mean, that's resilience. If you need resilience, isn't it?
Sadly familiar sight. We've got tragic events around the world, but markets, particularly during the last year, have learned, I think, that economic fundamentals and the big drivers of markets are going to continue through these events, unless they are of a scale that is likely to, change consumer confidence or change investment patterns. And we saw a little sell-off in the Turkish lira yesterday. That's largely come back. And I think, again, it's these big global drivers are going to overwhelm political events.
It could change, or it could influence voting patterns. And I know one of your big risks for 2017 is the number of key elections that's taking place in Europe in 2017. It's early days, we don't want to speculate, but it does add to the narrative of the rise of populism ahead of elections in the Netherlands, France, possibly Italy, and of course in Germany itself.
No, that's right. This is now the backdrop for all of the elections in Europe in 2017. I think what we just heard is right, is you need to differentiate country by country. So in Germany, the AfD gets a lot of coverage around the world, but it is not a kind of large-scale electoral threat. It might complicate, you know, if it does get into the Bundestag, it might complicate some of the coalition mathematics facing Angela Merkel if she wins the election next year, but not much more than that. Obviously, you know, France and Italy are bigger risks. Marine Le Pen is obviously driving, you know, riding this kind of populist wave, concern about immigration in France. Again, I think, you know, you have to take a step back and see that, you know, France is you know, this is not like Trump, I think, in France. You know, we have to obviously say there's a long way to go between now and then, but Marine Le Pen has got a much bigger uphill battle before she can actually win the second round of a presidential election in France. But this is the backdrop that markets are concerned about, but I think we can see today that US reflation, growth around the world, probably, you know, acceleration in global trade. All of these things are much more important for markets.
Which we'll come to, Rupert. Thanks a lot for the moment. Rupert Harrison, their chief macro strategist at BlackRock Multi-Asset Strategies. Right, stay with surveillance. Plenty coming up. The BOJ upgrading its assessment of the economy, keeps its asset purchase programs unchanged. We'll break down the central bank's decision. If 2016 was about Brexit and the rise of populism, what can we expect from 2017? BlackRock's Rupert Harrison will weigh in, and we'll continue to bring in the latest out of Turkey and Germany, drill down into the geopolitical implications with terrorism expert Otso Iho. This is Bloomberg. Welcome back to Bloomberg Surveillance. I'm Mark Barton in for Francine Lacroix. Let's get the Bloomberg Business Flash. Here's Naira Change.
Mark, Angela Merkel is to make a statement today about a deadly incident at a Berlin Christmas market. The German Chancellor's address, scheduled for 10 a.m. UK time, comes as authorities sift for clues into the probable terror attack that killed 12 people and injured 48 others. Police are questioning a suspect arrested near the scene, whom they believe to be the driver of a truck that rammed into crowds yesterday evening. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allahu Akbar and "Don't forget Aleppo" after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. Zurich police say they have identified the person who shot people praying in a mosque yesterday. They are due to hold a news conference at 1 p.m. UK time today. 3 men were hospitalised after the attack, which took place close to the city's main train station. The dead body of another person was found just a few minutes' walk from the scene, although it's unclear if the two episodes are linked. And that's the Bloomberg Business Flash. Mark?
Thank you very much, Nera. Now, Japanese shares are raising losses, the yen weakening after the BOJ upgraded its economic outlook while keeping the yield curve and asset purchase programs unchanged. BOJ Governor Haruhiko Kuroda reiterating the central bank's commitment to pin the 10-year government yield near zero, reinforcing the widening gap with treasuries.
I think the yield curve control has been working quite well. Appropriate yield curve has been achieved so far. We don't consider raising the long-term yield target just because the overseas yields hike. It's too soon to discuss raising the target.
Rupert Harrison's still here. BlackRock Multi-Asset Strategies, will it eventually have to raise its long-term yield target because of the pressure from bond markets overseas?
Well, I think the key word is eventually. I think what we saw today is absolutely not yet. I think the BOJ is pretty happy with the way things are going since it put its yield target in place, benefiting hugely from reflation and rising bond yields around the rest of the world. I think the key thing to watch for the BOJ is not so much real activity, which is definitely picking up, but inflation expectations. And I think that for as long as inflation expectations remain relatively low, I think we can see that yield target remain in place, which creates a very interesting environment for investors, where you now have the ECB in Europe and the BOJ as sort of anchors of stability, and that for the next 3 to 6 months at least, you kind of know where you are with those two major central banks. Obviously, all eyes on the Fed. But I think that creates a sort of downward drag on yields around the world, the fact that those two central banks are still very much in the market and have set out where they want to be for the time being.
And on the Fed, 3 rate hikes, if you look at the dot plot, have been forecast for 2017. Rupert, the market not quite there, but they're as close as they've been, the Fed and the market, for quite a while. Which way do we lean? 2 or 3 or less or more?
I think 2 or 3 sounds about right. I mean, I think that people are wondering about. We had a slightly hawkish reception to the Fed a few days ago. I think that I would be surprised if we were to see a series of hawkish surprises from the Fed now. This is still the same Federal Reserve Board that we've had over for the last couple of years. All of the asymmetry of risk that they face, where they're much more worried about downside risks than they are about upside risks, remains in place. Speculation about Donald Trump's economic plan remains just that for now. So I think the market has moved to the Fed. They are now they sort of find this 2017 path more credible. I would be surprised if that path became significantly more aggressive. 2018 may be another factor as the composition of the board starts to change and as some of the reality of Donald Trump's policies kicks in. But for now, I think we've sort of seen a lot of the hawkish surprises that we're going to get.
Rupert, stay there. Back in a sec. Rupert Harrison, their chief macro strategist at BlackRock International. He stays with us. Up next, Brexit and political risk. How should the government here handle the looming divorce talks? We'll discuss that next, and Rupert's outlook for 2017. This is Bloomberg. Welcome back to Bloomberg Surveillance. I'm Mark Barton in for Francie Lacroix. Political risks are dividing analysts. They're trying to plot the course of sterling against the euro. All comes down to which side of the channel will see greater turbulence as a result of Brexit or the rise of populism in the EU. Still with us, Rupert Harrison from BlackRock Multi-Asset Strategies. Also, he was, in a former life, the Chief of Staff for the former UK Chancellor, George Osborne, getting out just at the right time after the election victory in 2015. We're hearing today that Nicola Sturgeon, Scotland's First Minister, will sort of lay out their red lines when it comes to what Scotland wants with regards to Brexit. Is Theresa May playing this cleverly? Bloomberg has spoken to a number of people who are used to big gambles and terrorist activities, what you should do in these sort of incidents. And they all say keep your cards close to your chest, so which is what she's doing.
I don't think she has any other choice.
Yes.
I mean, I think we are still in this sort of phony war period where, you know, up until the triggering of Article 50 and probably beyond, you're going to get, you know, a fair amount of reticence from both sides, and I don't think we're going to get any proper negotiations until after the German elections in almost a year's time. The Scottish scenario, as so often with Scottish politics, this is much more about the kind of choreography and positioning relative to the UK government. I don't think Nicola Sturgeon expects realistically that Scotland is going to be able to remain in the single market if the rest of the UK is not in the single market, but it's more about you know, setting up you know, grievance and a set of, you know, positions to hold against the UK government while she holds this difficult position on is she going to call another independence referendum, which I think is a very, very tricky strategic problem for the SNP.
How will it look after 2 years? Let's say we trigger it by the end of March, as seems to be the plan. What will it look like?
I think that we are
in 2 years. Do you think?
Yeah, I think that there's much less uncertainty now about the eventual end point. I think that we are, you know, heading for pretty clearly what people call a hard Brexit. You know, we are not going to remain, I think, in the EEA or members of the single market, mainly because of the two red lines the government has set down on immigration and no jurisdiction for the ECJ, basically make that an impossible outcome, even if they wanted to achieve it. So we're going to end up, you know, out of the single market, out of the European Union, with quite a detailed, probably bilateral agreement.
A sort of
Canada plus,
a Turkey arrangement.
Well, or a Canada plus arrangement. I think that on the customs union, I think we might end up with what people in government are calling a non-binary solution, whereby you find some ways to remain in, particularly in industries where there are very integrated supply chains, for example, like auto or aerospace. I think, so that's the end point. I think the big uncertainty that we face over the next 6 to 9 months is how are we going to get to that end point? Are we going to drop out suddenly at the end of 2 years, go onto a sort of WTO schedule and come back via a trade deal from that route, or are we going to get some kind of transition? Yeah. This is the big discussion in Whitehall at the moment about, can you get a transition deal that is worth the price? And particularly, at what point can you get agreement to that? Because if, you know, there are a lot of people on the European Union side who will say, look, we're not ready to talk about transition until we know where the end point is, and this is something for 2018. If you get to 2018 with no transition deal in place, the UK will have incurred a lot of the costs already. A lot of businesses will have pressed the button on contingency plans. A lot of sunk costs will have been incurred, and the benefits to the UK of a transition deal will be significantly lower. So for the UK, they would desperately like to get some agreement to that transition early on, and that, I think, is the big uncertainty.
Rupert, great to chat to you. Rupert Harrison, their chief macro strategist at BlackRock. Thank you, sir, for joining us today. Surveillance continues. More on events in Germany and Turkey. This is Surveillance. Welcome back to Bloomberg Surveillance. I'm Mark Barton in for France Delacroix. Let's get to Bloomberg First Word News. Here's Naira Chej.
Mark, Angela Merkel is to make a statement today about a deadly incident at a Berlin Christmas market. The German Chancellor's address, scheduled for 10 a.m. UK time, comes as authorities sift for clues into the probable terror attack that killed 12 people and injured 48 others. Police are questioning a suspect arrested near the scene whom they believe to be the driver of a truck that rammed into crowds yesterday evening. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allahu Akbar and don't forget Aleppo after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. Zurich police say they've identified the person who shot people praying in a mosque yesterday. They are due to hold a news conference at 1 p.m. UK time today. 3 men were hospitalised after the attack, which took place close to the city's main train station. The dead body of another person was found just a few minutes' walk from the scene, although it's unclear if the two episodes are linked. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Naira Chej. This is Bloomberg. Mark?
Naira, let's get more on these suspected terrorist attacks. Joining us now on the phone is Otso Iho, global terrorism expert and senior analyst at IHS Janes. Otso, thank you for joining us today. Is it likely the German incident is a terrorist attack?
Well, as you've said, we're still finding out the kind of key details from police on whether this was an attack. But what police have said is that it is looking like the vehicle was driven deliberately into the market. And based on kind of precedent that we've seen in Nice and in other cities in France, it does look like this is a terrorist attack.
And what other parallels do you think we might be able to draw between what happened in Nice in July and what happened yesterday in West Berlin?
Well, I think the key parallel really is that in both attacks we've seen the use of a very large vehicle, very heavy vehicle that's difficult to stop, that is capable of crushing through both small structures as well as people, of course. So there seems to be a kind of understanding that adopting these kinds of larger vehicles has a larger impact, which it of course does.
And also, this demonstrates the changing nature of the incidents that have taken place on the European continent in the last year or year and a half. How do governments and businesses adapt their own crisis management strategies and response procedures given the changing nature of these attacks?
Well, it's a very difficult thing to respond to something that is so low capability and can be conducted by, in many cases, just a single individual, and doesn't have the same kind of technology or complex processes that are required for attacks that involve explosives or the procurement of weapons. So really, this is very difficult. But there are some ways that vehicle impact attacks can be prevented or mitigated. For instance, the installation of various stronger barriers and this type of measures around high-profile targets and sensitive locations.
Also, it came, the German attack, on the same day as incidents in Turkey with the Russian ambassador and in Zurich as well. Is it wrong to try and draw a parallel between the three incidents?
I think it's still way too early at this stage to draw any kind of actual connections between these three incidents. It could well be that they have nothing to do with one another. Europe, for instance, has seen a number of not just Islamist militant attacks, but also attacks by right-wing extremists. So at this point, it's still too early to kind of make any sort of concrete connections between these separate incidents.
Does it mean, because of the difficulty in isolating and neutralizing the correct threats, that we will continue to see similar-minded activity on European soil in the future?
What we've seen in this past year has been an uptick in attacks by what we would describe as lone actors who don't always have a kind of organizational affiliation with the Islamic State or indeed other Islamist militant groups. So at the moment, with the Islamic State's fortunes waning in Iraq and Syria, they are looking to project their influence by conducting and by inspiring attacks in Europe. So there remains a heightened, elevated risk of further attacks like this on the European continent, unfortunately.
And we've discussed the similarity in the attacks between Nice and Berlin yesterday. How else do you expect attacks to evolve in coming years then?
I think it's not necessarily that attacks will simply become these types of more, simpler attacks, but what we will see more of is a combination of different tactics. So we are likely to continue to see more complex attacks that involve things like hostage-taking, the use of military-grade assault rifles and weapons, and that take place in multiple locations and are really looking to stretch the response capability of law enforcement. So I think we're going to see a mixture of small cells that are receiving organizational support from groups like the Islamic State, as well as then lone actors who are inspired by the propaganda and inspired by the encouragement to carry out attacks, but who actually don't necessarily have any sort of funding or organizational support.
Otso, thank you for joining us today. Otso here, their terrorism expert at IHS Janes. Right, stay with surveillance. Plenty coming up today, including up next, we'll drill down into the BOJ boosting its outlook with Brendan Brown, chief economist at Mitsubishi UFJ Securities. And 2016 was a tough year for hedge funds, but Trump's surprise victory helped bolster returns. We'll take a look at the winners and the losers. And next hour, we'll bring you the latest on the suspected terror attack in Germany and the assassination in Turkey with Eurasia Group's Charles Litchfield. This is Bloomberg. Welcome back to Bloomberg Surveillance. I'm Mark Barton in for Francine Lacroix for a market check. Let's get over to Nera Che. Janera.
Mark, as you've been saying for most of the hour, we are seeing some resilience in European equity markets to these geopolitical concerns. Resilience that we didn't see in the Asian session, but in Europe, the Stoxx 600 has actually risen to its highest level this year today. If we take a look at industry groups, almost an even distribution between gainers and losers. I'd say a bit more on the gaining side, with healthcare and telecommunication stocks leading the rally, as you can see on the IMAP function. Now, we're also keeping a close eye on FX today. One of the best performing emerging market FX against the dollar today is the lira. It is the worst performing EM currency against the dollar in the past month, but today it has regained most of what it lost versus the dollar overnight after the Russian ambassador Andrei Karlov was, of course, shot and killed in Ankara. Putin and Erdogan spoke by phone last night to discuss the events in a sign that they don't want the attack to turn into another flashpoint between the two countries. Not only that, but analysts are expecting a 25 basis point rate hike from Turkey's central bank today. So this is what we're seeing ahead of that central bank decision too, and that's the majority of analysts, of course. Now, the worst performing major currency against the dollar today is the yen. We've seen it weaken after the BOJ kept stimulus unchanged, and Kuroda had a pretty glass half full view as well of the economy, where we've broken through 118.04 is where we are on dollar yen. Now, in the bond space, what we're seeing is yields tick higher across Europe, tracking the 10-year Treasury yield. This is how we're looking in terms of curve steepening. So Japan's yield curve motoring higher after that decision from the BOJ. The country's 2-10 spread has actually steepened the most among major economies on a normalized basis since the US election. What this chart shows is the US in white, Germany in blue, the UK in purple, and Japan, as you can see, powering ahead in pink. Mark?
Nera, thanks a lot. So the BOJ upgrading its outlook for the economy today while keeping its yield curve and asset purchase programs unchanged. The yen, as Nera said, slipping after the announcement, extending decline since Donald Trump's election victory. But Governor Kuroda insists the currency isn't weak.
Foreign exchange market reflects strong dollar, not the weaker yen. The dollar is strong against many other currencies. I don't think the current level of the yen is extremely weak. It's only similar to where it was in February.
Former Mitsubishi UFJ Securities International Executive Director Brendan Brown joins us. Brendan, is the yen weak? Is the dollar strong? How much further has the yen's move downwards got to run?
Well, the yen is weak in overall real effective exchange rate terms, but so is the euro. So in general, this is a dollar phenomenon. I think the key in looking into next year is going to be the geopolitics. The US-Japan relationship is absolutely fundamental from Japan's point of view, and they have to get on the right side of Trump, especially given the growing confrontations with China. And I think in that environment, the Japanese government is not going to be trying to inflame relations with US by running the danger of being seen as a currency manipulator.
Yeah. Meanwhile, the BOJ did nothing and upgraded its assessment of the economy, Brendan. Is it done with regards to easing? I mean, the economist we've surveyed says it is, until at least Kuroda steps down in 2018. What more can we expect from the BOJ in 2017?
Well, I think the BOJ is now in a very difficult spot because it tried a few months ago to launch a QE tapering operation by stealth. But at the same time, it has this peg now for long-term interest rates. The two just don't fit together. The markets don't believe that the BOJ can hold long-term interest rates at zero when US yields are rising so much, without intervening a lot more in the bond markets. So I don't see anything today's BOJ announcements.
What's going to give then? I mean, do they have to raise their long-term yield targets or abandon them, or what's the next?
I think what's going to give in the short run is that at some point in the first few months of next year, the BOJ will probably raise its target on the long-term bond. But that will be red rag to a bull, and that will encourage markets to see the potential that it could be raised again.
Yeah.
So I think the issue is going to be that towards QE tapering, and that will be essential to the US relationship. they will have to scrap that long-term interest rate policy, and whether that can be done in a way to save the BOJ's face or not, that's going to be
And tapering itself, QE tapering itself, does that happen next year?
I would see QE tapering happening next year, and I think the big subject which is going to come onto the radar screens next year is going to be whether the Fed actually is going to be shrinking its balance sheet, perhaps under a new Fed chair. And how
but the Fed chair probably won't come into place till 2018. Are you suggesting it could come into play earlier?
Well, if you listen to market opinion, there's some degree of speculation about whether there could be an early retirement or not, and Trump and his new Fed chair would get ahead with slimming the balance sheet down. If there's anything like that, that would really add the pressure on Prime Minister Abiy to do something towards getting the BOJ to adjust its policies.
And how does that knock on to other central banks, such as the ECB, for instance, Brendan?
Well, the ECB is not in a position to normalise because it's holding all these dud loans to dud banks and weak sovereigns. So whereas the Bank of Japan or the Federal Reserve can essentially dispose of its portfolios to their respective finance ministries and shrink their balance sheets, that option is not open to the ECB. So I see the euro as structurally weak in this environment of monetary normalisation.
And does that mean parity is only a matter of time, Brendan? I mean, we're down to 2003 levels right now, just above 103.
I don't want to make magic out of parity or not, but I do see the euro as essentially a very weak currency going into next year.
Yeah, it's interesting. Was the taper a taper or not? You talk about Japan tapering by stealth. Was the taper that took place by the ECB at its last meeting, Brendan, was it a taper? Yes, they extended, but from, as we know, April, they've gone from 80 to 60 billion, or does it just not matter?
I see that as not mattering.
Right.
I mean, remember, the Fed stopped its balance sheet expansion within the space of 12 months, not just going down in steps of 20%.
West before the next recession is implausible. More likely an outbreak of inflation in Europe, led by a currency collapse and starting in Germany. Elaborate.
Well, very, very much so. If you look at the great inflation back in the United States in the late 60s, 70s, that was led by a collapse of the dollar. The currency is very important. In this world of a super strong dollar, I really don't see inflation taking off next year in the US. I think much more likely we're going to see a recession in the US at some point in the next 18 months before we get any inflation pickup. In Europe, by contrast, the euro is falling very sharply. Germany is at full employment. There's inflationary pressures in Germany, both in wages and prices. So I could well imagine a situation where this weakness of the euro does feed through into quite a big inflation surprise, and most of all in the central or the hegemon in Europe, German economy.
Brendan, great to see you. Thanks for joining us today. Brendan Brown, their chief economist at Mitsubishi UFJ Securities. Right up next, the Trump effect. We're going to take a look at this year's hedge fund winners and losers. And for more, tune into radio's Daybreak Europe live on London DAB Digital. This is Bloomberg. Welcome back to Bloomberg Surveillance. I'm Mark Barton in for Francine Lacroix. Let's get the Bloomberg Business Flash. Here's an air of change.
Mark, Angela Merkel is to make a statement today about a deadly incident at a Berlin Christmas market. The German Chancellor's address, scheduled for 10 a.m. UK time, comes as authorities sift for clues into the probable terror attack that killed 12 people and injured 48 others. Police are questioning a suspect arrested near the scene whom they believe to be the driver of a truck that rammed into crowds yesterday evening. President Putin has called for a crackdown on terrorism after the Russian ambassador to Turkey was shot dead. Andrei Karlov was attacked at an art exhibition in Ankara. The gunman, who was later killed by security forces, shouted Allahu Akbar and "Don't forget Aleppo" after the shooting. The Kremlin said the attack was an attempt to undermine Russia-Turkey ties. Lloyds Banking Group has agreed to buy Bank of America's MBNA credit card business in the UK. The £1.9 billion all-cash deal comes as the British lender seeks to expand in consumer finance. Lloyds says the transaction will add £650 million in revenue, equivalent to a 4% increase of its yearly sales. Even as Uber exited China, the company's financial loss has remained eye-popping. In the first 9 months of this year, the ride-hailing company lost significantly more than $2.2 billion. That's according to a person familiar with the matter. This as it lost more than $800 million in the third quarter, not including its Chinese operation. The Italian government has cleared the way for the potential rescue of lenders. That's as it seeks permission from Parliament to increase the nation's public debt by as much as €20 billion. Troubled lender Monte dei Paschi is attempting to find investors to back a private €5 billion capital increase. Should these efforts fail, Prime Minister Paolo Gentiloni has laid the groundwork for a state-sponsored cash injection with the possible sale of bonds. And that's the Bloomberg Business Flash. Mark?
Nera, thanks. So it's been a tough year for hedge funds as well-known managers like Ray Dalio and John Paulson saw their fund performance range from flat to double-digit losses. As the year draws to a close, the industry received an unexpected pick-me-up. Yes, Donald Trump's election victory bolstering returns. Joining us now for the year's winners and losers in their hedge fund world is Nishant Kumar. He covers hedge funds for EMEA. It was the year to ridicule hedge funds, wasn't it, Nishant?
Yeah, it was, but we have to agree that November changed a lot of things. So last year hedge funds were down. This year they're at least up 4.5%, which in absolute terms is not that great, but on a relative basis, it's better.
Trump saved a lot of bacon, didn't he?
Absolutely. So here in Europe, we can see that Brevan Howard, which struggled with performance earlier this year, it was down until October. But in November, they made 5.5% more than that, slightly more than that, and that they turned profitable all of a sudden.
And that's a macro trend, isn't it?
That's a macro hedge fund, one of the largest in Europe. Yep.
And others that pursue the macro route, how did they fare, the big names?
So most of the macro hedge funds seems to have made money in November. So another example from the same space is Rubicon. They made 21% just in November. And they were down roughly about 18% until October. So again, another fund saved by Trump's rally, we can say that.
Another big name, Crispin Odey, of course. He was in the news for many reasons because of pre-Brexit, Brexit, post-Brexit. He's a long-short equity hedge man. Talk us through his year.
So, I mean, he's down 48%. That's one of the world's worst performing hedge fund. He's heading to see his record his worst performance ever since he started in 1992. So it's not great, and he's a different kind of a fund manager. So his calls are really bearish. So
continue to be so, don't they?
Yes, and any rally doesn't help him. So he lost money in November again, and the rest is...
What about distressed debt as a theme? How did it fare?
So if you go into subcategories of hedge funds, distressed debt, restructuring hedge funds, they are the best performing hedge fund by far. So they are captured in event-driven hedge fund category, and that's the best performing hedge fund category so far this year. So they are doing very, very well. I think they are up 12% on an average this year.
So what's going to be sort of the big theme for 2017? I know stock pickers, you're suggesting, are going to have a chance to shine. Smaller, specialised over larger funds. Will they be the themes of 2017?
Sure. So if you look at what are the factors that led to poor performance by hedge funds in the past, so they were low interest rate, lack of volatility, divergence was not there to exploit. So all these, Trump's election changed a lot of these things. So all of a sudden, there is divergence in monetary policy. Volatility did come back in November. And the correlation is falling apart a little bit. So all these factors should really help macro hedge funds to make a comeback.
Nishant, great to see you. Thanks for joining us. Bloomberg News is Nishant Kumar there. Surveillance is next today. Guys here, Tom Keene, they'll bring you all the news on Angela Merkel's statement on the deadly Berlin Christmas market incident. That's next. This is Bloomberg.
An horrific 24 hours of terror in Ankara, in Zurich, and in Berlin. Our Matthew Miller will be with us in moments from Berlin. The president-elect, he continues to transition foreign policy, says open me first. And this morning in the markets, new dollar strength, all adjust to an inflation reset. Can emerging markets survive a Trump reflation? Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York, Guy Johnson in London, and Guy, just an absolutely terrible 24 hours for greater Europe and Turkey.
Absolutely, and the market reaction, though, once again fascinating, Tom. The market looking through this, but 2017 is going to be a year in which these incidents will resonate. What has happened in particular in Germany with the election upcoming in that country, with what's happening in France, it's going to be fascinating to hear what Angela Merkel says over the next few minutes on this subject.
And we're waiting for the Chancellor to speak right now. And, of course, Matt Miller is in Berlin. Let me get through the data check here as we wait for Chancellor Miller. Equities, bonds, currencies, commodities. The big story is dollar strength, and you express it in euro weakness of 103.85. You're almost waiting on news to go through parity, but that's a big move over the last 48 hours. Oil with a little bit of a churn off dollar weakness. I'd notice the futures again stronger with curve steepening. Next screen, please. The VIX yesterday made a big move. We've been waiting for this, waiting, 11.69. There's the dollar strength with the DXY. And Euro Swissy, this is a big deal, Guy Johnson. There's Filipino, but Swiss, 108, 107, a 106.86. That's a big technical move in strong Swiss franc.
Yeah, not moving a great deal on the back of what has been happening in the European sphere, though, Tom. Look at the DAX. Again, the market has learnt its lesson. The big knee-jerk reactions no longer with us. The DAX trading 11,000 north of, but barely budging today. Euro dollar weaker this morning as you talk about that dollar strength. Tom, zinc on the move today as leverage continues to be withdrawn by the Chinese authorities. It's rippling into the Chinese bond market. It's rippling into the metals markets as well. And we're going to talk a lot during this program about what happened yesterday in Ankara, Tom. That is where euro lira is trading as we await an interest rate decision very shortly, 3.5. Tom?
Very good. Chancellor Merkel is speaking to the nation. Of course, this has been widely anticipated. She speaks this morning, as you can imagine, in German. The Chancellor speaking again in German. Let's listen in for a moment. Can we do that? Okay, we're not going to take it. But here we are with Chancellor Merkel speaking. We can speak in English to our Matthew Miller. He lives in Berlin. I went back and forth with Matt last night. He is outside one of the great landmarks of Western civilization, the Kaiser Wilhelm Church, bombed in 1943. And left as a symbol of the terror of World War II. Matt, it has been a challenging 24 hours.
Yeah, absolutely, Tom. I mean, a truck barreling through the Weihnachtsmarkt, the Christmas market here last night. Of course, it's a very popular place, not only because of the Gedächtniskirche, the Kaiser Wilhelm Memorial Church here, but also because we're right at the top of the Kurfürstendamm, probably the most famous shopping street in all of Germany, a huge symbol of Western capitalism. And this tragedy taking place here, affecting not only locals, but also number of tourists who are normally gathered here to drink Glühwein and celebrate Christmas.
And the tradition, Matt, of a Christmas market is really from almost medieval times. I mean, this is a tradition from the 15th century spread out across continental Europe and even over to the United Kingdom now, isn't it?
Yes, absolutely. I mean, people setting up shops, people selling their wares, people basically drinking the Glühwein and the Feuerzangenbowle. It's been happening for centuries, and it's very popular for tourists and for Germans alike, which makes the tragedy all the worse. I'm sorry, I'm getting pushed forward here by police who are trying to investigate the situation. I should point out, Tom, that the police have raided early this morning a refugee camp at the Tempelhof airport because one of the suspects in this crime may have lived in that refugee camp. They're not giving us a lot of information as far as his name or nationality. German police are very conservative when it comes to giving out that kind of information before they can prove anything. But the newspapers, Die Welt and the Bild Zeitung, are all reporting on this suspect being a refugee from the nation of Pakistan. And, of course, that's a real problem for Angela Merkel and her political position. Guy?
Let me pick up on that very point, Matt, as you'll move forward away from where the incident took place. Angela Merkel addressing the incident now, the German Chancellor. She is saying that we have to assume that this is a terror attack. She is also saying that it would be especially despicable if it was an asylum seeker that perpetrated the act. She is indicating that German security cabinet will meet today. So we are going to have a German security meeting taking place today, and she will visit the scene of the attack where Matt is right now later today. Matt, I suspect that many Germans will be asking this question this morning. We were warned in Europe that Christmas markets were likely to be a target. Why wasn't more done to protect those that were at this one?
Well, in all fairness, Guy, to the German police, there was a large police presence at this Christmas market last night, and I've been going to Christmas markets the last couple of weeks. You see typically a number of police officers there. They have sidearms. They have their automatic rifles. So there is a police presence at these Christmas markets. However, they're going to strengthen that police presence. We expect to hear from the German police later today at around 1 o'clock local time when the mayor of Berlin addresses the people of this city, and then from the federal prosecutor at 2:30 p.m. local time. They're handling the investigation. Reportedly, they've already taken the suspect to Karlsruhe for questioning, but we're going to hear more about the police presence at these events. They're not going to stop the Weihnachtsmärkte. They're going to continue the Christmas markets. They're just going to have a beefed-up police presence here.
Right. Matt Miller, one final question as the police move you around this morning. Help me here with a linkage within the German press of this tragedy and migration. That seems to be the sensitive theme. The Chancellor just spoke about that. Give us the moment, this December moment of the migration debate within Germany before this event and now after this event.
So there was a large debate because of the problems, remember, that erupted in Cologne last year on New Year's Eve and the day after that about whether the CDU's policy, open-door policy to the refugees, was a good one. The right-wing populist party, the AfD, the Alternative for Deutschland, had grabbed a lot of press headlines and has won elections, local state elections, but they haven't won any federal elections. They're getting a lot of coverage, Tom, and they're taking advantage, certainly, of this to fight against the CDU and the SPD, but they're not really a political threat federally yet.
Matt Miller at the scene of last night's attack. Thank you very much indeed. We'll continue our coverage of what is happening in Germany. Let's get more analysis now. Let's bring in Charles Litchfield, Eurasia Group Associate for Europe, with us here on set in London. Will the German people blame Angela Merkel for this?
I don't think so, at least not a majority of them. Popularity levels are quite high. They have been since she said she'd run for Chancellor again. Obviously, they will understand that this might be related to the migration crisis there was. But if you look at the detail of German public opinion, many understand the decision Angela Merkel took or understand why mistakes were made during this crisis. And so I think there'll be a very loud minority saying it's her fault, but a majority of Germans probably won't think it's her fault.
Post the Bataclan, the French authorities responded by putting soldiers on the streets, by upping to a state of emergency. Can we expect a very different response in the way that the Germans look at this?
No, I think the response will be quite similar. Germany has already taken preemptive measures to deal with the terrorist threat, especially some measures to do with surveillance, which were controversial enough at the time, and I don't think they'll go any further. So I think the policy response you'll see to this will be quite mild and akin to what you described. So more police on the streets, perhaps some spot checks on the border, since this lorry actually came from Poland, but I don't think much more.
How will it play into 2017? The French election is the first kind of major political milestone in so many ways. Then we have the German election. In some ways, will this influence more what happens in France than in Germany?
Well, the French elections are sooner, and you could argue that the right-wing populist party that exists in France is perhaps closer to winning power than its equivalent or sister party is in Germany. So for that reason, your question is completely legitimate. However, I don't think the FN will win in France. It's a closer one, though. In Germany, it is much more a case of, because there's several parties, it's just a question of what coalition you construct. Yep. I really don't think that the Alternative for Deutschland will be in any sort of coalition next year, but once they are in Parliament, they will throw their weight around, and it will be quite a worrying situation for Angela Merkel. I think her power will be somewhat restrained.
Charles, what will Brussels do? We seek a federalism within Europe, a United States of Europe. I believe migration affects all. Is Brussels even part of this debate, or is it every nation for itself?
Well, Brussels is part of this debate. Germany is one of the countries that wants to uphold what has been achieved through the European project. It has advocated for a holistic solution to the migration crisis, for instance, not with much success, it has to be said. But I don't think because there's been an attack in Germany, suddenly Brussels is shut out of the conversation. The problem is that Germany has tarnished some of the credibility it had in Central and Eastern Europe, especially in advancing a sort of collaborative message about what we should do next in Europe. I think that's going to be quite hard for Berlin. And so, yes, Brussels will not be able to have more powers in the near future because of what is happening, but I don't think necessarily Germany will be shutting it out of it. It's more other countries.
Does Germany have a Trump equivalent?
Well, we were just mentioning with Guy there's a party called the AfD, which has perhaps a similar way of criticizing elites, the people who've been in power for years and haven't managed to deal with obvious problems. They have a somewhat different style, though. I mean, they're run by a woman called Frauke Petry, who's quite petite, who has quite a subtle style, although she can use rather aggressive language. So they don't have a direct equivalent to Donald Trump, no.
Very good. Let's come back. Charles Litchfield with us on a most difficult morning with Eurasia Group. And, of course, we'll focus on Turkey and Zurich as well. In our next hour, the former Undersecretary of State, Robert Hormats, will join us. He's with Kissinger Associates. Bob Hormats back from China, but far more importantly, Bob Hormats expect the unexpected. From London in New York, this is Bloomberg.
I'm Guy Johnson in London, Tom Keane, of course, in New York. Let's get a Bloomberg First Word News update. Here is Nera Chehish.
Guy, Russian President Vladimir Putin promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman fatally shot Andrei Karlov in the back of an art exhibit, afterward exclaiming Allahu Akbar and don't forget Aleppo. That's a reference to the beleaguered Syrian city that suffered from a long Russian-backed assault by the regime of Bashar al-Assad. In Moscow, Putin said the envoy's killing won't affect his country's relationship with Turkey, and he promised an aggressive response from Moscow.
The committed crime is undoubtedly a provocation aimed at derailing the ties between Russia and Turkey, as well as the peace process in Syria, which is actively promoted by Russia, Turkey, Iran, and other countries interested in the regulation of inter-Syrian conflict. There's only one possible response to this: the strengthening of the fight against terror.
Karlov is the first Moscow envoy to be killed in his post in almost 90 years. His 22-year-old assailant, an active-duty police officer, was killed by security forces. China says it's returned an underwater U.S. drone whose seizure in the South China Sea last week drew protests from the White House and angry tweets from President-elect Donald Trump. The Chinese Ministry of National Defense, in a statement on its official microblog, says the drone was smoothly returned in the waters where the unmanned submersible was picked up last week. And the Bank of Japan is upgrading its assessment of the world's third largest economy. At the same time, monetary policy was unchanged in the central bank's first decision since U.S. President-elect Donald Trump's November victory. The BOJ sees a moderate recovery trend to continue after a pickup in exports, an improvement in business sentiment, and resilience in private consumption. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Neera Chehich. This is Bloomberg. Tom, Guy.
Thank you very much indeed, Neera. For more on that BOJ story, we're joined now by Kamal Sharma, Bank of America Merrill Lynch, Director of G10 FX Strategy. Charles Litchfield, Eurasia Group Associate for Europe, also still with us on set. Good morning, Kamal.
Good morning, Guy.
I want to start off talking a little bit about what's been going on with the yen, because it's been, let's put it this way, a turbulent year for the yen. This chart here really kind of just highlights that. Dollar-yen moving down in an aggressive channel and then popping sharply up to the upside. Did anything the BOJ told you today dissuade you from the fact that the yen's going to continue to weaken from here, that dollar-yen is going to go higher?
Well, this is classic policy divergence in action here, Guy. The election of Trump has obviously raised animal spirits. The fact that the Fed has raised the dot plots into 2017 to 3 rate hikes, coupled with the fact that Japanese JGB yields are going to be anchored effectively at 0% for the foreseeable future, has given rise to not only a strengthening dollar against the yen, but also a strengthening dollar against the euro. Two central banks who remain committed to quantitative easing, to monetary accommodation, versus a central bank in the Fed, which is on the cusp of a rate hike cycle.
Haruki Kuroda, I watched him to this morning, and I think I've seen him this happy in quite some time. The body language was actually quite good from him this morning. Like at 117, he must be really quite happy. My question is, just to come back to this issue of kind of levels, the dollar-yen rate is going to be probably one of the more pivotal factors for him in 2017. But does he actually have any control of it? Is he a master of his own destiny? We talked about this yesterday on the programme. Kuroda, and to a certain extent Draghi, simply being passengers on this train that is being driven by Janet Yellen. He's laid out his policy. He just gets on board now.
Absolutely. I mean, there's a global dynamic to this view. Obviously, you know, the yen is the classic risk-on, risk-off currency at the moment. The markets are buoyant. That's helping dollar-yen higher. Our target for next year is 120. Obviously, given where we are at the moment, risks are very much to the upside. But I thought one of the important comments that Kuroda made today is that he was reluctant to criticise or intervene in the yen's weakness by just simply highlighting that we're now back to those levels back in February. And I think the key for them is that they don't see this as any excessive move. They're seeing it as kind of a mean reversion back to the levels that we saw at the beginning of the year. And then obviously the miscommunication of the Bank of Japan heading into Q1 was the catalyst for a move back towards that 105 area.
Let me bring up the chart again, Kamal, that we had at the start of the show. This is the Bloomberg DXY index. This is actually really good math. It's different than DXY. Up we go. The big dollar rally of 2014 is the green arc. And then you've got the idea of Mr. Trump's election right here with a new surge up. What have you and your team noticed about the distinction between larger currency G7 pairs versus EM pairs as we've seen this dollar surge? Is it a normal dichotomy or is there something different?
Well, I think the broader underlying dynamic, obviously, is the fact that the Fed is on a tightening cycle. Now, the question I think that investors are focusing on, does the rise in U.S. yields trigger a more meaningful outflow from EM? Now, this has been a story since the second half of the year where the Fed was, pinning interest rate hike expectations against the backdrop of very relatively nascent inflation, and that was triggering a flight into EM. Into EM asset markets, notably in Asia and on Australia and New Zealand. Now, the question here is, does the animal spirits that we're seeing trigger a reversal? At the moment, we're not seeing a significant amount of change to that particular view. In G10, there's a couple of idiosyncratic stories going on here. Political risk premium heading into 2017, particularly with the euro. Obviously, we've got Brexit and Article 50 and sterling. But the overriding force here is this is broad-based dollar strength against improving and expectations of positive growth dynamics heading into next year.
Well, let's continue. Kamal Sharma with us this hour. In our next hour, Anthony Dwyer has been a bull with Canaccord Genuity. Big news yesterday as Mr. Dwyer says enough and goes to neutral, looking for a pause. This will be an important conversation on the equity markets. This is Bloomberg.
I'm Guy Johnson in London. Tom Keane, of course, in New York. Tom, the morning must-read from this side of the pond this morning, written by Mark Gilbert on Bloomberg View. It's an article about volatility, but arguably the biggest disruptor on the currency horizon, he says, is China. The yuan has posted its biggest annual decline in more than 20 years. Goldman Sachs reckons currency outflows mean a net $69.2 billion exited the nation in November, up from a monthly pace of around $50 billion since mid-year. China front and centre at the beginning of this year. Will it be front and centre at the beginning of next year? And if so, how do we play it? Kamal Sharma still with us. How do I work this into my portfolio?
Well, I think China again is going to be one of the main stories for next year, but we're looking at proxy trades again, as we did last year, or sorry, this year, shall I say, to express China. Yeah, exactly. You know, the view from Bank of America has been that, you know, we can't ignore the fact that Trump brings a lot of volatility, you know, on the political front, and there could be you know, scope for some kind of diplomatic incident or diplomatic manoeuvres which could obviously undermine the volatility in the markets. And I think from that perspective, if China is you know, is front and center for Trump, then that's going to bring volatility to the rest of the region. And one of the trades that we've been looking at is to be looking at a higher dollar Korea as a proxy if it starts to really inject some of that geopolitical risk that we've been concerned about.
Let's come back with Kamal. I've got a Chinese chart I want to look at really and talk about this idea of China as a manipulator as well. Maybe we'll touch on that with Kim Schoenholz. He writes with Stephen Cicchetti. They do really, really thoughtful work, and they've been thinking a lot about Bank of Japan at the frontier. Coming up, Kim Schoenholz of NYU Stern. Let me look at the data right now. Dollar strength today, no question about that, with the VIX in 11.69, euro Swissy stronger. This is Bloomberg. Good morning. welcome all of you worldwide, particularly across Europe and over to the Middle East. Guy Johnson in London. I'm Tom Keene in New York. Of course, we'll have much more on the set of terror attacks. Tracy Alloway will join us from Abu Dhabi in a moment. And in our next hour, Ambassador Hormats will join us to speak of a changed world. Certainly, we've seen that in the last 24 hours. I want to go back to dollar strength right now. A few more minutes with Kamal Sharma of Bank of America Merrill Lynch. Bring up the chart, Anthony, if you would. This is log yuan. And the basic idea here, Kamal, I want to talk about what Eswar Prasad was talking about the last 3 days, which is this massive renminbi strength, which I guess gets your attention, and then the recent almost Abenomics-like weakness. That doesn't look like a nation manipulating its currency to affect trade. What is the why behind this chart? Why is China managing the renminbi weaker?
Well, I think there's a broader story going on here, Tom. Obviously, we've got the weaker Asia complex more generally against the dollar. We're heading into the end of the year where 2017, beginning of, does generally tends to see capital outflows in the form of deposits into dollars. We ran a very good story yesterday about the onshore dollar deposits. So the demand for high-yielding assets abroad is probably the catalyst there as we approach the beginning of the year. We do see a higher dollar China as one of our trades of the year that we've recently published. And I think, the economy still, although the Chinese have chucked a large amount of fiscal stimulus at the economy, still is very vulnerable. And I think, I would term it as a transition economy. It's still trying to reinvent itself, and that's going to have speed bumps along the way.
Do you agree with Professor Prasad that China is not manipulating, because if they let the currency go, it would weaken ever further through 7?
Well, I think there's reasons to suggest that they're looking at broader moves in the currency, Tom. The CFETS index is the one that really I think they're focusing on. Whether they're manipulating it, remains to be seen. I think certainly there's a case that it's still a managed currency, so they will be kind of looking at it from a standpoint that they don't want any excessive moves in the currency. I guess that's kind of the mantra of many central bankers.
Very good. Kamal Sharma, greatly appreciate it. With Bank of America Merrill Lynch, we'll have him back for an extended time here on a different day. It is a day of international relations. It is a day of terror. To bring you up to date with our First Word News in London, Nary Chayich.
Tom, German Chancellor Angela Merkel says authorities are working on the assumption that yesterday's fatal incident involving a truck at a Berlin Christmas market was an act of terror. Speaking today at a news conference televised nationwide, Merkel said the full force of the law will be used to learn what transpired. A dozen people were killed and another 4 dozen hurt when a vehicle rammed into the crowded market. Police questioned a suspect, reportedly a Pakistani refugee, who was arrested near the scene. They believe he was the driver. President Barack Obama has pledged U.S. assistance to investigate. Russian President Vladimir Putin is promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman fatally shot Andrei Karlov in the back of an art exhibit, afterward exclaiming Allahu Akbar and don't forget Aleppo. Karlov is the first Moscow envoy to be killed in his post in almost 90 years. In Switzerland, Zurich police suspect the attacker who opened fire on people praying at an Islamic centre yesterday is dead and their manhunt is over. Police say the gunman has been identified. 3 people were injured in yesterday's violence, all hospitalised. A press conference is scheduled for later today. And Scotland's First Minister will today outline her government's red lines on Brexit. Nicola Sturgeon has already made clear that staying in the single EU market is key to her country's economy. Today's policy paper is expected to lay out how Scotland wants the UK to cede control of policies on issues like immigration. Last weekend, she repeated her call for a new independence vote if her demands aren't met. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Nera Chayich. This is Bloomberg. Guy, Tom.
Thank you very much indeed, Nera. Dollar Turkish lira largely round-tripping on the events yesterday. We saw initially the dollar spike higher following the shooting in Ankara. Subsequent to that, this morning, we've largely retraced some of those gains made by the dollar. Let's figure out exactly how the market is viewing the situation between Russia and Turkey. Tracy Alloway joins us now out of Abu Dhabi. Tracy, we've seen largely a kind of short-term knee-jerk reaction that has been unwound. What is it that the market is seeing here that allows it to calm down?
That's right, Guy. As you point out, the lira has essentially done a round trip over the past 24 hours. It's now back roughly where it was before news of the shooting began. And there are really two ways to interpret that. One way is that the markets are getting so used to geopolitical uncertainty, especially in Turkey, that these sorts of events just don't have the reaction that one might have expected. The second way of looking at it is we do have an interest rate decision coming up from the central bank in Turkey. And the expectation at the moment is for a 25 basis points interest rate rise. So if you're betting on that happening, then maybe you would see some strengthening of the lira anyway. But again, you know, Tom mentioned it was a day of international relations. Spare a thought for the Central Bank of Turkey. They've had fewer than 24 hours now to try to digest the events that happened yesterday and figure out how those are going to play out in the overall Turkish economy.
Tracy, help me here with your reading. You do such a good job of the geopolitics of the greater Middle East. Help me here with the relationship of Russia to Turkey. I've been showing for days. Bring it up here. This is what you can do on the Bloomberg, folks. This is the Russian ruble compared to the Turkish lira, and this is a massively strong Russian ruble, really getting back to sort of post-Putin Ukraine trend. But give us a 101, Tracy, on the relationship to the north for Ankara and Istanbul. Well, how goes the Russia-Turkish axis right now?
Sure. Sure. So I think one way that we are seeing people look at it at the moment is that even though we've had this event just take place, it's probably not enough to derail the recent rapprochement that we've seen between Russia and Turkey. In fact, if anything, I've seen some analysts at places like Eurasia Group saying that this could become a new linchpin for Turkey and Russia to work more together. They could sort of consolidate around the need to fight terrorism. There are also some interesting conspiracy theories out there at the moment about Iran's involvement in this. Of course, this assassination has come just a day ahead of the summit that's going to be held in Moscow between Russia, Iran, and Turkey. So many interesting in the British sense of the word, conspiracy theories out there at the moment.
Let me ask the local question for you. How will the United Arab Emirates and other oil powers in the Middle East react to 3 sets of terror within 24 hours?
It's an excellent question, Tom. We know that the UAE is very sensitive to terrorism. That said, they have kept away from the conflict in Syria largely. Now, on the question of oil, you and I both remember a time when we used to see oil actually react to geopolitical events. We used to see it rise whenever there was a big risk event happening in the world. We haven't seen that reaction. In fact, when I came in this morning, I saw WTI was actually up 22 cents. Brent was down, I think it was 32 cents when I came in. And that's interesting given that Russia and Turkey, of course, are cooperating on that big natural gas pipeline, Turk Stream. Who knows if that's going to go ahead now, but it seems again like markets are just looking through these geopolitical events. Whether that's because people are so elated with the return of inflation, the prospect for fiscal stimulus, further economic growth going forward, that they just ignore all the stuff happening in the world, that's an open question. Like I said earlier, there is a school of thought that thinks that this assassination isn't going to be enough to really derail relations between Turkey and Russia right now. We'll have to see how it plays out.
Tracy, thank you very much indeed. Tracy Alloway joining us out of Abu Dhabi. Let's get back to Charles Litchfield of the Eurasia Group. He's an associate for Europe. Can we bring up Tracy's point? Does it divide Russia and Turkey, or does it bring them closer together, this assassination?
No, Tracy kindly quoted my colleagues, James Sawyer, Zach Whitlin, who wrote yesterday that this, if anything, will justify the rapprochement that Turkey and Russia have agreed to operate in recent months. They had a bit of a spat earlier this year, and they've completely put that to one side and they want to cooperate even on Syria, which is where they still have a key disagreement on the position of Assad. On other elements, they actually agree. They have shared interest in energy with Turkstream. They have shared interest in fighting terrorism in the broader scheme of things. And also they have shared interest in terms of tourism. Russian tourists go to Turkey very often. I think Turkey will be very keen to show that the security situation isn't that bad, and they're working very hard on the resorts that Russians use. And then there is, I think, one potential problem, which is that this the assassin of the Russian ambassador was part of the Turkish police.
Yeah.
So the Turks.
I was about to say, what was the objective? If these two countries see themselves on the same path, the objective of the assassination has to have been to tear them apart. How would the enemies of these two countries, if they do see them coming closer together, break that apart? Where are the kind of the crunch points? You mentioned what's happening in Syria. You talk about the fact that this was a policeman, therefore in some way implying that that there is within the state some sort of mechanism at work here. What is going on?
I think you were getting it there in the second part of the question. I'm not sure whether the assassin had any grand intention of pushing Turkey away from Russia or vice versa. There was a very strong intention, which was to express some sort of revenge for what has happened in Aleppo. That's what he said when he killed the ambassador. And then it will be used, I think, by the Turkish authorities to justify their crackdown in the police and other parts of the state against these perceived enemies from within. They're even some Turkish politicians are even blaming the Gülenist movement for motivating this person. I don't think there's much truth to that. I think it's much more associated with Aleppo. But if anything, it sort of helps Erdogan's agenda.
Tell me, Charles, about Belgium. I had a conversation the other day with a senior investment type, and I simply asked him about what are the lessons that we've learned since Belgium. Ankara, Zurich, Berlin, and there'll be other ones in 2 weeks or 2 months or 2 years. What have we exactly learned from our security efforts in the continent of Europe, those efforts that came out of France, Paris, and over to Belgium?
We've learned that Europe's very vulnerable. I mean, you ask about Belgium quite rightly because it's been seen as the sort of linchpin of a lot of the operations that ISIS has conducted. I think the Belgian authorities have cracked down, and you haven't seen any attacks since then, although they've managed to thwart some attempts recently. I think Europe are very much under threat. Obviously, there's an effort by the countries that are interested in cooperating in bolstering Europe's external borders. But more and more in Europe, you see citizens criticizing the fact that there is a Schengen zone with open borders between different countries. And why shouldn't we consider dealing with terrorism on our own? I think for the moment, though, there isn't enough of a critical mass to stop that from happening and to move back to national borders. I think the Schengen zone remains in this sort of grey zone where it is currently, with spot checks in some places, on the French borders, on the Belgian borders, perhaps on the German borders for the next few months, but not a situation where we move on to there being no Schengen zone and every country operating with their own borders. I think that also states themselves understand that it is actually helpful to share all the policing information that comes with the Schengen databases and infrastructures instead of doing this all in a national way.
That's a terrific briefing, and we will continue this discussion on the inter-border transfer of information within Europe. We'll continue with Charles of Eurasia Group here as well. In our next hour with Kissinger Associates, Ambassador Hormats was scheduled. Decidedly, we have ripped up the script this morning of terror. Robert Hormats on Berlin, on Ankara. Robert Hormats on Zurich. From London, from New York, this is Bloomberg.
We have to assume that this was a terrorist attack. The words of the German Chancellor Angela Merkel a few minutes ago. You are looking at live pictures of the scene left behind by the truck that drove through a Christmas market in Germany last night, in Berlin, in the capital. Within the last few minutes, Charles Litchfield, Eurasia Group Associate for Europe, has published a note on this issue. And Charles, the central sort of theme running through this note is that Angela Merkel is vulnerable, that the next cycle politically in Germany is going to be very different to the one that we've just had, and this kind of incident is only going to push us further towards that. Explain.
Yes, that's our view. We think that the AfD will be stronger. They don't actually have a presence in the current parliament. They most certainly will in the next. So that restrains the number of mainstream seats in the parliament. She'll have a much smaller majority, perhaps again an unhappy marriage with the SPD, and therefore very dependent on MPs who are already rather impatient about her refugee policy, about bailing out various countries in the southern periphery of Europe, and so it's going to be much harder for her to dictate policy. You're absolutely right.
Charles, help me here with Angela Merkel and the Germans. Is she a liberal of the center-right, or is she really a center-right liberal within the mix of their domestic politics? I can't figure it out.
She's in the centre. I think ever since she's been Chancellor, or at least for a very long time, every time she's made a speech to her party, you've had two words next to her, die Mitte, the centre. That's what she wants to colonise. That's why she's done so well for a very long time. But it also means that conservative elements in her party feel that she no longer represents what the true values of the German Christian Democratic Union should be, and that perhaps the culmination of that has been her treatment of the migrant crisis. But she's just a centrist. I can't really answer your question beyond answering it like that.
It's too philosophical for a Tuesday. I can't even pronounce the word this morning. There's been so many Christmas parties. Charles, thank you so much. Charles Litchfield with the Eurasia Group. Coming up from New York University is truncated, but it's important to speak to Kim Schoenholz. We'll do that on Japan. Stay with us worldwide and across the continent of Europe. This is Bloomberg Television. Guy Johnson in London. I'm Tom Keene in New York. We'll have further reports on 3 terror attacks. And again, Robert Hormat's joining us in the next hour. Right now, Kermit Schoenholtz, NYU Stern School, writing always with Steve Cicchetti. What a duo they are in smart literature. And this time it's on the Bank of Japan. I want to show the behavior chart right now. Let's bring this up here. This is like we show the Fed funds target rate, but it's for Japan. Here's a collapse of the Japanese experiment. Here's where they are right now, battling deflation with Abenomics. Here's 2008. But, Kim, this is the behavioral construct of all in Japan. They tried to raise rates, and this was the huge remorse, the oops, we can't do this. That's the collective memory.
Yeah, look, the Bank of Japan used to have a very poor policy arrangement. They did not aim at keeping prices stable. They encouraged a sustained deflation. But today's Bank of Japan is the most aggressive monetary policymaker on the planet. They've been doing more than virtually any other central bank to restore inflation expectations of about 2%. The problem for them is that it hasn't worked well.
Michael Lewis has his wonderful book out on Kahneman and Tversky and on the behavior. I'm sorry, but even central bankers put their pants on one leg at a time. What do you observe in their behavior and their actions, given the history of the Bank of Japan?
Well, I think there was a huge change several years ago when the current governor took his role. He announced that they were going to aim at 2% inflation expectations. He's expanded the balance sheet of the Bank of Japan more aggressively than any other central bank, and that's a big statement in recent years. And this year, they announced that they were going to introduce negative interest rates early in the year, and just in September, they announced that they were going to cap the the 10-year bond yield at 0. No central bank has done that that I know of with bond yields since the U.S. Fed in the 1930s and 40s.
Guy Johnson, I want to go to you. This is amazing, folks. This is a chart that Kim was just talking about. This is truly extraordinary. Here's the ECB in the U.S. down here. Their balance sheet as a % of GDP. This moonshot is on the frontier. The BOJ is a total outlier. Guy?
Yeah, and I guess one of the questions we need to ask is, where does this end? They are nationalizing the private markets, Tom. They're working their way through the bond market, then they're going to work their way through the equity market. Where does it end?
Where does it end, Kim?
Look, their goal is to try and hit 2%, and in order to 2% inflation. And in order to achieve that goal, they have to be resolute. They're getting help right now. Actually, the actions they took in September, while extraordinarily aggressive, had remarkably little impact directly. But since the U.S. election, the yen has depreciated by more than 10%, and the equity market's up by more than 10%. So they're getting help from abroad. I give them credit because by keeping that aggressive policy in place, the policy making abroad is playing a positive role for them. But it's not an easy job to offset more than a decade of deflationary expectations.
Professor, one thing we are learning at the moment is that the markets appreciate a fiscal push, or at least talk of a fiscal push. What message do you think Mr. Abe will actually be learning about what is going on in the United States and the lessons that the markets are drawing from it?
It's a great question because one of the things holding back BOJ policy's effectiveness has been fiscal tightening in Japan. Rather than fiscal stimulus over the last few years, the fiscal authorities have actually raised taxes and tightened fiscal stance substantially. The problem for Japan is that they have such a poor fiscal path. They have such a seriously high debt problem that they don't have a lot of fiscal flexibility. The message for Prime Minister Abe ought to be that it's his third arrow that really needs to be activated, namely supply-side reforms.
That's right where I wanted to go. I mean, the idea of the next Abenomics. It's been, I get the idea it's been an experiment and a move, and as you say, they're at the frontier of economic thinking. But what is the next Abenomics to get that third arrow in play?
Well, look, they've got plenty of choices, but none of them are easy to implement because there's always political opposition to supply reform. The only supply reforms that really would help are those that will encourage people to expect future growth and to invest.
Yeah, but is it the answer demographics? I mean, this is what you and Steve do great. I'm sorry, it's cultural and demographic. Am I wrong?
Well, no, you're right in the following sense. If they were to allow much more flexible immigration, it would boost economic growth.
It's not going to happen. Come on.
I agree with that. But there are other things that they can do, Tom, that would be helpful. For example, relaxing restraints on agricultural imports, relaxing restraints on imports generally, encouraging greater investment by foreign companies. All of those things are feasible.
Kim, thank you so much. Kim Schoenholtz, abbreviated today. We'll get him on for a longer period here. What with the news flow, he is with New York University's Stern School. In our next hour on the international relations of Europe of terror, Robert Hormats-Jones of Kissinger Associates, and on the markets and a change, Tony Dwyer. Worldwide, this is Bloomberg. An horrific 24 hours of terror in Ankara, Zurich, and Berlin. We will go to our Matthew Miller in Berlin in a bit. The president-elect, he continues to transition. Foreign policy says, open me first. Robert Hormats in this hour. And this morning, new dollar strength, all adjust to an inflation reset. Can emerging markets survive a Trump reflation? Good morning, everyone. This is Bloomberg Surveillance, live from our world headquarters in New York, economics, finance, and investment. But, Guy, there is nothing this morning but European relations. Guy, what an ugly 24 hours.
Yes, in the words of the Chancellor in Germany, horrific and unimaginable, Tom. She is assuming that we have to work with the idea that this was a terrorist attack in Germany. That's the one I'm referring to. But the incidents in Ankara and in Zurich as well, front and centre here. Europe is back where it's been throughout much of 2016, Tom, having to deal with terrorism. How does it affect next year's votes, I think, is the big question the markets are grappling with this morning.
Right, and Turkey's central bank looking at action here. They leave their overnight lending rate at 8.5%. That seems secondary to the discussion in the morning. With our update and our first word news, here's Abigail Doolittle.
Thanks, Tom. German Chancellor Angela Merkel says authorities are working on the assumption that yesterday's fatal incident involving a truck at a Berlin Christmas market was an act of terror. Speaking today at a news conference televised nationwide, Merkel said the full force of the law will be used to learn what transpired. A dozen people were killed and another 4 dozen hurt when a vehicle rammed into the crowded market. Police questioned a suspect, reportedly a Pakistani refugee, who was arrested near the scene. They believe he was the driver. President Barack Obama has pledged U.S. assistance to investigate. Russian President Vladimir Putin is promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman fatally shot Andrei Karlov in the back at an art exhibit, afterward exclaiming Allahu Akbar and don't forget Aleppo. Karlov is the first Moscow envoy to be killed in his post in almost 90 years. In Switzerland, Zurich police suspect the attacker who opened fire on people praying at an Islamic center yesterday is dead, and their manhunt is over. Police say the gunman has been identified. 3 people were injured in yesterday's violence, all hospitalized. A press conference is scheduled for later today. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Abigail Doolittle. This is Bloomberg. Tom, Guy?
Abigail, thank you very much indeed. Let's shift gears and talk about what's happening in the corporate landscape. News out of Europe. Facebook has, it's just been announced, got an EU antitrust complaint over the WhatsApp deal. Now, the EU authorities are saying that Facebook may have misled authorities over the WhatsApp takeover plan. The WhatsApp merger approval isn't at risk as a result of this complaint, but Facebook does risk fines as much as 1% of revenue as a result of this. More to follow, Tom, but we're watching this story develop out of Brussels right now.
Very good. Let's get to the data check right now. I want to get through it quickly before we get to Ambassador Hormats this morning. The markets are important this morning, but clearly secondary to our discussion of international relations. Weak euro. I might notice also Turkish lira has spiked weaker off of the news of the central bank action. As Guy mentioned in the last hour, it was weak lira, then strong lira, and now the lira not plunges but reverses and gives up gains. On to the next screen, Tania, if you would. I know Guy's got an important Eurocentric screen. The VIX does better, finally 11.68, a lower statistic. I noticed Swiss franc bears some quiet watching, and the EM effect is real. Philippine peso at 50. Guy?
As you say, Tom, Turkey holding across the board. Remember that the market had priced in a 25-bip hike in the overnight lending rate. That has not happened. We are seeing the Turkish lira, as a result of which, losing a little bit of ground versus the greenback. You can see that at the bottom of the screen, 3.5414 at the moment. The DAX absolutely flat despite what is happening in Germany. Euro dollar giving back a little bit of ground, firming over the last few minutes. And we've been watching what's happening with China. Look at zinc. It has really been a mover as a result of the leverage moves that the Chinese authorities have made. But as I say, and as Tom says, the centre of attention firmly focused on Berlin. The German Chancellor Angela Merkel says that the German authorities are working on the assumption that the deaths of 12 people after a truck rammed into a Berlin Christmas market was a terrorist attack. She has pledged the full force of the law will be deployed to clarify every detail. Matt Miller is in Berlin. Matt, the German Chancellor coming out and making it very clear that she hopes this isn't a terrorism incident, but we have to work on the assumption that it was. Give us a sense of the tone that she delivered this statement with this morning.
Well, I think she, as you said, she was horrified and didn't want to believe that it was a terror attack, but they are working under that assumption, and they have, in fact, taken a suspect into custody, allegedly the driver of this truck. Also, German media is reporting that there were 2 Polish bodies found, one in the truck and one at the Weihnachtsmarkt, that had been shot. So apparently this truck could have been stolen and then used in this terror attack. It's already being investigated by federal authorities as well as local police here, both of whom will hold a press conference in just about 2 hours' time. Also, in 2 hours, Guy, Angela Merkel, the chancellor herself, will come here and visit this Christmas market at the Kaiser Wilhelm Memorial Church and see the damage for herself. Because of the police barricades, you can't make it out, but many of the wooden sheds that are put up here to serve Glühwein and to sell candles and trinkets and arts and crafts have just been absolutely just crushed by this truck barreling through.
Matt Miller, help us where you are in Berlin. I know the acclaimed Kaiser Wilhelm Church is behind you, the debris from a bombing of 1943. But for our international audience, what part of Berlin are you in?
So this isn't just the west part of Berlin. This is, the capital of West Berlin, the capital of West Germany. I mean, when Berlin was divided, the Kudamm, which is the street here, was put up with some of the most luxurious shops, some of the most capitalistic symbols you could possibly imagine as sort of a jewel of the West. And it really is still the most famous shopping street in all of Germany. When a tourist comes here who wants to spend any money to buy any goods, this is the #1 place to go. And then, of course, the Weihnachtsmarkt was, the Christmas market was an attraction also for locals. So really a gathering, an international gathering of people who were hoping to celebrate and shop, which turned last night into an absolute tragedy, obviously.
Matthew Miller, thank you so much. It is always a joy to speak with Robert Hormats. He is with Kissinger Associates. Of course, there's many political services across party lines in the United States. He writes for the Atlantic Council and also, of course, has been with us through the years. Bob, let me bring up this wonderful quote from your incredibly important Atlantic Council article of earlier this year. Compared to the 1940s and 1950s, there are now more players in the global economy and more types of issues that require U.S. attention in the international economic sphere. But the need for strategic thinking has not changed. A new president entering the White House in 2017 provides an opportunity. The opportunity here away from economics and towards what we've witnessed in the last 24 hours. How can the U.S. help Europe with Zurich, Berlin, and Ankara all in the space of a day?
Well, this is the challenge. And when I said there are more players,
more actors, yes.
Yes, which essentially means that you have not only the major actors of the post-World War II period, the major players, which is the U.S. and its 2 major allies, Western Europe and effectively Japan and countries around it. Now you have a lot of emerging economies. I think what needs to be done is the United States really needs to refocus on the common values it shares with Europe. Europe's in a position now where it could fragment, where there are parties of the right, very populist parties. The Russians are clearly trying to undermine cohesion within European countries and among them.
Okay, that's a broader view, but how can we project a strategic policy, as in your wonderful article, on terror? It just seems to just happen whenever somebody feels like doing a terror attack. It gets done in Europe. I hate to say that.
Because it's more vulnerable. We have...
Do we need to give them our security skills?
Yes. First of all, we're more distant from the sources of terror. Second, the Europeans really haven't devoted as much time and effort to dealing with terror, and they haven't integrated Muslims in particular as well as we have. We have to do a lot more. Intelligence sharing is critically important. New York City is great at intelligence sharing. It does it with all major European capitals. That's the critical thing. And second, having our intelligence services, CIA, FBI, others, work far more closely with those of our allies. These are the critical things. Information is critical, and having the police forces across the Atlantic work together.
And this is important, Guy, after what we've witnessed in the last 24 hours and what we've just heard from Ambassador Hormats. I don't want to editorialize here, but I believe in the last 10 days we've had a president-elect go after our CIA. I mean, that's the tension that you see in America as we go to the inauguration.
Absolutely. The security services are fighting fires on a number of fronts, Tom. To Bob's points, and I'd like to get his view on this, some saying this morning that the German security services in particular are behind the curve, that the French and the British are much more out in front in understanding the nature of the threat. Would you agree with that?
I think the British and the French probably are ahead. The French in particular because of the events they've had in the last couple of years. The Brits because of the problems they've had decades ago with the Irish situation. That was a big issue with Northern Ireland. The Germans, I think, have not been as robust as they ought to be. I think Chancellor Merkel's doing her very best. But the key is now to have a collective effort between our CIA and their intelligence services, our FBI, and our local police and their local police. Undermining the CIA is a very destructive thing for the president-elect to do. And Putin, we should understand, has a very clear goal of weakening. I don't think he's necessarily responsible for these things. I wouldn't put the blame on the Russians, but the Russians are undermining a lot of the cohesion in Europe, and you need a cohesive Europe to deal with terrorism. You need this more than ever now. It won't work if individual countries try to do this individually. That's the problem. And the Germans now, in the East, there is, I think, a little less robustness, but overall in Germany, they need a tougher line. And I think they'll get it. Merkel's a great leader, and she'll make it happen, but they've been a little bit behind the curve.
Bob Hormats with us this morning. We'll come back off his recent trip to China. Coming up later in the hour, Tony Dwyer of Canaccord Genuity. He has been one of the great bulls. He has made alpha, alpha, alpha. Tony Dwyer finally says enough. Mr. Dwyer goes neutral. Stay with us. This is Bloomberg.
Guy Johnson in London, Tom Keene, of course, in New York. Let's get a Bloomberg Business Flash. Here is Abigail Doolittle.
Thanks so much, Guy. HSBC says it's completed a $2.5 billion share buyback that began in August and helped lift the lender's stock price. In a filing, the UK bank says it bought 325.3 million shares. HSBC shares have climbed 36% in London, trading since August 2nd, the day before the buyback was announced. The Bank of Japan is upgrading its assessment of the world's third largest economy. At the same time, monetary policy was unchanged in the central bank's first decision since U.S. President-elect Donald Trump's November victory. The BOJ sees a moderate recovery trend to continue after a pickup in exports, an improvement in business sentiment, and resilience in private consumption. And that's the Bloomberg Business Flash. Tom, Guy?
Thank you very much indeed, Abigail. Let's stick with the Bank of Japan, Abenomics, etc., etc. With us, Bob Hormats, Kissinger Associate Vice Chairman. Bob, is the BOJ on cruise control?
Well, I think for the moment it is. As we've seen, they didn't make any new judgments or decisions at this point. They seem to believe the economy is picking up. I do think that Kim, in the last half hour, made the point that fiscal policy now is the most important driver of expectation. Certainly it is here, not Fed policy, but fiscal policy, if you look at the way the market's performing. The problem with Japan is they have such a large amount of debt that they've accumulated that it's very hard for them to use additional fiscal policy. So they're really more or less trapped, and monetary policy is probably the only thing they've got. They could do more reforms, more structural reforms, but as Tom pointed out, opening up to more immigration, that's not such an easy thing to do. I think that actually TPP would have helped them expand trade with not only the United States, but the other countries that are in TPP. That would have stimulated the economy, but we don't have that now. I do think a bilateral U.S.-Japan trade agreement somewhere down the road might be useful, but they really now are in a position where it's awfully hard to get out of this period of substantial weakness.
Bob, as we look back on 2016, a lot of monetary acrobatics from the BOJ. What's worked, what's not?
Well, Kuroda has certainly tried. He has the most ambitious monetary policy of anyone, including Yellen and Draghi. Very little of it has worked. That's the fact. It's better than it would have been. I mean, you can certainly say that. And there have been times when inflation has picked up a little bit and growth has picked up a little bit. But they want to get inflation above 2%. This is the problem. Now, the weakening of the yen that we've seen over the last couple of months actually should help somewhat. It will stimulate exports, and it will be mildly inflationary. And so they can rely on that a little bit. But getting to 2% is going to be very, very difficult, despite the fact that Kuroda is doing the very best he can.
Too many things to talk about today, but the real summary here is strong dollar, strong dollar, strong dollar. That's what we're going to talk about next. It is the elephant in the international room. On the Trump transition, where will the dollar be January 20th? There it is, the view of the transition. Every street in your view there has been blocked. Betsy McCoy will join us next. This is Bloomberg. Bloomberg Surveillance. Good morning, everyone. Guy Johnson in London. I'm Tom Keene in New York. We're going to digress right now. We've got the horrific news out of Europe, and we'll continue on that through the hour and, of course, on Bloomberg Television and radio through the morning. I want to bring this up. Rob Hormat's with us with Kissinger Associates, and we've dragged out of the Trump Tower Betsy McCrory, of course, the former lieutenant governor of New York, an early supporter for Mr. Trump. And Bob, maybe she can migrate you over to State Department again to do the good work you've done the last couple of years. Betsy, I want to go right to this chart, which is the Trump promise of economic growth. And we're going to look at the Integram here, this is what we knew in the 90s, this good news here of a 4-year moving average. And this is where we are now, which is why your guy got elected.
That's right.
What is going to be the rate of change of policy to migrate us back to a 3% economy?
Rapid. First of all, the tax cuts, expect them to come sooner rather than later. We know that Kevin Brady from the House and Orrin Hatch from the Senate are already on the same page about the need for these tax cuts, the size of these tax cuts, and the importance of getting them done quickly. Secondly, deregulation, which is going to have...
That happen quickly?
Pardon?
Deregulation.
Very quickly, because it's mostly coming right out of the executive branch, and those cabinet members are committed on day one to sweeping away the regulations. Right. Number 3, cheap energy, and that's going to have a tremendous impact on manufacturing.
I want to know what we're going to get done by Valentine's Day. What I would suggest, Betsy, is within the transition mix, we're in an odd place after the election and before the inauguration. What do you observe about filling the next 200 jobs?
I observe that they're going to be filled quickly. They're going to be filled with people who are agents of change. You can see already.
Write this name down, Hormats, Hormats.
That's right. Believe me, I'm for Bob Hormats in any job, anywhere.
But seriously, how are we going to get the next 200 bodies? I get the first 20 bodies.
Well, you can see that the Trump transition is already ahead of schedule in terms of naming cabinet and sub-cabinet people.
That's true, Bob, isn't it? I mean, it's happening very quickly,
Yes, I think he's moved quickly. And if he were even a little slower, I wouldn't criticize him. I want him to take his time and pick good people. I think some people try to rush it, but I think he is ahead. Right. And these people are all, as Betsy says, stimulus, pro-growth types, too.
That's right, and many of them coming from outside Washington. Their biggest obstacle, the 3 million strong army of bureaucrats in Washington who will dig in their heels and resist change. Bigger obstacle than the Democratic Party.
Let me ask a question. We've got a little strap at the bottom of the screen showing what's happening with the dollar. Is there such a thing as a too strong U.S. dollar?
Well, that is always a problem because, of course, it makes it harder for exporters and of course, cheaper for consumers. So it's two sides of the same coin. I think it is ultimately, in the long run, a problem if you want to boost manufacturing, but I wouldn't worry about it at this point. We want a strong dollar. It's just one more sign of optimism. And let me add there that I think it's a real contrast between what Donald Trump is projecting in terms of growth, what the OECD has now adjusted its growth projections to be 3% by 2018, and Janet Yellen, who keeps saying, well, our economy isn't capable of more than 1.8% growth. And she says it's because of a lack of innovation. That's like saying we have the light bulb, we can't have anything more. Of course there will be more innovation.
Betsy, back to the issue of who's going to fill the key jobs. How many more will come from Wall Street, do you think?
How many more from Wall Street?
Will come from Wall Street, yeah.
I predict there will be more from Wall Street, but there's probably been almost too much emphasis on drawing people from Wall Street. Donald Trump is drawing people from all kinds of corporate sectors, and that's really important. He's taking people who have run major international businesses and saying, you have the skills to be in government. What a refreshing change from just putting the same old political hacks back Betsy, into office.
Thank you so much, Hormats, Hormats.
I agree.
Thank you so much with her support of the president-elect. Coming up, Anthony Dwyer goes neutral. This is Bloomberg.
but there are equally ways to overcome.
A disunited kingdom. Nicola Sturgeon, the First Minister of Scotland, laying out plans that her party are putting to the UK government in London. She is saying that these plans represent a compromise, and she expects the UK to consider Scotland's Brexit proposals. She says that her plan is to keep Scotland in the EU single market, that part of the UK staying within the single market benefits the EU, i.e. Scotland remains as part of the single market and the rest of the UK departs, though she says there'll be no EU border between Scotland and England, though that represents one of the big issues that we are dealing with right now with Ireland. Let's catch up on all the other news today. It has been a busy news cycle. Here's the First Word News with Abigail Doolittle.
Thanks, Guy. Chancellor Angela Merkel addressing the German people today in the aftermath of yesterday's fatal truck incident at a Berlin Christmas market. In a nationally televised statement, Merkel pledged the full force of the law will be deployed to clarify, quote, every detail.
Noch wissen wir vieles über diese Tat. There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack. I know that it would be particularly difficult for all of us to bear if it was confirmed that indeed a person committed this crime who came to Germany to ask for protection and asylum.
Police questioned a suspect, reportedly a Pakistani refugee who was arrested near the scene. They believe he was the driver. Russian President Vladimir Putin is promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman fatally shot Andrei Karlov in the back at an art exhibit, afterward exclaiming Allahu Akbar and don't forget Aleppo, a reference to the beleaguered Syrian city. Karlov is the first Moscow envoy to be killed in his post in almost 90 years. His 22-year-old assailant, an active-duty police officer, was killed by security forces. And in Switzerland, Zurich police suspect the attacker who opened fire on people praying at an Islamic center yesterday is dead, and their manhunt is over. Police say the gunman has been identified. 3 people were injured in yesterday's violence, all hospitalized. A press conference is scheduled for later today. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Abigail Doolittle. This is Bloomberg. Guy, Tom?
Abigail, thank you so much. Robert Hormat's with us as we look at our international relations and Europe's fractured terror relations this morning. But we pause. Tony Dwyer has been one of the great bulls with Canaccord Genuity, and I would also point out he's been an intelligent bull. It's not just the stocks go up. It's the way he's described they would go up. And like Bob Hormats, Tony Dwyer said there will be no recession. Now the facts have changed. We've got a new president, and Tony, after a big bull run, goes to neutral. Tony, I want to surprise you here. Bring up the chart, if you would. This is not an equity market chart. It's a dollar chart. Okay, so it's a Bloomberg Dollar Index with this moonshot up here off the Trump election. This blue circle is the election here. You say the equity markets are about credit. I would say credit is about the dollar. Link them together.
I would say probably the most controversial call I have right now is that the dollar is not going to strengthen like everyone thinks it's going to strengthen. And the reason is, if you look back in history, and I know Bob could weigh in on this, the dollar does not have a significant and sustainable surge higher when the global economy is getting better, especially emerging currencies and commodity prices. If you think about times like the late 90s, the mid to late 90s, if you think about this cycle, the dollar index surges when emerging economies are in trouble and emerging currencies are really getting hit.
And Bob, to that beautiful description by the currency expert Anthony Dwyer, the answer is it becomes a political solution. You have such dollar strength, whether Plaza dollar or Rubin dollar, that it's stochastic. We come up and we come right back down.
That's right, and I think that the global economy is getting better. That's a point that a lot of Americans are not really paying much attention, including emerging markets.
Yep.
And this probably will put some limit on the dollar, as some money will go back into these economies that have been really beaten down badly.
Critically, Tony, your neutral call on the market, is it a go-to-cash call or is it a readjustment call?
You know, we're so famous on Wall Street for kind of making these esoteric calls. Basically, it's a tactical call. The fundamental backdrop of credit still remains terrific. If you look at agency spreads, mortgage spreads, corporate credit spreads to treasuries, they're getting better, not worse. So this isn't a recession call. We're nowhere near a recession, in our opinion, and based upon historical precedent. What this, Tom, is a call to, if you're very overweight equities, we turned bullish right before the election, having nothing to do with Donald Trump winning, but having to do with the global economy getting better. Now that has been widely accepted. The Fed has become more hawkish. The market's up 8% in a very brief period of time, a historic amount of time where you had the weekly stochastic on the S&P 500 go from deeply oversold to extremely over. It only has happened to this degree in the 1960s. So it's just kind of a pause in the upside, take a little profit off the table and get ready to get more offensive again.
Tony, one of the reasons why the market has done what it's done is the financials have finally got into gear. Am I rotating out of my financials?
We have been heavily overweight financials for the bulk of this year, frankly, and I cannot imagine why anybody would want to get short or negative on the financials, given the backdrop. However, I would say that you take a little bit off the table if you have a shorter-term time frame.
You're not selling your banks here, is what I'm hearing.
Not a chance. If I'm 120% long and I'm super overweight banks, I'd sell a little bit of the bank.
I got Bob Hormats with me here, so we got to do this great chart. This is the Ibbotson chart out of Yale University. The depression right here. Here's what I call the Guadalcanal low, which is really the ugliness of 1942. I did this for John Glenn, Bob Hormats. Up we go. Tony, we are remarkably on a capitalistic trend of equity performance over half a century. Do you see any ebb to that with the politics of Washington?
No, politics does not drive the market. What drives the market historically is earnings. What drives earnings is economic activity. What drives that is the slope of the yield curve and availability of credit. What drives that is Fed policy, and what drives that is core inflation. So unless you have a late 60s into the 70s style spike in inflation, inflation fear will create an over-hawkish Fed that will create a recession. But those real huge declines come from real spikes in inflation that bring on a real negative Fed.
Yeah, and I don't think we're going to have that. The one thing I do think we ought to keep our eye on is a trade war. That would trouble me a lot. I think if we start getting into a big fight, I just got back from China, was there for 10 days. If there's to be a trade war with China or lots of trade confrontations with China and other countries, that will hurt emerging economies, that will hurt China. Markets are going to be very vulnerable to that. Those external factors that we can't quite anticipate yet, but I think could be around the corner, could be very negative for the market, apart from Tony's very positive judgment, which I agree with.
Tom, now here's an interesting perspective. When you look at Eisenhower, which was a Republican that came in with tax cuts and fiscal stimulus following two Truman administrations. If you look at the first year that Reagan came in, following 8 years of a Democrat, and doing the same thing. The fear is that Trump is going to suffer the same consequences. But here's the problem with that thought process. There may be a market correction. We just went neutral. But it's not going to be because of recession. Both of those two administrations in the first year had a recession because of the restrictive and tight monetary policy going into their first year. That's not the case today.
It's amazing, Bob, how Reagan years border almost on ancient history. Guy Johnson, jump in here, please.
Yeah, let me talk about Europe, Tony. We're trading at one of the biggest spreads on a forward PE basis than we've seen for really quite some time. I've got a chart that shows this. If the US is looking tactically expensive, is Europe looking tactically cheap?
I wouldn't say that. Another contrary call I have is that the U.S. is not expensive. When you look at the level of inflation and interest rates, it's fair. It's not expensive. Expensive is somewhere north of 20 times earnings. But to answer the question directly, our call at this point would probably be, given the global economic activity, EM over DM, emerging markets over developed markets, and Europe over U.S., based partially on a valuation discrepancy. But I think the monetary stimulus that is happening out of the ECB and the Bank of England by buying corporate debt, it's not like you're lowering 10 basis points further into negative territory. Who cares? Nobody's going to borrow. You're directly injecting money into the private sector by these two central banks buying corporate debt, and it has had a very stimulative effect that most people didn't expect. And I think that is the reason you want to be looking at Europe maybe versus U.S.
And I think if the U.S. does proceed to deregulate, perhaps that will give Europe a greater incentive to do the same thing. That would be a plus as well.
Yeah, that'll be interesting given the political landscape that we have over the next year and whether or not that's feasible. Bob, do you think that is feasible in a way that maybe the U.S. markets now have, and to Tony's point about the financials and what is happening within the financials and possibly deregulation there, do you think that is something that that Europe is kind of psychologically set up to be able to follow. In many ways over here, we're still dealing with the fallout from the financial crisis. Italy is still living with it. It feels like a different world over here than it does in the United States.
It does, and we saw in the failure of the Italian referendum that there doesn't seem to be the strong appetite for deregulation, in that case political deregulation, but economic deregulation either. But I do think that if it works here and it can show some benefit here, that will incentivize some Europeans to say, let's give it another look, or at least pieces of another look. The one worry I do have is that a lot of the improvement in the growth in the economy here will not lead to the kind of improvement in jobs that a lot of people anticipate. A lot of the improvement in the economy here will create new economic activity, new technologies. Technologies are going to do very well, but the rate of job creation may not keep pace with the rate of economic growth or the rate of growth of the stock market. Job creation is still the big challenge for the United States, even though other parts of the macroeconomy can look very good.
Well, Tony, let's bring up that point. Tony, do you think that we will see, how will companies spend money in the United States if they can repatriate it from those external bank accounts that they have? It's largely in dollars already. They can bring it back home really quickly. Will they invest in people? Will they invest in equipment? Or will we see more buybacks?
Well, it's a great question, Guy. Historically, the #1 use of cash for technology companies has been to buy back their shares. So most of the money, a very large portion of the money that's held overseas that would be repatriated is in technology, and of course, technology and healthcare buy back shares. We do believe that what happens in an economic cycle, and we have been still early in the economic cycle up until the Fed started to move the real Fed funds rate upward. So believe it or not, 7 years in, you would have normally been considered still early in the economic cycle. That's transitioning now, and companies, as interest rates go up, spend less on buying back stock and more on capital investment or acquisition.
Now let's come back. Tony Dwyer with us with Canaccord Genuity and Ambassador Hormats as well. I want to come back with Ambassador Hormats and look at China and particularly talk to Tony and Bob about the idea, the export strength of the United States. In the 8 o'clock hour this morning, Gerard Cassidy of RBC Capital Markets. This is Bloomberg.
44 past the hour. I'm Guy Johnson in London. Tom Keene, of course, over in New York. Let's get a Bloomberg Business flash. Here is Abigail Doolittle.
Thanks, Guy. Facebook has been sent an antitrust complaint by European Union regulators. They say the company may have misled them when it sought approval to buy the WhatsApp messaging service. Facebook faces fines of up to 1% of annual sales for providing, quote, incorrect or misleading information during the 2014 EU review. It has until the end of January to respond to the European Commission. The EU says approval for the merger is not at risk. Vivendi is planning to buy more shares in Silvio Berlusconi's Mediaset. The move intensifies a fight for control of the broadcaster founded by the former Italian prime minister. Vivendi says it's decided to raise its stake within the mandatory bid limits of 30% of share capital and voting rights. It also says it will buy shares depending on market conditions. In Italy, the government has cleared the way for the potential rescue of the nation's banks. This as it tries to get Parliament's permission to increase the nation's public debt by as much as $21 billion. Troubled lender Monte Paschi is seeking investors to back a private $5.2 billion capital increase. If those efforts fail, Italy's prime minister has laid the groundwork for a state-sponsored cash injection with the possible bond sale. And that's the Bloomberg Business Flash. Tom, Guy?
Thank you very much indeed, Abigail. Coming up shortly, it's Bloomberg Daybreak Americas. David Weston, John Ferro. Mr. Ferro is here now. Good morning. What do you got?
Good to see you, Guy. Of course, you've been covering it as the focus shifts from fiscal policy to monetary policy. It's easy to forget what a defining year 2016 was for monetary policy, specifically for the Bank of Japan, as they ventured into negative interest rate territory, implemented what they called yield curve control. We're going to debate 2016 and the outlook for 2017 with two important conversations. Mohamed El-Erian, Allianz's chief global advisor, and a conversation you don't want to miss with this guy, Kazuo Moma, a man that knows the BOJ former assistant governor. Those conversations coming up, Tom.
John Ferro, thank you so much. Tony Dwyer with us with Canaccord Genuity and Robert Hormats with Kissinger Associates. Bob Hormats, I made this chart for you earlier this morning. This is our merchandise trade added together, our exports and our imports. Call it the animal spirits of merchandise trade. And here is the giant exceptionalism of America over a good 20 years. We go from there and we migrate up to the financial crisis. If you extrapolate out what we thought we would do, there is this gap, and it's a huge gap in our sum trade. Is the world of trade, of agreements, of multilateralism, is it over? Everything you studied and you were part of, is it over?
For the time being, the answer is yes, insofar as it involves the United States. That is, the U.S., the new administration is not supportive of WTO. It's anti-NAFTA for sure.
And your
it's
candidate in the election
and
was
Hillary was against TP,
yeah,
as well as Donald Trump. And Europe, the TTIP, is certainly not going anywhere at this point. On the other hand, some countries are moving ahead. China has the Regional Cooperation Economic Partnership, RCEP, and they're moving ahead with massive trade liberalization in East Asia.
What did you see in China? I mean, there's this whole mystery here, and everybody goes, blah, 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 blah. You were there, and with your access, is this a new Beijing, or is it a Beijing adapting to the news flow from America?
It's both. It's a more proactive, more economically nationalistic Beijing, but it also now sees that it has an open playing field. The United States will be an active trader in Asia. We're not going to back off from trade with Asia. But in terms of a trade agreement like TPP, we're not going to have one, so that the rules about international trade, particularly trade in Asia, will be written by the Chinese. The Chinese will be the leading factor there. Now, the Chinese have their own issues. They have wages going up in eastern China in particular, so a lot of the manufactured goods that had been made in China are now going to shift to Myanmar or Vietnam or Bangladesh, for instance. So, but the Chinese now, in terms of the ability to influence the construct, the institutionalization of trade in Asia, they're going to be in the lead unless the U.S. finds some way of getting back in the game. And the only way I see is a few bilateral agreements, but that's going to take time.
Bilateral scares me. Guy?
Yeah, I'd be interested to know from Bob's point of view how the view of trade changes as China moves towards a service-based economy.
Well, it won't be quite as dependent on exports, but it'll still be heavily dependent on exports, and it will be dependent on exports to the United States and the rest of the world. But it's moving toward a more service-oriented economy, in part because it wants to increase employment. There's still a number of people, particularly in central and western China, who need jobs. And on the export side, because wages are so high, exports are going to not move as well. Services probably will be a more effective jobs absorber.
Tony, over to the equity markets. Bring up the chart again, if you would. And what I want to know, Tony, if we're going to migrate back to that trend that we knew for years, does that mean you can believe in multinationals, U.S. multinationals, as a proxy for trade improvement?
Yeah, you believe in global economic activity and improvement. And I think to Guy's point, China is already a service-based economy at 52% services. So it's becoming less of an influence in terms of the manufacturing. It's obviously the second largest economy, so it is a very large influence, but not to the degree that people used to trade. So in my opinion, to expect China to go back to double-digit growth rate at this size of an economic backdrop with being a service-based economy seems somewhat inappropriate. And what you see in that chart, Tom, is I'm a big fan of, until it's proven otherwise, you go with history. And the history suggests no matter how wide that gap you see there, it fills.
Okay, Tony Dwyer, thank you so much with Canaccord Genuity. It's a first look at banking. I don't want to extrapolate it over the rest, but Jefferies out with their earnings today, and they're just single numbers. They're not really giving me much of a compare and contrast, but Jefferies with a first look. We'll have much more on that through the morning. From New York and from London, this is Bloomberg. are focused on international relations and terror this morning in Ankara, in Zurich, in Berlin. Chancellor Merkel speaking. Away from that, it is a continued dollar strength. That 103.41 at the bottom is a big deal. Further dollar strength this morning, and it's expressed in euro dollars, a G7 giant 103.79, weaker euro, and Philippine peso 50.03 is a big deal. Some final thoughts with Robert Hormats of Kissinger Associates. You got to help me with this relationship of Russia and Turkey. You know, I read Robert Lacey, I read about Peter the Great, I read about Russia always looking south. What is your take from your work over the years of the changing relationship between Russia and Turkey?
Well, you're quite right. It varies from decade to decade.
And century to century, frankly.
From century to century. At this point, the Russians are strongly supportive of Assad. The Erdogan government has a lot of reservations, though they've been trying to cozy up to the Russians somewhat to try to figure out how to deal with this and how to deal with the Kurds. But it's a murky situation. They're neighbors. They want one wants Assad to go, one wants Assad to stay. Both want to deal with the problem of ISIS. So they're trying to work together on certain things and against one another on certain other things.
How far does Putin's sphere of influence extend at this point?
Putin's influence in Turkey or in general? I think
I'm sitting here in Europe and I'm thinking about how far that extends.
It's enormous. I mean, Russian intelligence services, various groups in Russia are supporting right-wing populist groups all over Europe. They want to weaken the various countries of Europe. They want to weaken the EU. They want to weaken NATO. Russia is using this period to try to undermine the cohesion of Europe.
Let's continue on radio. Ambassador Hormats will join us on Bloomberg Radio Worldwide. Tomorrow, Joachim Fels of PIMCO. This is Bloomberg.
Good morning and welcome to Bloomberg Daybreak on this Tuesday, December 20th. I'm Jonathan Ferro alongside David Westin. Alex Steele is off today, and the markets, we are about 117 points away from Dow 20K, with futures positive as well, up 28 on the Dow, positive 4 on the S&P 500. In the FX market, the dollar index getting back to a 14-year high. Dollar yen claiming a 118 handle a little bit earlier in the session. In the bond market, Treasuries on offer, David. Yields higher by about 2 basis points to 256 on a 10-year.
And Jonathan, here's what you need to know at this hour. Christmas attack. A truck plows into a Christmas market in the heart of Berlin, killing at least 12 people. Chancellor Angela Merkel tells the nation in a televised address that we must assume it is terrorism. We're live on the ground in Berlin with the very latest, and we'll be joined by a close Merkel political ally on what it means for Germany and for the Chancellor. Kuroda stands pat. The Bank of Japan, beg your pardon, capping a momentous year with an upgrade in its outlook on the economy, but keeps its yield curve and asset purchase programs unchanged. The year in hedge funds. Who were the winners and losers in the hedge fund world in 2016? And what will it mean to have one of their own running the Treasury Department? We have the scorecard, and that's what you need to know at this hour, Jonathan.
David, we begin our coverage with the FX market then, and the Bank of Japan, to be more precise. The dollar index reclaiming a 14-year high. The yen, though, weak as dollar yen just kisses 118. We trade up by about 0.7%. What a year it has been for the BOJ. A little bit of a venture into negative interest rates, yield curve control, and at one point that yen was the strongest since 2013. It's been a tumultuous year for sure, and joining us to discuss is former Bank of Japan Assistant Governor Kazuo Momo. Kazuo, great to have you with us on the programme. Let's just start with the decision from the BOJ today in Tokyo. There was some speculation that maybe they'd have to adjust the yield target on the 10-year away from zero because of the backup we've had in JGBs. What do you make of the decision just to stand pat?
Well, actually, it makes to me perfect sense that they stand pat and keeping the policy on hold. Actually, economic conditions are favorable, so there's no need for easing further. And also, even with the inflation picking up, still there's a long way to go to 2%. So I don't think there is any need for the Bank of Japan at this moment to even think about any move for less accommodative direction. And regarding some discussion rumor about the possible hike in the target level of 10-year bond yield, I think the BOJ is really clear today by Mr. Kuroda governor's press conference that they're really sticking to the current yield curve, which is actually optimal to create the 2% inflation, the momentum for 2% inflation. I think this is going to be persistent stance of BOJ for some time. So I don't think many people should misunderstand any sign from the BOJ that they may change their mind in the near-term future.
Well, Kazuo, they might not change their mind, but their policy is set to be tested throughout much of next year if we continue to get a backup in bond yields. Do you think it will be difficult for the BOJ to sustain a target of 0% on the 10-year, considering the backup we've had and considering how big the balance sheet is already?
Well, actually, it's a mistake thinking that the BOJ will eventually succumb to external pressure in terms of the higher interest rate, because BOJ is so powerful and capable of controlling 10-year bond yield right now. They have a strong commitment, and also they have a strong policy tools. For example, actually, they can either increase or decrease the amount of bond purchases. They are, in terms of that, I think pretty much flexible in terms of the bond purchase amount. Of course, they say that they will continue to buy bond at 80 trillion yen pace, but that is a very soft guideline. So if anything happens, if there is any conflict between the quantity and interest rate, they will take interest rate. Quantity will be secondary consideration.
So, Kazuo, there's no question the Bank of Japan is very powerful, but the U.S. dollar right now is pretty strong as well. How much of what we're seeing in terms of the improved economic conditions in Japan is really because of genuine growth within the Japanese economy as opposed to a weakening yen?
Yes, of course. Weakening of the yen will support Japan's economy to grow faster and inflation to pick up somewhat faster. But at the same time, as I mentioned, there is still a long way to go to 2%. And on top of that, BOJ's new commitment, which is called inflation overshooting commitment, that is actually essentially puts BOJ itself in a position that they are intentionally behind the curve before they see any sign that the inflation will be 2%. So I think this will be a very, very strong commitment by BOJ to be patient, to see a very, very tangible sign that the inflation will be picking up to 2%.
Kazuo, just to wrap this up, we began this segment by talking about what a year it has been for the Bank of Japan, venturing into negative interest rate territory, establishing what they've called yield curve control. They've done a whole host of things this year, and some of them have failed. I just wonder what Governor Kuroda has learnt from 2016 that he can apply to 2017.
Actually, this year, as you mentioned, there was a very, very gyrating year. At the end of, at the beginning of this year, there was a lot of the risk-off movement in the global financial market. Chinese and other emerging market economies decelerated, and the sharp decline in the dollar against other currencies put Japan and other currencies on a relatively difficult situation. And also Brexit and some other political tensions are everywhere in the world right now. But fortunately, from the early autumn, at around the time of the comprehensive assessment of the BOJ, fortunately things are moving up. So I think I hope that BOJ also hope that this positive momentum will be spilling over to the next year. And but as I mentioned, still, even with a positive dynamism in the global economy, Japan's inflation is very persistently low. So it's going to take a lot to create a momentum for 2% inflation. That's what is really looking for. We have to looking for any BOJ thinking on the inflation next year.
Kazuo Momo, great to have you with us on a programme. Former Bank of Japan Assistant Governor, as the BOJ keeps monetary policy on hold. And to be fair, the dollar keeps doing much of the heavy lifting for Governor Kuroda. Let's get you outside of the markets just very quickly and get to you some of the headlines outside the world of business. Let's say good morning to Emma Chandra. Good morning.
Good morning, John. Chancellor Angela Merkel addressing the German people today in the aftermath of yesterday's fatal truck incident at a Berlin Christmas market. In a nationally televised statement, Merkel pledged the full force of the law will be deployed to clarify every detail.
Noch wissen wir vieles über diese Tat. There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack. I know that it would be particularly difficult for all of us to bear if it was confirmed that indeed a person committed this crime who came to Germany to ask for protection and asylum.
Merkel said authorities are working on the assumption that the deaths of 12 people after the truck rammed into a crowded market were the result of a terrorist attack. Another 4 people were injured. Russian President Vladimir Putin is promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman fatally shot Andrei Karlov in the back at an art exhibition, afterward exclaiming Allahu Akbar and don't forget Aleppo, a reference to the beleaguered Syrian city. Karlov is the first Russian envoy to be killed in his post in almost 90 years. His 22-year-old assailant, an active duty police officer, was killed by security forces. And President-elect Donald Trump has secured the needed 270 electoral votes needed to claim the presidency. The Electoral College affirmed Trump as the 45th U.S. president yesterday, despite a bid by a group of Democrats to spark a rebellion and overturn the November election results. The votes will be counted formally and announced January 6th in Washington, 2 weeks before the presidential inauguration. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. John.
Emma, thank you very much. Here in the United States, then, as far as equity markets are concerned, futures are firmer. In Europe, the Stock 600 trading at a 2016 high. Some deal flow out there in Europe, across the continent. Let's get you some of it. Here's Abigail.
Thanks so much, John. Well, over in Europe, we do have the shares of Mediaset, the Italian broadcast company, soaring higher as Vivendi has said that it will increase its stake up to 30%, right below the tender offer level. Now, this intensifies a battle between the two companies, one that has been really pretty good, though, for the shares of Mediaset. Over the last month, this stock is up 86%, just an absolutely huge move. So it may be a bit of a brutal battle between the two companies, but shareholders are probably liking it in this month of December. As for Lloyd's of London, we do have the banking company trading higher on the news that Lloyd's of London has agreed to buy B of A's credit card business in the UK for $2.4 billion. Now, this is the company's first major deal since being rescued by the British taxpayers 8 years ago. And finally, here in the U.S., Facebook shares are modestly lower after the company did receive an antitrust complaint from the EU. Basically, the EU is saying that the Facebook may have provided incorrect and misleading information around its WhatsApp takeover bid. Interestingly, Facebook is up 14% 14% on the year, but well off the highs, David. At one point, Facebook earlier this year was up 30%. So some bad news hitting Facebook more recently, David.
Thanks very much, Abigail. Coming up, with mounting uncertainty about when and how Theresa May will trigger the UK's exit process, strategists have some very different views about the outlook for the euro-sterling cross in 2017. We'll hear from one expert. That's next. This is Bloomberg.
From New York, this is a Bloomberg Daybreak. I'm Jonathan Ferro. Let's get a quick check of the markets for you. We look like this. Futures firm are up 35 on a Dow. At yesterday's close, we were about 117 points away from that milestone, Dow 20K. We're up across the board. If you switch up the board just very quickly, in the FX market, we look like this. A dollar index that reclaims a 14-year high. A dollar yen that gets back to a 118 handle. A euro that gets back down to 103. In a bond market, treasuries are bid. Yields are on offer, rather. Yields are higher by 3 basis points to 257 on a US 10-year. The Brexit agenda then. Today, it looks like this. Scottish First Minister Nicola Sturgeon had a press conference in Edinburgh about an hour ago to address the next step for the country. And Theresa May, the Prime Minister of the UK, will be questioned by the House of Commons Liaison Committee at 9 a.m. Eastern time. What does that mean for the FX market? Well, it means considerable divergence in terms of what the view is for where euro sterling ends next year. Check out this chart. The view, the low in terms of estimates, down towards 70, potentially 73. The high estimate, well, euro sterling parity, potentially. Joining us now is Vasilios Giannakis, UniCredit Global Head of FX Strategy. Vasilios, it's great to have you with us on the programme. This divergence, we've got a real market for euro sterling in 2017, that's for sure. Where do you sit on that spread for next year?
I think I'm going to be somewhere in the middle. I'll say that next year we're going to gravitate towards 88 to 90. I think, listen, politics is in the driver's seat right now. The way I see it, politics are a big concern for the UK relative to the Eurozone right now, largely because of what's already in the price of the euro relative to that of sterling. It is, in a sense, it can be a bit of a binary, because if the market starts sniffing very early on that the transitional agreement for Brexit is in the horizon, then it will certainly beat sterling higher. However, I think that as we move into early 2017 and we approach that deadline that May has set herself for triggering the Article 50, there's going to be an increase in political noise. Risk risk premia in the UK are going to start increasing, and sterling is going to come at renewed pressure.
Vasilios, looking at the politics, though, I just want to try and understand how the politics of the Eurozone next year actually shapes the FX market in a considerable way. Given the activity, the price action around, say, the Italian referendum, it wasn't drastic, so why would that change next year?
No, but and I fully agree with that. In the following sense, I mean, you have unprecedented political uncertainty, but I think that if I am to look at the three different reasons, US, UK, and Eurozone, I would say that certainly political uncertainty is less of an issue in the Eurozone compared to the uncertainty that surrounds the outlook for the US and the UK.
Vasilio, that makes sense, except what about the attack yesterday in Berlin and what that might mean for Angela Merkel? I mean, if Angela Merkel really was under siege politically, what would that do to the euro?
Oh, that would certainly be an issue for the euro and for the FX market in general. However, our best case scenario is that this is not going to happen. We're not going to go down this road. The problem right now is that at least for the uncertainty about politics in the Eurozone, we have some priors. We know where things are moving. We know there is an increase in populism, and we know there are also these outside threats from terrorism. The issue I'm having with the US and the UK is that we have no prior, and we don't really know where things are going to pan out. And that's why I'm saying politics in the US and the UK, to me, are of a bigger concern compared to the Eurozone.
Vasilios, let's get to the driving seat of the G10 space, shall we? It's the dollar. The dollar index getting back to a 14-year high. The euro now trading with a 103 handle against the dollar all over again. There is just this monster consensus going into next year that the dollar stays bid. It's going to be strong, strong, strong. Do you take the other side of the trade on the margin?
I am taking the other side of the trade, although I would say that there is considerable uncertainty. Listen, the way I see it right now, I see that there is a tug of war between fundamentals and momentum. From a fundamental perspective, I think the dollar has really run ahead of real rate differentials and from fundamentals in general. Let's not forget, we're talking about a monstrous increase, 30% since the summer of 2014. On the other hand, there's no point in standing in front of a runaway train, at least in the short term, meaning that the momentum is there. So I think the risk is that as we move further into towards year-end, where liquidity gets thinner, we may see some new highs in the dollar. In 2017, it will be a story about what the Trump policies mean for the U.S. and by extrapolation on the dollar. My main concern from a fundamental perspective is that the U.S. is now running at near full capacity. It is at near full employment right now, which means that if a Trump stimulus goes ahead like the way it is being outlined, I think that it runs a danger for the dollar to compress real rate differentials, meaning compress U.S. real rates.
Vasilios Giannakis, really fascinating stuff. Taking the other side of the trade, UniCredit Research Global Head of FX Strategy. I like that tug of war, momentum versus fundamentals. The momentum, as Vasilios said, it's like a freight train right through this market.
And as always, you have to have real growth, not just inflation. If you get inflation without real growth, then you're really going to hurt the dollar as a practical matter. It's not going to be good for it. So coming up on this program, more on our top story. German police are holding a news conference in Berlin updating on an attack on the Christmas market yesterday. The Berlin mayor saying, quote, "We are stunned." One of Angela Merkel's political allies speaks on the repercussions next on this program. This is Bloomberg.
In Europe, German police are holding a news conference in Berlin following yesterday's attack on a Christmas market. This after German Chancellor Angela Merkel spoke in Berlin earlier this morning.
Noch wissen wir vieles über diese Tat. There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack.
For more now, we're joined from the German capital by Bloomberg's Matt Miller, who joins us now. Matt, great to have you with us on the programme. Just run us through what we've actually heard from authorities over the last 24 hours since this tragic event.
Well, you know, we haven't heard very much specific information from authorities because German police and the German government are incredibly conservative when it comes to releasing information about suspects. What we do know is that they have one suspect right now in custody and that the federal prosecutors are taking over this investigation. So you heard Chancellor Merkel there talking about this horrifying and unimaginable act, but they are assuming they're going to assume from now that it was a terrorist attack.
So, Matt, just give us a sense of the scene there. We see some awnings over your shoulder. Where are you in relationship to the actual market?
Well, I am standing right in front of the Christmas market here. You can see the Gedächtniskirche behind me. That is the Kaiser Wilhelm Memorial Church, where they have this Christmas market right at the top of the Kudamm. The Kudamm, as you probably know, David, is the most famous shopping street in Germany. It was really a symbol of the West when Berlin was divided, and so it's decorated with the most luxurious, highest-end shops, but also has a lot of mass market shops here. Everyone comes to the Kudamm to go shopping. Everyone comes here when the tourists visit Berlin. So it was a very busy, populated scene last night.
Bloomberg's Matt Miller joining us from Berlin. Thank you very much.
Okay, now joining us also from Berlin is Elmar Brok. He is chair of the Foreign Affairs Committee of the European Parliament, and he is a prominent member of Angela Merkel's CDU political party. Thank you very much for joining us today, Mr. Brok. So what can you tell us about what you know about these incidents and who was behind them?
We do not know that. They have not even found the terrorists until now, and therefore we do not know exactly what has happened. It looks so that it was a terrorist act, but we do not know exactly which background, which nationality, and so on. And therefore, we have to wait for that. And but it shows again that we need a much better information exchange of information between the intelligence services in Europe and the United States, and in order to prevent such acts in the future.
So I understand that they have not yet apprehended the driver of the vehicle, but as I understand it, there was a passenger who perhaps was killed. What do we know about that person?
We do not know exactly, but it was this man was obviously a Polish citizen. The truck was Polish. I believe that the terrorist has killed the driver of that truck in order to get hold of that truck and do the terrorist act with that. We have no proof for that, but it sounds logically that this is the case.
Elmar, if it is terrorism, it is going to raise a series of security issues, and it will also raise questions about Chancellor Angela Merkel's refugee policy. Is this the time to change course in a significant way?
We have to fight terrorists, not migrants. And we have much less migrants in Germany in the last months than we had last year. So on that level is something done. But please let not mix up terrorism and migrants.
Absolutely not, Elmar. Absolutely not. And that's not the intention of this programme to do so. Let me be more specific.
No, I know that. I know that. But
do you need to secure the borders of Germany more significantly to have a more secure environment within the country?
These people are here. And the terrorists always find ways to come here. We need a better cooperation of the intelligence services within Germany and between Germany and European neighbors and the United States and so on. This is the way to fight terrorism in a proper way. And I think closing borders in Germany would not mean that we can get hold of terrorists. You have terrorist acts everywhere in the world. You have it in the United States. You had it even after 9/11 in the United States, as the Boston bombings. We have it in London. We have it in France. I think Here, we're in a global battle against terrorism. And here we have to cooperate in that way and not close national borders as an instrument.
Okay, thanks very much. That's Elmar Brok. He is chair of the Foreign Affairs Committee of the European Parliament. Thank you for being with us today. Now, coming up, high fees and low returns. Hedge funds are under pressure. So who were the winners and the losers over the past year? And who will come out on top under a Trump administration? The hedge fund scorecard coming from Bloomberg. That's next. This is, after all, Bloomberg. This is Bloomberg. I'm David Weston. Here's what you need to know at this hour. Christmas attack. A truck plows into a Christmas market in the heart of Berlin, killing at least 12 people. Chancellor Angela Merkel tells the nation in a televised address that we must assume it is terrorism. Kuroda stands pat. The Bank of Japan capping a momentous year with an upgrade in its outlook on the economy, but it keeps its yield curve and its asset purchase programs unchanged. The year in hedge funds. Who were the winners and losers in the hedge fund world in 2016? And what will it mean to have one of their own running the Treasury Department? We have the scorecard, and that's what you need to know at this hour. Jonathan.
Looking forward to that. In the markets, then, we look like this. In Europe, the Stock 600 getting to a 2016 high. Futures firmer here in the United States, up 35 on a Dow, positive 4 on the S&P 500. In the FX market, here's your headline. We kissed a 14-year high in the dollar index back on Thursday. We get back there today with dollar yen reclaiming a 118 handle, up 0.8%. Treasuries on offer, yields up 3 basis points, David. 257 is your yield on a US 10-year.
Jonathan, now we have more on that hedge fund story. story. 2016 was a tumultuous year for hedge funds, with many of them losing money through much of the year, only to turn around in the fourth quarter. Who did well? Who did less than well? And how much of it was because of the election of Donald Trump? A Bloomberg report card on hedge funds out this year is our morning must-read today. And according to it, quote, the ripple across the markets from the surprise victory of U.S. President-elect Donald Trump bolstered returns, reversing the fortune of some, and may prove to be a boon going forward. All misspelled. Joining us now is one of the authors of the report, Katya Porzakansky, who covers the hedge fund industry for Bloomberg, and Fabio Savoldelli. He's adjunct professor at Columbia's Graduate School of Business, and someone we always turn to about hedge funds. So, Katya, give us the top line. Who were the winners and losers?
Well, it was all over the place, really, and it kind of depended on what strategy you were in, which ones fared better than others, but a lot of the marquee names didn't perform so well. So we saw kind of flattish and double-digit losses from a lot of the marquee names, like John Paulson. He's down 16% this year in his event-driven fund. He's down 27% in his merger arb fund. Ray Dalio is basically flat in his flagship Pure Alpha 2 fund. So it's pretty all over the map, and it's kind of hard to follow the data because it's such an opaque industry. So you can't just map everything out as you could with other types of industries. But it feels from everyone that we're talking to that you have a lot more big winners and big losers than people concentrated in the middle.
Were there any patterns at all? For example, you mentioned event-driven funds as opposed to macros. Were there any categories that tended to do better?
Yeah. Well, macro is definitely a bad year, and macro has been kind of a disappointing strategy because you haven't had that dispersion in interest rates and currencies that you would have wanted, but that could be turning around now. A good year was in distressed debt, obviously, because we had that rally in energy prices. So whereas last year was kind of disappointing for distressed debt investors, this year was a great year for distressed debt investors. We had excellent double-digit returns for Marathon, for Mudrick, Canyon was up, so it was a good year for them.
This is how tough 2016 has been. I could have told you we're going to get President-elect Donald Trump. I could have told you that the UK would vote to leave the European Union. And many people would have put the wrong trade on. Chris Benodi, who's funding your story, down 48%, campaigned for the UK to leave the European Union, then aggressively stayed short UK equities. It's been tough. You can make the right call, then make the wrong trade.
You can, and in a lot of the macro funds cases in general, what actually ends up happening is that you actually have $100 worth of capital, and $10 is at this desk, and $10 is at that desk, and each one of them has a different view of Brexit. And at the end, what we've seen with the really large macro funds is mush. And so these guys are flat, up a little bit. Brevin Howard managed to turn the year around, but up 2 instead of down. Right. You know, it's not what people were into. When we look at somewhere like a Rubicon, where it's a smaller single manager making the decisions, it is a much more successful and much more, dispersion. They're taking a view and they're getting paid for it. And I think that dispersion is going to be the big topic going forwards. The difference between the winners and the losers within the stock market is at a high, and I think that's going to be something that over time is going to really make the difference. I think it's kind of put up or shut up for a lot of hedge funds right now.
So, Katya, when I read your piece, one of the questions I had was overall, how did the hedge fund industry do? And we have a graphic here to show that it's sort of a tale of two directions. On the one hand, the overall value of the assets under management grew just because there was appreciation in the investments. Right. Those are those yellow and orange lines there. But on the other hand, there was actually a net outflow of funds. I mean, more people were taking money out of hedge funds than were putting them in. So what does that say about the health of this industry?
Well, yes, and it's the first time there were withdrawals, net withdrawals in several years. It's not great, obviously, but still, for all of the to-do that there has been this year about how miserable the hedge fund industry is and how everyone had something to say about how bad it is and what a waste of money it is. 2% of assets are what were withdrawn. That's not a ton, right? So at the end of the day, I'm not sure you can really say that it was a horrific year.
You'd think by some of the headlines you'd seen and read this year that the industry was dying. dying aggressively.
Well, actually, what you might think is that actually maybe people don't like us. I don't know. There's that subtle undertone. Look, as Katya pointed out, it's down about 2% for the year. The guys in the mutual fund business would cut their left arm off for 2% decline in AUM this year. They are seeing the assets. Active management is seeing massive declines in multiples of what we're seeing in the hedge fund space. So in reality, the investors, I think, are getting the joke better than many of the critics.
Let's talk about why it might get better next year. Sure. Every single day we talk about this transfer from a focus from fiscal policy away from monetary policy. Is that going to be good news for these guys?
I think what you've got is a whole series of things that are in play that are going to differentiate good stocks from bad stocks in the equity long-short space. You've got healthcare is in play. That's 16% of the U.S. economy. You have, as you pointed out, is monetary policy going to offset fiscal? Get these questions right. Get the immigration question right. Get any number of questions that facing Trump and on which are now in play, and nobody really knows what he's going to do. Get those right, and you're going to have an extraordinary year. Get them wrong, and you're hurt.
Sorry, David. Is that your sense, Katya, as well, from the conversations you're having?
Yeah, the sense is that it could be a turnaround year. You will have dispersion in healthcare stocks, tech stocks, mining, steel. You'll have opportunities, financial consolidation, so small, mid-sized banks. And then, of course, for macro funds, it could be the year of a comeback. You could play with currencies, rates. You'll have global growth differing in various parts, rates, all of that. But you have to be nimble. And you can't be a monster. It's going to be benefiting the smaller guys who are more focused, more nuanced. They can really pick, because if you're a ginormous fund and you can only get into the big stocks, you're going to have the same problems that you had with crowding that you had this year.
So people in general may not like hedge funds, but some people do. And they, for example, are Steve Mnuchin, who comes from the hedge fund industry, is going to be the Secretary of Treasury. And for that matter, Donald Trump himself, we know, has been at least in some of the hedge funds. So what difference will that make, that you'll have some not just sympathizers, but actually people who have participated in the marketplace running the government?
Well, there's two phases on that. I feel great comfort in that, actually. I think it's good to have people with that experience. You know, one of the big questions out there in front of a Mnuchin is going to be, what do you do with Freddie Mac, Fannie Mae? All of those questions are up there. This guy has run one of those banks. He has a pretty good feeling for what is the right thing to do, and he's expressed his views, on that. I think it's actually worth doing. And, people say, well, he's not running a hedge fund. You're right. Rubin ran the arbitrage desk at Goldman Sachs. That's nothing like a hedge fund. It's, a fine, white shoe, respectable firm. It's somewhat the same thing, done in a different way. So we've had people there for some considerable period of time that actually are experts in that space.
So we can't talk about hedge funds without mentioning Platinum. There was a big announcement from the U.S. Attorney for the Eastern District of New York over in Brooklyn yesterday, indicting the people who run Platinum. And from the allegations, not proven, but the allegations, it sounds like a straight-up Ponzi scheme.
Well, it devolved into a Ponzi scheme, which is how these things do. I mean, initially it was a fraud in the mark-to-market question, and then devolved into, we've received these 10 redemptions. How do we pay this guy off without all of this coming down, which is what happens when your mark-to-markets are bogus. But I think the central question there is, people, when we look at that track record, it's got, once again, another fund with, almost no declines. It's an arbitrage fund. Arbitrage is not Latin for free money and no risk. And this guy's claiming to return about 6 times the S&P during a time period where the S&P's had some of the greatest returns ever.
You get that comparison chart, and the line's just there, and it's the S&P, and then this other line just does this.
And you just
ask a question, haven't you?
You might, right? You might. And then you also look at, and if I may, the single most important thing in any manager is the character of the manager. These people were indicted for paying off rabbis to give them the names of dying people, and then taking out, semi-bogus insurance policies on these dying people. They gave the dying people $100, and afterwards, when asked, the guy says, well, 30% annualized returns just proved too tempting for us, I guess. No, you have no moral compass whatsoever. You're investing with sleazy people.
Well,
Don't
we
do
can
that.
recognize that in retrospect, but at the time, this is not like it's a boiler room operation buried somewhere out in Brooklyn. Brooklyn. I mean, this is a prominent member of the financial community.
I mean, it's the second largest after Bernie Madoff. You're absolutely right on that, David. But the flip side on that, honestly, is this is a guy who's also, you know, an indictment for having, an indictment for having ripped off dying people through a corrupt rabbi is also public opinion. You might want to take that into consideration before you get in bed with the guy and give him your money. Just a thought.
There's some good advice, Jonathan.
Yeah.
Okay, we want to say thank you now to Bloomberg's Katya Porzakansky and to Fabio Savoldelli. He's adjunct professor at Columbia's Graduate School of Business. Jonathan.
Thanks, David. I just want to update our viewers very quickly on the headlines from a news conference in Berlin with German police. They just wrapped up just a minute ago, giving an update on yesterday's attack on a Christmas market in the city. Police just saying they are not yet clear whether the suspect was the driver in the attack. That news conference in German. You can follow the latest, of course, on the Bloomberg at Live Go. We'll keep you updated, of course, on this developing story, David.
It's a terrible scene, isn't it, as we look at that? Coming up, Citigroup says OPEC's cuts could send oil above $70 a barrel in 2017. We discuss how realistic that really is. This is Bloomberg.
This is Bloomberg Daybreak. I'm Emma Chandra here in the Hewlett-Packard Enterprise Green Room. Coming up, Mohamed El-Arian, Allianz Chief Economic Advisor and a Bloomberg View columnist.
This is Bloomberg. I'm David Weston. Citigroup said just today that the most recent OPEC supply cuts could send oil past $70 a barrel next year. For more on just how realistic that number is, we are joined by Bob Yager. He is Mitsuo Securities Director of Futures. Welcome back to the program, Bob.
Thank you.
So start with that Citi call. And in fairness, what they said is mid-60s, it could go as high as 70. Do you think that's right?
Well, it's crude oil. Anything's possible on any given day, of course. But I would like to point to the forward curve. December 2015, as far out as you get, the price is $55 in WTI. The price is $57 in the Brent, the international benchmark. So it would have quite a long ways to go until it got there. There are both headwinds and tailwinds in the energy market right now. Obviously, the OPEC deal was larger than expected and very supportive of the market. But you still have the threat of cheating. You have an oversupply situation here in the United States, especially at the NYMEX delivery point at Cushing. And you have a strengthening dollar that are all serving as headwinds for the energy market.
So let's take each one of those in turn. First of all, the possibility of cheating on the deal. We do seem to have an alignment of interests here, not just within OPEC, but also including places like Russia, who seem to really want to get the price up. Does that reduce somewhat the traditional risk of cheating? Because as I recall, OPEC's never quite had 100% compliance.
And I don't think anybody expects 100% this time either, but any cut is an improvement over the situation that existed last year at this time. And you have Russian cooperation also. I think that it's a shaky situation, though, and what's going to happen moving forward from here is you're going to have monthly reports on if they are cutting or not cutting. You're going to have the IEA, that's the International Energy Agency. You're going to have the OPEC folks. Everybody's going to have a report whether they are cheating or not and to what degree production is moving forward. How close it is at 32.5 for the OPEC folks. That will cause volatility in the market moving forward here. So we will see peaks and valleys. You also have the weekly energy report from the U.S. That will also add to the volatility in the market.
Another thing you have is the IPO of Aramco that should be coming up here. That gives the Saudis quite a powerful incentive to try to get it up and to really take a lot of the cuts on their own back. Does that make it more likely that you'll get some real compliance?
I think as far as the Saudis are concerned, it does. And it looks so far, they're the first ones out of the gates to announce that they have contacted their customers and they have made cuts. Interestingly, they've made those cuts mostly to North American customers. We are the source of the largest oversupply. The NYMEX contract is well oversupplied at Cushing. They would like to supply less crude to the United States and watch that supply burn off.
Bob, this year, it's easy to forget that on Brent we had a 27 handle earlier on this year.
Yes.
It's been forgotten very quickly. The price of crude has doubled. My question to you is quite simple. What's changed?
Well, there was the OPEC situation. If you remember correctly, when we were at $27, the day that we traded $26.50 in WTI, the oil minister of the United Arab Emirates came out and said, we are going to meet down the road here. We're going to try and turn the situation around. That was the low. The low was made on the day he made that comment. That comment lifted the market on that day. And to simplify the situation, it's been an OPEC steamroller, public relations bonanza ever since then that has bid the market.
Okay, thank you so much, Bob. That's Bob Yager. He is Mitsuo Securities Director of Futures. Jonathan.
David, thank you very much. Let's pivot towards the FX market with a little bit of urgency, shall we? Because the dollar index kisses a 14-year high. So many moves I need to talk about in this space right now. There we are, up 0.5% on the DXY. The euro with a 103 handle, a 2003 low, and dollar yen trading at 118, up about 0.9% in today's session alone. I want to get some more perspective on the Bank of Japan deciding to maintain its stimulus plan earlier today. Bloomberg spoke with Bob Hormats, Kissinger Associates Vice Chairman, about his biggest concerns for the country.
Very hard for them to use additional fiscal policy, so they're really more or less trapped in monetary policies. Probably the only thing they've got. They could do more reforms, more structural reforms, but as Tom pointed out, opening up to more immigration, that's not such an easy thing to do. I think that actually TPP would have helped them expand trade with not only the United States but the other countries that are in TPP. That would have stimulated the economy, but we don't have that now. I do think a bilateral U.S.-Japan trade agreement somewhere down the road might be useful, but they really now are in a position where it's awfully hard to get out of this period of substantial weakness.
Bob, as we look back on 2016, a lot of monetary acrobatics from the BOJ. What's worked, what's not?
Well, Kuroda has certainly tried. He has the most ambitious monetary policy of anyone, including Yellen and Draghi. Very little of it has worked. That's the fact. It's better than it would have been. I mean, you can certainly say that. And there have been times when inflation has picked up a little bit and growth has picked up a little bit. But they want to get inflation above 2%. This is the problem. Now, the weakening of the yen that we've seen over the last couple of months actually should help somewhat. It will stimulate exports, and it will be mildly inflationary, and so they can rely on that a little bit. But getting to 2% is going to be very, very difficult, despite the fact that Kuroda is doing the very best he can.
That was Bob Hormats, Kissinger Associates Vice Chairman. Japan seemingly the winner out of all of this, it seems, David, with a weaker yen, etc. Time now for the other stories making headlines at this hour. Here's Emma Chandra. Good morning, Emma.
Good morning, John. Facebook has been sent an antitrust complaint by European Union regulators. They say the social network may have misled them when it sought approval to buy the WhatsApp messaging service. Facebook faces fines of up to 1% of annual sales for providing, quote, incorrect or misleading information during the 2014 EU review. It has until the end of January to respond to the European Commission. The EU says approval of the merger is not at risk. BlackBerry is raising its fiscal 2017 profit outlook and posting a slight profit in the third fiscal quarter. The results suggest its bet on moving further into software and away from handsets is paying off. BlackBerry now expects to post a full-year profit, up from a prior range of break-even to a 5-cent loss. Meanwhile, quarterly EPS, excluding some items, was 2 cents, a penny better than estimates. And Uber lost more than $2.2 billion in the first 9 months of this year, even after exiting China. That's according to a person familiar with the matter, who says the ride-hailing company lost more than $800 million in the third quarter, not including its Chinese operation. But they say revenue is still growing. It's said to be on track to exceed $5.5 billion this year. And that's your Bloomberg Business Flash. I'm Emma Chandra. This is Bloomberg. John.
Hey, Emma, thank you very much. Coming up on this programme, then, Nike, the worst performer on the Dow so far this year. The company reporting earnings after the close today. So how is it stacking up against the competition? That's next in The Numbers Don't Lie. From New York, this is Bloomberg.
This is Bloomberg. I'm David Weston. The S&P may have gained more than 10% this year, but Nike has been heading in the opposite direction, falling more than 18%. The United States is Nike's largest market, and analysts and investors worry that it's losing market share to Adidas and Under Armour. Let's look at the numbers in today's The Numbers Don't Lie. Now, since the recession, Nike had been on a roll, averaging annual gains of 26%. But as you can see here in 2016, it has been a very different story. And analysts aren't showing much optimism for the future, taking the 12-month price target down since the beginning of the year. On Halloween, Bank of America downgraded Nike, saying you can see that trail off there at the end of the earnings expectations. Bank of America took the earnings down about Halloween time for Nike. One of the things the analysts are focusing on is future orders. Now, Nike says these orders aren't a proxy for revenue, but orders in the United States were up only 1% in the fiscal first quarter, and you can see the contrast to what had been there before. Nike future orders are growing much more strongly outside the United States, led by China, generating profit margins of over 30%. China generates a quarter of Nike's total operating income and is the biggest growth driver. Looking at the individual segments of Nike's business, it's showing consistent growth in shoes for running, training, and basketball, not so much in soccer. In basketball, it dominates the United States market with a 90% market share, and that's driven by endorsements from big-name celebrities like Kevin Durant. We'll be following Nike's results when they are released after today's U.S. closing bell, but that's the numbers don't lie for Nike. Jonathan.
David, thank you very much, sir. Coming up, more on the top story here at Bloomberg. Police say the assailant in a Berlin attack may still be at large. We will have the latest from Berlin up next on this program. Plus, Mohamed El-Erian, Allianz Chief Economic Advisor, joins us to discuss what is happening in the equity market and beyond. Stocks looks like this. Futures firm are up 48 on a Dow, positive 6 on the S&P 500. In the FX market, what a session. Dollar strength, 118 on dollar yen, a 2002 low on the euro. This is Bloomberg. Good morning and welcome to Bloomberg Daybreak on this Tuesday, December 20th. For our viewers worldwide, I'm Jonathan Ferro alongside David Weston. Alex Steele is off today. Here are the headlines in the markets for you. 117 points at the close yesterday, away from Dow 20K. Futures positive up 51 on the Dow today. S&P 500 futures positive 6. In the FX market, big headline. Dollar index back towards a 14-year high, and a euro dollar drops back to a 103 handle, David.
Jonathan, here's what you need to know at this hour. Christmas attack. A truck plows into a Christmas market in the heart of Berlin, killing at least 12 people. Chancellor Angela Merkel tells the nation in a televised address that we must assume it is terrorism. Police say assailant in Berlin attack may still be at large. Kuroda stands pat. The Bank of Japan capping a momentous year with an upgrade to its outlook on its economy, but keeps its yield curve and its asset purchase programs unchanged. The year in hedge funds. Who were the winners and losers in the hedge fund world in 2016? And what will it mean to have one of their own running the Treasury Department? We have the scorecard, and that's what you need to know at this hour. And now we want to turn back to that lead story about the attack in Berlin. World leaders speaking out about yesterday's tragedies, not just in Berlin, but also in Ankara, Turkey, with Russian President Vladimir Putin vowing to step up the fight against terrorism after the assassination of his ambassador to Turkey. And German Chancellor Angela Merkel vowing that the full force of the German law will be used to bring to justice the perpetrators of the attack on a Berlin Christmas market. We spoke to an ally of Merkel's, CDU member Elmar Brok, earlier.
We have to fight terrorists, not migrants. And we have much less migrants in Germany in the last months than we had last year. So on that level is something done. But please let not mix up terrorism and migrants.
Here now to take us through more of the geopolitical effects is Bloomberg's Matt Miller in downtown Berlin and Bloomberg's Simon Demirkan. She is from our bureau in Istanbul. Matt, I want to start with you in Berlin. So it's all fine and good for Mr. Brok to say there's a difference between migrants and terrorists. Perfectly true, perfectly fair. At the same time, Angela Merkel, even in her address, addressed the possibility that these could be migrants. What are the political effects for Angela Merkel if that turns out to be the case?
Yeah, absolutely. It's not a great thing, and that's why her spokespeople like Elmar Brok are out there trying to make that point. But the problem is, if this kind of crime is being committed by people that the German government has taken in because Angela Merkel has allowed the German government to take these people in, give them asylum and give them safety. It's a real problem for the CDU and for the government politically, obviously. You've already seen the right-wing party, the AfD, come out and say that there's blood on Angela Merkel's hands. And you've also seen politicians from other countries. One of the leading party members from Poland this morning said this proves that they were right not to let immigrants in, and that Angela Merkel's policies were a real problem.
And beyond that, Matt, when these sorts of tragedies occur, it isn't long before people start to ask, where were our security forces? Why couldn't we have intercepted that? Is there a beginning, at least, of that sort of questioning of the administration over there?
Well, absolutely. And also the point has to be made, David, that we still don't really know who did this. You know, the police did take one suspect into custody this morning. We're starting to see reports that they may have taken the wrong guy into custody and that the perpetrator may still be at large. So that's one of the main problems. And then, of course, the problem that you point out, where was the protection to begin with? I do want to say that when you go to these Christmas markets this year, there is a strong police presence. You do see police here standing around with sidearms as well as with automatic rifles, but they have vowed now to step up security and to beef up the presence of the police at Christmas markets going forward.
I want to turn to Simon Demirkan now and talk about the tragic death of the Russian ambassador to Turkey yesterday. Simon, have we got a firmer understanding of the motives of that individual? And for relations between Russia and Turkey, critical at some points over the last couple of years, are we seeing signs that actually they're going to stay together?
Well, absolutely. Both the Russian and Turkish leaders are both sending a message loud and clear, saying that this will not ruin relations between the two countries and they will step up their fight against terrorism. Now, Turkey's foreign minister is actually in Moscow right now. He met with the Russian foreign minister, and again, they gave the same message. They will not let this incident, this assassination, ruin relations. Of course, now what we've heard about the person who shot the Russian ambassador to Turkey late last night at an art exhibition is that he was a Turkish police officer, part of the riots police. And Turkey says they're investigating if he's part of a particular organisation. Now, also, I just want to mention that Turkey and Russia do not want to go back to the late 2015 when they had a diplomatic row erupt when Turkey shot down a Russian jet on the Syrian border. As of late, though, they've been enjoying close relations.
Simon, thank you so much. It's Simon Demirkan reporting from Istanbul. We also want to thank Matt Miller reporting from Berlin. Jonathan.
Yeah, I want to turn to the FX market now, David. We've seen some big moves. The dollar index getting back to a 14-year high. Christmas Day of 2002 was the last time the euro was this low. The euro trading at 1.0359 at the lowest since those levels as the political and financial uncertainty in the European Union continues to mount. Joining us now from London is Jim Mellon, Bernard Bray Group Chairman, who in November predicted that the euro would splinter within the next 5 years. Jim, great to have you with us on the programme. Let's just start with the politics, front and centre. How important will be the political fragmentation, the populism that is just sweeping Europe in a big way over the last couple of years? How important will that be to your call?
Well, I think that the Italian referendum gives us an indication of what we're in for the next year or so, with a sort of big cycle of elections coming up throughout Europe. And Italy is likely to be the first country to leave the euro. They won't announce it in advance, and if Greece leaves, they won't announce it in advance either. But one of them is, in my opinion, almost certain to have to leave the euro in the relatively near future, and by that I mean in the next couple of years, because the euro project is completely unsustainable when you don't have a common fiscal policy and you have everyone trying to pursue their own vested interests as opposed to the common interests. So this is not the Bank of Japan at work, and it's not the Federal Reserve at work. This is a very, very difficult operation that the ECB has to conduct to keep the euro intact.
Well, Jim, let's talk about where
the euro is cheap.
Let's talk about the pressures for where that comes from, away from the euro itself. You and I could have had this discussion 4 years ago. In fact, I had this discussion thousands of times 4 years ago, and the euro is still intact. That was a financial issue, and the ECB, in many ways, addressed that financial issue, supported the debt market, and these countries continue to grind, continue to stumble on. This is a political issue now. Can you draw a distinction between those two things and why this is the end game, because it's about politics and not just about the financials?
Well, I think the politics are driven by the economics and the financials, and the fact is that we have very low labour mobility in the European Union, and so as a result we've got 50% youth unemployment in several countries in southern Europe, and eventually people are just getting tired of that, and that's why you're seeing this populist uprising through the ballot box, at least to begin with, so that's driven by finance. The question is what happens to the euro when it does splinter, because obviously if one of them leaves, and particularly if it's Italy, then I think that's the end of the euro project as we know it. And we don't know what the future shape of the euro is, which is, I guess, why people are selling it at the moment as opposed to buying it, because it is extremely cheap from a purchasing power parity basis. And, if I was a brave guy, I'd be buying the euro now against the dollar rather than selling it.
So Jim, there's a pop song here in the United States, been around for quite a while, called Breaking Up is Hard to Do. It's one thing to say it makes sense for the euro to break up, but really what would the mechanism be for that? We're seeing this right now with Brexit. It's fine to vote you're going to leave, but when you actually get into the mechanics of how it happens, how could you literally unwind the euro?
Well, it's going to be a unilateral decision by a country. I don't think it will be in consultation with Germany or in consultation with the ECB. For instance, if Italy decided to leave, they wouldn't be telling us about it, and they wouldn't be telling anyone else about it. They would just do it. And the political pressures there are going to come sometime next year when they have their next cycle of elections in Italy, and the Five-Star Movement may do very well in that process. So I think that's a major fracture point, basically, potentially, for the euro. Well, we won't be told about it. There won't be any negotiations like the Brexit negotiations. It will just happen. And that will mean large-scale default nationalisation of the banking system, system, and probably a lot of other banks around the rest of Europe having to be nationalised or bailed out. There'll be depositor bail-ins. It'll be chaotic, but it will be much better for Italy. And, you know, if you're an Italian, you haven't had your industrial production increase since 1994. You've had no increase in economic growth since 1998. It's been an absolute disaster, the Euro project for Italy.
Okay, Jim, thank you very much for being with us today. Jim Mellon, he's Bloomberg Group Chairman. And now let's get an update on what's making headlines outside the business world. For that, we turn to Emma Chandra. She's here with Bloomberg's First Word News. Emma.
Thank you, David. Chancellor Angela Merkel addressing the German people today in the aftermath of yesterday's fatal truck incident at an East Berlin Christmas market. In a nationally televised statement, Merkel pledged the full force of the law will be deployed to clarify every detail.
Noch wissen wir vieles über diese Tat. There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack.
12 people were killed and a further 4 injured when the truck rammed into the crowded market. Berlin's police chief says it isn't yet clear whether the man detained in the attack was really the driver and that an assailant may still be at large. Michigan's Attorney General is announcing more criminal charges in the Flint water investigation. Bill Schuette has scheduled a news conference for later today. 9 people so far have been charged in an investigation of the city's lead-tainted water system and an outbreak of Legionnaire's disease. They include 8 current or former state employees and a Flint water plant employee. And President Obama is preparing to block the sale of new offshore drilling rights in much of the U.S. Arctic and parts of the Atlantic. That's according to 2 people familiar with the decision, who say Mr. Obama will invoke a provision in a 1953 law that gives him wide latitude to withdraw U.S. waters from future oil and gas leasing. Global news, 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. John.
Hey, Emma, thank you very much. In the markets then, futures firmer and European equities trading at 2016 highs. Let's get you some stock movers. Let's get across to Abigail Doolittle.
Thanks so much, John. Well, we do have some big movers here in the pre-market. First up, Acadia Pharmaceutical shares are absolutely soaring on the news that the company's Alzheimer's drug received positive top-line results in a phase 2 study. Now, Alzheimer's does afflict $5.4 million Americans, and there has not been a successful treatment yet. More than 100 compounds have been tested unsuccessfully, so perhaps investors are pretty positive around the possibility that this one could work once it goes forward. As for Regeneron, shares are also trading higher in an upgrade over at Credit Suisse to outperform. This ahead of the release of a skin condition drug. The firm sees more than 25% upside potential for the shares of Regeneron. And finally, turning to 2 chip stocks, we have AMD and we also have NVIDIA trading higher. AMD was upgraded to buy over Mizuho. The analyst is positive on opportunities around deep learning and artificial intelligence. And NVIDIA was added to Goldman's conviction list. Now, NVIDIA is up in a big way this year, at more than 200%, but AMD on the year, amazingly, is up 282%. Absolutely amazing. Just a big winner there, David, on the year.
Thank you, Abigail. Now, coming up, we turn back to the tragic attacks in Berlin and Ankara yesterday and hear from a prominent former U.S. diplomat about what it means for Europe and for markets. That's next. This is Bloomberg.
From New York, this is Bloomberg, and here's the big move in the FX market. The DXY, the dollar index, the highest since December 23rd, 2002, up 0.4% on the session. Goldman Sachs out this morning forecasting an additional 4.3% rise in the trade-weighted dollar through 2017. So the consensus view quite clear, David. More dollar strength set to come throughout the year next year. Though the consensus view last year was very wrong as well. But I'm just laying it out there. This is the base case.
It's really turning into one of the major, if not the major story of the end of the year.
Yeah,
it's the strength of the dollar.
Maybe liquidity's thin today, given the end of the year, but momentum terrifically strong.
It's extraordinary. So now we want to turn back to that tragic attack in Berlin overnight. German police are hunting for the driver of a heavy truck that deliberately plowed into a Berlin Christmas market after the police have voiced doubt now that the suspect arrested for Monday's terrorist attack was the one responsible. Chancellor Angela Merkel is pledging to use the full force of German law to bring the perpetrators to justice. For more on this developing story, we're joined on the phone by Nick Burns. He's former Undersecretary of State, also ambassador to NATO, and now a professor at Harvard's Kennedy School. He joins us on the phone from Cambridge, Massachusetts, and Harvard today. Thank you, Ambassador Burns, for being with us.
Thank you, David.
So give us some larger sense now. There's a lot we don't know about who did this, why they did it. Angela Merkel said we have to assume it's terrorism. But, Nick, put this in a broader perspective about what this means for Germany and for Europe.
Well, David, this is a terrible, tragic attack. It's the latest in a series of terrorist attacks in Germany this year, 4 or 5 in the last 6 months alone. There's a lot of unease and disquiet in Germany that the Islamic State could possibly be behind many of these attacks. We don't know who was responsible for last night's attack, don't know for sure. But as the Islamic State is pressured in Mosul, where it will soon lose control of Mosul sometime in the next few months, as it's going to be pressured in Raqqa, northern Syria, its base, I think we're going to have to expect that they're going to undertake these terrorist attacks, not just in Germany, but elsewhere. They've had attacks in Turkey as well. And unfortunately, we're going to have to anticipate this and intensify our counterterrorist cooperation with the Europeans and with the Turks.
Well, Ambassador, you took us to Turkey, so let's go there. There was another tragic event in Turkey yesterday, but unfortunately we've had a series of tragic events, attacks within that country over just the last couple of weeks, the last 10 days, I believe, to be precise. You've seen the reports of the firings of senior officials by President Erdogan over the last couple of months since the attempted coup. How much damage do you think there has been to the security apparatus within Turkey since then?
Well, Turkey, as you know, is a deeply divided country between the secularists, the people who believe that Turkey should remain secular as it's been for, well, gosh, nearly 90 years, and President Erdogan, who believes obviously that Islam should be part of the government, who has turned Turkey towards Islam, and that has divided the military and the security services. You saw the attempted coup against Erdogan in July. There's been a tremendous crackdown. He's arrested 65 to 70,000 people, many of them in the security services. So the Turks have also suffered terrorist attacks. So this all adds to the problem that Turkey and some of the European countries are facing as both the Islamic State, but also the Syria situation adds fuel to the fire.
So where you are taking us, Nick, I think is, have they hollowed out their security services in Turkey to the point where actually this could affect President Erdogan's situation with his own people? At some point, they're going to become pretty uneasy about his leadership.
Well, you know, he is increasingly an authoritarian leader, particularly in the crackdown after the coup in July. He's taken a number of anti-democratic measures. He is aligning himself a little bit with President Putin right now. And you saw the very quick phone call that Putin and Erdogan had yesterday following the assassination of Ambassador Karlov in Ankara. They are both dedicated now, they say, to fighting terrorism. So he's an embattled leader. I think one of the big challenges for Donald Trump after January 20, can he create some kind of relationship with trust with Erdogan? Because whether it's Syria or Iraq, certainly Europe, Turkey's a pivotal country, the second strongest country militarily in NATO.
Okay, Nick, thank you so much. That's Nick Burns. He's former ambassador to NATO and now a professor at Harvard's Kennedy School, joining us from Cambridge. Now, coming up, Jefferies out with its earnings guidance earlier, saying its fourth quarter profit quadrupled as revenues from trading stocks and bonds more than doubled. We'll dig into the results and what they mean for Wall Street. That's next. This is Bloomberg. This is Bloomberg. I'm David Weston. Earlier this morning, Jefferies Group said its fourth quarter profit quadrupled as revenue from trading stocks and bonds more than doubled. The investment bank's trading results often foreshadow performance in bigger Wall Street firms. Bloomberg's Laura Keller has been following this story for us. We're also joined by Gerard Cassidy. He's head of U.S. Bank Equity Strategy for RBC Capital Markets with his 2017 bank outlook. But Laura, let's start with you on the Jefferies reports. Put this in some perspective. They're comparing year over year. They had a pretty bad year last year. But how good is this?
Right. So as you said, David, they did quadruple on one of their revenue lines, but you have to keep that in perspective that it was really compared to a very poor comp from the previous year. So if you look back for this whole year, Jefferies has had a bit of a struggle. The first quarter, they did really quite poorly. There was a loss of $166 million. So in the end, they were actually able to post a $15 million gain for the year. So it's sort of amazing that, even after all of this turmoil in the first quarter, when you had all these things happening in leveraged capital markets, which is a really big business for these guys, that they were able to still pull off a pretty good year.
Why is fixed income still lagging at Jefferies? Why are they still struggling there?
So for Jefferies, they have two things going on there. First of all, they have a very large distressed debt desk, and that was something that really behooved them in a bad way from last year that they're recovering from. And this year, as I understand it, it's been getting better, but it's still a little bit rough going. And then you also have a leveraged finance business, which is very large for these guys. And that, over this last year, has had some sort of fits and starts. And sometimes, in other years, they've relied on trading in equities to help them out, and that hasn't really happened necessarily all these quarters of this year.
So Gerard, we're reminded that we're on the cusp now of bank earnings here after the first of the year. What, if anything, do the Jefferies numbers tell us about what we might look forward to from the U.S. banks as they start to report in January?
I think what we're going to see in the capital markets side, a couple of the big banks have already come out and said that the trading revenues year over year should be up around 15%. And so sequentially, it's always a weaker quarter, the fourth quarter versus the third quarter. But we're expecting some good results following the election. As we all know, the trading volumes really picked up.
Well, Gerard, let's go through your list of stocks to buy. I'll shorten it and just say pretty much everything. And then it says revenue growth, higher net interest margins, higher capital returns, stable credit quality, better capital markets, accelerating loan growth. The risks. A Trump administration flop.
Yes.
What does that look like?
Right now, it's quite low. I mean, the early stages of his cabinet picks appear to be very strong. Now the execution has to come through for these cabinet folks. Mnuchin at the head of Treasury is very positive for the banking sector. So if we get this growth that they're projecting, it's going to be very positive for the banks. But if they cannot deliver on it, it's going to be a challenge.
So, Gerard, for the banking sector, but there are some analysts who are saying, wait a second, there's a difference between the big banks and the smaller regional community banks, and the fact that there might be relief on the way, particularly on the regulatory side. For the smaller guys, the big guys might get left out of that.
I would agree with you, David. I don't expect a lot of relief for our biggest banks. The so-called GSIB banks, there's 8 of them. There won't be much relief there. There'll be some, but the real relief comes with the banks with less than $250 billion in assets. That's where we could see a lot of relief for these guys.
You've still got buy ratings on a lot of the big banks, though. Why, given the rally we've already had?
Yeah. If you look out over the next couple of years, and if we assume that there is lower corporate tax rates, higher interest rates, and greater trading revenues, these big banks are going to deliver some big numbers over the next 2 years. But if you're trading just through the end of this year, I would agree with you. The stocks are rich, but longer term, I think it's still very attractive.
Okay, many thanks to Bloomberg's Laura Keller and to Gerard Cassidy's RBC Capital Markets. Now, coming up, high fees and low returns. Hedge funds under pressure. So who were the winners and losers over the past year, and who will come out on top under a Trump administration? The 2016 hedge fund scorecard is next, Jonathan.
Yeah, about an hour away from the open then. Let's get you up to speed on the markets very quickly. Futures firm are up 59 on the Dow, positive 6-7 points on the S&P 500. At yesterday's close, we were about 117 points away from Dow 20K. Switch up the board. Here's your headline. In the FX market, a dollar index that reclaims a 14-year high, with dollar yen at 118 and euro dollar at 1.03. In the bond market, treasuries on offer, yields up 3 basis points to 2.57. Goldman Sachs targeted 2.75 for 2017. We'll debate. That's next from New York. This is Bloomberg. This is Bloomberg Daybreak. I'm Jonathan Ferro. Second trading session of the week, of the penultimate trading week of 2016. Futures positive, up 54 on the Dow. Up in Europe as well. The Stock 600, the region's equity benchmark, trading at a 2016 high. Switch up the board very quickly. Here's the situation in the other asset classes. The dollar index that kisses a 2002 high, 14 years. That's the dollar strength that we've got at the moment. Dollar yen at 118, euro dollar rolls over to 1.03. Treasuries yields up 4 basis points to 258 on a US 10-year. David.
And Jonathan, here's what you need to know at this hour. Christmas attack. A truck plows into a Christmas market in the heart of Berlin, killing at least 12 people. Chancellor Angela Merkel tells the nation in a televised address that we must assume it is terrorism. Police say the assailant may still be at large. Kuroda stands pat. The Bank of Japan capping a momentous year with an upgrade to it in its outlook for the economy, but keeps its yield curve and asset purchase programs unchanged. The year in hedge funds. Who were the winners and losers in the hedge fund world in 2016? And what will it mean to have one of their own running the Treasury Department? We have the scorecard, and that's what you need to know at this hour. Jonathan.
Let's begin with that, shall we, David? We spoke earlier to Columbia Graduate School of Business adjunct professor Fabio Salvadelli, who thinks 2017 may prove to be a better year for one type of fund.
When we look at somewhere like a Rubicon, where it's a smaller single manager making the decisions, it is a much more successful and much more, dispersion. They're taking a view and they're getting paid for it. And I think that dispersion is going to be the big topic going forwards. The difference between the winners and the losers within the stock market is at a high. And I think that's going to be something that over time is going to really make the difference. I think it's kind of put up or shut up for a lot of hedge funds right now.
For more, we're now joined by Bloomberg's hedge funds reporter, Katia Portokansky, who wrote Bloomberg's recent piece on hedge funds 2016, winners and losers, which, as you might expect, is pretty much the most read story on the Bloomberg this morning. A lot of interest in this. Fabio talking about the spread, winners, losers. It's super wide this year. Yeah. Why?
Well, that's a great point, and it's something that you can't really prove because it's a very opaque market, and a lot of this data that we get on returns is is through sourcing, and it's very difficult. But it does feel that way, that the spread between the winners and the losers is kind of the biggest that's been in a long time. You had really great performing strategies like distressed, and then you had not so great performing strategies like macro and long short equity. In fact, some of the biggest players out there in long short equity did not fare so well, nor did they in macro. But now the question is it time to turn it around? Is Trump going to turn it around for them? And that's what they're all saying. We had Ray Dalio coming out and LinkedIn. He wrote a piece saying that times are changing. It's going to present excellent opportunities for macro funds. Louis Bacon said the same thing in one of his letters a couple weeks ago. And Bacon rarely comes out and says anything. And he said there's going to be a sea change in opportunities for macro funds. Thing is that Alan Howard from Brevin Howard, he said something similar a year ago, that times are changing. It's going to be the year of the macro fund. That didn't pan out. So, assuming things go according to plan.
Just hope 2017 is going to be the year, right?
Yeah, it's going to be the year.
But this year, for some of the big names, it was a rough year. Some big names in your story that just jump out at you. Crispin Odey, down 48%. Yeah. Why has it been so brutal for some of these big names out there? So the things that they expected to happen either did happen or didn't happen, but they played it the wrong way. So Brexit, for example. Yeah. So Odey, he called Brexit correctly, but then the whipsaw of the market just killed him. So he was up, I think, 20% over a couple of days right around Brexit, and then it just went the other way, and he didn't play it correctly. Same with the election, though the election did help. The U.S. election did help a lot of those macro managers come in back to black, like Brevin Howard. Well, think about it, David. If I told someone around this table November 6th that President-elect Donald Trump was going to be the name we'd all be talking about in a couple of days' time, they'd say, go long treasuries, go short stocks. Exactly. Guess what would have happened to them?
Right. Yeah, exactly right. And it illustrates the point powerfully that you expect these hedge fund managers to be able to figure figure out what happens with interest rates, what happens with returns, what happens with corporate earnings. But when you have things like a Brexit vote or a Trump vote, I mean, you can be right or wrong, and it's pretty clear. It's either right or wrong. You can be on the wrong side of the trade, which is what happened, I think, with Crispin O'Day. Basically, he didn't get back in when the market rallied after Brexit. He went down on it. So is that really saying when you have geopolitical risk and political risk, as we're facing again in 2017, it's really rough for the hedge funds?
The thing is that the geopolitical risk provides opportunity. It's finally providing the volatility that they need back in the market to start making money. The thing that they keep complaining about is for the last several years, the market's just been on a tear. There's no opportunity to make money. You can't beat the S&P. So we need volatility. We're designed to perform when there's a downturn. Okay, so let's shake it up a little bit. We've got lots of elections coming up that'll provide some opportunity, some major monetary and fiscal policy decisions that'll provide some opportunity. So let's see how they do and if they're actually able to stick to what they claim, that this is going to be the chance for them.
This is going to be the year. We said that a lot, don't we? California, great to have you with us. That story on the Bloomberg this morning, of course, one of the most read stories. David.
Okay, thanks very much, Jonathan. Now, we're going to turn to the Fed and what's going on with the Fed. The Federal Reserve is poised to hike rates as the European Central Bank continues buying bonds and the Bank of Japan stands pat. The next U.S. president is emphatically pro-business, and at best, he's dubious about existing trade policies. That's a lot of mixed signals for the markets to digest. Jim Bianco is president of Bianco Research, joining us now from Chicago. Welcome back to the program, Jim. So, thanks for having me. Sort this out as we look into 2017. Really, what we want to talk about is looking into 2017. You can start with the Fed. What do you expect from the Fed? Because in their most recent decision, they said, well, maybe we're going to have 3 hikes rather than 2. What are you expecting?
Well, first of all, what you expect from the Fed is what the market price is in. The Fed has not, in the last 20 years, defied the market. So the Fed is usually in a situation where they're kind of suggesting to the market, we'd like to raise rates, we'd like to not raise rates. And then if the market agrees with them, they do it. They did last December, they did last week. So the Fed will try and push the market into allowing it to have more than 2 hikes. That's what the market has priced in. The Fed wants 3 hikes. If we continue to have this reflation trade and it looks like inflation itself is percolating, real growth is percolating, you'll get those 2 hikes, if not more than that. But ultimately, it comes down to what the market wants, because the Fed's too afraid to defy the market because of what happened in 2008.
That's what the market wants. So let's talk about what the economy is going to get. Goldman Sachs out this morning with this quote: economic slack running on empty in the US. Greater fiscal stimulus will go more, if not mostly, to inflation. So if it goes almost exclusively to inflation and not to growth because you don't tackle the issues of productivity, etc., what does that mean for asset classes right now, from bonds to equity, versus how we're actually positioned and set up currently?
I think that's the big question for 2017. We're in a reflation trade, but what are we reflating? Are we reflating real growth, or are we reflating inflation? And you're getting mixed signals from the markets. The stock market thinks we're reflating real growth, earnings are going to come back, and that's bullish. But I would argue to you that the bond market rise in yields is as much to do about reflating inflation. So which market's going to be right? Well, historically, over the last 15 years, it's usually been the bond market. I'll kind of go with the bond market. I kind of agree with what you said that Goldman said, and that is that inflation might be the thing that we're reflating. If that happens and the market realizes it's inflation, that won't be taken very well by the stock market. But if it's real growth that we're reflating, it will be taken well. So that's the big question for the beginning of the year. Which one are we reflating?
So, Jim, and to address that question, let me add one other factor in. I don't know of another time when we've had fiscal stimulus at this point in a business cycle. Typically, fiscal stimulus comes in at the low part of the business cycle. Early on, you can have real growth. When you've already got this much employment going on and you're this far into the business cycle, the real effect of fiscal stimulus could be inflationary.
That's exactly right. And I think that that's what the bond market is seeing right now, which is why you've had this relentless rise in rates. You might even throw that into what the dollar has been seeing with because it's kind of going off the rise in rates. Even industrial commodities as well, too. Things like aluminum and copper have been shooting straight up since the election. Their bet seems to be that you're right. We're just going to pile into the old Milton Friedman dictum, too much money chasing too few goods. And if we're going to stimulate, think of that as the money part of it, and it just pops out on the other end as inflation.
So here's how we're set this morning, Jim, and help me out. Treasuries on offer, the 2-year yield up 2 basis points. In line with that, you would expect the dollar to be stronger. It is. It's trading at the strongest level since 2002. Here's the difference compared to, say, how this would have worked out earlier this year. Futures are firmer. Stocks are going to be up probably at the open. How do we continue to make sense of those two things as they play out? A stronger dollar, an ever stronger dollar, yields that just keep pushing higher dramatically. These two tectonic plates rubbing against each other, but this kind of like eerily peaceful calm on the surface in equities.
Remember back to a year ago, the Fed raised rates. Everything was calm for the Fed raised rates on December 16th a year ago. Everything was calm for the 2 weeks until the end of the year. January opened up. The market had its worst January ever. At the end of the year, technicians have a phrase for this called the indicator blackout period. Markets do strange things because of year-end, year-beginning pressures. Don't read too much into it. Let's wait till we get to the first 2 weeks of January. I think you're going to see a lot of these things get resolved. Otherwise, we wind up really scratching our head going, why is the market doing this or doing that at the end of December? It always seems to have this happen every year.
Jim, you make that sound so much more technical than maybe it should be. It gets to the end of the year, people buy, then they go on vacation. That's what it is, isn't it? As I look at this market this morning, Jim, help me out. Liquidity thin, momentum strong. Is that why we're seeing a little bit more price action?
Yeah, I think that's you've got it really pretty much right about people going on vacation, and the liquidity is thin. The momentum is strong because that's the way that the momentum has been for the stock market for the last few months, and that's going to be everybody's bias. But if you go back and you look at the first trading day of January the last couple of years, it's usually one of the biggest, most volatile days of the year. So we'll see. I mean, that means it could be up huge. It could be down huge on the first day of January. So it's all building to that day right now.
Hey, Jim, great to have you with us on the program. Jim Bianco of Bianco Research, wrapping up some of the big moves cross-asset. One of the moves in the equity corporate space right now. Some breaking news for you. Fred's Pharmacy is buying 865 Rite Aid stores for $950 million in cash. Rite Aid moving higher by 6% in the pre-market. Fred's halted in the pre-market. The deal will make Fred's the third largest pharmacy chain, David, in the United States.
Yeah, I guess it really is based largely, has been, in southeastern United States, because I must say I was not familiar with Fred's. And as you say, it's now going to be the third largest in the country.
Well, I'm not going to pretend I've ever been to Fred's, David. That would be disingenuous,
You're
wouldn't
so
it?
honest.
Coming up on this programme, I've been to Monte dei Paschi, that's for sure. Can they be saved? What the Italian government is trying to do to rescue their ailing banks. That's next from New York. This is Bloomberg.
This is Bloomberg Daybreak. I'm Emma Chandra here in the Hewlett-Packard Enterprise Green Room. Coming up, Mohamed El-Erian, Alliance Chief Economic Advisor and a Bloomberg View columnist.
From New York, this is Bloomberg. To Italy we go, where the Italian government is seeking permission from Parliament to increase the country's public debt in an effort to help the nation's struggling banks, including Banca Monte dei Paschi di Siena. Joining us now from Milan is Elisa Martinuzzi, Bloomberg Managing Editor for Europe, Middle East and Africa Finance and Investing. Elisa, great to have you with us on the programme. Let's just start with the immediate news coming out of Banca Monte dei Paschi di Siena, failing to lure investors. What's the situation there as we approach that year-end deadline?
Well, that's what we're hearing. So there's a couple of days left through Thursday in which the bank is still attempting to sell shares, to take orders for stock and to take orders from investors that are willing to swap their debt into equity. And from what we're picking up, yes, these efforts are seen to be failing. And that would probably mean that the bank would have to turn to the government for some kind of backing because, yes, as you say, they have a deadline of December 31st, by which time they have to come up with this 5 billion euros.
And as they turn to the government not just planning for Banca Monte dei Paschi di Siena, it seems, Elisa, the news coming out of Italy is that they're putting together a plan for pretty much the financial system in its entirety for anyone that needs the help. $21 billion. Can you walk me through that?
Yes, no, absolutely. I mean, the devil is going to be in the detail, clearly, as to exactly what type of backing and funding the government is going to provide. What we know is the amount. They're looking, as you say, for 20 billion euros, and that would chiefly or primarily go in the first place to Monte dei Paschi. But there are a number of other banks that are in similar situations that need equity injections, including the lenders that were bailed out just a year ago in both Vicenza, Veneto, Carige possibly, that is also seeking to boost capital. So these are all banks that are needing to clean out their balance sheet, and by so doing, they're going to have to bolster their equity, and there's at the moment not enough appetite from the private world, from money managers or individual investors, to basically allow these to happen.
Eliza, on Monte dei Paschi, take us into what happens with the EU if the Italian government has to come in. What are the restrictions there? And on the other hand, the retail bondholders with the so-called bail-in, the voters, the depositors who might actually have to take a haircut.
Well, this is what we'll be focusing on in the next few days, figuring out exactly what's on the table, because, as you point out, there are rules that spell out how governments in the EU can intervene to bolster banks, and they're quite specific rules that largely see existing bondholders in particular and equity holders taking a hit if government puts up money. And as you point out, in most of these banks' cases, that would mean a lot of households that have traditionally bought bank debt in Italy. So the format and the magnitude of the hit will clearly be important, but also what plan the government can put in place to either help refund some of these bondholders, particularly if they were missold the notes in the first place, or potentially provide some kind of cushion before the investors even take the hit. This is all going to be hammered out, we expect, over the next few days, with clearly the European Commission playing a big role in what exactly Italy is allowed to offer.
Bloomberg's Elisa Martinuzzi joining us from Milan for the latest on the Italian banks. Thank you very much. David, this situation, back in the financial crisis when these rules did not exist, there was an open goal there to fix the banks, and the Italian government didn't take it. They were hoping that the economy would ultimately bail out the banks. It didn't happen, and here we are coming up with a solution at a time where the rules have moved against them in a big way.
And you feel like the writing was sort of on the wall when the ECB said you can't have your extension into January. Time's up, we're calling it now. You had a feeling this was not heading in a good direction.
No, a private sector solution was going to get that much more difficult. The ECB seemingly making that decision for them. Exactly. Now we're waiting to see what comes out of the Italian government. And you just wonder, look, $21 billion is the number in the news today. Is that enough?
Yeah. It hasn't been so far. As you've pointed out in the past, Monte dei Paschi has had quite a few capital infusions already before you get to this.
Burn right through it.
Exactly. Okay, so now it's time for other stories making headlines at this hour. Here's Emma Chandra. She's here with Bloomberg Business Flash. Emma.
Thank you, David. The IMF's executive board is affirming its support of Managing Director Christine Lagarde, despite her conviction for negligence yesterday in a Paris court. Speaking to reporters last night in Washington, Lagarde thanked the board and said she will not appeal the conviction.
I am not satisfied with it, but there's a point in time when one has to just stop, turn the page and move on and continue to work with those who have put their trust in me.
Lagarde was convicted for failing to overturn a $296 million payout to a businessman in an arbitration case while she was France's finance minister almost a decade ago. She won't face a prison term or a fine. Ericsson is contemplating cutting about 1,000 jobs in Italy, approximately a quarter of its local workforce. That's according to people familiar with the matter. The potential cuts follow the company losing out on a contract to manage Italy's largest wireless network. That contract was said to be valued at about $1 billion. An Ericsson representative declined to comment. And Credit Suisse may soon reach a deal to settle a U.S. probe into its handling of mortgage-linked securities before the 2008 financial crisis. That's according to Reuters, citing a person familiar with the matter. The bank is said to be confident it can reach a resolution for less than the $5 to $7 billion the Justice Department has demanded. Spokesman for the bank and the DOJ declined to comment. And that is your Bloomberg Business Flash. I'm Emma Chandra. This is Bloomberg. David.
Thanks very much, Emma. As stocks trade near record highs, are the currency markets pointing to a calm before the storm? We'll find out next in Battle of the Charts. This is Bloomberg.
From New York, this is Bloomberg Daybreak. I'm Jonathan Ferro. We are light in terms of things for the trading diary today, but a couple of earnings coming up after the bell, including Nike and FedEx, both coming to announce their earnings at 4:15. Nike, of course, the worst performer in the Dow so far this year, down by 18 percentage points and more, David.
And, Jonathan, it's time now for Battle of the Charts. Today we have Bloomberg's Abigail Doolittle taking on Danny Berger. But Abigail, you're going to start.
Thanks so much, David. Well, of course, one of the big stories right now is the fact that we do have stocks at record highs, near record highs, while we have the VIX trading near its record lows. Very interesting, though, in this chart, this is #BTV 5418. In orange, this is not just the VIX trading inverse from the S&P 500. This is a VIX spread to currency volatility. And the reason this is so important, equities, stocks get all the attention, but probably the foundational asset class past are the currencies beneath everything, and they're suggesting right now that we could be looking at a calm before the storm. We see past periods before the 2008 financial crisis and also in 2010, 2011, before the issues over in Europe, that we had this index trading near record lows. But right now, at a record low, it could suggest that in 2017, stocks may just come off of these highs, David.
Well, that's pretty ominous, Danny. What do you think about that?
Ooh, that is pretty ominous. I don't know if mine's much more cheery, to be completely honest. So, everyone likes to say that they saw this Trump rally coming. They knew that when he won, stocks would take off. But I want to put all these people to the test. So right here, this white line right here is the Morgan Stanley Trump basket. So this is about 35 stocks that they say think will do well. Okay, bottom we have S&P. Top is the Russell 2000 small cap stocks. So you can see straight from the election, right when we take off, Morgan Stanley basket does well. But check out what's happened recently. Their predictions, while doing very well, this is a 10% gain, so don't want to put too much fault on Morgan Stanley here. Small caps have done much better. Now, what's happening? Over here, see when this break happens? This is when Trump gives this interview saying that healthcare is too expensive, drug companies are too expensive. And Morgan Stanley had a fair amount of drug companies in their index. So it looks like people might need to rejigger and think, hey, perhaps I didn't have as much foresight as I originally thought, David.
Yeah, and you also have to wonder about the small caps benefiting because there won't be a trade ramification. If, in fact, we get in a fight with Mexico or China or something like that, that might also benefit.
And, this also has implications. Do you trust your active manager or just buy an index? You might
okay, so these are two great charts. I'm going to vote with Danny. I love your chart, Abigail, but I just want to wait and see whether that really happens. It might happen, might not happen. It's sort of a calm wait and see. Terrific job, both of you. So thanks very much. Danny's the winner, Jonathan.
Trump ETFs, that did not take long, did it? David Westin, thank you very much. Some headlines I want to get to right now. A developing story we've been following in the last 24 hours from German authorities on that attack on a Christmas market yesterday in Berlin. The German prosecutor saying now there may be several attackers involved in the incident, and the suspect they previously apprehended may not be the assailant. So far, no terror group has taken responsibility. We'll continue to bring you the updates on this story throughout the next few hours right here on Bloomberg. Coming up next on this program, Mohamed El-Erian, Allianz Chief Economic Advisor, on the recent global equity rally and how far it can go given the growing political and economic concerns. Counting you down to the cash open, futures are positive, stocks are rallying in Europe. This is Bloomberg. From New York City, good morning for our viewers worldwide. This is Bloomberg Daybreak on this Tuesday, December 20th. I'm Jonathan Ferro alongside David Weston. Alex Steele is away today as we count you down to the cash open. 30 minutes and about 7 seconds away. Futures positive, up 51 on the Dow, positive 6 on the S&P 500. In Europe, the Stock 600 trading at a 2016 high. Speaking of highs, dollar strength. Switch up the board. The dollar index, the strongest since 2002. The DXY trading at a 14-year high, David.
And here's what you need to know at this hour. Christmas attack. A truck plows into a Christmas market in the heart of Berlin, killing at least 12 people. Chancellor Angela Merkel tells the nation in a televised address that we must assume it is terrorism. A German prosecutor says the suspect in the attack may not be the assailant and that there may be several other attackers at large. Kuroda stands pat. The Bank of Japan capping a momentous year with an upgrade to its outlook on the economy, but keeping its yield curve and asset purchase programs unchanged. The year in hedge funds. Who were the winners and losers in the hedge fund world? And what will it mean to have one of their own running the Treasury Department? We have the scorecard, and that's what you need to know at this hour. And now we go to Abigail to see what's moving.
Thanks so much, David. Well, we do have some energy movers in the pre-market. First up, Chesapeake. Chesapeake Energy is trading higher in the news that the company has sold its Haynesville shale acreage for $465 million. Tudor Pickering is saying that this is a positive for the company, both on timing and valuation. We also have Whiting Petroleum trading higher in the pre-market. This after its credit rating was upgraded by S&P ratings to a BB minus, from a B plus. That sounds like a positive. It is a positive. The stock is reacting in a positive way. However, that is still a junk debt rating, so something to keep in mind. As for one mover trading lower, General Mills. This after General Mills missed fiscal second quarter estimates. They also lowered the full year sales view. It looks like what's weighing here, Americans are eating less cereal. That may be true, but on the year, General Mills is up about 9% on the year. What makes this somewhat remarkable is the fact that it is General Mills' 9th yearly gain in a row. The last time that General Mills fell in the year was 2007. So even in the dark days of 2008, General Mills outperformed the markets.
Abigail, thank you very much. In the FX market then, it was a quiet day, December 23rd, 2002. I'm joking, I have no idea what that day was like or whatever the weather was doing that day either, but I can tell you that was the last time the dollar was this strong. Let's bring up the chart, the DXY up about 0.4% on the session today, but you've got to go all the way back to 2002 to see it this strong. I want to bring in our guest now from California, PIMCO CIO of Global Credit, Mark Kiesel. No idea what Mark was doing in 2002 on this day. He probably doesn't either. But for your view, for your portfolio, how does that strong dollar shape your thinking, Mark?
Well, I think the strong dollar is really a reflection of the fact that the U.S. is set to pick up cyclically. It's not only a strong labor market, but now you've got the prospect for a very pro-business administration under Trump, tax cuts, infrastructure spending. And basically, the rest of the world and Japan and Europe are still growing at much lower growth profiles. So really, it's a growth differential with the U.S. picking up as well as the Fed now starting to raise rates. That's what's really driving the dollar.
Mark, Goldman Sachs out this morning saying that the economic slack is running on empty in the United States. The greater fiscal stimulus will go more, if not mostly, to inflation. Perhaps, in many people's view, almost exclusively to inflation if you do not get an adjustment in structural growth. What do you say back to that quote?
No, we would agree with that. I mean, what's interesting is that fiscal policy really is needed coming out of recessions. This has been a very long expansion in the United States, 7 years. And the unemployment rate has come down. We're basically at 4.5%. The labor market is very tight. You see the Atlanta Fed wage tracker numbers now at 3.9% inflation. You basically have a skills mismatch right now. And so basically this fiscal policy is coming in the context of very little excess slack in the economy. That's why the Fed is raising rates. And the risk here is that if the tax cuts come online and the infrastructure comes, it could actually lead to a much more aggressive Fed and then tip the economy in recession in 2018.
So Mark, let's pursue this question of growth. I mean, growth is tied to productivity. Real underlying fundamental growth is tied to productivity, which is tied to investment in productive assets, right? What could you advise this new incoming Trump administration to do to really focus on that issue rather than just stimulating the economy? And particularly, we had Alan Greenspan on, and he said, look, as long as you're spending this much money in entitlements, you're soaking that money out of the economy in non-productive assets.
Sure. Well, ultimately, we need to invest more in education and infrastructure, and I think most importantly, avoid these protectionist measures, tariffs, and also anti-immigration. We actually need more educated, skilled workers. There's a shortage of skilled labor in the United States, and anti-immigration policies would further exacerbate that problem and lead to higher inflation. So we need to allow workers into the country. We need to basically allow for productivity to rise, and that's what we would advise.
Well, Mark, on the table for next year, 3 rate hikes from the FOMC. Talk to me about the balance of risks around that base case.
Sure, Jonathan. So basically, we think the Fed in a base case will go 2 to 3 times next year, but actually we think the risks are that they could go a little bit more than that. And it's simply a function of the fact that with the unemployment rate now at 4.5%, the labor market is so tight, you are going to see an acceleration in wages. Services inflation in the United States right now, which is 60% of overall inflation, is already running at 3%. That is now going to coincide with tax cuts and animal spirits on behalf of consumers and businesses. This could really cause the potential for inflation to pick up, and that's really the main reason why one of our top investment recommendations right now is to own TIPS. TIPS are only pricing in for 10 years a break-even inflation rate of 1.9%. We think there's 30, 40 basis points of upside in TIPS as inflation does pick up next year.
So you've mentioned TIPS before, something you like because it protects you against inflation going out. But you can't put everything into TIPS. What does this do for the rest of the bond market? If you really are looking at that kind of inflation, traditionally that would mean you're really going to get hurt in the rest of the bond market.
Yeah, so we have seen, David, 100 basis point rise in yields in 3 months. So a lot of this move has really taken place, and many would argue that a lot of the optimism around Trump has really been priced into the equity market with this significant backup in rates. So we do like TIPS as an inflation hedge, but also, given the significant backup in yields, we actually like high-quality credit. The sector of the fixed income bond market right now, which has underperformed most, is agency mortgages. They have actually repriced and now look very attractive. And importantly, if we do get mildly higher rates, you'll get less issuance. So in fact, right now, investors can earn 3.5% or 100, 150 basis points more than treasuries by owning very high-quality agency mortgages. So high-quality fixed income agency mortgages look very good right now.
Mark, in just a moment, we're going to talk about credit, but I want to really sort of focus in on what we're talking about in the fixed income space, on sovereigns more specifically. Not a lot of attention is being paid to what's happening in treasuries, not because of what's happening with Trump, but almost exclusively on what's happening with the foreign flows, specifically China. What are you gauging at PIMCO around the foreign flows and what it means for the Treasury market, and how significant has that been a part of the sell-off we have seen over the last month?
So we got cautious on treasuries back in the summer, and a lot of it had to do with the fact that the valuation on treasuries, when you hedge the currency risk, treasuries were not attractive. China basically now owns 1.1 trillion of treasuries. That's the lowest they've owned in 5 years. Last year they sold 150 billion. Now Japan is the largest holder, a foreign holder of treasuries right now. But China is, as they've needed to defend their FX reserve, has been an aggressive seller of treasuries, and also Japan last year has sold 90 billion of treasuries. So the fact is that you have to really watch foreign ownership and these hedged yields. That was the main reason, one of the main reasons why we have been cautious on duration at PIMCO and have been underweight.
So, Mark, just following up with the China point just for a second, as you look into 2017, as you said, in 2016 they sold a lot of their reserves. Are you anticipating that sort of pace of selling reserves from China and U.S. Treasuries going into 2017?
Well, I think the pace of reserve sales will slow somewhat, particularly as you go over year-end. And again, we have seen, David, a pretty significant backup in yield now. We've backed up 1% on treasuries, or 100 basis points in three months. So now those hedged current yields to China and particularly to Japan look a lot more attractive. We actually think treasuries will near-term be supported here. And within the fixed income market, again, we would highlight agencies as probably the highest quality spread sector that is most attractive today.
Hey, Mark, you're sticking with us. Mark Kiesel of PIMCO staying with us. I just want to get some breaking news very quickly. The situation as it happens in Germany, in Berlin. German Chancellor Angela Merkel and her Interior Minister walking around the scene of yesterday's tragic events. Of course, German authorities began sifting for clues in the last 24 hours into what they called a probable terrorist attack on a Berlin Christmas market that killed 12 people and injured 48 others. We'll get more on that story throughout the day for you. As it develops, the updates will continue right here on Bloomberg. Let's get more on that story and others as well. Let's get across to Emma Chandra.
Thank you, John. Angela Merkel addressed the German people earlier today in the aftermath of yesterday's fatal truck incident at a Berlin Christmas market. In a nationally televised statement, Merkel pledged the full force of the law will be deployed to clarify every detail.
There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack.
12 people were killed and a further 24 injured when the truck rammed into the crowded market. Berlin's police chief says it isn't clear whether the man detained in the attack is actually the truck's driver. And moments ago, the German prosecutor says there may be several assailants involved in the attack. In Switzerland, Zurich police suspect the attacker who opened fire on people praying at an Islamic center yesterday is dead and their manhunt is over. Police say the gunman has been identified. 3 people were injured in yesterday's violence. All were hospitalized. And the families of some of the victims in the Orlando nightclub shooting are suing Facebook, Google and Twitter. They claim the companies have provided material support to Islamic State and helped to radicalize the shooter Omar Mateen. 49 people died in the July shooting, dozens more were injured. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. David.
Thanks so much, Emma. Now, coming up, Mohamed El-Arian, Allianz Chief Economic Advisor, joins us to take a look at the current global equity rally and how far it can go. This is Bloomberg.
all the
In the United Kingdom, the UK Prime Minister Theresa May is making her appearance before the House of Commons Liaison Committee this afternoon. Her first time before the committee of senior lawmakers since taking the job. Expected some questions on her Brexit plans, and here are the answers so far. Theresa May says she expects to operate on a 2-year Brexit timetable. That 2-year timetable, of course, will begin, David, when they meet an end of March Article 50 timetable. That will get triggered at the end of March, at least by then, according to the Prime Minister.
And a lot of people in the Europeans say there's no way they can get it resolved within 2 years, even after they give the notice.
Then they get it extended.
That's a tall order.
Then they get it extended. Is that how this is going to play out?
I have no idea. We'll have to see.
Don't make that call.
Exactly, like say it. So now we're going to turn back to fixed income and the credit markets. PIMCO is saying that the Trump risk has created opportunities in the fixed income market. Still with us is PIMCO's CIO for Global Credit, Mark Kiesel, and joining us now is Bloomberg Gadfly's Lisa Abramowitz. So, Mark, let me put you to the test. Where are those opportunities specifically? What do you think is good?
Well, three, which we talked about earlier, David, basically TIPS, agency mortgages, and high-quality credit, basically focused on banks, financials, and the consumer. Those are the sectors which should do the best under Trump.
So go to sector by sector, though. Apart from, you have mentioned TIPS, of course, that you like TIPS, and that's good, high-quality credit. But sector by sector, which are most likely to benefit under Trump? You said financials.
Well, yeah, so I think number one would be financials, David, and that's simply because banks and financials are really a pure play on the economy. You have rising confidence under Trump, rising animal spirits, the potential for tax cuts. This is going to steepen yield curves as we transition from less reliance on monetary policy to the potential for fiscal policy to kick in. Those yield curves will steepen and rates should rise as they have. Not surprisingly, bank equities have been some of the strongest performing stocks post the election. That will help improve earnings and also support asset quality. So banks really look good right now. They'll also benefit from deregulation.
You know, Mark, I noticed that you talk about high-quality credit. You haven't been talking as much about high-yield credit. I know that some, like J.P. Morgan, are predicting that high-yield bonds will return up to 10% again next year. What's your call?
So, you know, at the beginning of the year, we went on your show and we said that, you know, high yield looked great. It was a 9 on a scale from 1 to 10. And high yield did deliver double-digit returns this year. The point is that that asset class has really outperformed. And so actually we think under Trump, even though there is this right tail positive surprise risk, Trump also has left tail risks. And so the spreads have actually compressed. Since the election, high yield spreads are 60 to 70 basis points tighter. So we have actually been de-risking, and we have been selling richer cash high-yield bonds and upgrading quality. So right now we actually like holding in the credit markets a little more cash. We like de-risking, and we like owning higher quality credit, more investment-grade bonds right now.
Okay, so Mark, you said you like holding more cash. How much have you increased the cash allocation in some of your credit funds?
So we've increased our cash probably 5 or 6% after the election. We have been selling into strength. One sector that we came into the year very overweight was energy. We bought a lot of energy in January, February, and over the last several months we've been selling into that strength, particularly after the OPEC agreement. You've got oil now back at 55. Remember, it was 26 back in February. So we have been selling energy. We have also been selling a lot of our riskier high-yield bonds. We've been selling some emerging markets. So mainly over the last month, we have been de-risking our credit positions at PIMCO.
Mark, are you surprised by how tight energy is trading right now?
I am surprised because, again, this is a commodity price. It's highly cyclical, very volatile, and quite frankly, OPEC has proven, as it did 2 years ago, it's a cartel, and people can ultimately walk away from these deals. Importantly, at these higher oil prices, you're going to bring back online the shale players. In Eagle Ford, in Bakken, in Permian, those areas, particularly Permian, are very profitable at current oil prices. And so the reality is with higher prices will bring supply. And so we really do think that at these oil prices, the risk reward is far less attractive, again, than it was at the beginning of the year.
So, Mark, when you talk about how under Trump's policies high-yield credit might not do as well, especially at these rich valuations, do you have a sort of recession worst-case scenario baked into next year? Do you think that the likelihood of a recession in the U.S. is significant?
So Our base case forecast is 2 to 2.5% real growth next year for the U.S. economy. We actually think the probability of recession has increased. It's probably gone up from about 15% to today 20%. And the reason it's increased is that, yes, we acknowledge all the positives under Trump, tax cuts, rising confidence, animal spirits, infrastructure. But at the same time, there is this fat tail risk of really a deterioration in foreign relationships. I'm thinking of the China-U.S. Relationship, also the potential for tariffs, anti-immigration policy, protectionist policy. So investors today need to acknowledge that there's two-way risks in the market. It's no longer one way. The equity market has rallied 6% under Trump. High-yield spreads are 60 tighter. Now's the time to actually de-risk positions.
Two-way risk, Mark, that's going to be news to some people in this market at the moment. Mark Kiesel,
Yes.
PIMCO CIO for Global Credit. Great to see you, mate. Thank you very much for joining us. And to Bloomberg's very own Bloomberg Gadflies, Lisa Abramovich, and of Bloomberg Radio 2. Great to have her with us. Coming up on this programme, Jefferies out with its earnings guidance earlier on, saying its fourth quarter profit quadrupled as revenue from trading stocks and bonds more than doubled. We'll dig into the results and what they mean for the rest of Wall Street. From New York, then, as we count you down to the cash open, about 9 minutes and 45 seconds away. Futures up 48 on the Dow, positive 5 on the S&P 500. A rally in Europe as well. This is Bloomberg.
This is Bloomberg. I'm David Weston. Let's focus now on banks. Jefferies Group said fourth quarter profit quadrupled as revenue from trading stocks and bonds more than doubled. Bloomberg's Laura Keller has been following this story for us. And Bloomberg's Richard Partington also joins us from London to take a look at a different bank story, which is Lloyds. They're purchasing Bank of America's UK credit card unit. So, Laura, first start with Jefferies. What do we learn about Jefferies? What does it tell us?
So we've got a really big surge in bond trading, which is great because we always look to them to see what's happening with these bigger banks. And that actually was last quarter like a terrible comp, so it's not even good to give you a percentage, David, but it's a great quarter on that. And we also had a snap in what was a four-quarter losing streak in equities as well. So two great sides of things there. And investment banking is also doing better on the advisory side.
So how does it compare with their historical pattern as opposed to just over last year?
Good point. So historically, FICC bond trading is not doing as well. This is actually still the second worst time period for the year since the 2008 financial crisis. So we're doing better than last year, which was really a bad time, but we're still not doing all that great.
Okay, so that's here in the United States. So let's go over to London now. Richard, tell us about this acquisition by Lloyds of the credit card business for Bank of America.
That's right, about £1.9 billion. The UK bank Lloyds is paying for Bank of America's UK credit card portfolio. It's called MBNA. It had about an 11% market share in the UK credit card market. And this really comes as Lloyds is attempting to offset lower income from more vanilla mortgage lending, which is lower margin. Obviously, Bank of England cut interest rates earlier this year, and now they're seeking to get into some higher margin products.
So Lloyds wants it because it's high income. Why does Bank of America want to get rid of it?
They purchased this portfolio back in 2006, just as things were really starting to turn in the credit cycle. They paid about $35 billion, so that's a lot of money back at that time. They've sold some chunks of that business over the years. They've had a look over selling this unit a couple of times now, but postponed things. So they've really been looking to get out of this area for a long while yet. They say they'll make a minimal post-tax gain on the disposal of this unit.
Rich, Lloyds is going to be a monster in the UK credit card business now with 26% of the market. The government still owns about 7% of the bank. If you're the government, what are you thinking about this deal?
From the government's perspective, it's relatively neutral in that it's the government is almost out of Lloyds at this moment in time. They're only about 6.9% into the bank. From some perspectives, it's a good deal in that it adds revenue growth and therefore helps the bank grow. And then from the other side of things, you may have a little concern as we're entering a potential slowdown as a consequence of the Brexit vote here. Higher margin credit cards, not secured on anything. Unlike mortgages, secured on property, and therefore maybe you want to be a little concerned about pushing into higher risk consumer credit in that environment. But clearly the bank thinks it's a good bet as it's putting the money where its mouth is today.
Laura, you cover Bank of America. David and I were just kicking this back and forth earlier this morning. Selling down, selling down, selling down, selling down. Is it over?
For what they have in the UK?
For the selling full
They sold everything they can sell.
They were a bank, obviously, that's been cobbled together through lots of acquisitions. So there are certain pieces of their business that they think don't make sense for them at this point in time.
Yeah.
I think what will be more interesting is now that they've gotten rid of this, and obviously it's still a bad investment for them, what are they going to do now? You know, what are they going to focus on? That's going to be interesting.
Laura Keller, great to have you with us to wrap up the banking action on this side of the Atlantic, and on the other side, Richard Partington in London. Up next on this programme, the opening bell right here on Bloomberg Daybreak. Futures positive. This is Bloomberg. This is Bloomberg Daybreak. I'm Jonathan Ferro. Let's get you towards the opening bell right here in New York. Futures positive as we count you down at 44 points on the Dow, positive 5 on the S&P 500. At yesterday's close, 117. That's how many points we were away from Dow, 20K. Futures firm then. Switch up the board. Treasuries on offer throughout much of this morning's session. Yields up 4 basis points to 258 on a US 10-year. But the big headline, the dollar dominating the G10 space. The DXY, the dollar index, up 0.4%, the strongest dollar since the back end of 2002. The dollar there to be seen in all its mighty and glory. Let's get to the equity market very quickly, though, 15 seconds into the session. Good morning, Abigail Doolittle.
Good morning, Jonathan. And we are looking at gains for U.S. stocks. We have the Dow, S&P 500, and NASDAQ all trading higher, putting us back on record watch. It is worth noting, though, the last couple of days have been a bit choppy. In fact, the last time we saw all three averages finish at record highs was last Tuesday. The last time we saw a record high period was last Wednesday, an intraday high for the Dow. So it looks like stocks, in terms of those records, are on a bit of a pause after the Fed rate hike. So it'll be interesting to see what today brings. As for some movers right here on the open, we do have Rite Aid trading sharply higher, up about 6%. This on the news that Fred's has agreed to buy 865 stores from Walgreens and Rite Aid for $950 million. This is part of a plan to divest assets and get the merger deal done. In fact, Bloomberg intelligence analyst Jonathan Palmer told our team just minutes ago that this does, in fact, bode well for the deal getting completed in the first quarter of 2017. And we do have Cardinal Health trading modestly higher. Evercore ISI says that this potential deal is a positive for Cardinal Health. Turning to some banking shares, we have the Bank of America trading higher on the day, up 1% on the news that it has sold its UK credit card business to Lloyds of London for $2.4 billion. They're saying that this will be of a minimal gain. It'll probably close in the middle of 2017. However, Bank of America has now snapped a 2-day losing streak and is at levels last seen in 2008. John and David.
Abigail, thank you very much. So what are we? About 2 minutes into the session, almost. We're up about 0.25% across the board on the Dow and the S&P 500 as well. In the FX market, though, here's the dominant story. The dollar index, the strongest since 2002. There it is right there. You've got to go all the way back, 14 years and a little bit as well, to see the dollar this strong. To discuss, joining us now for the next 30 minutes, I'm pleased to say, for his perspective, is Mohamed El-Erian, Bloomberg View columnist and Chief Global Advisor at Allianz. Mohamed, it's great to have you with us on the program at a time where the dollar is just ripping higher. It's an expression, as we all know, of a view that we're going to get more growth, potentially tighter monetary policy as well. But when does it become self-limiting? When does it go too far and things start going the other way?
It goes too far when it does two things. One, when it tightens financial conditions too much, and second, when it fuels protectionist rhetoric in the United States. And that's why, in order for this Trump rally to be sustained, it's not just about implementing policies at home. There's also going to have to be some rebalancing in 3 key countries, Germany, Japan, and China.
So, Mohamed, let me give you one other possibility. It might go too far if, in fact, it appeared that this was actually an inflationary move rather than a true growth. At what point do we see if those two things diverge? Because if there's really inflation without the underlying growth, presumably that's going to hurt the dollar.
Oh, absolutely. And if you get stagflation because we also get protectionist tendencies, that's even worse. I think right now, David, it's an open issue. The market has priced 3 distinct influences. 1, higher inflation, as you mentioned. 2, higher growth. And 3, money coming from abroad back into the stock market. And that's why you're getting the textbook reaction on the equity market, on the bond market, and on the FX segment.
Well, let's talk about the FX segment, and I want to explore those 2 channels you've identified, one being financial conditions and the other being the protectionist rhetoric that could come about because of it. Quite clearly, for Trump to do what he wants to do, what he would like to do, the stronger dollar is not part of the story. But who steps in, Mohamed? Because quite seemingly, it's not the Fed at the moment, so I'm just trying to gauge who steps in and who can do anything about it.
So what's desirable, as opposed to what's going to happen, but what's desirable is that governments in Germany, Japan, and China step in with 2 things: structural reforms, and in the case of Germany, more fiscal stimulus. That's what's desirable. If you get that, then you get a rebalancing, you can maintain the equity rally, and you don't get too much pressure from the foreign exchange segment. So at the end of the day, for Mr. Trump to succeed, it's not just that he has a pretty clear path domestically, because the Republicans control both houses of Congress, but also he's going to need to convince the allies and China to move on their rebalancing.
So there's a lot of talk about structural reform. You've written in your book, The Only Game in Time, about structural reform. Let's bring it back here, now advising Mr. Trump right now as he prepares to take office. What are the structural reforms really specifically going to be affected here? And let's start specifically with the tax code and particularly corporate taxation. What could be done? If you were advising Mr. Mnuchin right now, what would you tell him?
So I think they've identified. One is simplify it. Remove a lot of the anti-growth distortions. David, you know, we haven't had a fundamental tax reform since the mid-'80s. What we've had is lots of tweaks that have resulted in a system that's less coherent and certainly not pro-growth. So the first thing is to simplify it. Second, the minute you do that, you can lower the rates. And third, you can move also on deregulation infrastructure spending. That's relatively low-hanging fruit. Remember, President Obama proposed some of this, but he simply couldn't get any cooperation from Congress.
Mohammed, on the issue of deregulation, we had a guest just yesterday talking about a spread, a divergence between regulation where the United States would continue to deregulate, but actually it would go the other way in Europe. 10 years ago, we would call this the race to the bottom. Is it going to be the beginning of that all over again?
Yeah, and that speaks to the bigger issue, which is dispersion. You're getting dispersion in economic performance, and you're also getting dispersion in many elements of policies. There's a limit to how much dispersion you get, including on deregulation. So, John, it goes back to this issue. The U.S. can do quite a bit on its own, but in order to sustain all this, it's going to need other countries to also rebalance their policy mix.
Well, to what extent, Mohammed, will the United States effectuate that change? Because there'll be a competition for business, essentially, based on regulation. The money will flow, the capital will flow toward markets that are less regulated, and that will make some of the more regulated markets have to loosen up their regulation.
Correct. And that speaks to either the U.S. pulls up everybody else, or because others don't and the currency gets too strong here in the U.S. gets pulled down by everybody else. And that's the tug of war that's going to play out in 2017. The markets are betting on the U.S. pulling everybody else up right now. But I think, as Mark Kieser from PIMCO said, you know, there are two sides to this risk. And one has to be careful not to overemphasize one side.
Another person reminding us it's a two-way risk. It's Christmas, David. I've been told all month there is no two-way risk. It's buy, buy, buy. Mohammed, help me out. A couple of loose ends here. At the moment, here's my dashboard. I've got Treasuries 30 years pushing 315. We're up 3 basis points. And I've got the Dow pushing 20,000 points at the moment. Financial conditions is one thing. Let's talk about animal spirits. What matters more to Main Street at the moment? The mortgage rate at the end of the month and where the 30-year trades at the moment and what that will mean for mortgage rates? Or seeing Dow 20K splashed across the front page of newspapers?
I think the 20K is going to have an influence because we're getting higher rates for the right reasons. And the right reasons are people are pricing in higher nominal GDP. So the 20K is going to be the signal of higher nominal GDP, and the higher mortgages are going to seem, well, yes, that's not great, but you know what? It's coming because we're going to get more income, more jobs, more growth. I think that is the narrative that's going to play out for a while. Come January, end of January, people are going to say, okay, now are the measures following? Because we've got to validate all this. So far, it's just expectation and announcements. We've got to go to detailed design, which is not easy, and then sustained implementation.
So, Mohammed, Jonathan correctly goes to the long end of the curve with mortgages. Let's go to the short end of the curve, things like auto loans, because the short end of the curve is coming up as the Fed says it's now going to be raising the rates here. At what point does it start to affect sectors such as the automobile industry and the sale of automobiles?
Yeah, you know, it's a race between the cost of borrowing, affordability, and income. And that's the race that's going on. I think we're not yet at tipping points in terms of funding cost. I think we still have some room to move. Why? Because we're starting from artificially low levels. If anything, by the way, you may get a reverse reaction, which is as the rates go up, people accelerate their purchases up front. So you may actually get a reverse reaction initially, and then you get a payback later on.
David, isn't this tug-of-war fascinating? You get Wall Street pricing at a full term before the president even enters the White House. It's basically where we're at, right?
Yeah, and you have to hope that it happens, because if they change their mind, it will be very disappointing. The markets will be very disappointed because they're anticipating so much. So, still ahead, we're going to have more with Alliance's Mohamed El-Erian. After yesterday's conviction of IMF Director Christine Lagarde, he has some advice for the IMF, and we want to hear it. That's next, and this is Bloomberg.
This is Bloomberg Daybreak. I'm Emma Chandra here in the Hewlett-Packard Enterprise Green Room. Later on Bloomberg, Citigroup's global head of commodities research, Ed Morse, on his $70 oil outlook.
From New York City, this is Bloomberg. We're about 12 minutes into the session and we are about 30 points away from Dow 20K. For those of you that really care about it, there we are, up 88 on a session, up 0.4%. The S&P 500 up about a third. Let's get you some movers. Let's say good morning to Abigail Doolittle.
Thanks so much, John. Well, we do have some healthcare, some biotech movers here on the open. First up, we're looking at Acadia Pharmaceutical. Shares are nicely higher, surging, in fact, on the news that the company's Alzheimer's drug did receive positive results in a phase 2 trial. Now, Alzheimer's disease does affect 5.4 million Americans. More than 100 compounds have been tested and have failed. So some investors may view this as a wild card or a lottery ticket type feature to the shares of Acadia Pharmaceuticals, considering it is a mid-stage study, but nonetheless really helping those shares today. As for some other biotech movers, we have Celgene and Juno Therapeutics both trading higher in the news that a Juno Celgene drug for lymphoma did receive a breakthrough drug designation. That seems to be helping both of those shares. In addition, Celgene was added to Credit Suisse's U.S. focus list, and Credit Suisse did also upgrade the shares of Regeneron to an outperform ahead of a skin condition drug launch. They see more than 25% upside potential for the shares of Regeneron. So lots of good stuff for biotech today, but it is worth noting biotech remains stuck in a bear market. We go into the Bloomberg and we take a look at BTV 4823. That's the peak in biotech back in July of 2015. We see the big bear market. We also see that much of this year biotech has been stuck in a range range. Investors really don't know whether to get bullish or bearish here, bull-bear fight going on. But most recently, we have seen the 50-day moving average cross below the 200-day moving average. That is a death cross. It is outlined in blue here. The last time that happened for the biotech index, it was ahead of a big decline. So something to keep an eye on here. It seems that this index may just drop back down to the bottom of the range and perhaps take a turn on the sentiment of broader market indexes, as happened at the beginning of the year. Something to keep in mind, John and David.
Okay, thanks so much, Abigail. The IMF's executive board is supporting Managing Director Christine Lagarde despite her conviction for negligence yesterday in a Paris court. Lagarde won't face a prison term or fine. And in his latest Bloomberg View piece, Mohamed El-Erian writes, quote, the Lagarde case risks amplifying long-standing credibility challenges facing an institution whose member countries, led by the advanced economies, have been too timid about reforming key elements of its governance, particularly those relating to representation. Mohamed El-Erian is still with us. So, Mohamed, in your piece, you point out this is not the first IMF director who's had some legal problems. Now, they're quite different sorts of problems, but her two predecessors also have had substantial legal problems. What is going on here? Why is it that they're coming up with these people to be in charge of the IMF?
So there was a subtle change over 10 years ago in the selection process from selecting technocrats to selecting politicians. And that subtle change has also been associated with legal aspects. But David, first and foremost, I think the IMF board is correct in reaffirming, quote, its full confidence in Christine Lagarde. She's done a very good job. She's well-liked. She's effective. She's enhanced the standing of the IMF. She's deepened relationship. So I think the board did the absolutely right thing in retaining her as the leader of the IMF. But something else, had that not happened, the board would have found itself once again stuck with a feudal and antiquated selection process, one that is not transparent, it is not merit-based, it includes backdoor deals, it includes element of national prestige, and that undermines the credibility of the institution. So all I'm saying is, yes, absolutely right in keeping Christine Lagarde. That's the right thing to do. But come on, let's move forward in modernizing the selection process.
And the central point I took away from your piece was, yes, they have the right person in Christine Lagarde, but it's almost by accident. Because when they started, they said, we have to have a European. We're making these decisions for reasons that have nothing to do, frankly, with whether that would be the best person to run it. She happens to be that person, but it was by accident. Is there any impetus, is there any reason to believe there would be reform in the way that it's governed?
Yeah, it comes down ultimately to the U.S. because the U.S. controls the World Bank president. That's also based on nationality. And the Europeans coming together and saying, you know what, for the sake of these institutions, for the sake of their legitimacy and credibility, we've got to give up an entitlement that is no longer warranted. I think that is what it takes. It takes vision to do so. You know, at the end of the day, we may get an American as head of the World Bank, we may get a European as head of the IMF, but it will be for the good reasons, that it's a merit-based process as opposed to a nationality-based process.
But does that mean, from what you're saying, Mohamed, is that it's unlikely this will happen because for the Americans to open up that box, then it would put on the table whether the next World Bank president would not be an American, and they don't want to give up that prestige.
Yeah, you have a window because the World Bank president has just been reappointed to his second term. Mrs. Lagarde has just been reappointed at the IMF to her second term. So you have a window there if you get division to do so. And my argument is these multilateral institutions are critical to the functioning of the global system, and they're viewed as trusted advisors at the national level. So let's not undermine their effectiveness. You know, they have great staff, they have great structural links to the countries. Let's make sure that they're also legitimate and credible.
Okay, Mohamed El-Erian, thanks so much. Stay with us. We're going to be talking with you some more, but now we're going to check in on the markets. Jonathan.
Yeah, thank you very much, David. So we're about 18 minutes into the session. Some people have a day job, so they won't be doing this, but some people out there will have the Dow up in an intraday chart. And they'll be looking at this right here, the countdown, the march towards 20K. The high print in today's session so far, 199.84. So we were just 16 points away. We now trade just about 20 points away, 19 around about that level at the moment, up 0.5% on the session. The continue countdown countdown, well, that will continue as well at the top of the hour. It's Bloomberg Markets, and joining us now is Julie Hyman with what's coming up. Good morning, Jules.
Thanks, John. Of course, I will be picking up the ball along with my colleague Mark Barton on that 20K watch, as you've been talking about. We also will be having continuing coverage of the events over in Germany as well as in Turkey. We will be speaking to our reporters in Berlin and Istanbul. And then we'll get more on the outlook for 2017. Could we see Dow, I don't know, 21K going into 2017? We'll be talking to Julian Emanuel. He's UBS Securities Executive Director of U.S. Equity and Derivative Strategy, as well as David Kelly, who's Chief Global Strategist at J.P. Morgan Asset Management, about their outlooks for next year. Both of them, like many of the folks we've been talking to lately, are relatively optimistic. So we'll get the details on why they are feeling that way. Guys?
Jules, looking forward to it. That's coming up at the top of the hour. Julie Hyman coming up with Mark Barton. Coming up on this programme, much more with Allianz Chief Global Advisor Mohamed Al-Arian. The countdown to 20K, and PIMCO saying increase your cash holdings. The why? We'll debate that with Mohamed. That's next. This is Bloomberg.
This is Bloomberg. I'm David Weston. There are a couple of key earnings coming out today after the bell. Both Nike and FedEx are set to announce their earnings at 4:15 Eastern Time today. Nike, as we've said earlier in the program, is the worst performer in the Dow so far this year. Jonathan.
David, thank you very much. So in the markets then, seemingly it's the countdown towards Dow 20K. At the moment, we're about 22 minutes into the session, and we're about 30-odd points off that at the moment. The high print in today's session was 19986. So we came pretty close. It reminded me to go and do an Amazon search, David. Dow 30,000 by 2008. Why it's different this time. Still available on Amazon. Also, Dow 40,000, Strategies for Profiting from the Greatest Bull Market in History. You can get that in hardcover. June 26, 1999. We're going to be waiting a while for David Elias, the author of that particular book, to feel good about the world again.
Yeah, I won't buy it right away.
Yeah, we spoke to PIMCO CIO, Global Credit, Mark Kiesel, a little bit earlier. Timely, this one, reminding us that there is this thing called a two-way risk, and maybe you should have a little bit of cash as well. Take a listen.
We've increased our cash probably 5 or 6% after the election. We have been selling into strength. One sector that we came into the year very overweight was energy. We bought a lot of energy in January, February, and over the last several months we've been selling into that strength, particularly after the OPEC agreement. You've got oil now back at 55. Remember, it was 26 back in February.
Allianz's Mohamed Al-Arian joins us now to discuss. Mohamed, what do you make of this cash story and the selling into strength at a time when everyone's getting obsessed about levels on the Dow, etc.? What do you make of that story?
I think what Mark said and what PIMCO is doing makes total sense. There are two-sided risks. We've come a very long way in the last few weeks for understandable reasons, but markets tend to overshoot. And we've been talking about the complexities of validating all the moves that we've seen, including in high yield, including in various areas. So I think it makes total sense to take some money off the table and be positioned more for two-sided risks.
Mohammed, the two-way risk story, though, quite clearly what we've got at the moment is a freight train, even if it's thin liquidity, and the freight train is just momentum. In your experience, how much longer can that momentum go on for before people start taking a look again?
So it can go on for a while, and you see this in the stock market today. But you know what? We've priced in no policy mistakes. We've priced in no market accidents, and we've ignored all sorts of political issues. You know, part of the reason why the markets are reacting so well is because we're getting an endogenous political disruption in the U.S. that seems to be positive, because we're going to unleash congressional action on key issues. But you're also getting political disruptions elsewhere that are not so positive. So I go back, I think what Mark said and what PIMCO is doing makes total sense.
So, Mohammed, this is what I don't understand. Ultimately, you have to bring in line supply and demand. That's the way it works. And we've got excess capacity around the world, frankly, all over the place. Nothing that's happened in the last 2 months has taken away that excess capacity. What's going to have to do to soak that up?
What the markets are reacting to, David, and you're absolutely right, is that you're going to get more demand because you're going to get fiscal stimulus as well as monetary stimulus. Why is that important? Because monetary stimulus has been becoming less effective. And you're also going to be enhancing potential through infrastructure, deregulation, etc. So the market is pricing in better demand and better supply as well as better liquidity. That is what the market is pricing in right now. And they've moved really a long way in that. And now it has to be validated by policy actions and design.
Mohammed, it's been great to catch up with you. If we don't see you again before the holidays, enjoy the holidays. We really appreciate your time. Mohammed El-Erian, of course, Allianz's Chief Global Advisor. In the markets then, David, 26 minutes into the session, we look like this. The countdown to 20K, for those of you that care, continues. 19,982 is how we trade, up 0.5%, almost across the board. Stocks in Europe trading at 2016 highs. Some enthusiasm. The bullishness continues. The countdown will continue right here on Bloomberg. From the Bloomberg Daybreak team, myself, Jonathan Ferro, and David Weston, thank you very much. Good morning. This is Bloomberg.
It is 10 a.m. in New York, 3 p.m. in London, and 11 p.m. in Hong Kong. From New York, I'm Julie Hyman.
And live from London, I'm Mark Barton. Welcome to Bloomberg Markets.
We're going to take you from New York to London to Berlin in the next hour. Here's what we're watching. German police say the person responsible for the Berlin attack may still be at large, putting pressure on Chancellor Angela Merkel to do more to guarantee the public's safety.
Linde and Praxair are joining forces to create a $30 billion gas giant. The merger will create the world's biggest supplier of industrial gases.
And the Dow Jones Industrial Average inching closer to the 20,000 mark, coming within 13.5 points and hitting yet another record high. About 30 minutes into the trading day in the U.S., and Bloomberg's Abigail Doolittle is on 20K watch along with us. And indeed, we're creeping ever closer here.
We are creeping ever closer. Everybody is watching with bated breath to see whether or not the Dow can achieve 20,000 today, about 20 points away right now. What makes this really pretty remarkable is the fact that this is just a stunningly fast move higher for the Dow. We do see the other major averages higher as well. We're looking at records for the NASDAQ, along with the S&P 500, all on pace right now for record closes. But returning to that Dow 20,000, we take a look at the Dow since November 22nd. This was when the Dow closed above 19,000. So in this very short period of time, 28 days to be exact, we have the Dow up 5%. If the Dow can close above 20,000 today, it would be the fastest 1,000-point gain ever. The fastest 1,000-point gain on history right now is back in 1999. It was done in 35 days. So we will be watching this very closely and bringing all the details to you. As for what's really working today, we are looking at the banks, the financials, the really hot sector out of the election. We have Bank of America, JP Morgan, Citigroup, and Wells Fargo all trading higher. Bank of America is getting a boost after the company did sell its credit card business, its UK credit card business, to Lloyds of London for $2.4 billion. That's expected to close in the middle of 2017. Also helping the banks today is the 10-year yield. We have the 10-year yield rising a little bit. This does, of course, help the banks in terms of the idea that rising rates will help lenders lend at a more profitable way. So we see that gain there. We also have the dollar index, the Bloomberg dollar index, trading higher, being helped by those rising rates. So a bit of a risk-on tone for markets right now, Mark, here in the U.S.
Similar here, Abigail. Investors once again, as has been proven over the last year and a half, shrugging off geopolitical uncertainty in light of incidents in the last 24 hours in Ankara in Turkey, in Berlin and in Zurich in Switzerland. I can't compare with you, Abigail, when it comes to Dow 20,000. What I can, though, tell you is that the Stock 600 is rising, and we're at the highest level since December the 31st, 2015, proving this resilience to geopolitical shocks. The V stocks, the gauge of stock volatility, is at its lowest level since July 2014. Analysts are upbeat about profits at the members of the Stock 600, expecting earnings to grow by 12.5%. When it comes to benchmark highs for the Stock 600, 412 was the high in April last year. We're nowhere near those levels, more than 10% below those levels. Let's start with the lira. This is the Turkish lira. Yesterday, record low against the dollar after the Russian ambassador to Turkey, of course, was killed. We rebounded today ahead of the Turkish central bank decision. Then we fell to a new record, and then we rebounded once again. We're very close to the record. That's the chart. The central bank essentially kept all its three interest rates unchanged. It said a cautious monetary policy was needed as it assesses the impact of the weaker lira on inflation. Analysts say the decision is an attempt to support the economy that slowed sharply following the coup attempt in July. Economists surveyed by Bloomberg forecast a 25 basis point increase to the overnight lending rate and no change in the other two. You'll remember last month the central bank raised rates for the first time in almost 3 years, citing the possible impact of the lira's weakness on the inflation rate, which stood at 7% last month compared to the bank's 5%. So there's the dollar against the lira. The euro euro has fallen to its lowest level since January 2003, 1.0368. And let's finish off with the German 10-year yield, highlighting the fact that there isn't a flight to safety in light of those three geopolitical incidents I was telling you about. We've got the German 10-year yield rising today, up by 2 basis points to 26 basis points. Last week, yields fell for the first week in 3, Julie. On December the 12th, you can see that mini peak at the end there. The yield closed at 0.399%, the highest since January 20th. But today proves the market resilience, Julie, as we've seen time and time again in the last year or so to geopolitical incidents like we've seen in the last 24 hours in Zurich, in Berlin, and of course in Ankara.
Right. Perhaps one factor that investors are becoming more accustomed, unfortunately, to these types of incidents. We're going to talk more about that with Julian Emanuel of UBS in just a moment. In the meantime, let's check in on the Bloomberg First Word News. Elisa Parenti has more from our newsroom.
Julie, German Chancellor Angela Merkel has summoned her top security officials to discuss the government's response to that deadly truck attack in Berlin. Merkel toured the site earlier, laying flowers on the grounds of the Christmas market to honor the 12 people killed and nearly 50 injured. The German prosecutor says there may be several assailants involved in the attack. Germany's interior minister says authorities have been questioning a suspect who was taken into custody after the truck plowed into that busy Christmas market. But they say the man, who is from Pakistan, has applied for asylum, is denying involvement now, and authorities question whether he was the driver of that truck. Russian President Vladimir Putin is promising a forceful offensive on terrorism after the assassination of Moscow's ambassador in Ankara. Yesterday, a gunman shot and killed Andrei Karlov at an art exhibit, yelling afterward, Allahu Akbar, and don't forget Aleppo, a reference, of course, to the beleaguered Syrian city. Karlov is the first Moscow envoy to be killed in his post in almost 90 years. His 22-year-old assailant, a police officer, was killed by security forces, but Reuters says 6 others have been detained as well in connection with Karlov's death. Authorities say a shooting at a mosque in Zurich does not appear to be linked to terrorism. 3 people were injured in the attack. Investigators say the suspect, who opened fire on people praying, is dead. After fleeing the crime scene, he shot himself and his body was found near the crime. Investigators say he may have had an interest in the occult. And investigators searching for nearly 2 years for a missing Malaysia Airlines plane are making a painful admission. They've probably been looking in the wrong place. The latest analysis by a team of international investigators says the Boeing 777 is likely farther north of the current search zone, a remote patch of the Indian Ocean west of Australia. The plane, with 239 people on board, disappeared while flying from Kuala Lumpur to Beijing. Global News 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Mark?
Elisa, thanks. Let's continue our global coverage of today's top geopolitical stories with our team of reporters. Matt Miller's in Berlin, where a truck plowed into a Christmas market, killing 12 people and injuring many others. Konstantin Kukulas joins us from Istanbul as Turkey and Russia vow to step up the fight against terrorism after the assassination of Russia's ambassador. Let's begin in Germany. Matt, we've had Chancellor Angela Merkel addressing the nation, but it seems right now, let's listen to that first, because she addressed the nation earlier today.
There's so much about this deed that we don't know yet with the required certainty. But based on current evidence, we need to assume that this was a terrorist attack. I know that it would be particularly difficult for all of us to bear if it was confirmed that indeed a person committed this crime who came to Germany to ask for protection and asylum.
And Matt, I suppose the incident of the last 24 hours puts further pressure on Chancellor Angela Merkel to guarantee the safety of the German public.
Yeah, absolutely. I think the most pressure right now is on the German federal police, because over the last 24 hours, what's become very clear is that the police don't know very much at all about who did this or why. They do have one suspect in custody, but they say they're not sure if that suspect is actually the perpetrator of the crime. They're not sure if it was one perpetrator or multiple assailants responsible for this crime, and they don't seem to have very much much video or photographic evidence because they've been asking for it from the public. They said earlier that they still have to match the suspect's fingerprints to fingerprints from the truck, something you think they would have done late last night or early this morning. So what's becoming very apparent over the last 24 hours is just how little they know and the fact that an assailant may still be at large here in Berlin.
Despite that, Matt, investors, as we've seen again and again, looking back to Brussels, to Paris, and frequent incidents in Turkey in the last year, investors seem to be shrugging off the latest incident, as they are the Turkish and the Zurich incident. What's the reaction like on the ground? How is the German public responding to yesterday's incident?
Probably not as nonchalantly as investors. I mean, clearly, there's no reason to sell risk assets because of yet another terrorist attack. We've become more and more used to this sort of thing from an investment point of view. Germans, however, take this kind of thing very, very seriously. And throughout the day, there have been hundreds and maybe even thousands of Germans coming here to lay flowers down, concerned for the victims and families of the victims. And we've had press conference after press conference from Angela Merkel, from the mayor of Berlin, from the head of the local police, from the head of the federal prosecutor's office. All of them have also come here to the Gedächtniskirche. And I think it's very important to keep in mind where this happened. This is the Kaiser Wilhelm Memorial Church behind me. It was bombed out in World War II and left as it is as a reminder for people never to forget about those who fell in the war. It's exactly the place where this attack happened as well, also at the head of the Kudamm, which is the most popular shopping street in all of Germany.
And Matt, we've heard from Angela Merkel, as we played earlier. Have we heard from any sort of opposition political figures as to what this attack could mean for Germany?
Well, you know, the opposition here isn't very strong, Julie, because the CDU party is in coalition with the SPD party. Those are the two that would be comparable, say, to Republicans and Democrats back at home. You do have a right-wing populist party here called Alternative für Deutschland, but it's not present in the federal Bundestag. It doesn't have any positions in the German Congress here. It only has one in small parts in state elections. Of course, they immediately said there's blood on Merkel's hands, and this is because of her refugee policy. You've heard the same thing from politicians, interestingly enough, in Poland and other countries that have not followed the same open-door policy prescriptions as Angela Merkel. But again, I have to stress the opposition here really just isn't very strong.
Matt, thanks a lot. We'll speak to you later. Matt Miller of Bloomberg News reporting from Berlin. Julie.
And turning to Turkey now, that attack in Berlin, of course, coming within hours of the assassination of Russia's ambassador to Turkey in Ankara. That incident fueling the global uncertainty that Turkey's central bank warned about following a surprise rate decision today. For more, let's bring in Bloomberg's Konstantin Korkulis. He is in Istanbul now. So we had this rate decision where rates were kept on hold. It was somewhat surprising to the market here. It seems as though on the one hand, the central bank is faced with the falling lira, and on the other hand, with political pressure. Can you talk to us about why that decision was made today?
That's true. It was a surprise decision from the central bank today. I mean, the central bank is dealing with a severe depreciation in the currency. The lira has been the worst performing emerging market currency this quarter. At the same time, growth is slowing down. We saw the economy contracted in the third quarter, and there's political pressure to keep rates low to stimulate the economy. So in the central bank statements today, we saw that they noted that the depreciation has had an impact, may have an impact on inflation, but they also noted that the slowdown in aggregate demand in the economy is restraining that impact. So some analysts said that it looks like the central bank is willing to kind of wait and see for this pass-through of inflation before it acts.
And so what kind of market reaction did we see? We saw a drop in the lira yesterday in the wake of the assassination.
Right. I mean, the lira sold off after news of that assassination. It recouped some of those losses throughout the day, and then after the surprise rate decision, we saw this a little bit of a sell-off again. There was some disappointment. I think some people were positioned for a 25 basis point increase to the overnight rate. That was the median in a Bloomberg survey. But at the same time, the lira has been kind of a consensus bearish call, so people were already quite bearish. So that's why we might have seen a bit of a muted reaction after the surprise move.
Konstantin, what investors are looking at is the relationship, how it's been affected by the merger of the Russian ambassador to Turkey. But it seems that this hasn't developed into a flashpoint between the two nations, and this matters, doesn't it, economically to the Turkish nation?
That's right. Investors brushed off the so-called geopolitical risk when it comes to Turkey here, and the latest developments here, and for good reason. I mean, the authorities were very fast to reassure that investors that we weren't going to see sort of the same fallout that we saw last November, when Turkey downed a Russian jet. Russia retaliated with economic trade sanctions, which crippled Turkey's tourism industry. We haven't seen anything like that this time. So the economic cost, both the economic and political cost of this incident were limited compared to what we've seen in the past.
Konstantin, thank you so much. Konstantin Korkulis of Bloomberg News coming to us from our bureau in Istanbul. Mark?
Julie, right, coming up, stock markets continuing to show resilience despite geopolitical stocks. We'll speak with Julian Emmanuel, Executive Director of U.S. Equity and Derivative Strategy at UBS. That's next.
Speaking of resilience, the Dow falling back a little bit from that 20,000 target after getting within about 13.5 points of it earlier in the session. Now a little bit further away from the mark. We'll be tracking it, of course. This is Bloomberg.
Live from New York and London, I'm Mark Barton.
And I'm Julie Hyman. This is Bloomberg Markets. Global markets do remain resilient, as we've been talking about, following shocks from Ankara to Berlin. For more on how investors are navigating the recent string of troubling headlines, we're joined by Julian Emanuel. He's Executive Director of U.S. Equity and Derivatives Strategy at UBS, here with me in our New York studio. So, Julian, as we've been talking about, yes, we have these various headlines about the assassination in Ankara, about that truck driving into the crowd in Berlin. Stocks, though, remain unfazed, and this sort of is of a piece with what we have increasingly seen over the past couple of years.
It's really not the past couple of years. I'd submit that it's really for the most part of the 21st century. We've had a series of horrific incidents, obviously dating back to September 11th, but markets have proved their resilience time and time again. And the fact is that the tendency is for markets not to top on bad news, such as what we've seen over the last 24 hours. But what this really does is sort of it put in display the push and pull. On the one hand, there's a very deep optimism that's built in over the last couple months since Donald Trump's election about the potential for the U.S. economy to grow and all the good things that can come from that. But on the other hand, what we're seeing, particularly in Europe, is the sense of uncertainty that is certainly exacerbated by these horrific events, in front of some very critical elections next year. And it's no surprise that the euro itself is trading on the lows of the year as well.
And do you think that if we, obviously these are two big incidents, if we saw more like that, do you think then that would change further the political calculus in Europe and then in turn put further pressure on the euro?
Well, there are always, these things accumulate over time. And certainly the surprises that we saw in the UK in June and obviously in the U.S. in November indicate that there is a certain trend in politics towards greater populism. And, we're certainly seeing that play out across Europe.
Julian, let's look at the late stages of the bull markets in the U.S. in 1999 to 2000, in Europe in early 2015. You talk about this love affair in the late bull cycle. Are we seeing that again? Are we seeing this love affair reignited for stocks?
Well, we certainly saw it in the weeks directly following the election in November. The inflows into stocks and out of bonds were really record large. For us, you're starting to get to where valuations are becoming quite stretched at around 19.5 times 2016 earnings. So there is concern there. But what would be key to us is seeing how January, typically a time for retail investment to participate, how that responds. It is entirely possible that you do see the public become an incremental buyer, pushing valuations further.
Do the laggards, the healthcare, Julian, the technology, do the laggards get picked up in a January buying spree?
We think so, because the setup, if you think about coming into 2016, in a lot of ways is completely different than coming into 2017. A year ago, the Fed had raised for the first time. It wasn't clear whether that was the right move. Oil, as we know, was not going to make a bottom until below $30 for a couple months, and the economy didn't seem solid. So when you started January, the tendency was just to sell the winners, and people didn't buy the laggards. This year, we think that people are going to want to stay invested simply because if the economy is able to perform the way the belief is that it can perform, you're going to want to be in stocks. But yet at the same time, the more deeply cyclical issues, industrials, energy, have run a very long way. And yet healthcare and technology are likely to be beneficiaries of tax reform if we see that.
Okay, Julian Emanuel, we've got to leave it there. Thank you so much for coming in.
Thank you.
He's Executive Director of U.S. Equity and Derivatives Strategy at UBS. Mark?
Julie, right, still ahead here. Walgreens is selling more than 800 of its drugstores to feds for $950 million in a deal that'll help it gain antitrust approval to buy Rite Aid. Shares of both companies rising in early U.S. trading today. This is Bloomberg.
Bloomberg Markets, I'm Julie Hyman in New York.
And from London, I'm Mark Barton. Right, time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. And Praxair has agreed to buy Linde for about $35 billion, creating the world's largest supplier of industrial gases. A new company bearing the Linde name will be formed to launch a public exchange offer to shareholders of the German company. Current Linde and Praxair shareholders would each own about 50% of the combined company. They'll now face scrutiny from antitrust regulators. And very quickly, Fred's Inc. will pay $950 million to buy 865 drugstores from Walgreens Boots Alliance, part of its plans to divest assets and complete its deal with Rite Aid. This is Bloomberg.
Live from Bloomberg's world headquarters in New York, where you see a chilly skyline there. Wind not pictured, Mark. I'm Julie Hyman.
A chilly but beautiful. It's always more picturesque there, Julie. I'm Mark Barton, and this is Bloomberg Markets on Bloomberg Television. Let's check in on Bloomberg First World News. Elisa Parenti has more from our newsroom in New York.
Thank you, Mark. The UN's humanitarian agency says Syria's government has authorized plans to send about 20 staffers to monitor evacuations from Aleppo. A UN official says the monitors will depart as soon as possible. At least 25,000 people have already been removed from the war-ravaged city, and up to 3,000 are awaiting evacuation. The UN's human rights chief wants Philippine authorities to investigate President Rodrigo Duterte for murder. That's after he claimed to have killed people in the past. The chief also wants a probe into the 6,000 killings committed during Duterte's controversial anti-drug crackdown. President-elect Donald Trump might face a financial loss if he sells his Washington hotel now. As president, Trump would be on both sides of the lease for the 263-room that is Trump International Hotel, Washington, D.C. It opened in September. For the Trump Organization to get back its $212 million investment in the makeover, a buyer would have to pay more than $800,000 per room. It's unclear whether the property could attract a bid that high. 1/3 of Americans say Russia influenced the presidential election. That is according to a new Politico Morning Consult poll. 32% say Russia influenced the election's results. 44% say they didn't. 24% say they were unsure or had no opinion. And the late rapper Tupac Shakur and Pearl Jam are among the inductees to the Rock and Roll Hall of Fame's class of 2017. Others include folk singer Joan Baez, Journey, Yes, and the Electric Light Orchestra. A special award will be presented to producer Nile Rodgers. His disco-era band Chic failed to make the cut after its 11th nomination. The ceremony takes place on April 7th in Brooklyn. Global News 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Mark?
Elisa, thanks. So a deal to create the world's biggest supplier of industrial gases is in the works. US-based Praxair has agreed to buy Germany's Linde for about $35.1 billion. The announcement comes 3 months after a previous merger attempt failed. Joining us from Munich with more, Bloomberg's Oliver Sanker. Oliver, I was taught at Bloomberg when I arrived many, many years ago, a merger of equals doesn't exist. Do I need to unlearn everything I've learned?
No, you know what? I don't think you do. And it's something I've heard today as well. Both companies are trying to tell us that this is a merger of equals. But what I've heard from others is that in a merger of equals, there's always someone who is just a little more equal.
Yeah, and it seems that Praxair has the upper hand in this one. What concessions were made, Oliver, this time when it seemed like this wasn't going to happen after the failure a few months ago?
Yeah, there's some very important concessions made this time around. I mean, last time there were concerns about where the headquarters would be based and as well the job losses that Munich could face. And both of those concerns were addressed this time around. The new company will have headquarters in both Danbury, Connecticut and Munich. And they're also guaranteeing that there will be no forced layoffs at Linde in Germany until 2022.
Oliver, the chairman of Linde, Wolfgang Reitzle, has been pushing for this deal for a while. Are there any details of it that he is particularly satisfied with that work for him?
Yeah, I mean, you have to imagine that he is. This is, like you said, he did want this deal to happen, and you can only imagine that he must have been disappointed when it fell through the first time. And now he is going to be the chairman of the new organization, and because he's the chairman of an American company, he's going to have a much bigger say in the operational activities of the company than a chairman of a German company would. So, I mean, I don't know, but you would have to imagine that he is pretty happy with this.
So, Oliver, there has been already some consolidation, of course, in the industry. So where does this now place this combined entity, and what's sort of its competitive position?
Well, like you said, this is going to be the world's biggest provider of industrial gases. And to be honest, there aren't that many players left. We basically had 4 players before this deal. And now if this deal goes through, there are really only 3 big players in the market. You've got Linde Praxair, you've got Air Liquide, which just went through its own acquisition and mergers. And then you've got Air Products and Chemicals. But when you're talking about companies that size, that's pretty much it.
Yeah, what about antitrust issues, Oliver? Will this face scrutiny? Will it get the approval of antitrust officials?
Well, you know, I can't say that for sure, and I'm not sure anyone can. But what you do have to look at is that, you know, they did make some very politically sensitive decisions here. You know, the fact that they're basing this company in both Danbury and Germany, and they're really trying to push, you know, the idea that this is not just a U.S. company now. This is a company that exists both in the U.S. and in Germany. And when it comes to antitrust regulations, I think they are going to take a look at those moves.
Oliver, thanks for joining us, telling us about this Linde Praxair merger of equals, or isn't it? Oliver Sack-Gow in Munich today. Julie.
Glad to know we got the same lessons when we arrived at Bloomberg, Mark. Coming up, Columbia Graduate School of Business adjunct professor Fabio Savodelli on the hedge fund industry. It took some big hits in 2016, but was it really that horrific of a year? More on the Bloomberg's most read story next. Plus, we continue to watch the Dow to see if it is going to get to 20,000. Still hovering around these levels here, just shy of 40 points away from that. We'll keep watching it. This is Bloomberg. You're watching Bloomberg. I'm Julie Hyman.
And I'm Mark Barton. This is your Global Business Report. The IMF is backing Managing Director Christine Lagarde despite her conviction in a Paris court.
Then 2016 has been a tough year for Uber. The company reportedly lost more than $2 billion in the first 9 months.
And in today's Quick Take, Venezuela, the oil-dependent country, is facing tough times, and many are asking if it's time for the nation's leader, Nicolas Maduro, to go.
The International Monetary Fund's executive board is affirming its backing of Managing Director Christine Lagarde, despite her negligence conviction in a Paris court. Speaking to reporters in Washington, Lagarde thanked the board and said she's happy not to appeal the decision.
I am not satisfied with it. But there's a point in time when one has to just stop, turn the page, and move on, and continue to work with those who have put their trust in me.
Lagarde was convicted for failing to overturn a $296 million payout to a businessman in an arbitration case while she was France's finance minister. That's nearly a decade ago. She will not face a prison term or fine.
Lloyds Banking Group has agreed to buy Bank of America's MBNA credit card business in Britain. The £2.4 billion all-cash deal comes as the British lender looks to expand in consumer finance. Lloyds says the transaction will add $805 million in revenue, equivalent to a 4% increase of its yearly sales. Two automakers are shedding workers as a booming U.S. market shifts to pickup trucks and SUVs. General Motors plans to permanently cut about 3,300 workers at 3 car plants as it slashes production of several models, including the Chevrolet Cruze Compact. The largest U.S. automaker will also temporarily lay off employees across 5 U.S. factories. Meanwhile, Fiat Chrysler is trimming production at 2 plants in Canada. Uber lost more than $2.2 billion in the first 9 months of this year, even after exiting China. That's according to a person familiar with the matter who says the ride-hailing company lost more than $800 million in the third quarter, not including its Chinese operation. Revenue is still slowing. It's said to be on track to exceed $5.5 billion this year.
It's time now for our Bloomberg Quick Take, where we provide context and background on issues of interest. Venezuela has more oil than Saudi Arabia and more poverty than Brazil. Faced with reduced oil prices, the country is plagued with shortages of everything from toilet paper to antibiotics to food. The nation's leader, Nicolas Maduro, is holding on tightly to power at a high cost to Venezuela's democratic institutions. Here's the situation. For most of 2016, Maduro has been locked in a power struggle with opposition lawmakers who, in December elections, gained control of the National Assembly for the first time in 16 years. The discord worsened in October when the opposition's efforts to force a recall vote on Maduro were suspended by the National Electoral Council. Polls suggest he would lose such a test. The suspension was widely condemned at home and abroad as a breach of democratic protocol. With the country short on cash for imports, citizens wait in long lines to find scarce household items. In June, shortages prompted the first major food riots in decades. Here's the background. Hugo Chavez was elected president in 1998 and revolutionized Venezuelan politics with fiery anti-U.S. rhetoric. He nationalized thousands of companies or their assets, reducing the economy's capacity to produce anything but oil. Unlike Chavez, Maduro has struggled for popularity. Well before oil prices began to fall, he faced high inflation, which has pushed millions back into poverty, and a homicide rate second only to Honduras. Here's the argument. Maduro's critics argue that he's so thoroughly bungled management of the country, it's time for him to leave office. Those who are skeptical of the opposition point out that it's made up of more than a dozen parties that range from Marxist to center-right, and that it has no single plan or leader. Analysts increasingly question whether Venezuela can and should continue to service its foreign debt, on which it owes almost $90 billion over the next 10 years. You can read more about Venezuela and all of our quick takes at NI Quick on the Bloomberg. And that is your global business report. Head to Bloomberg.com for more stories.
Now to the most read story on the Bloomberg today. Yes, the Bloomberg reported how hedge funds are faring as the year ends. Many of them lost money this year, some closing operations, others scaling back in January. Nevsky Capital shuttered its business in June. Pershing Square cut 10% of its staff. Headcount reductions were also announced at Paul Tudor Jones's Tudor Investment Corporation in August. A month later, iconic hedge fund Perry Capital announced it was closing its flagship fund. Now on Bloomberg Daybreak, Columbia's Graduate School of Business adjunct professor Fabio Savoldelli, and author of the report, Bloomberg's Katia Porczynski, weighed in on the health of the hedge fund industry.
For all of the to-do that there has been this year about how miserable the hedge fund industry is and how everyone had something to say about how bad it is and what a waste of money it is, 2% of assets are what were withdrawn. That's not a ton, right? So at the end of the day, I'm not sure you can really say that it was a horrific year.
You'd think by some of the headlines you've seen and read this year that the industry was dying. dying aggressively.
Well, actually, what you might think is that actually maybe people don't like us. I don't know. There's that subtle undertone. Look, as Katya pointed out, it's down about 2% for the year. The guys in the mutual fund business would cut their left arm off for 2% decline in AUM this year. They are seeing the assets. Active management is seeing massive declines in multiples of what we're seeing in the hedge fund space. So in reality, the investors, I think, are getting the joke better than many of the critics.
Let's talk about why it might get better next year. Sure. Every single day we talk about this transfer from a focus from fiscal policy away from monetary policy. Is that going to be good news for these guys?
I think what you've got is a whole series of things that are in play that are going to differentiate good stocks from bad stocks in the equity long-short space. You've got healthcare is in play. That's 16% of the U.S. economy. You have, as you pointed out, is monetary policy going to offset fiscal? Get these questions right. Get the immigration question right. Get any number of questions that facing Trump and on which are now in play, and nobody really knows what he's going to do. Get those right, and you're going to have an extraordinary year. Get them wrong, and you're hurt.
Sorry, David. Is that your sense, Katya, as well, from the conversations you're having?
Yeah, the sense is that it could be a turnaround year. You will have dispersion in healthcare stocks, tech stocks, mining, steel. You'll have opportunities, financial consolidation, so small, mid-sized banks. And then, of course, for macro funds, it could be the year of a comeback. You could play with currencies, rates. You'll have global growth differing in various parts, rates, all of that. But you have to be nimble, and you can't be a monster. It's going to be benefiting the smaller guys who are more focused, more nuanced. They can really pick, because if you're a ginormous fund and you can only get into the big stocks, you're going to have the same problems that you had with crowding that you had this year.
So people in general may not like hedge funds, but some people do. And they, for example, are Steve Mnuchin, who comes from the hedge fund industry, is going to be the Secretary of Treasury. And for that matter, Donald Trump himself, we know, has been at least in some of the hedge funds. So what difference will that make, that you'll have some not just sympathizers, but actually people who have participated in the marketplace running the government?
Well, there's two phases on that. I feel great comfort in that, actually. I think it's good to have people with that experience. One of the big questions out there in front of a Mnuchin is going to be, what do you do with Freddie Mac, Fannie Mae? All of those questions are up there. This guy has run one of those banks. He has a pretty good feeling for what is the right thing to do, and he's expressed his views, on that. I think it's actually worth doing. And, people say, well, he's not running a hedge fund. You're right. Rubin ran the arbitrage desk at Goldman Sachs. That's nothing like a hedge fund. It's a fine white shoe, respectable firm. It's somewhat the same thing, done in a different way. So we've had people there for some considerable period of time that actually are experts in that space.
Columbia Graduate School of Business adjunct Professor Fabio Savoldelli there, and Bloomberg's Katya Porsakansky. Julie.
Well, still ahead, Mark, Facebook could be facing a multi-million-euro fine for misleading the EU when it bought WhatsApp back in 2014. We'll have details next. This is Bloomberg.
Live from London and New York. A gloomy twilight, our director called it, Julie. I'm Mark Barton.
I don't think it's that gloomy. It's twilight. It's actually, it looks like a painting. I'm Julie Hyman. This is Bloomberg Markets. Facebook is the latest U.S. tech company to find itself in the European Union sites. The social network is being accused of misleading the EU in its takeover of WhatsApp back in 2014. Facebook could be forced to pay a multi-million-euro fine for allegedly supplying incorrect or misleading information on linking data with the messaging app. Joining us from Brussels with the latest is our European antitrust reporter, Aoife White. Aoife, thank you so much for joining us. So what was this misleading information? What exactly is the EU saying Facebook did?
Well, when Facebook bought WhatsApp and went to the European Commission to ask for permission, they said to the EU that they couldn't link, that they technically couldn't link the Facebook user information with the WhatsApp information. Now, 2 years on, as we saw over the summer, they announced that they were doing just that they would be able to show Facebook WhatsApp advertisers from the WhatsApp information. So by linking that information, the Commission says, well, this is not what you told us before, and can you please be a bit more precise about what precisely happened? Now, the regulators are have an open mind, let's say, so far about whether that was deliberate or not, but they say it doesn't really matter. The fact that you didn't give us the full facts at the time, that apparently this was technically possible, is a problem, and that's something, while it won't overturn the merger, it could lead to a fine for Facebook.
And what's the size of this fine, and what are sort of the implications here? I mean, is this being viewed as a slap on the wrist, or is it something more serious?
Well, it's not great if you're going to do future deal making, which presumably Facebook might do at some time in the future, that they're already in trouble for possibly lying or misleading regulators on what the facts of the case are. The fine is 1% of yearly revenue, which for Facebook is a pretty big number. They have about 17 billion in yearly revenue. But the previous fine we saw in this was 12 years ago and was only 90,000 euros. So while financially it might not have consequences, reputationally it does. And not just maybe for Facebook doing deals in Europe, but maybe elsewhere as well.
Yeah, and it's been a bit of an issue this year, hasn't it? The issues that various tech giants have faced in front of the EU, Apple, of course, and Google, to name but two. Just remind us of the travails they're going through, Aoife.
It's been a pretty horrible year for technology companies in Brussels. We've seen 3 cases open against Google, one of the most important being against their Android operating system. We had a huge order to Apple to repay 13 billion euros in tax back to the Irish government, which they said yesterday they'll fight. We also see Amazon has a couple of issues to deal with on tax and with an e-books case. I mean, it's definitely a jurisdiction where you need to tread very carefully. These are very powerful regulators. On a normal antitrust case, they can charge you up to 10% of revenue, but more importantly, they can force you to change what you do, as we saw with Microsoft, to change the way you conduct your business in Europe and perhaps also globally.
And Facebook's had other issues in Europe this year, hasn't it? I mean, it's had its own pretty terrible year in Europe in 2016.
Yeah, it seems pretty endless. I mean, we started off with Germany having an antitrust probe about privacy terms. We've seen a bunch of privacy probes into the WhatsApp merger issue, and also on hate speech and on fake news. We're seeing German officials be concerned that Facebook might not be doing enough to stem hate speech. So it seems fairly endless. It's been quite a tough year for them.
So, Aoife, what about any other sort of antitrust actions that we're going to see for the tech industry more broadly? I mean, do EU regulators is there special scrutiny on that industry in particular?
There seems to be. I mean, new industries bring up new problems. We hear regulators say that they do see monopolies form very fast in these industries. The treatment of data is something that regulators are thinking about, certainly wider than just antitrust, but on privacy as well, which is really a hot-button topic for Europe. And these are issues which haven't always cropped up in the US and that are becoming more and more prominent in Europe, and how people use these services. What we've seen now is really the beginning of cases. I mean, what we might see next year is some conclusions, things moving forward against Google, against this case against Facebook and others. So we might see where these actually go to. And the companies right now have a chance to defend themselves. That's what Google is doing. So next year is when we see answers, whether they manage to convince regulators that they're right or they find out that they're wrong.
there was a bit of backlash politically in quarters to the Apple case. You know, it needs to pay back whatever it is, 13 billion euros in back taxes, Eva. Under the Trump administration, do we have any idea how President Trump, when he finally is inaugurated, will take to these sort of measures against his sort of domestic tech titans, who, as we know, didn't exactly support him during his campaign?
That's a very good question. I mean, the EU cases against Google are a question that we've had, whether the US might look at Google again. Some new issues have cropped up since they dropped their case. Yeah, we are seeing more friction between the EU and the US. I mean, the Apple case is a special one because it's tax, and it's something where the US Treasury has said very clearly that it disagrees with what the EU has done. There are voices within Europe that don't like what the EU has done. The Irish are not happy with that their tax deals were ruled illegal. It's quite important to them that they can attract big companies to them. So these are very controversial issues. Europe does look like a tough jurisdiction to do business for American companies, for big companies, for companies that have these kind of tax deals or these kind of issues.
That's Bloomberg European antitrust reporter Aoife White. Thank you so much, Aoife. I appreciate it.
Julie, the European close is up next on Bloomberg Markets. Let's get a check on where things stand right now. Look at that. Stocks are rising today. Highest level since the end of December last year. This is Bloomberg. It's 11 a.m. in New York, 4 p.m. in London, midnight in Hong Kong, 30 minutes left in the trading day in Europe today. I'm Mark Barton.
And in New York, I'm Julie Hyman. This is the European close on Bloomberg Markets.
OK, we're going to take you from New York to London to Milan in the next hour. Here's what we're watching today. UK Prime Minister Theresa May speaking before the Liaison Committee, saying the Brexit machinery is, quote, working well, and the UK will meet the end of March Article 50 timetable.
Shares of Monte Paschi falling for a second day as the bank is said to be failing to lure investors. The Italian government moving closer to a potential rescue of lenders. And later this hour, we'll be speaking to BlackBerry CEO John Chen on his company's latest earnings. BlackBerry boosting its 2017 profit forecast as the shift to software looks to be paying off.
Have a look at where European equities are trading right now. We're just under 30 minutes away from the end of the Tuesday session. GMM Go is your function. Stocks are rising despite the geopolitical setbacks we've seen in Europe, in Turkey, in Berlin, in Zurich in the last 24 hours. The Stock 600, highest level since the end of December last year. Look at the second column. All those currencies are sliding against the dollar today. The euro down a fifth of 1%, lowest since 2003. Mixed performance in the sovereign bond market, proving there hasn't been a flight to safety because we are seeing yields rise in a number of the core European bond markets, commodities and sovereign credit default swaps as well. Lloyd's big story today, the banking group here in the UK agreeing to buy Bank of America's MBNA credit card business here for £1.9 billion in cash. Its first major deal since being rescued by British taxpayers 8 years ago. The acquisition of MBNA, which has roughly £7 billion in assets, will add £650 million a year to its revenue, equivalent to a 4% increase. Shares in Lloyd's today up by 2.6%. Mediaset shares, the Italian broadcaster owned by former Prime Minister Silvio Berlusconi, rising as much as 24%. Vivendi, the French media group, planning to buy additional shares in Mediaset, intensifying this battle for control of the broadcaster, which of course was founded by Berlusconi. The management of Vivendi yesterday deciding to lift its Mediaset stake within the mandatory bidding limits of 30% of share capital and voting rights. It's been quite a journey, should I say. Shares are up by 62% since December the 12th. There's the journey in the last 6 or so months. And looking at the level of the euro against the pound today, €1 is 84 pence. Analysts are the most divided on record on where this currency cross is headed in 2017. Sterling, of course, on track for its biggest annual decline against the euro since the height of the financial crisis. The median forecast in a Bloomberg survey of economists sees the pair reaching 86 pence by the end of next year. The range, though, is 73 pence to £1 per euro. Strategists are wondering, is it going to be Brexit affecting the UK or populist movements affecting the euro? Traders assign a 55% chance of euro sterling reaching 80 by the middle of next year and only a 3% chance of parity in the same time frame. If you're into Fibonacci, that is your chart. Sadly, I don't have time to explain it. 90 minutes into the trading day in the US. Let's get over to Abigail Doolittle. She, I know, if she had time, would be able to explain that chart. But not now, Abigail.
Not now, Mark. And don't be so sure about that either. But as for trading action here in the US, we're looking at lots of bullish action. Intraday record highs for the three major averages, the Dow, S&P 500, the NASDAQ. The Dow and the NASDAQ right now are also on pace for new record closing highs. The S&P 500, however, just shy of that. Of course, the big story, though, today is Dow 20,000. Can the Dow achieve 20,000? We take a look at a 5-day chart of the Dow. We see today the Dow just climbing above its last intraday record high, this big parabolic spike higher at those highs within 12.5 points of Dow 20,000. The trading action has felt a little bit giddy. We're seeing stocks back off a little bit, but it will be interesting to see whether or not that milestone can be achieved. And interestingly, Ari Waldover at Oppenheimer just told our team through an email that there isn't a lot of predictive power. His work does not suggest there's a lot of predictive power around these big milestone numbers, that it's more psychological in nature. But nonetheless, everybody is certainly watching to see whether that milestone can come. And in fact, if it does come today or the next few days, it would be the fastest 1,000-point gain for the Dow on record. When we take a look at 1,000-point gain increments of the past, we see the fastest right now on record back in 1999 to 11,000. It took 35 days. Right now, we are 28 days from 19,000, so record speed. The Dow up about 5% over that time period. And to put it into more perspective, when we go into the Bloomberg and we take a look at #BTV 5092, this is a long-term chart of the Dow. In yellow, we have the 1,000-point milestones achieved. Back here, right there, when these two are clustered, that is where that 35-day. And if it does happen today or in the days ahead, it would be a very similar setup, two very fast clusters, perhaps suggesting that maybe the markets are ripe for a little bit of a pullback. And finally, we are looking at a bit of a risk-on tone, not just for stocks, but across the asset classes. But one area that stands out a little bit, the commodity complex, we do have commodities trading lower. The Bloomberg Commodity Index is down. Actually, it's moving. This is a little bit different of a picture, but the Bloomberg Commodity Index is down a little bit today. We have copper down, in fact, for its fourth day in a row on the at levels, Julie, last seen since the end of November in more than a month. Even though stockpiles had been rising through yesterday for 6 days in a row, they've started to pull back, but we still have copper down a bit.
Interesting. Thank you so much, Abigail. Appreciate it. Now let's check on the Bloomberg First Word News. Courtney Donahoe has more from our newsroom.
Well, hey there, Julie. German Chancellor Angela Merkel has summoned her top security officials to discuss the government's response to the deadly truck attack in Berlin. Merkel toured the site earlier, laying white roses on the grounds of the Christmas market for the 12 people killed and nearly 50 injured. A German prosecutor says there may be several assailants involved in the attack. Germany's interior minister said authorities are questioning a suspect, but the man, who is from Pakistan and has applied for asylum, is denying involvement. Authorities are unsure if he was the truck driver. Russian Foreign Minister Sergei Lavrov says Russia, Iran, and Turkey are ready to act as guarantors in a peace deal between the Syrian government and the opposition. Lavrov says the three countries' goal is to target Syrian terrorism, not regime change. This comes a day after Russia's ambassador to Turkey was assassinated at an exhibition by a policeman who shouted, "Don't forget Aleppo, don't forget Syria." Authorities say a shooting at a mosque in Zurich does not appear to be linked to terrorism. 3 people were injured in yesterday's attack. Investigators say the suspect who opened fire is dead. After fleeing the incident, he shot himself and his body was found near the crime scene. Police say he may have had an interest in the occult. And Senate Majority Leader Mitch McConnell is rejecting calls for a special Senate investigative committee on possible interference in the U.S. elections by Russia. McConnell says findings by U.S. intelligence officials that Moscow hacked Democratic emails in a bid to elevate Donald Trump is, quote, a serious issue, but it does not require a select committee. He says the Senate Intelligence Committee should be able to investigate. Global News 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Donahoe. This is Bloomberg. Mark.
Courtney, thanks a lot. Let's get back to the markets then. The Dow Jones Industrial Average hitting another all-time high today, at one point trading within less than 15 points of 20,000. What's ahead for markets in the new year? Joining us now from Newton, Massachusetts, is David Kelly, Chief Global Strategist at JP Morgan Asset Management. David, thanks for joining us. David, what could derail this equity rally we're witnessing in the U.S. in the short term?
Well, I don't think it will be derailed in the short term. Remember, the exit door is kind of jammed here, because if you're in a taxable account in the United States and you sell at the end of the year, you're going to pay full capital gains tax on all your gains. We do expect that there will be lower capital gains tax rates available next year. And so you really don't want to sell at this time of the year anyway. So I think that's helping this market move higher, regardless of all the fundamentals.
David, there are issues: growing global debt, the rise of populism, geopolitical uncertainty, which, as you say, highlights the need for diversification in 2017. Just paint the picture for us.
Well, I think if you look at markets right now, it seems like people are pricing in every possible positive into U.S. equities and maybe pricing in every possible negative into global equities. I mean, in the U.S., yes, there is going to be some stimulus, but we don't know how much, because there is now a deficit hawk who's going to be appointed to the head of the Office of Management and Budget. And there's going to be a real battle within the Republican Party about how much stimulus. And if you don't get more stimulus, you may not get much more economic growth. There's also a big question mark about the type of corporate tax cut we get, which could have a big impact on corporate earnings. So there's a lot of uncertainty about things that people seem to be very positive about. Meanwhile, around the world, I mean, we're seeing the global economy is doing very well right now. The global manufacturing PMI, the flash numbers suggest the strongest growth in global manufacturing in over 5 years. Global equities in both emerging markets and developed countries outside the United States are cheaper, and frankly, the U.S. dollar is overvalued for the long run. So for global investors, I think it's really time to take a look at international equities outside of the United States and not just jump onto this bandwagon with the Dow as it heads past 20,000.
So, David, where would one look then? I mean, if you look to Europe, you're looking towards the end of stimulus there, at least monetary stimulus. Would that be a place you're interested in, or are there other areas that are more appealing?
Well, yeah, first of all, I do like Europe. People are always worried about Europe because of elections. Well, you know what, with 28 countries, or 27 and a half, I guess, in the Eurozone, in the European Union, there are always going to be elections. The truth is the European economy is gradually improving, and what's more, it's got room to grow. There's plenty of pent-up demand. The euro is cheap. We are seeing potentially less monetary stimulus, but I think we'll see more fiscal stimulus. I think the ECB will help the banks grow. Europe has got a lot of potential to grow both the economy and earnings, and as I say, the euro is cheap. So I think that's one positive. And then also emerging markets in general, as global manufacturing picks up, as global consumers pick up, as the commodity cycle turns, which is what we're seeing right now, emerging market stocks are generally pretty cheap. So I think you've got to look past a lot of headline noise and just take advantage both in Europe and emerging markets. I'd say both of them, really. I think there's opportunity in both places.
And speaking of headlines, David, I have to bring it back to some of the headlines of the past couple of days, both what's been happening in Berlin and in Ankara in Turkey. When you look at the outlook for the European Union and some of the various incidents we have seen over the past year, has there been any sort of depressive effect on consumer spending, and do you expect that there could be, that would be a possibility?
No, I don't really expect that. I mean, I think there's. Of course, it's headlines, but what are you going to do? I mean, it doesn't seem to me. It actually seems to me that ISIS is capable of inspiring these rather crude and vicious and horrible attacks, but nevertheless, not things that are going to disrupt the fundamental workings of the European economy. And people have got to get on with their lives. I'm more encouraged by the fact that the unemployment rate in the Eurozone continues to come down. Europe continues to grow. The euro itself is very cheap, and I think the European economy is healing itself. And if we don't see some big crisis going forward, I think Europe will continue to heal. I think that'll actually improve living standards around Europe and improve European stock markets.
David, does the euro get cheaper? We're down to levels we haven't seen since the beginning of 2003. The big P question, the parity question, keeps rearing its head. I know it's just a threshold, but do you see the euro falling to parity against the dollar and even through it?
It could, but that is so inappropriate. I mean, I think people make a mistake when they sort of jump onto short-term momentum here. In the long run, in terms of valuation, the Eurozone runs a significant trade surplus with the United States. The United States runs a significant trade deficit with Europe, and it's the dollar should not be this high against the euro, and I don't think it will be in the long run. There's a lot of enthusiasm about short-term U.S. growth, but the main thing that people are missing is we're out of workers. We've got a 4.6% unemployment rate. There are very few employable, unemployed Americans left. So if you try and rev up this engine, all you're going to do is get more inflation, higher interest rates in the United States, and then a slowdown in growth. So for the long run, next 5 months, I don't know. Next 5 years, I think the euro is much more likely to be at $125 to the euro rather than at parity.
David, getting back to another area you think is attractive, emerging markets, as you were just talking about a few moments ago, what's the political risk there? And I'm not talking about local political risk. Rather, I'm referring to the political risk emanating from the United States and potential trade redealings that we could be seeing with some of these nations.
There is some risk there, but I think we have to look at this through the lens of pragmatism rather than the lens of politics. I mean, in the election, Donald Trump talked very tough on trade. But when you actually get to be in power, what are you going to do? Are you going to put tariffs on Mexico? Because all it's going to do, it's not going to bring any jobs back. All it's going to do is push up consumer prices for the very people that elected you. Same thing with China. Teddy Roosevelt used to say he would speak softly and carry a big stick. I think when it comes to trade, the United States is talking loudly and carrying a small stick. I don't think the United States is going to put big tariffs on emerging markets. And I think emerging market investors are too scared about that.
David, great to see you. Thanks for joining us today. David Kelly, Chief Global Strategist at JP Morgan Asset Management. Julie.
I love that analogy. Coming up, we'll be talking with BlackBerry CEO John Chen as the company boosts its 2017 profit forecast with a new focus on software growth. That's next. This is Bloomberg.
Live from London, I'm Mark Barton, counting it down to the European close, just about 13 minutes away.
And from Bloomberg World Headquarters in New York, I am Julie Hyman. Shares of BlackBerry are higher today. That's after the company boosted its fiscal 2017 earnings outlook. It also posted a profit in the third quarter. Bloomberg's Caroline Hyde is standing by in our San Francisco bureau. She's got an interview with BlackBerry CEO. Caroline.
Thank you very much indeed, Julie. Yes, and I'm pleased to say joined by none other than John Chen, the chief executive of BlackBerry. And the pivot is on. You're moving from hardware to software. We're seeing, in fact, the margin the highest ever, close to 70%, John. Is this sustainable? Can it go above 70%?
A normal growing software company could definitely do better than 70%, yes. But it would take us a while to get there, but it will. It could do it.
How about the software revenue growth? Because you've said that that's going to be about 30% on track for this fiscal year. 30% growth for the next fiscal year, are you aiming for that as well?
Oh, no. Now the numbers are getting pretty big. I think the market is growing somewhere about 10 to 15% next year. We committed that we will be growing faster than the market, and we're reasonably comfortable about that.
I mean, it's always renowned that Angela Merkel always used a BlackBerry, the belief in the security that BlackBerry offers. How, in this sad time of increasing cybersecurity threats and concerns, are you seeing a pickup in demand at the moment?
Actually, I see. I guess in a certain way, that answer is yes. The answer have to be yes. I see a lot of discussion. People try to get their arms around, especially enterprises, try to get their arms around security and cybersecurity. Mobility is one of the biggest vulnerability point. So then this is where we excel. We're the #1 player in that space, where mobile meet security. So yeah, a lot of conversation. We feel very comfortable in where we are and where we sit with the customers.
Talk to us about the mobility strand as well. It's interesting you announcing just yesterday, a new research center in Canada, the focus on automation, driverless vehicles. This is a really crowded space. You're up against the phone makers, well, the software makers. You've got Apple and the tech giants, not to mention the automakers as well. How do you fight within this competitive space?
I don't fight with them at all. First of all, about a month ago, we announced a transaction or an agreement with Ford Motor Company. We're providing software to help them build the next generation car. I'll let them tell you what the next generation car is, but we're helping them to do that. We have both engineering people helping them. They're using our software, and this is just an example of what the autonomous driving innovation centers are going to focus on. So all the automakers are going to be our customers, going to be our partners. All the tier ones, they're like Denso and LG and Panasonic and Harman, who just got bought by Samsung. It's going to be our partners. They have already been our partner, and we're very proud of the relationship with them. So no, we're not setting this up to compete with the automakers. We're not setting it up to compete with tier ones. In fact, we're pretty embracing very open standard. We want to build the foundation so cars could safely be put together and put on the road.
Automation was something that we've just been discussing, announced yesterday, but just not long ago, we also saw another announcement coming from BlackBerry, and this time it was a licensing deal. You're getting out of the hardware, and you're letting a Chinese partner build that. How much are relationships with China at the moment under threat with the new president-elect, Donald Trump? Are you cautiously optimistic or concerned with the direction of US and China relations?
Well, that's a very complex question. So let's just talk about technology for a second. I provide all the software technology where the majority of all the security secret sauce is in. So in that sense, there is no truth in that if I build my phone in China by a Chinese partner, that my phone is not going to be more secure or going to be less secure, whatever the right English is. So our security is paramount. We don't have any issue with that. We control all the software and the security software associated with it. We also have our NOC that manages all these devices that is sitting in Canada. We don't have any interest in outsourcing those things. So anyway, so the net of all that is that I would not be concerned about having us to build a phone with a Chinese company that concerns about security. Now, it's related to what the government, United States government policy is and where the trade issue is going to go end up. It's none of those questions. Nobody really know the answer to it. I heard a little earlier guest talk about that, putting a tariff on developing countries. I assume the guest is referring to China and the current currency manipulation situation, or at least the accused of that. All that discussion going on with the president-elect. I just assume that cooler heads is going to prevail, and we won't get into a trade war whatsoever.
A quick last question. Would you work with the Trump administration like you did with Bush?
Oh, absolutely. I mean, like everybody said, he is the president now, or he will be. And anything that help the country, we definitely will.
John Chen, it's always a joy to have you discussing your business with us. Thank you very much indeed. The Chief Executive of BlackBerry, posting what seems to be an impressive set of profitability numbers beating the street. Thank you very much indeed. Julie, back to you.
Thanks so much to Bloomberg's Caroline Hyde and to BlackBerry's John Chen. Mark?
Julie, still ahead, just minutes away from the European close on this Tuesday session, 7 minutes to be precise. Check it out, stocks are rising, highest level for the European benchmark since the end of December last year. This is Bloomberg. Live from London, I'm Mark Barton with Julie Hyman, counting it down to the European close in roughly 5 minutes. Check it out. This is what's happening to stocks rising today. Shaking off the geopolitical incidents we've seen here in Europe, in Germany, in Switzerland and in Turkey, of course, in the last 24 hours, showing the resilience of global investors. Have a look at what's happening to currencies today. Euro, lowest level against the dollar since the beginning of 2003. And I'll leave you with the bond market, bond yields rising, so no flight to safety today. Close 4 minutes away. This is Bloomberg. Live from London and New York, this is the European Close. I'm Mark Barton with Julie Hyman. Today, stocks finishing the session higher. Look at that, up by 0.5%, shrugging off the events that took place in the last 24 hours in Turkey, in Switzerland, and of course in Germany, showing the resilience to geopolitical flashpoints. Biggest gain, or should I say, highest close, or the best close since the end of December 2015. VSTOXX, by the way, the measure of stock volatility, is at its lowest since July 2014, and analysts are upbeat about profits at its members, the Stock 600, expecting earnings to grow by 12.5%. German 10-year yield, just to highlight my point, there wasn't a flight to safety today after those events in Berlin, in Zurich, and of course in Ankara. The yield on the German 10-year rising today up to 27 basis basis points. Yields fell last week after 2 weeks of increases. On December the 12th, the yield closed at 0.399%, which was the highest since January the 28th. So no flight to safety necessary as today. Looking at Germany from a producer price perspective, producer prices in Germany recorded their first annual increase in more than 3 years last month. This chart goes back to 2013. We haven't seen these levels since the middle of that year. As with the euro area, German inflation is increasing thanks in part to the base effects from the pickup in energy prices. Consumer price growth in Germany forecast to accelerate to 1.5% next year from 0.4% this year. Eurozone inflation is expected to pick up to 1.3% from 0.2% this year. So inflation is picking up in Germany's biggest economy and in the Eurozone as well. And Swiss watch exports are picking up. They had their smallest retreat in 9 months during November. Shipments to Hong Kong nearing a return to growth. Exports to the industry's largest market are still negative. The 0.7% drop is Hong Kong's best performance of the year of 2016, showing the market there could have bottomed after 2 years of constant double-digit declines. For the first 11 months of the year, Julie, shipments to Hong Kong have slid by 26%. Has the Swiss watch market seen its nadir? Big question, Julie, for that key industry in Switzerland.
Yes, indeed. Let's take a look at what's going on with stocks here in the U.S. The key question here is whether the Dow, and how quickly the Dow, more appropriately, is going to get to 20,000. It got within about 13.5 points today before pulling back to some degree. But all three major averages did touch records today. It's important to note we continue to see depressed volume heading into the holidays. The Dow, for example, volume there about 12% below the 20-day average. On the S&P 500, volumes about 20% below that 20-day average. Looking at the groups on the move in the S&P 500, we've got financials back in the leadership position here. Although, as you can see, most of the groups on the IMAP are green today. Consumer discretionary, telecoms, industrials, utilities, all up. So interesting mix of cyclical and interest rate sensitive, given the fact that we do see rates higher as well. The 10-year yield is back climbing today as we see the sell-off resume for treasuries. So we've got the 10-year yield up by 4 basis points as the sell-off resumes here. 2.58%, your level there on the yield. And the U.S. dollar touching a high. The Bloomberg Dollar Index at its highest, touching its highest since inception. The DXY Index at its highest since 2002. So increase in rates is back today. Let's now check in on the Bloomberg First Word News. Courtney Donahoe has more from our newsroom.
Well, hey there, Julie. France's government has heightened security at Christmas markets around the country after a truck rammed into a Berlin market, killing 12 people. The country's prime minister says French and German authorities have worked closely for months to help improve securities in both countries, following the deadly terror attacks last year in Paris and this year in Nice. Queen Elizabeth will step down from her role as patron of more than 20 charities and organizations at the end of the year. Buckingham Palace said she will follow her husband, Prince Philip's example and reduce her charitable work at the end of her 90th birthday year. He did the same when he turned 90 back in 2011. She'll still be patron of more than 600 organizations. More charges have been filed by Michigan's Attorney General in the lead-tainted water crisis in Flint. Bill Schuette charged 2 former emergency managers with multiple 20-year felonies for their failure to protect residents from health hazards caused by contaminated drinking water. 9 others have been charged in the probe. President-elect Donald Trump might face a financial loss if he sells his Washington hotel now. As president, Trump would be on both sides of the lease for the 263-room Trump International Hotel, Washington, D.C., which opened in September. For the Trump Organization to get back its $212 million investment, a buyer would have to pay more than $800,000 per room. It's unclear whether the property could attract a bid that high. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Donahoe. This is Bloomberg. Mark?
Courtney, thanks. The UK Prime Minister Theresa May told lawmakers a deal with the EU could be reached within 18 months, and there's a willingness on both sides for a speedy conclusion.
I've noted when I've been talking to individual leaders the willingness from everybody to ensure that we can undertake this as smoothly and in as orderly a fashion as possible, and a recognition from everybody that actually we do want to make this arrangement, get this arrangement in place, so that people can move on to the new relationship that they will have with the United Kingdom. And I think there is a willingness there to undertake this on that basis.
And her comments come on the same day that Scotland's First Minister set out her Brexit red lines for the devolved power to review May's first ever liaison committee appearance. We're joined by London Bureau Chief Emma Ross-Thomas, and in Edinburgh, our Scotland editor Rodney Jefferson is standing by. Emma, let's start with you. Are we any the wiser to the Prime Minister's Brexit plans or not?
Well, I think the interesting issue was the one about timing. 18 months sounds pretty aggressive when you think about, the voices of scepticism we've heard from, trade experts and analysts that even 2 years perhaps wouldn't be long enough to strike a deal, given the complexity. Of course, this is 2 deals, one exit deal and then a deal for the new arrangement with the EU. So 18 months does sound pretty aggressive. And then the other sort of highlight, if you like, from today was she mentioned possible transitional arrangements. So it's demand from business that they have time to adapt to the new arrangements of the post-Brexit era.
Is that the closest we've got to her not embracing it, but revealing the fact that she's open to the prospect of a transitional deal if necessary?
Yeah, I think so. Yesterday she sort of hinted at it. Today she went a little bit further. She said that there were practical aspects that meant that perhaps it might be necessary, and she sort of spoke about the fact that there might be companies on the continent that would also welcome a transitional deal.
Yes, still though there are obstacles, aren't there? A, within a party, B, within the entirety of the UK, but we've still got the Supreme Court ruling. She doesn't seem to be too worried by that, does she? It doesn't seem that it'll, in her mind, alter her time frame.
Yeah, I think that's true. She didn't even mention it today.
Yeah.
She said they're sticking to the timetable, both of triggering by the end of March and of completing it within the 2-year period.
We shall see what happens in January. Favourite story today of mine, Emma. Keep calm and gag Boris. Expert negotiating tips for Theresa May. Essentially, we've gone out there, or John Ainger has, I'll take the credit. We, Bloomberg, have got out there, and we've spoken to all these sort of people who've been involved in high-stake enterprises.
Right. Yeah, that's right. So we've got a gambler.
Yes.
We've got a hostage negotiator, and those who've been involved in peace negotiations.
And the big takeaway is something that Theresa May seems to be doing, what one might think, very well. But she's been criticised for it. Keep your cards close to your chest.
Yeah, absolutely. The collective advice is, don't say very much. Don't let those in your team say very much. So yeah, that totally vindicates her.
Is that the gagging Boris part? I mean, it's difficult, though, isn't it, when you've got characters like Boris Johnson, David Davis and Liam Fox, to name but 3.
Yeah, that's true, although I think in recent sort of weeks, months, we have seen them sort of coming into line a bit more. Yeah,
did we learn anything else from these experts in tackling complex negotiations? One of my favourite ones from the world poker player Chuck Clark. He sits down at the card table, he assesses the skill level of his rivals, and that informs him the way he plays his hand. I think
that's a good point. She also might want to assess the skill levels of her own team, though.
But she did say today the talks have been positive and constructive. That's not always the rhetoric we hear from her fellow EU leaders, is it?
Yeah, that's true, but I think she was also talking about the timing issue, and of course just because she might have reassurances that others also want to do it quickly, that doesn't necessarily mean that they're going to let her cherry pick the elements that she wants.
Emma, thanks for the moment. Earlier, our Scottish First Minister Nicola Sturgeon said she'd push for another referendum on independence if the country didn't regain access to the single market. Theresa May says otherwise. I want to bring in our Scotland editor, Rodney Jefferson. Rodney, it was a 50-page policy paper entitled Scotland's Place in Europe. Your genius will be summing it up for us in under a minute.
Well, the policy document was long awaited. She said that she would put it forward by the end of the year. It's really a wish list to say this is how Scotland could work within the single market, even if the whole of the UK comes out of the EU. It's essentially a treatise on a soft Brexit that would work for Scotland. Now, whether Theresa May would agree to that is a different matter.
And Rodney, I mean, her gambit, I mean, it doesn't come without risks, does it?
Well, no, I mean, she was very, dare I say it, sort of quite statesman-like, as she has been over the last 6 months, really, in terms of putting forward Scotland's position. She said at the beginning about it was democratically unacceptable that Scotland would be taken out of the EU against its will. So really now it's a case of coming and saying, well, look, this is what we would like. And she made the point today, rather poignantly, that after 6 months, Scotland's the only component of the UK that has managed to put forward a proposal for how Brexit might look.
But there are legislative issues on there. There are practical issues in implementing legislation when it comes to businesses and the open border. I mean, there are real practicality issues here, aren't there?
Of course there are, to make this work, yeah. I mean, it all depends on negotiations, both Brexit negotiations and, Scotland or Edinburgh, London negotiations. But this is, like you said before, this is a risky gambit, simply because also, if the UK decides to call Scotland's bluff, and then she has to fulfil her promise to go to the polls again and have an independence referendum, I haven't seen any major poll that says that any opinion has particularly shifted since the last independence referendum in September 2014, that, as you know, was a 55-45% vote to remain in the UK.
Rodney, thanks for joining us today. Bloomberg's Emma Ross-Thomas and Rodney Jefferson. Everything you need to know about Brexit on this Tuesday afternoon. Coming up, Julie.
Indeed, we'll be talking about Monte Paschi. Can it be saved? What the Italian government is trying to do to rescue its ailing banks. Next, this is Bloomberg.
Live from London and New York, I'm Mark Barton with Julie Hyman. This, of course, is Bloomberg Markets on Bloomberg Television, 4:44 in London, 11:44 in New York. Let's get to Italian banks. Monte Paschi will probably fail in its effort to raise €5 billion of funds from money managers and individuals as potential investors, bulk bondholders agree to swap their notes for stock. Joining us now from Milan is Dan Leafgreen, Bloomberg News Italy Bureau Chief. Dan, what seems to be the problem here for Monte Paschi in its ability to raise this €5 billion?
Well, I think most people thought that, and even the bank CEO, Morelli, admitted, weeks ago when he, made some tweaks to the plan, but insisted that he wanted to give it a go, admitted that it was going to be tough. Because you have to remember that this is really a three-legged plan, and all three legs, have to function. The first part is the debt to equity swap portion of it. That was reopened last week, and they're trying to convince investors to swap bonds for equity. Then the second component is probably, the tougher part, and that is to actually sell stock to institutions and investors and find someone who would become what they've been calling an anchor investor. The name that has been popped around the most has been, out of the Middle East, perhaps Qatar, a sovereign fund. And then the last part is then cleaning up the bad loan portion, which, perhaps would be, the easiest component. So getting all those three done is just very challenging. And our reporting, as you mentioned, illustrates that it's just going to be very, very difficult to pull that off this week.
And Dan, the fact that the government is moving closer to a potential rescue is evident in that it's seeking permission from Parliament to increase Italy's debt load by, 20 billion. I mean, that seems to suggest a non-positive outcome when it comes to the Monte Paschi recapitalization plan.
Well, yes. I mean, government officials, including the Treasury Minister, Padoan, have insisted for weeks and months that there was no plan B, that they were sticking with this effort to raise the 5 billion euros on the market. But it just became too dangerous. Last night, the government announced that they would be seeking this authorization from Parliament to increase essentially the public debt mountain, which is already among the highest in Europe, by 20 billion euros. Padoan will be speaking later this evening in Parliament, perhaps fleshing out some more details. And then the Italian cabinet will be meeting again probably on Friday to pass the decree authorizing the support for not only Monte Paschi, but other banks as well, potentially.
And the cabinet, it seems, is considering this so-called precautionary recapitalization. What does that mean when it comes to potential losses, Dan, for bondholders?
Well, it means that there probably will be losses for bondholders. It is one of the options. We still don't know exactly what route the Italian government is going to take on this. They are holding discussions behind the scenes with Brussels, the EU Commission, and obviously the ECB. But the precautionary recapitalization has been discussed in the past. I think certainly the government wants to avoid, burning retail investors too much, and would probably allow for some reimbursements there. But clearly, if they do go that route, then bondholders potentially are going to suffer some losses.
Dan, thanks a lot. We will see you again, no doubt, very soon. Dan Leaf-Green, Bloomberg News, Italy Bureau Chief. Okay, time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. And Lloyds has agreed to buy Bank of America's MBNA credit card business in the UK. $2.4 billion in cash. It's the first major deal since being rescued by British taxpayers 8 years ago. The acquisition of MBNA will add $801 million a year to Lloyds' revenue. The deal is expected to close in mid-2017. Apple chief executive Tim Cook told employees he met with President-elect Donald Trump last week to have a say in the industry's future. The memo obtained by TechCrunch details his reasoning. Cook says he doesn't want to be on the sidelines during the next administration. Other tech giants meeting with Trump included Facebook's Sheryl Sandberg and Amazon's Jeff Bezos. U.S. safety regulators have opened a new investigation into complaints that 1 million Fiat Chrysler vehicles can roll away after the owners shift transmissions into park. The probe covers the 2013 to 2016 Ram 1500 pickup and the 2014 to 2016 Dodge Durango. Fiat Chrysler said it's cooperating and joins the government in urging people to use parking brakes. That is the latest Bloomberg Business Flash. Just getting some breaking news. I wanted to pass along a headline which we're getting from the White House right now after that truck attack in Berlin. Of course, yesterday, President Obama did speak to German Chancellor Angela Merkel on Monday night. He did offer his condolences. Obama also offered his assistance in the call with Chancellor Merkel. We will continue, of course, to follow the details about this attack throughout the day here on Bloomberg Television. Coming up, it's BOTC next. Battle of the charts. Options markets may suggest investors are getting a little bit giddy. Is there reason to think stocks may pull back? This is Bloomberg. Right, I'm rubbing my hands. It's time for BOTC, Battle of the Charts, when we take a look at some of the most telling and compelling charts of the day, what they mean for you investors. We can access, and you can access these charts on the Bloomberg by running the function featured at the bottom of your screen. Kicking things off today, Abigail Doolittle. Abigail, take it away.
Well, this may prove to be a somewhat friendly battle with Julie Hyman. But first up, the chart that I have here is a 2-year chart. On the bottom, we have the S&P 500 trading over toward its record highs. On top, we have the put call volume. And when it trades lower, this tells us that put volume is falling, puts are bearish, call volume is rising, bullish. So it basically tells us that the bears are disappearing from this market. What's worth noting, though, is it really is hitting a low, biggest low over the last 2 years. Sometimes when you have various indexes and indicators hitting the extremes from a contrarian standpoint, it may suggest that we're about to see a bit of a reversal. So maybe the put volume will start to increase, call volume decrease, and perhaps this will come on some sort of pullback in the S&P 500 off of its record highs. And you can find my chart in the Bloomberg at #BTV5422.
And Julie, a little bird tells me your chart isn't too dissimilar.
No, it's not. I'm actually also looking at the market through the lens of options. And this chart comes to us courtesy of Julian Emanuel of UBS, who we spoke to earlier. In addition to doing equity strategy, he does derivative strategy as well. So this is a chart he's looking at that looks at the money, S&P 500 at the money options. That's where they're trading right now versus options that show a little bit of an upside, about 10% upside here. And he's looking at the spread between them 3 months out. So this is a chart going all the way back to 2007. And the spread here is getting tighter and tighter. So the implied volatility between the two is getting tighter and tighter. So this essentially shows one of the extremes that's similar to what Abigail was talking about. And Julian titled his chart Upside Call Buying and FOMO, fear of missing out. So what he's saying is that everybody's piling into this market because they do fear missing out on the rally, and then that's reflected in the options activity is also reflecting. He too suggests that this means there could be a little bit of a pause or reversal here, that's what this shows. This chart at G#BTV5420.
Essentially, you're both telling a similar story from a different perspective. Julie included FOMO for the first time ever on Battle of the Charts.
That's shocking to me.
We've never had FOMO. We've never had FOMO. So, you know, I can't separate you. As the judge and jury, and as no one can tell me off, you are equal. You are equals today. You are both winners. There you go. Right, let's have a little look at how European equities finished today's session. It was a day of gains, and it was a day that followed geopolitical incidents in Ankara, in Berlin, and of course in Zurich as well. But investors, as they've done many times in recent years, shrugging that off, and risk assets rose today. The Stoxx 600, highest level since the end of 2015. This is Bloomberg.
It's noon in New York, 5 p.m. in London, and 1 a.m. in Hong Kong. I'm David Gura. Welcome to Bloomberg Markets. From Bloomberg's world headquarters in New York, we're covering stories from New York to Berlin and Tokyo this hour. Here's what we're watching. The Berlin attacker or attackers may still be at large after German police cast doubt on the suspect arrested for Monday's terrorist attack. We're live on the ground with the latest in just a few minutes. Plus, an economic advisor to Shinzo Abe weighs in on the Bank of Japan after the BOJ decided to keep its yield curve and asset purchase programs unchanged. And we look at the hedge funds winners and losers as the year draws to an end. The U.S. presidential election gave the industry an unexpected pick-me-up. Here we are halfway into the trading day. Abigail Doolittle joins us now with a look at the latest. Abigail.
So, David, we have some good news and perhaps some slightly bad news. The good news is we have stocks here in the U.S. trading higher. We have the three major averages all up. In fact, the Dow, S&P 500, and NASDAQ Health all carved out new intraday highs. However, we are off the highs. In fact, we right now do not have the NASDAQ